Who says C? Raise your hand for C. Raise your hand for D. Okay, raise your hand for M. Raise your hand for B.
It has to be B.
Okay.
I think B.
We have no fuel.
I'm sorry, guys, but the answer is B.
Oh.
Good job. Now, we have a live example. Who can remind me what a hammer candle is?
A hammer?
Yeah.
It's hammer time.
Big down.
Down spike and then we close back above again. It looks like a hammer where
It looks like it has a...
right? Imagine you have one of the mallet hammers. It looks like a candlestick, right?
Oh, like a crab smash.
Yeah, it looks like a candlestick. So, if I say it looks like we have a really good hammer right here, which is where exactly people are placing their stop losses, because they think, oh, if we have a giant hammer candle, we're not going to go back below it, right? A clean hammer candle prints at a low, okay, or a swing low. We're always getting a hammer candle, usually at a swing low. All right, and then the retail textbooks, which you're going to go on Amazon, or maybe some of you guys are curious on day trading after this class again, that's where the retail textbooks are going to say to buy, because that's where everyone else buys. So what happens is they place a stop loss on the hammer candle, and it's exactly where it's a safe reversal signal to tell them, okay, we have a hammer candle, we shouldn't go back down, right? Now those stops get ran, we dip below the hammer candle low, triggering the cluster of stop losses, and now we have a market structure shift to the upside. Raise your hand if you want me to draw a picture of this. All right, ready? I'm going to draw a visual example. So basically what they're saying is this. See if I can find an example. All right, ready? Is this a hammer candle right here? No. Is this a hammer candle? Is this a hammer candle? Yes. Looks like a hammer. You can, bang on it. Or you can use it to bang something, all right? Now, what I mean is we form a hammer candle at the bottom of a trend. Let's say this is a swing point. What is the definition of a swing low? Yep, 3 candle formation of what? Yep. Yep, exactly. Now we have sell side liquidity here. We know a lot of stop loss are going to be there. But here's the trick. Here's what you guys are going to need to understand. Ready? People think that, okay, we're down. Wait. People think, okay, we're downtrending here. Let me draw my little line. Where is it? Dude, where's the path? I'm looking for the path. Oh, there we go. So let's say we're in a downtrend here. And then we go down, and then we get a hammer candle like this at the bottom of the downtrend. What has technically not occurred here yet? For me to be like, oh yeah, we're gonna go up now. Yeah, do we have an MSS yet? So, does this hammer candle mean we're confirming 100% we're going to go up? Yeah, not yet. So, let's say we get a hammer candle. If you watch any videos on candlesticks that one night when I told you to do your homework, retail is taught to do what at a type of candle like this? What is retail taught to do?
Put our stop losses.
Buy or sell? A giant green hammer candle, what are they taught to do? Right? We're taught to buy this up, right? Because we're going all the way down here, buy it up. So where are they putting their stop losses? Yeah, at these lows. And we, knowing that we're going to wait for a checklist, what's on our checklist? Who can raise a hand if you know this is on the checklist? FEG, someone else? Market structure shift, and then what's the third thing? The liquidity sweep. So those are like the main three things. All right. I want you to write in your notes right now. Checklist for trade entry. Right. Liquidity sweep, market structure shift, and fair value gap. Those are the main three. And it's all going to be based off that picture I told you to draw. Liquidity sweep, market structure shift, and fair value gap. Okay, we need those three things. This is where it's going to get boring for a lot of you who don't want to do day trading. But this is where it gets fun if you realize you can print money out of thin air now. It's just insane, but
You can also lose money.
you can also lose money out of thin air, but that's
That's what makes
the,
That's
the,
what we don't want to do.
the game is to get better and not do that.
Yeah.
And we're trying to get good at the game because I don't like being bad at games. If you play me in any sport, any game, I will most likely win. Okay, unless it's something I haven't heard of before. What?
Yeah.
You'll beat me in what?
I'll do anything,
Hey,
bro.
basketball.
FIFA?
Yeah, FC26, bro.
I did play a lot of Champions League 3-4 years ago and did pretty. I was pretty sweaty, but I don't know about now. Maybe. But you beat me in basketball. You're.
Basketball.
I was gonna say you're like 2 feet tall.
Oh.
Yeah.
What? You what?
You get a basketball.
I can dunk.
You can do it.
Yeah. I can dunk if someone.
Throws a lob.
Yeah, throws a lot, basically. Yeah. So. All right. Now look. Watch. We have a hammer candle there. This would be our potential market structure shift. Have we shifted structure here yet? Have we shifted structure here yet? Oh, we go down. Oh, we sweep these stop losses. Now, would this be a market structure shift? Would this be a high probability long right here on this retracement? Yes. And what do we want to form here? An FEG. Okay, and what else do we want to form here that just happened? Someone come up and show me where the liquidity sweep is. You come up. Where's the liquidity sweep? Circle it. Yep.
I always get the hardest question. What's one?
Yes. Boom. When we sweep that candle, you're good. When we sweep the hammer candles low, we know we're stopping all the retail traders who tried longing before the market structure shift, right? Do you think it's better to long off of a fair value gap or a hammer candle? Fair value gap. Fair value gap is the most important thing in the market. Okay?
What's the IFPG?
I'll teach you what an IFG is. That's eventually. That's what's on my Instagram. So that's gonna be that. So yeah, do you guys get this for these 4 steps now? Do you guys see why we just don't buy hammer candles? We wait for the fair value gap. The fair value gap is an imbalance in the market. It's leftover buy orders. It's a lot of buy orders. So we're waiting for that to get inversed. All right. So choosing targets. Why do the obvious highs and lows matter the most? Because that's what most people see when they trade the market. When millions of people are looking at the market and you're looking at an uptrend or downtrend, or maybe you show your mom the stock market for the first time and you go in the weekly time frame, what low in the last 5 years do you think your mom's going to see in the chart?
The first date.
The what?
The first date.
The first date? Yeah, but what low that happened in the past 5 years is your mom most likely to see first?
COVID.
The COVID low, when COVID wrecked the whole market and dropped again, and then we went up. All right, so those are the most obvious. Those are the most obvious that everyone's going to see. Yeah.
A lot of these like strategies that people are doing where they put their stop losses at this off, like these obvious points and then get destroyed, like is that profitable, or is this just like a vast majority of people who are like unprofitable and eventually quit?
Yeah, basically it's just a vast majority of people unprofitable and they'll just quit trading.
7% of
Like, yeah, 90% of people quit are unprofitable. Yeah. It's because they either, one, don't learn the right way, two, they don't have any motivation on why they want to trade, and the why is like the biggest thing. The why for me is to give my family a better life, give myself freedom, and I also treat it like a video game. And you know, I used to be a professional Fortnite player, and I hated being bad at stuff. So I just, everything I do, I just grind at.
Were you better than that Peter Ball?
No. Peter was.
Did you ever play Ninja before?
Did I ever play Ninja? No. Do you know Unknown? Unknown?
Hold up, bro. Hold up.
He was like a famous controller player, but basically like my duo was his duo. But dude, I have taught people day trading who were in the New York City World Cup for Fortnite. Remember when Bugo won? Like
You taught Buku?
no, like half those people. You know FaZe High Sky? You know FaZe High Sky at all? Yeah.
Isn't he like 20 now?
Yeah, FaZe High Sky is like 20. He's a day trader now. He made like 500,000 playing Fortnite, and when Fortnite died and when he got bad at the game, he didn't know what to do, and now he's day trading. A lot of them do come in the day trading. It's funny. Like I teach someone, his name is Tetra. His real name's Howie. He played in the New York City World Cup in Fortnite and won like $70,000, but then just never had a life after that. That's why I quit Fortnite to do this, because this is more sustainable, right? So a lot of these like people playing, if you are really good at video games, you'll be good at day trading eventually. I find it's a very, yeah, it's a very correlated thing. But that doesn't mean if you aren't good at video games, you're going to be bad at day trading. It's just something I notice a lot. So minor / crowded swing points, right? Several small highs, bunch close together. Not very obvious when you zoom out to a line chart, right? Smaller. I mean, this is obviously just take a picture of this. Remember, a non-obvious point is going to be a target that's going to be low conviction. Do you guys know what conviction means?
Oh, conviction?
Conviction, write this in your notes. Conviction equals confidence. How confident am I in the trade? If I have a lot of a conviction and a low hitting, like a weekly low like this morning, am I very confident or not confident at all?
Very.
Yeah, I'm very confident. If I have low conviction on something hitting, am I low confident or high confident? Yeah, exactly. Do you think I really want to put real risk on the table when I have low conviction in something? Yeah, and that's exactly why I want to wait for these setups to have all these like double highs, equal highs, trend lines, because I just am the most confident on those. And even though you might think you know where the market's going, if you aren't confident, it's still better to wait, follow your plan, and take something you're more confident on, okay? And hey, maybe you were right, and maybe you didn't enter the trade, and maybe you now FOMO because you're like, oh, if I entered that trade, I would have made money. Doesn't matter. You followed your plan. You knew you had low conviction, so you didn't enter, right? That's okay. Now, the indicator irony, okay? Turning retail tools into a liquidity map. How retail, so if I type in support and resistance indicator, it's going to exactly mark where retail traders are told to place their stops. You guys know how I gave you those two indicators on TradingView? Yeah. Those are good indicators. Those are smart money concepts. If I told you to type in support and resistance on those same indicators, it's going to show you, it's going to mark support and resistance lines that are probably double tops, double bottoms, but we know not to buy from, sell from there, okay? So how a retail sees this is they're going to see a marked resistance level. They're going to short the touch, except it expects a clean rejection, right? Because think about the logic. If I see Apple rejecting 10 million times, do you think any normal person who's not educated is going to still try to short 300 because they think, oh, because it rejected here, 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 they're going to try to short it? Yeah, they will. If it's rejected 50 times, a new trader, someone new, is going to be like, oh, that's a pattern. It's rejected here, 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 here. And we do the opposite. We know that that's just engineering stop losses for us to break over it, okay? So they treat the indicator as an entry signal. But how we use it is we would use a support and resistance indicator as a source map of where there's a bunch of clusters of stop losses for targets. Yeah?
There's like a ceiling and it's like been hit against a few times. How do you know that when you try to long against that ceiling, you're not just gonna end up
being a part of the ceiling that goes back down?
Yeah.
So good question. He's basically saying He's basically saying this. Let's say Apple's at a 300 level. So Apple, oops. Apple is now at 300, all right? Raise your hand if you understand that this line is Apple being at $300. Okay, I want every single person in class to raise their hand. Because if you don't understand this, then I don't know what to tell you. Okay, just get out. This line is going to represent $300 price on Apple. If we keep coming up and we go like this, a new trade in the market's going to try to do what here? They're going to try to short. And his question was, and where do you put your stop loss here? Why above, it's not you and White, why would I put my stop loss above the 300 level if we keep rejecting the same spot as a new trader or beginner? For what? To re-enter? Breathing room? Yes, kind of. You're good. But what's the logic behind putting my stop loss above that 300 level if I'm a new trader? Because if we've come up and rejected here, as a new trader, do I think I'm still right if we go above the 300 level? Probably not. Why would I be wrong if we went back above the 300 level? What would price probably do at that point? Yeah.
Shoot up.
Yeah, it'd shoot up. Right? Because if we're rejecting this, rejecting it, and all of a sudden we break it, we're going to blast back above. That's what they think, right? But in reality, what is more likely to happen based on what we know? If we went above this, what might we be looking for? A what? A bounce back down. That's a liquidity sweep. So his question was, how do you know to take a long position here to that high? How do I know? You three don't answer. If this is how it looks right now, how would I know to maybe try to long back to the high? Do you know the answer? You don't know? Okay. Well, what type of trend are we in right there?
Bearish trend.
Why is it a bearish trend?
Because the lower lows and lower highs.
So what might tell us, if we're in a bearish trend here, what might tell us we're going to go back up to that level?
If we break the lowest lows.
The lowest, not the lowest low, the lowest what? The last lower high, which would be here. Do you see what I'm getting at? So how do we know to long back to this level? Is if we have a downtrend off of it, like this, and then now would we maybe know that we're going to go back to the level? What's occurring here? Everyone say it. Market structure shift, fair value gap, liquidity sweep. Boom, I'm entering on the retracement. I know we're going to go back to that 300 level, and boom, we break it. I target it. Where'd my stop loss go here? Well, at the start, where'd it go?
To the bottom of the low.
The low here. This brings me to another point. If we know we're not to put our stop losses at lows and highs or random lows and highs, why is it smarter to put a stop loss here at the low instead of here? What?
Why? I was asking like why?
Yeah. Why? You tell me. Remember I said we target stop loss at lower highs? Why do you think a stop loss would be safer here or more protected and not to hit versus all these stop losses? What do we not have in all these legs that we have in this leg? Yeah, a change in structure. That's what's switching the trend. We don't have a change in structure here. We don't have a change in structure here. Now we change structure, which would make this what? It's in your notes. What's this called? a liquidity sweep, and now our stop loss would go below the liquidity sweep. That is a safe stop loss. So I've taught you about a lot of where bad stop losses are. That's a good stop loss, okay? Below the low that took out another low. And that's gonna be very important to understand down the road. So that's why you place your stop loss there and not anywhere else. Does that make sense to you? Before we carry on, draw this in your notes again. Ready? Right. Liquidity sweep. Not a liquidity sweep right here. So first one should be liquidity sweep, not liquidity sweep. You've already done this once, but I want you to do it again because this is important. And then this time, I'm going to draw another line here. Do good stop loss. Bad stop loss. Why is this a bad stop loss?
Because it might go down.
Don't answer, someone else. You in the white. Why is that a bad stop loss?
It's not below the.
Yeah, it's not below another low. So is there still a chance that we go here because a lot of other retail traders have their stop losses below both these lows at that point? And who remembers what I said? After we use a liquidity level or a stop loss, what do we do? After we use the level, does it matter anymore? No. So, does this matter? Yes or no? Raise your hand if you think this matters. Okay, raise your hand if you don't think it matters. Okay, wide you in the back. Stop looking over there. I'm looking at you. Why do you in the back raise your hand? Why did you raise your hand? You knew the answer.
No. Raise my hand because
So let me help you here. All right. Why might there still be a chance of, what was my question again?
Why does it matter? Why does it not matter?
Why does what not? I don't even notice.
Does it matter?
Why does putting a stop loss there not matter?
Oh yeah. Why does this low still matter? Yeah. Why does it still matter? It hasn't been swept. Do you agree with that? Now, if this low has been swept and we're up here again, do I keep this low on my chart or do I delete this low? You answer only. If we've already swept this low and we're trading way back up here again, can I delete this off my chart? Yes. Why?
Why do you keep asking me why?
Why do I delete this off my chart after it's already been used? Yeah, because it's already, there's no more what there anymore. There's no more liquidity. What's another word for liquidity?
Stop losses.
Stop losses or orders. There's no more liquidity orders there. Is there still orders potentially here?
Yeah.
Okay, why?
Because people stop.
Yeah, because we still have not ran that low. So that's super important to understand. Right? So I want you guys to break in the groups of 3, and what you're going to do is this. I want you to find one example of a liquidity sweep that's far away, and what I mean by far away is like, let me show you. What I mean by far away is something like this. Would you guys agree this is a liquidity sweep? Where we go below the low, all the smart money buys back up, and then price ends up reversing? Yeah.
How do you get your chart looking
What do you mean? Like the colors?
No, it just looks different from mine when I do like the same settings. Like my candles look thicker and I see what's
Oh, I mean, my candles can be thicker now. I just zoom out. Click this x-axis, see? The x-axis on the bottom, just drag it. So this is a FAR liquidity sweep. This is a liquidity sweep for a bigger type reversal. So I want you to find an example of a liquidity sweep that was a farther one. And then I want you to find one that was a close one, like this. Do you guys see how this is close? All right, so start now, find a far one and find a close one where it's within the same trend. Was the first one I just showed you within the same trend? Raise your hand if you think it was. This one. Raise your hand if you think it wasn't in the same trend. Yeah, very far. It's not. We have so many new trends here at this point. Okay, where it's this one, this is like the same trend, the same leg. Do you see how this one is just way farther away? So, all right, find an example of a close liquidity sweep within the same trend or the same leg, and then find an example of a far liquidity sweep. Just for another example, it would look something like this. Ready? This is a close liquidity sweep, and then this is going to be a farther liquidity sweep. Ready? That would be a far liquidity sweep. This would be a close liquidity sweep. What's the difference between both of these? How many legs of price is on this example? Basically two, just boom, boom, boom. I mean, honestly, I'd say this is one leg. We refer this to as one leg. This one, there's a lot more trends, and then we go up, and then we hit the level. So this would be a farther one. This would be a closer one. So split it in the groups of 3 and find an example of both, and I'll come around. You have 3 minutes.
Right?
What? Yeah, you can do it from the bottom if you want.
But why did he say that? You know, like that's like a little girl who was like, and then the lady in the tissue was like 20 something, and the little boy was like 10, like type shit. What? Yeah, let me check your mom.
All right, you have 1 more minute.
I found perfect example.
Okay, found them?
I think I found
Run ones.
What?
The basketball.
Run ones? No, I'm going to Airlines after this.
No, not right now.
Oh, just whenever?
Next week. And buying us a smoothie?
Maybe next week, yeah.
Actually.
Yeah, I'm done. Yeah, I got carried. My main sport's soccer.
My team is
I get
doing
carried.
I played in college.
Hey, so you went to college?
Yeah, I graduated in 3 years.
Hold on, bro.
Just because I was like too far in, I don't quit
You
stuff.
graduated at like 21.
Yeah.
You played
Yeah.
3 years?
What?
You played D1?
No, it was D3. We played some D1 teams and we like tied them, and I just don't want to go D. I mean, it's just too much work, dude. Even D3 is like 2 sessions a day. All right, now before I start coming around, why do this? What are these examples of here and here? What is an example of? Liquidity sweep. Why is this one a 10 out of 10 sweep and this one's a 6 out of 10 sweep? Draw this. Everyone draw this in your notes. Raise your hand if you can tell me why one's a 6 out of 10 and why one's a 10 out of 10. I'm going to pick someone I haven't picked on yet at all today. You.
You picked on me yesterday.
No, I didn't pick on you today yet, though.
I just got back.
It's okay. Why is this second liquidity sweep to the right worse than the one on the left?
Because it's like goes. Okay, let me.
What about the candlesticks you notice here?
Oh wait, because they're not like it's not going through it. Kind of like it's not going through the.
The body is
It's just going through the body. Not
exactly the body on the first one it doesn't even close above the high, whereas the second one it does. So this might be a little less likely to reverse. Okay, whereas this would be more likely to reverse. All right, I'm gonna come around and start checking your stuff. We're checking you first. Yeah. Where's your examples?
With we have to find one that passes like the liquidity sweep, right?
Yeah, one that's closer and one that's farther away. So look for a high in the market that swept another high, or a low that swept another low. I don't really. Wait, let me see something.
Until you fall into the office and you're walking back.
Okay, I see one that's perfect. It's in this area. It's on the low side.
Talk is talk. You gotta walk, bro.
Yep. Draw it though. Draw the line where what low are we sweeping before the reversal there? We're sweeping that low? Nope. Nope. Remember, this is a downtrend. Boom, 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 boom. And then up. What are we sweeping before the reversal in the downtrend? Yeah, what low did we sweep? That's a high. That's a low. What do you think? Yep, draw that to the right. Exactly. But is that precise? Is that actually the lowest low? No. Draw it on that lowest low. No, see how it's a little off? Drag it to make it more clean. There you go, perfect. That is it. Make sense? Is that a close or a far liquidity sweep?
I'm for sure getting the air ones.
What? Yeah, very close. Good job. All right.
All right, long liquidity sweep right here.
Yep.
Right there.
That's a far one.
Yeah. Now hold up. Short liquidity sweep right there.
Close one. Boom.
Where'd you go to school? Like in California?
No, it's called St. John Fisher. It's a private school in New York.
Ooh. You got bread band.
This one.
Like before the DT.
No. I had student loans and I just paid them all off when I got rich.
Short one, and then I think this one's long.
Yeah, but is this a high? You literally just drew from a random ass point, dude.
That would be like here.
That's us, bro.
Yeah, but that's not a liquidity sweep at that point.
I just got right.
Draw this to this high. Down. There you go. Now do you see it?
Yeah.
Same thing with here. What the hell is that? You're literally drawing in the middle of nowhere. Yeah, right there. There you go. Perfect. All right, is anyone really confused and really needs me to check their thing?
Oh, can you check?
All right, over there. All right, we're back over here again. What do we got? Oh, I love rage bait. I'm the best rage baiter.
She just needs explanation.
What's this?
Why-
Close or far?
Close.
Close. Yep.
And then this one's the. Is this the far one?
Yep. Exactly.
She needs an explanation of why.
That's a really good one. See how many stop loss are probably up there? That's a really good one. Do you get why? No. It's because how many legs of price are there? Do you think there's above one or below one here? How many movements in price are there throughout this whole range? A lot or a little?
A lot.
There's a lot. So this range is just huge. Go to your other example. How many legs of price is there in this?
A little.
Very little, just one, right? It's just high, low, sweep it down. So that's why this is close, because there's only one. Go back to the other
I
example.
don't get. Do you just put a random line?
No, the lines, go back. That's a random line, but this is more precise. It starts from that high. Why this high?
Like the highest?
Yeah, it's the highest high that I can see on the screen, right?
Mm-hmm.
So, and then we sweep the highest high, and this is a very weak reaction or bearish reaction, and then we go down again.
Okay.
Right? All right. Yeah.
Is this one?
Yeah, that's a liquidity sweep, but it kind of fails. It goes back down again.
Okay.
But I see what you're trying to do.
Sorry, then things is that one? Because it keeps going.
See, that one is more of a break of structure because it goes up.
I'm kind of confused. I don't know why. Because, oh my god. How do I get rid of that? Okay. I'm confused, like, is it supposed to say trend?
Is what?
Is it supposed to, like, stay a trend, like when it...
No, a liquidity sweep is always out for reversal. This is an example of a liquidity sweep. See how we are trending up, and then boom, we break
And then
the...
it breaks it.
Yeah, yeah.
Okay. But,
So that's a far or close one?
Far.
Yeah, kind of a far one.
I guess I was confused. It's okay if it, like, it's, like, a low wick, but then it breaks the last low,
Yeah.
but it has to, like, break the original, like, high.
Yeah, it's liquidity sweeps are mostly hindsight, but we're gonna use this reaction in hindsight to our advantage to find a trade entry out of a fair value gap
Okay.
here.
Got it.
All right. So,
You check mine too.
yeah. Perfect. Far. What's this?
That was close, but
Close.
I
It
see
kind-
that it's kind of.
It kind of failed, but like, see, there's still a lot of like.
Oh, but I thought because like it.
It
goes
kind
back
of,
up
yeah,
there.
yeah, it still works.
So I don't know if it works.
No, that does work.
Because I was trying to get it through.
Yeah,
and
just
then I
kind of
guess-
bad price action there.
Yeah.
So,
Okay.
yeah, good job. All right, now we're for the competition for the Erewhon smoothie. What should I do? What?
Yeah. We have 8 minutes actually.
Yeah, I know. I don't know what to do.
Give it to your favorite student.
Give 10 minutes.
No, give the arrows.
Okay, if the first person on TradingView who can find me an example of a big liquidity sweep, a market structure shift back to the upside with a fair, and you have to, wait, actually, I take this back. You must do this on a different ticker.
I already did it.
No, you must do this on, you're gonna type in at the top left, YM. You must do it on this, because then you can't use any old examples. YM, like that. It's this 30, it's the Dow Jones. YM. Type in YM. See what I'm typed in? Now, the first person you're gonna find me a textbook picture perfect example that you must label. All right, look. You must label the market structure shift correct, the liquidity sweep correct. Label it as a $sign because it's easier. You must label the fair value gap correct. You must label the stop loss correct. You must label the take profit correct. And you must label the high or the liquidity target correct. All right. Now, could you target a singular point? Yeah, but look for one with good liquidity or good equal highs. All right. So first person who can do this, and I come around and it looks perfect, it's good. And you must do the RR tool. The first person who does this will get an Erewhon smoothie of their choice. What? You must label the liquidity sweep. What do you mean?
Oh. Yeah, I get it.
Yeah, you label the line where the market structure occurs, the liquidity sweep, where the fair value gap is, where the stop loss would be, the take profit, draw the RR tool, and then mark with the R tool where the liquidity target would be. The R tool is the red and green shaded boxes.
But doesn't that come in the stop loss?
Yeah, technically, yeah.
I think, wait, what is liquidity target?
Show me where you're targeting and why it might be a good target.
All right, I got it.
No.
I got it.
All right, let me check. It might not be perfect.
Yeah, well,
It's got to be perfect.
hold on. Then give me one. Like, let me just fix this. Right there. Okay, I got it.
I think I got it.
All right, let me check you first. Wrong.
Oh.
Wait. Yeah, wrong. What the hell is this? Market structure shift to the low? Look, that doesn't even make sense. What liquidity do we sweep there?
Oh shit, you got me.
Yeah.
You got me there.
All right. Wrong.
No, we didn't.
Which one?
This is all wrong.
Oh shit. This one's the fair value.
Where's the market structure shift over here? There's no market structure shift. We're still downtrending. The fair value gap is this giant zone here, but it's not. It's just wrong.
Ryan, what flavor do you get from Erewhon?
I usually get the peanut butter one.
What did we get yesterday?
The coconut one, that was so nasty.
It was nasty.
Yeah, I used to get the Haley Bieber one all the time, but like
That's
it's just
strawberry one?
yeah.
Never mind. I got it.
Nope.
Ryan, right here.
You're very close, but we never get an entry. There's no tap back in anything.
I moved my FG.
We never retrace back into the fair value to get an entry. We just, and that's not even a fair value. Wait, oh yeah, there's a bearish fair value gap. That's like my entry model.
You fit the wrong way. Do you know?
No, he is a bearish fair value gap.
Yeah.
He's saying, oh, he broke it. Yeah, but we need to tap into the bullish one. That's what I'm trying to get you guys to do.
Wait, no.
Let me see.
Okay, my TP right here is right here. But peep this. Listen, the liquidity sweep is right here. My market structure shift is right there because it starts going up.
No, market structure is wrong.
Damn.
What do you mean it starts going up there?
Oh, market structure shift would be like up here, no?
Market structure should, let me see.
I have the market structure shift here, and then it enters back into the fair value.
Wrong, you need to label everything. I can't. She raised her hand next. You raise your hand, you think you're done?
Oh no, I got it.
Okay,
I got it, bro.
market structure shift, liquidity target. Okay, so you're saying the entry is targeting wrong.
No, I got it.
We already ran this high. We see how we're getting the market structure shift? You're saying, okay, I'm now going to enter this fair value gap. But remember I said delete the level after it's already been ran.
Okay.
We already ran these double highs. These are not relevant anymore. You'd have to target like up here, but there's not really a great target. Do you know what I'm saying? See how we already used these highs? We already ran them here on this candle or on this market structure shift.
Okay.
The double highs are the market structure shift.
Okay, so that's when you would look for it to go back down.
Yeah.
Ryan, I got it, bro.
You think you got it?
Ryan, I'm literally on this, bro. I'm on this right now, bro.
Okay, the liquidity sweep is good,
I just.
but the liquidity sweep is like, yeah, honestly, this is a good play. It would stop you out. But you don't have the liquidity target label, so
Ryan, peep this.
all right, wait, no.
Bro,
No, I was here, bro.
Let me see.
I changed my MSS. My MSS is right there.
Nope.
No.
What? How is that not my MSS? That's the market
Nope.
structure shift.
That's wrong. We don't get an entry.
I don't think I'm done looking.
Let me see you. No, dude, that's way too big of a time frame.
Oh, really?
Yeah, I would be going, yeah. You're using like legs that are really far apart. Look for something smaller within like this circle. like within here. This is like, you can see all this in like the hourly or daily chart.
Okay.
Right, so look for something smaller. Zoom in more. Anyone else? Click Control Z.
I can't get rid of that.
Dude, how has no one gotten this yet? This is,
I got it, and then like this keeps popping up because I can't download it. So I got it like on the app itself, but like there's no way to get rid of it.
bro. Just X out and just do it again, maybe. You think you got it?
Wait, run.
No, that's not a market structure.
Okay, is this
Guys, you should be looking back at the notes of the, remember the giant thing I drew with the market structure shifts and liquidity sweep and the TP? That will help you. Still wrong. You don't have a good liquidity target and it stopped you out. You got it?
Right here.
I had my hand up forward.
No, Brian.
What?
Right. My MSS is right there. That's
Dude, there's
my
no
MSS.
lower high there. There's no swing point.
Let me show you.
That must be a swing point.
I got it.
I haven't shown you
everything
yet.
I have a
haven't
swing
showed
point.
you yet.
Let me see, yeah, let me see.
Okay,
Yeah.
hear me out. I need to point it out because it's harder on my phone. So liquidity sweep?
No, this is not an obvious low. That's not a swing point.
Really, though?
What? What do you mean?
Bro, the swing point's down there, not here. The swing point is this low.
Why are you giving him tips?
Can I just mark this one?
What the hell?
Come on, liquidity sweep, MSS.
So dude, you don't get in the fair value gap before the market structure shift. You wait for the market structure shift, then you wait for the retrace into the fair value gap that caused the market structure shift.
Hear me out.
Where do I
Close
put my
though, that's
MSS?
good.
That's all I know.
So what do I have to do?
Bro, is no one really gonna get this?
Where's my MSS,
You see that
dog? That's
dot
all I
right
need
there?
to know.
That orange dot?
That's the only thing I've wrong.
Yeah.
So am I done?
No.
Why? What am I missing? Fair
I
value
didn't
gap.
get stopped
I entered.
out. I
I
took
stopped
the
up
most
here.
The liquidity sweep should be at the highs if you're taking a short.
MSS.
I got it.
You got it?
I think so. Maybe.
Where do I put my damn MSS? That's all I've got to know. Oh.
No, we don't sweep a swing high. There's no swing high here. We're actually breaking.
Hold on. Ryan, I got it. Ryan, I swear, Ryan, I have it.
No,
Ryan, peep
dude,
this,
you're
peep
taking
this.
a short.
Peep this.
So you said put it up there.
Peep this. Okay, right there to right there.
There's no market structure. There's no swing point. Remember, the swing point must be obvious. There's no obvious swing point
so I
with
can't
breaking.
I can't use
That's
this.
yeah, no.
This is the obvious swing point, bro. How is this not obvious?
All right, no one gets it.
Yo, how is this not an obvious?
When we get back, I'll do some back testing.
I just ask what the actual liquidity target is, so I feel like I know everything except for that.
This is perfect.
Holy G.
Is this what you showed me?
Yeah, I didn't.
All right, wait, guys, we have a winner. Wait, you didn't what?
I didn't have them labeled earlier.
Oh yeah. All right, he won. Yeah, he won.
So that would be like the liquidity target, because like the stop loss target.
Yeah,
that's where I'd be.
exactly.
With my sell, right?
So when we break this, now you know this fair value gap is good to enter, and then you go down, then you target this low. On a scale of 1 to 10, how obvious is this low?
That's pretty obvious.
Yeah, it's just stand there. So good job.
Yo, wait,
All right, what's
missing? I'm so lost.
This is stupid. I'm out of here.
dude? The market structure shift's right, but you don't know it's a market structure shift yet when we form this fair value gap. You only know at this fair value gap. So technically, the entry would have to be higher after the market structure shift occurs there.
Wait, so why was this one not correct then over here?
Because the market, we're not tapping back into the zone, the fair value gap. We're just closing above, and then we keep going up. We never, after the market structure shift occurs here, we never come back and then bounce.
So you need a retracement?
Yeah, we need a retracement to get in.
Ryan, can you show me what I
So,
was missing?
wait, what?
Look,
I've just been doing some BS. I don't know what to do.
it's just not a good example, honestly.
Bro, so you're
Yeah.
kidding. So this one would...
This
I
one's
would've
better.
Had to go on higher with my entry.
So I should take the long here?
Yeah, a lot less
What's the
better.
liquidity target?
See how this is more of a sweep?
Yeah. It's more obvious.
Yeah.
But what's the liquidity target?
Equal highs, double highs, any high is a liquidity target.
So like what I'm aiming for, so it'd be the
Yeah.
on top?
Where's the market structure shift here?
The market structure shift. So I'm looking for a,
Last high or low that broke, right here.
because it's a downtrend.
Yeah, downtrend, high,
yeah.
lower, low, lower, high, lower, low, lower, high. When that last lower high breaks there,
So where would my liquidity target be?
now your liquidity target would be back at the
Up there,
high if
right?
you longed in this fair value gap.
Okay, that makes sense.
So here's a fair value. You buy here now at this market structure, and then you expect price to go up.
So I just had a bad example.
Yeah,
Wait,
Makes sense.
so
Thank
I have a
you.
question.
like this, and then it's still playing out, but.
Thank you.
So you're saying I would have had to enter here?
You got to enter when when this candle tapped back in the fair value gap, but we never did. We tapped back into it here. See how we never tap back into this?
Why do you have to tap back into the?
Because that's where I'm putting my limit order.
Wait, what about this one though? Because that's what I had.
Yeah, but we didn't have the market structure shit hadn't occurred yet, so we didn't know for sure if this is going to go up. Right? We don't know if it's a true trend break.
Bro, it was just off.
Yeah, you were close.
Okay, my swing was there.
Yeah, your swing was good, but you didn't have the market structure shift.
Yeah, that was the problem.
There's no last lower high that broke in yours. What other questions you got?
Let's go, bro.
What smoothie do you want?
I have no clue.
Do you like protein?
Yeah.
All right, I'll just give you protein. Peanut. Do you like peanut butter?
Yeah.
All right, bet.
Okay, this one. Can you combine like two fair value gaps if one's
Yeah.
like smaller?
Yeah.
Okay. So this is the liquidity target.
That's so close. Here's a market structure shift. He had the same example. We tap back into this, but was there a market structure shift ever before this?
Before this?
When we got the century, did we hit the market structure shift yet?
Wait, say that again?
When we tap back into the century, did we have the market structure shift yet?
No, because it's up here.
Exactly. That's
So-
why that's not valid yet. I told you we needed a market structure shift. Now when we retrace in this fair value gap, then I expect higher prices.
Okay,
But
yeah,
at
I
that
just wanna
point, we
ask-
already hit the target. So now we don't have a good liquidity target. So I just want to take that.
Okay. Why do you need to go back into the?
Fair value gap?
Yeah.
Because that's where we put our entry. Because that's where all the leftover orders are.
Okay.
Right,
Okay.
that's-
So yeah, when it goes back down, then the order is gonna.
Exactly. Then all the leftover orders get filled, which cause us to bounce. Yep.
Does this work?
Yeah. Okay. The sweep is.
Yeah, pretend it is the line it goes through.
Yeah, it's more precise. Market structure shift, entry fair value gap, and then, yeah, TP would be at this high, right? And it just doesn't hit. But yeah, that's correct. Good.
Let's see, my map got lost.
You're really zoomed out.
Yeah, I just couldn't find them.
Yeah, you're good.
Closed off. There it is.
What's your question?
No, I'm just waiting.
Oh, okay. All right, way better, way better. Okay, market structure shift wouldn't be there, it'd be at the high, that lower high. Is this a swing point? See that swing point?
That's what?
See that swing point right there? It's a little higher. Up, 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 right there. Yep. That would be your market structure shift. Retrace back into one of these fair value gaps. Entry there. Stop loss below that cluster of fair value gaps. Maybe a little lower.
Like at this?
Yeah, like below all these green zones. Yeah. Like, yeah, exactly. And where's your entry?
Oh wait, I had to do that?
Yeah, where's your entry?
Oh.
That's short position tool. Yeah.
Probably.
Nope.
See,
It
when
would have to be
these-
the entries
so
after the market structure shift occurs.
After, so that means maybe like right here?
Yeah, but what's the entry? When we retrace into the fair value gap is the entry.
What?
We must retrace into the fair value gap. That's your entry. So I'll do it at the top of the screen zone. A little higher? Yeah, like maybe right there. Yeah, perfect. And then where your stop loss go? To your stop loss? The hell? I don't know why it's doing that. Turn off this magnet. That's why it's doing that.
Okay, that's better.
Right there, yep. And then TP would be an old high. Is there an old obvious? I mean, I guess this high is kind of obvious, but.
It'd be like right over
Yeah,
here.
like there. Yeah, exactly. So right there. Boom, perfect. So that would be it.
Wait, so the market, so I would enter right over here because that's what it is.
You'd enter after the market structure shift occurs, then the retracement to the fair value gap.
Okay, so like I look for the market structure shift, then once it gets back into the fair value gap, that's when I enter.
Yeah, exactly. It's just going straight down. All right, remember, for a good market entry, we kind of want structure that's going like down and then up a little bit to what? What's this called when they come up before the down? Yeah, we want like retracements. Are you really seeing any like heavy retracements up here back into these old fair value gaps? No, so it's just like hard to enter, to be honest. So now we're very, 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 very low. If we're low like this, what is price likely to do? Keep going down? Okay, raise your hand if you agree. Raise your hand if you disagree. Yeah, okay, so if we dump like 1,000 points, okay, you gotta imagine like, if any new trader came to the market and they saw a 1,000 point dump, do you think they're gonna just keep shorting? Because they're like, oh, we're going down, I'm just gonna keep shorting, right? That's why we will, after like a dump like this, we will usually start to retrace, because now all like the idiot traders who missed the whole move are trying to short down here thinking, oh, now we're bearish. Which is a sign of what? It starts with an F. Fear, you're close. Yeah, fear of missing out, right? They missed the whole move, and now down there like, oh, I'm gonna short now. And it causes these like short squeezes back to the upside, which is how GME and AMC kept going up, right? Because, and then we just short squeezed, right? Now, I was scrolling this weekend on my Instagram reels, and I saw something kind of cool. It was like the market structure shift, just in a different form. So I'm going to show you guys real quick. I think I saved it. Let me see if I can find it. It was basically what I taught you guys last week, but it was in Minecraft. Okay, someone made it in Minecraft. So, oh, here it is. All right, ready? Okay, so let me know if you guys see what I was teaching you guys, but this is the Minecraft version.
This is an A+ setup right here. Basically, we got what's up, boys? This is an A+ setup right here. Basically, we got the liquidity sweep down here, and then we got the market structure shift, and we got the fair value gap right here, targeting the buy side liquidity. Lock in.
So do you guys see it? Right? It's we're making lower lows, lower highs, make a low, make a lower high, sweep that low, which is called a what? Liquidity sweep. And then we had the market structure shift over this last previous high, and then boom, fair value gap back to the upside. So, I've seen this in Fortnite, I've seen this in Minecraft, traders will start making jokes like this all the time in their feed, and you'll just see it a lot, but this is like the ultimate like A+ model you want to remember. I take it with a different entry. I take it before the market structure shift, so you'll see that. But that's it, man. Like literally, kind of what I drew, kind of what I made you guys draw last week. It's literally just this. It's like the one thing you want to remember is right this. Put in a low. Actually, wait. Put in a low, sweep that low. Actually, wait. So like this. Like that's the model, right? Market structure shift here, right? We're breaking that last lower high. We sweep the low here, and then we target some old high up here, right? Let's say this is an old high. So like this is the simplest way I can put this and what you should be remembering. And this is like the signature in price, where whenever you go on your chart, you kind of just want to look for that. So again, I'm going to teach you an entry where I get in before this occurs. Okay. Do you think if there's a really good, like a strong liquidity sweep and a strong green candle before the market structure shift occurs, do you think maybe sometimes if I know there's good liquidity up there, I can enter before the market structure shift? Why? If it's is it the liquidity? Is it the candle I'm seeing? Is it a mix of everything? Like, what do you think it might be? Like if I saw a trend line liquidity up here and like a giant, you know, Drake candle here that swept this low, right? I can already assume, okay, the market's probably going to start targeting these stop losses now before the market starts to shift, which I'm going to teach you that, all right? Now, today we're going to get into order blocks. All right, actually, wait, I just want to review price action from today super quick. So, if you haven't already seen, we dumped all day. All right, very hard to do. And now, let me show you something. Does this kind of look like what I was just talking about? A giant V shape with a fair value gap to the upside, where you can maybe long. Does it kind of look like I was just talking about? A little bit, right? Is there a market structure shift here? Raise your hand for yes. Raise your hand for no. Okay, someone come up here and draw the line where if we did get a market structure shift, where it would have been. Who wants to come up? You come up. Yeah. So draw the line like where the market structure shift could have occurred if we got it. Just like the model I just showed you in the Minecraft. Where would the market structure shift occurred if we got it? To the upside, to the upside. What last lower high did we need to break, basically, is what I'm asking. It's not the most obvious thing in the world, but it's obvious. No, just draw a line. Just a single line from to the left, yeah. All right, where's the last lower high that we needed to break for it to be market structure shift to the upside? All right, raise your hand if you agree. Raise your hand if you disagree. Okay, someone else do it. You come up and do it. Is this a swing high? Yes or no? No, it's literally just a random ass point he just drew like in the market. That has no meaning at all, okay? Draw the last swing high that we would need to break for us to go on an uptrend. Wait, is it yeah, technically you're right. I think there's one that's a little more obvious because that would be a market structure shift. Yeah, I think that's the best one. So, okay, raise your hand if you agree. Okay, yeah. So, do you see why like this is an obvious swing point? Like this has no meaning whatsoever, right? It's just nothing, okay? But yeah, if we broke the high, then we likely would have gone up or down. Yeah, probably up, but we never confirmed that we got the market structure shift. Now, what do you notice that was put in here? What's this? Yeah, fair value gap. It's your giant fair value to the upside. And would you say this candle is good displacement or bad displacement? Good displacement? What do you think? What do you think back in the left white? Good displacement or bad displacement? On this candle.
Good.
Yep. Why good?
Small wicks.
Yeah, small wicks, big body. Exactly. So good displacement. Now, what do you think if you were watching this in live time, all right, and you saw that, what would you be thinking?
You're cooked.
Yeah, you're cooked. Any longs here are probably getting cooked. Why might they be getting cooked here? Because we totally, what we call this is we disrespected the fair value gap. So write that in your notes. We can disrespect or respect fair value gaps. So we just completely disrespected that fair value gap, all right? We never had a market structure shift, which if we don't have a market structure shift, that's not bullish. And we just totally ran through it. So where might that tell us that price action is going to go next? Yeah, way down. All right, and that's the reason why we dumped today, because remember what I said. Where's the most volume occur during the day?
At the beginning.
Yeah, right off open, because all the overnight people are trying to like get in right when the market opens. All right. So when we see that giant, you know, pump right it open, and then we just totally fade that whole move, all that dumb money or whoever bought here is all getting inversed, which is my model. All right, I'll enter here, and we just totally wreck those buyers, and then that usually causes price to go down. Now, someone come up and draw where the break of structure would be for the downside here, if we were to get it. Can you come up? Draw where you think the break of structure would be. I'll help you out a little bit if you need. So we don't have it yet, but if we were to get it, where would the break of structure be, basically? Just draw like a black line at the low we need to break. Yeah, just draw a line there. Okay, so you're drawing a line at the low. Raise your hand if you agree. Okay, raise your hand if you disagree. Okay, she is right. Good job. So if we were to get a break of structure here, it's just continuing below that last higher low, right? Do we have the break of structure yet? No, right? We haven't broken it yet. Okay? But if we were to get it, we would get it. Now, this is where my model comes into play. Do I need to wait for a break of structure to enter here? No, because I already have so much context that all these buyers are getting completely destroyed because it's a giant strong displacement candle. So I'm like pretty confident before the break of structure, we're gonna go hit here anyways, right? And that's, you know, that's all part of my model, okay? So you can see we just end up ripping back through that low and then we go down further, okay? And again, that's just buyers getting completely destroyed, okay? And that's typically where I enter, which we'll go over more of. Now, sadly, today's lesson is kind of hard. I feel like 70% of you are not going to understand this. You're going to need an indicator. So by this point in time, you know, you can only have 2 indicators in your chart because you don't have the paid trading view plan, okay? By this point in time, you're probably going to want to take the fair value gap indicator off or the market structure indicator off. Raise your hand if you think you could understand market structure shift without that indicator now. Hopefully. Okay. Ideally, that's at a point you want to be at. Okay. Hopefully, you understand like the market structure shift without using the indicator I showed you. Okay. Once you look at it enough, you'll start to get it down. It's like secondhand nature. So maybe leave the fair. So it depends on whatever you're comfortable with. If you can spot a fair value gap pretty quickly now, maybe take that indicator off, but you're going to need room for the indicator I'm going to show you. So, yeah.
What was the indicator for the market structure shift?
I think it's by Lux. Does anyone know? What was the market structure shift indicator? It should be in the top left of someone's screen.
Yeah.
What is it called?
SMC structure.
SMC structure. And FEGs. Yeah, use that. All right. Now, do you think you guys are maybe a little more confident spotting what a fair value gap is now? Raise your hand. Right? Just if you look at them a lot, you just, like I can literally look at a chart and see all of them in like a second, okay? Like they're just, because it's like knowing 2 + 2 is 4, right? I know 2 + 2 is 4 in 2 seconds, right? If I just look at the chart, it's the fair value gap, so objective, right? So today's gonna be a little difficult. We're gonna go over order blocks. Now, write in your notes, fair value gap equals PD array. So PD space array. Okay, that's the #1 PD array in my opinion. And it's a premium and discount array, which I'll remember when we talked about premium and discount kind of from the YouTube video. But I haven't taught it yet. Remember hearing it? Right? The T-Trades guy was like discount and premium. So we haven't talked about that yet, but so a fair value gap is a PD array basically. An order block is also a PD array. So write that down. And what do you think a PD array might mean? Like what is a fair, like how are we using fair value gaps in the market? We're using them as levels. So fair value gaps, what do you say, what's a real level? A fair value gap or a random support and resistance line that a random indicator drew? Yeah, fair value gap's a real level, okay? And it's a PD array. An order block is also a PD array. So what do you think we could use order blocks for maybe? If fair value gap is a PD array, yeah.
Some sort of support and resistance.
Exactly. So we can also use order blocks for support and resistance as well. All right? Makes sense? So, right, fair value gap equals PD array, order block equals PD array, and then, right, PD array equals support and resistance. But real support and resistance, not that retail, BS we see on YouTube. All right. Now, we also have kill zones. This is not a PD array. Kill zone just basically means like the time. It's funny because you're not going to understand this in this 2 weeks or even by this week, but I like to look at time before price. I'm more confident entering trades time before price. I don't care what price is doing. I have certain times where I enter the market, and this is where it starts getting complicated. Like one of my best times, if I were to go back in my journal, one of my most winning trades is like in the first 10, 15 minutes of open from like 9:30 to 9:45. And it's because open does the same thing a lot. It goes up like a couple candles in the 1 minute and then it fades it and goes down. That's what we call a Judah swing. So it's like a fake move at open. Why do you think we might get a lot of fake moves at open? Okay, what do you think?
The market's like unsure about where it's gonna go because it just opens.
Yeah. What does fuel mean? When I say fuel, what does that mean?
Stop losses.
Okay, what is fuel? Why do we need fuel?
To move the market.
Yeah, and what could be fuel? Stop losses. So why do you think sometimes the market pumps right at open and then immediately drops again? Wait, don't answer. You answer. Yeah, why do you think the market might go up at open and then go down again if we know we need fuel to move the market?
It's either like getting any stop losses that are like above and then going back down, or
Okay, what do those stop losses help with?
liquidity.
Exactly. It helps the market move because the market won't go back down. The smart money can't get in if there's not enough liquidity. So what happens at a lot of times in market open, like you saw today, is we go up, we trap all these buyers like we did today, and then we'll go down. Or what's the other scenario that could happen? We could go down then up, right? So maybe we go down, sweep an overnight low, right? Take all those stop losses, and then we trend up the rest of the day. It's a very common move, and I've seen it like hundreds and hundreds and hundreds of times after trading for so long, but you're going to start, if you trade long, you're going to see that, right? So write this down. The London kill zone, the New York AM kill zone, and the New York PM kill zone, all right? We're all talking about Eastern time, okay? When I talk about trading, we talk about Eastern, so make sure you understand that we are 3 hours in front of New York, all right? So London is going to be 2 to 5 a.m., which would be, 11 to 2 p.m. here, or 11 p.m. to 2 a.m. here. New York AM session, which is going to be your most important, is going to be 8:30, 9:30. What do you notice about those times? New York AM session, which we've been talking about.
It's like where a lot of people would wake up.
Yeah, but why? Have I ever said anything about 8:30 to 11? What do I mainly say? What's the important time? 9:30. So you're probably like, how is it 8:30? Because that's just how it works. We call that pre-market, okay? Pre-market is before 9:30, which on futures you're allowed to trade because that's just how futures work. So this is the primary session. It has the best volume. And remember, the best volume equals what volatility? Usually high volatility, right? Lots of up and down moves. This is going to be the easiest price action that we can get for us to catch a piece of the pie and make that $500 in a day or $1,000 in a day or $300 in a day and be done. And then go travel the world or do whatever you want. I don't care. Okay. Maybe you have a Pokemon addiction or something. I don't know. Maybe you want to go play Pokemon Go the rest of your day. Yeah. Wait, what if you're what?
What if you're addicted to the bread?
The bread? If you're addicted to the bread, what do you think is going to happen? You're going to keep trading. And what do you think if you keep trading? What's that called?
Bench trading. Addiction.
This is a new term. I haven't said it yet. Wait, what?
Gambling. Addiction.
Okay, it's called overtrading. Okay. Taking too many trades equals overtrading. Say in your notes, do not overtrade. Because what happens is some of you are going to make like $500 in a day. You'll be like, oh, I want to make more. What if I can make 1,000? And again, this is why trading is such a hard psychological battle, because it's so hard not to try to make more when you're already up, and it's so hard not to try to not give it back when you're down. So now there's two sides that you should be afraid of, okay? People ask me my biggest fear in life. It's not the dark. It's not monsters under my bed. It's not anything besides revenge trading. My biggest fear is revenge trade, because the second I revenge trade, I could lose all my money and like that, okay? So you can't overtrade, and you don't want to revenge trade when you're down, okay? Now, Asia session, write this down too, is 8 p.m. to midnight Eastern, okay? So for here, it starts at 5 p.m., okay? So write that down. Now, right, the futures market is open from 6 p.m. Eastern to 5 p.m. Eastern. So every single new day, when the stock market closes, it closes at what time? Anyone know?
4.
Yeah, 4. The stock market, like if you're an investor in the stock market and you're at the stock exchange, it closes at 4. You cannot trade stocks after 4. But futures close at 5 and then open back up at 6. So how many hours a day can you trade futures? Yeah, you can trade them 23 hours a day. Now, what do you think for a new trader this is going to indict?
Overtrading.
What do you think? What do you, if we're open, not you. What do you, if the futures market's you in the black?
Overtrading?
Overtrading, why? Why might you want to overtrade?
Because you can do it whenever, I guess.
Yeah, you can do whatever, and you can just look at the market because you know it's open, right? And that's not good. So do you think, how many times a week do you even think I'm looking at the market like after like 2 p.m.? Pretty much never. Like I barely ever look at the market. Like I'm only pretty much on the market like from 9:30 to, actually no, 9 to like 11ish, okay? Sometimes if we don't hit my liquidity area, I think we're gonna hit and I'm still holding a trade, I might have to go after that, okay? But usually I don't look at the market, you know, after that, because it's just gonna cause me to like try and take more trades. And the most important part about trading is psychology, right? It's not the strategy, guys. Like the strategy, once you get fair value gaps and market structure shift, like you'll be able to find an entry pretty quick. It's not that hard, all right? But it's really just like the trading. And what do we, usually Asia session, remember we talked about Asia has low volume because everyone's sleeping, right? So Asia will still move sometimes, and sometimes we'll get big moves, but usually it's lower move, which is consolidation, okay? Remember, there's consolidation, retracement, expansion, and then what was the fourth one? Reversal. Those are the 4 ways the market moves. So usually in Asia, we get consolidation. It's really not, you know, good to trade. Write down your notes, Asia equals consolidation normally. Not all the time, but normally, okay? Asia session, which is what, someone remind me what time Asia is again without looking? 8 to 12 Eastern, which is really 5 to 9 for you guys.
That's looking nothing.
Yeah. Okay, and what do you think it's harder or easier to run a bunch of stop losses if we have no volume or no buyers and sellers in the market? Yeah, pretty hard because like we need a lot of volume to like squeeze through like a bunch of giant orders. That's why it's so easy during New York to get some of this, and that's just what happens, all right? Now, why Asia consolidates? Because again, volume globally is just, you know, lower because without volume, price can't trend. It just oscillates, forming equal highs and equal lows, and they just start to pile up overnight, okay? You know, who like this quote says, who the hell is trading 8 p.m. to midnight? Not a lot of people. Okay, that's why it consolidates and does nothing. Lately, it's funny. Lately, Asia has been moving, which sucks for the New York AM session because if Asia makes a big move, I think I had you guys note this down, sometimes New York is choppy, okay? So what is Asia useful for? Asia is useful for studying a range. What do you guys think range means? Like when I say the word range, what do I mean by the term range? Yeah, like the high to the low in a certain amount of time period. So the Asia range, you know, the high and low for Asia, right? Or we might have a high or low for London. If we form a high at 1 a.m., is that going to be my London high? Yes or no? Based off what I just taught. Raise your hand if you think yes. Raise your hand if you think no. Raise your hand if you didn't raise your hand because you're just unsure. Okay. If we form a high at 2:36 a.m., do you think that'd be a London high? If it was the highest point at 2:36? Raise your hand for yes. Why are you saying yes? Exactly. So only one person got it. Because London is 2 to 5 a.m., okay, the highest point of 2 to 5 a.m. is called the London high. So write that down. The highest point of the London kill zone is called the London high. Now, this will be great liquidity or a great target for the New York session if we leave a London high. And I'll show you some examples of this. Okay. Now, what do you think a London low is? Someone raise your hand. You, what do you think a London low is? Yep.
I don't know, anything before 2 a.m.?
No. If we know a London high can form from 2 to 5 a.m., when can a London low form? It's not a trick question.
The lowest point of the
2 to 5. Yeah. So the high and low between 2 and 5 is your London high and low, okay? That's like, no, again, that's pretty easy to understand. You guys agree? Now, when could we get an Asia high? What time? Give me an example. Yes, exactly. When can we get an Asia low? If we form a low at 12:01, does that mean anything? No, but discretionary-wise, it might be close enough to where maybe if it's equal lows, it still might mean something, right? All right. Now, if this is a good trick in the market. If you see like 9 plus equal lows from overnight during Asia or equal highs, expect them to be swept or expect that to be the draw on liquidity, which, do you guys know what draw on liquidity means? Write down draw on liquidity equals the point in which we think the market's going. So draw on liquidity is going to be a good term. Draw on liquidity, or DOL, right? DOL is an acronym. I'm going to start using that. Draw on liquidity is basically, if I pick a point and it's London high, could I theoretically say London high is a draw on liquidity? Yeah, because that's where I think the market is going, and that's what draw on liquidity means, all right? Do you guys get it though? It's like the draw on like liquidity. Liquidity equals London high. Where's the draw? Where are we drawing towards? Okay. So basically, you don't need a setup yet. Just mark the level and wait for New York momentum to tell you when. So let's say, I'm going to show you guys an example. Let's say this is the Asian range. All right. Do you guys see why it's important looking at what overnight did now? And not just coming in at 9:30 and being like, yeah, F it, I'm just going to enter. So let's say this is Asia, and let's say there's just really low volume, and we form this. All right, and then now, let's say we have London, blah, 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 and now we're in New York. What might I be looking for to potentially target all those highs that were stacked up? Yeah, a market structure shift. So, and then what type of candles would I want to see going towards this high? Yeah, very strong candle, or what's another word for strong candle? Drake candle, or good what? Displacement, right? Any sort of like really bullish move now, I'm gonna look for an entry. You know, maybe we form a break of structure here, market structure shift down there, and then, you know, we think price is gonna bounce off here, right? That would be an ideal entry to go to those highs. Does everyone see how it's all the same model, just in different ways? Remember the little thing I drew earlier, right? Lower high, market structure shift, go up again, all right? So that's that. Let me see if I can, I have a PDF somewhere, I think. It has to verify it's me. All right. I have a bunch of like PDFs made. I might have signed in on my Gmail right now. Again, remember, everything I end up showing you is all going to go back to this model. Like that. Okay. You guys should really get comfortable with like spotting this model, like the market structure shift here, liquidity sweep here. Like this is the money maker right there, okay? Okay, let me go to this thing real quick. How are my PDFs? Oh, I see. Let's see if I have a PDF in here. I don't really have any PDFs on this model, but I used to somewhere. All right, let's keep going. So, the session rhythm, okay, this is a rhythm and how the market typically likes to move. All right, and I know this is kind of boring, but once you start making money, like it'll be fun, just trust. All right. Basically, take this with a grain of, like this isn't end all be all. I'll probably take a picture of this. Usually, what does A stand? Wait, okay. A stands for accumulation. This is when price is going sideways. Usually what happens is we accumulate and then we manipulate. What do you think the same thing as manipulation is? If we're manipulating the market? Liquidity sweep. Do you guys see how liquidity sweep is a manipulation? Right, because we're manipulating all the retail traders and wrecking them. So right, liquidity sweep equals manipulation. I'm going to talk about manipulation a lot more now. I really couldn't say that term before because you would have been confused, but okay. Now, if we get consolidation and then we manipulate above or below that consolidation, what do you think distribution means? What do you think distribution means? If we first go sideways and then we manipulate either up or down, what do you think distribution is? Distribution is the take profit. That's where we're expecting the market to distribute to. Do you think distribution is a big move or a small move? It's a big move, right? What's the small move here? Yeah, usually accumulation, it's a tighter range, basically, all right? So this is a guide. Usually when would you expect accumulation based on what I said? Asia, London, or New York? Why Asia? Yeah, because it's choppy, right? That's where you usually accumulate, all right? So it's not like an end-all be-all example, but that's usually what happens. Now look, I'm gonna go to a chart and turn on the kill zones indicator. Again, there's a lot of useful indicators that are ICT related, okay? So if I just type in kill zones, the one by, it's kill zones plus pivots. This, nope. Where's that kill zone? All right, this one. ICT kill zones plus pivots. This one is this is like the best kill zone indicator there is, all right? Now, what do you think this blue area is? What session is that? What session is blue? Asia. What session is the pink? Or red? London. What session is a green?
The New York AM.
Now, do you see what I'm talking about regarding the accumulation, manipulation, and distribution? See how we go? This one actually did move. Was the range bigger here or smaller than London? Yeah, we move a lot more during here. But do you see how Asia does its thing? We manipulate above Asia during London. Right? This is where retail traders think, oh, we're above Asia high. Now we're going to pump and they're going to buy here. Remember, this is where all the dumbasses are buying. And then, boom, giant move to the downside, reversing, which is our what? Our distribution. Right? So this is a rhythm on how the market likes to move. Okay? It's just a guideline on how the market likes to move. So let's go back to see if there's any other examples. Now, do these, wait, it probably marks out PM. Where's PM low? Oh, yeah, okay. This purple zone is basically New York PM. Don't worry about that for now. Now, do you think here, which is Asia, do you think this is the guideline of what I just talked about? You think? No, it's not. If New York would have had to go up here. See how this one just in more of a downtrend? Why is there no manipulation here for London? It's because we're just going, we have a session, the session here is a high, then we form lower highs and lower lows, and then we just keep continuing during New York, okay? For this to be manipulation, we would have had to go up after that. Now, let me draw a little diagram to help you guys. This is called AMD. Draw this picture right now. Accumulation, manipulation, oops. All right, accumulation is going to be this. Manipulation, distribution. So maybe color coordinate this. Probably not the greatest color scheme, but. So we have accumulation, then we manipulate here, and then we distribute in the other day. What's this called right here? There's a couple different names, I guess. What's this called in the market? What type of there's 4 ways the market moves. What's this called? What? Rejection? You're close. What are the 4 ways the market moves? What do you think that one would be? Do you know?
Reversal?
Reversal, exactly. That's where you reverse.
What were the 4 ways the market moves again?
Consolidation, retracement, reversal, expansion. What does expansion mean the same thing as is in the AMD model? What does expansion mean? Yeah. Yeah, expanding is when you distribute. So both mean the same thing. Write that down. Expansion equals distribution. Now, someone come up and draw the other way of this model. Draw the opposite. By the way, this works for long-term investing. This works for anything, dude. Like you could literally go on like an NVIDIA chart or a SPY chart or any long-term investing chart and find the same pattern, and you'll know when the buyer. You'll know when the buy. You ideally want to buy in long-term investing. Okay, I would not short stocks. That is not the smartest thing to do. You only short futures. Stocks are made to go up long-term. Long-term, you're gonna have more of a what if you long stocks? More of a, it starts with an E.
Equity.
No. We have more of an EDG.
Edge.
Yeah, we have more of an edge longing stocks.
Edgy.
What does edge mean?
We have the advantage.
We have like an advantage, like we know, we have it basically like we just know what the market's gonna do most of the time, all right? No, someone come up here and draw the opposite. So this is a bearish AMD, all right? So I want you to draw the bearish AMD in your notes. Someone come up here and draw the bullish AMD. You wanna come draw it? Come draw it. What? What's up? Call him? No, I don't think he's been paying attention, but here, you can come up. You think you can draw it? Okay, come up and draw it.
I fact-checked it.
I already know who's been paying attention in class and who's not. Like, I will not call on those guys. I feel bad. Some people probably don't even want to be here, which is not my fault, but. All right, what's the opposite of this? Draw it like in this blank space here. So move over a little bit. Yeah, or just draw on any blank space. You know what I'm saying? Okay, go to the paintbrush tool. Yep. You can use the mouse to make it easier. All right, ready? Let's see. What will he draw here? Okay.
Come on, dog.
You're good so far? Okay. That looks the exact same as this. You were so close.
It's needed to dip.
It's the opposite way. So what do you think the opposite would be? You almost had it.
Yeah, dip, yeah.
Okay, now what? Now what? If it's the opposite as what I showed here, what is this? It's just a mirror. Here, wait, here, try it one more time. Because you're going to be confused. You're so close. Here, draw it once more. Okay. Yep. Now, if we manipulate up here on this example, what's going to be the opposite? Manipulating where? Down. And then what happens after manipulation? You're so close.
Just go down.
Okay. There you go. Perfect. Good job. You can sit. So, there it is. That is manipulated. That is AMD. That is bullish AMD. Accumulation, manipulation, distribution. So draw both these in your chart. All right. Take that picture. So that's bullish accumulation, manipulation, distribution. All right. So that is basically just a visual example of this. okay, of this. So usually the major liquidity runs or the stop loss runs happen during these times. So, you know, some of you are like, oh, futures are open all the time. Do I have to trade all the time? No. I trade because I want freedom. I trade because I don't want to, you know, I don't want to, I don't want to work to 9 to 5, right? By the way, I'm pretty sure my friend is coming into, wait, maybe tomorrow to speak. He's another trader. He's made like $2 million trading, I think. But yeah, he might be coming in, but we'll see.
Is he gonna throw money in?
No. Dude, ideally, like when you start working on a lot of money, you don't tell people how much you make because you kind of want to be like a little like, you want people to underestimate you a little bit. Yeah.
I saw a reel where like PB said he made like 1 mil when he was 14.
Yeah, PB investing. So you're starting to see other traders in their feed now. Who followed me and they're starting to see other trading things in their feed now? Yeah, so.
You've been popping up, bro, that cleavage video.
Yeah. Yeah, if you guys don't want to be spammed with day trading stuff, don't follow me because it's like a business. But yeah, like PB investing, he's another trader. So PB investing, he made $1 million at 14 years old and he lost it all. Yeah, he is a dumbass. All right. But then he got it back up. He's now 18 now. But this is one of the younger traders out there. All right. This is him. Now, yeah, I know. PB investing. He brought a Lambo to his high school prom, I think, and it like blew up. Yeah. Yeah, so he picked up his sister in a Lambo. So I'm good friends with him. He actually wanted to teach us. he FaceTimed me. He wanted to teach us. He's in Michigan though. So but I got, he's I think 18 now, but he's made probably over $1 million trading. But yeah, all these traders are gonna pop in their feed. But remember what I told you. PB investing is someone who's a strategy where it's like, it's not what we do. It's a total opposite. Can you still make money doing that? Yes, but he's pretty good at psychology, so that's why. This is gonna be like the most practical way. Like the way PB investing trades is like, he basically trades something called a VWAP, and it's just volume weighted. It's called VWAP. A VWAP is like an EMA. It's like just another line in the chart. It's like a weighted volume average or something like that. You'll probably see about it. But like he just like kind of trades the bounce off VWAP and then targets the high again. If you traded a bounce off VWAP, do you think that would feel like an accident if you made money, or do you think you'd be like, oh, I know I made money? Yeah, I feel like an accident because VWAP or all these levels of these indicators in the market like don't actually have any significance. What has significance? FEGs and what? Stop losses or highs and lows. All right, those will have significance. Now, the two practical takeaways for knowing what a kill zone is. We want to wait for a kill zone to trade. We ideally want to trade during the New York zone. If you see equal lows forming at 3 a.m., do not short them. You mark them, wait for New York, which you guys are going to be sleeping during London anyway, so it won't matter. And then you wait for New York to give you the entry signal, and usually the liquidity won't run outside those times. All right. Now, if you're trying to trade outside these times that I just told you, do you think that's good or bad? Yeah, probably not ideal, okay? Can you still make money trading outside of these times? Yes, and often if you do follow me, you might see me post something where I make, money outside these times. But what's more important, the strategy or managing your risk? Yeah, if I'm still managing my risk outside these hours, could that still be a good trade? Yeah, because I'm still managing my risk, right? Maybe I have conviction in something that you guys don't understand, right? Because I've been doing it for so long. That's where I start to run away. Now, most of you will not understand this. I'm sorry, okay? This is not easy to understand, okay? This is called an order block. And this is basically another PD array, like a fair value gap. Okay, this is my second favorite one, all right? What it basically is it's when we get a, okay, this, first of all, this is real support and resistance, guys. This is not fake lines on your chart. This is institutional order flow. It's what we call it, okay? It usually occurs after sweeping an important level. What might be an important level that we talked about in the past couple classes? Okay, what kind of highs and lows? I just mentioned a few today. What? Maybe a daily high or low. Maybe a London high or low. Maybe, what else? Asian high or low. What else? A weekly high or low. What else? What's another good high or low? I'll give you a hint. Highs and lows. Highs. What's the example of highs that could be good level? Equal what? Equal highs. Equal lows. What's the other one I could be talking about?
Triple highs, triple lows.
Triple highs, triple lows. What else? Starts with a T. Tum, 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 tum. What else? Trendline liquidity. All these levels I'm naming should be in a list somewhere. Be like, okay, equal highs, equal lows, trendline liquidity, Asia high, London high, daily high, weekly high.
Let's start from the beginning.
Okay, ready? Equal highs, equal lows, London high. All right. London low, Asia low. These are all key levels in the market.
Asia high too, or?
Asia high, yep, everything. News high, which I'll talk about news highs eventually, but yeah, like a high formed off of like a Trump candle.
Trump candle? What was Asia high?
Asia high? It's the high between 8 o'clock and 12 o'clock Eastern. What?
What's after this?
We could form a London high or London low after Asia high. New York, or low of day, high of day, right? Low of day and high day is LOD or HOD, all right? So all these levels are key levels. So when do we want to see an order block form again? Off of what? When do we want to see an order block form again? Off of what? A key level, which is everything you guys just listed. Those are examples of key levels. So this does not look easy to read. I don't like that picture, so I'm going to go to a different one. Order block example. Now, it's going to be better if you actually go on Google right now and probably just steal one of these screenshots. I'll tell you which one is legit. This is bullshit. This is not, no, this is not legit. Let me see. Most people don't know how to teach order blocks. This is not an order, dude, like this is not an order block. This is a supply level, which is horrible. Okay. This is a good one right here. So this is an order block. It's that's still gonna be hard to understand. Let me just draw it out for you guys. Actually, I can draw a better example. All right, look.
You just said that's wrong. You said that's wrong.
No.
Oh, all right. He's making this one.
Okay, this is basically your order block. The red candle. Sandwiched between two green candles. The green candles matter. And this is what we call an OB. So what should price do if we come back down to that order block? Go back up. It's telling us we have bullish order flow, or the market's bullish. All right? And I'm going to do an exercise with you guys where you try to find 3 order blocks in your chart. Okay? But this is our order block. Now, remember, ideally the best ones are going to be the ones delivering off a key level. Someone give me an example. What could this level be? All right, so we're going to say this is a London high. How in the world is a London high at the low? That doesn't even make sense, bro. What could this be? Somebody give me an example. What? London low, perfect. This could be a London low. What else could it be? What else could this level be? Yes.
Could be the Asia.
It could be the Asia low. It's not going to be the Asia high, bro. How in the world would a high be at a low? You're going to look back at that answer in like a year if you see day trade and you're going to be like, damn, I was an idiot. All right. Look, so ideally we want to be sweeping, or we want to be sweeping some key level. It could be, could this be equal lows? Could this be equal highs?
Yeah.
No. We're at the low, bro. How would this be equal highs if we're at the low? Okay.
It's a Monday, bro.
So yeah, this is ideally what an order block is, okay? Now, someone come up here and draw me what maybe a bearish order block would be. It's complete opposite. Who thinks they can come up here? Let's pick you. Yeah. Come up and draw a bearish order. I already know this guy's gonna probably get it right, but it's so funny. Like I was obviously, I had a 4.0 GPA in high school, and like I always like looked at how teachers did things, and it makes so much sense now. Like being a teacher, like I guess you can just tell like who's gonna fail and who's not gonna fail.
Like a teacher in
But
comparison to a student has had like years of experience doing one thing.
Yeah, true. Yeah.
If you're a high school student, bro, you're like doing like 7 other subjects at the same time. And you have to, like, follow them.
Yeah, true. And like even in school for me, like I loved calculus and the math stuff, but I hated going to English. So I fall asleep during English, but I like doing the math.
Actually, I suck English.
Yeah, me.
ChatGPT, I almost
Yeah.
failed my English.
You what?
I almost failed my English.
Really?
I had like a 4.
To change a color, you down there, go down. It's the bar, the toolbar at the bottom of the screen. There's like a paint button. Yeah, right there. Yep. All right, now draw the OB. Like draw like the where it starts usually. Now the bear. So it's the open of the candle that is the best line of an order block. Write that down. The open of a candle for the bearish or bullish order block equals best support / resistance. Exactly. Boom. The open of the order block. All right. Yeah. Okay. You're good. Perfect. You can go sit down. Yeah, that was beautiful, dude. The open of the order block is going to be the best line we're going to draw for like a potential entry, right? Potential entry equals open of an order block. All right. Again, this seems easy right now because I made it super simple, but once you go on the charts and trying to find this on your own, you guys are gonna be so confused. It will be. All right, everyone have these drawn? Bearish order block and bullish order block? All right. Now, is this a bearish order block right there? Is this a bearish order block? Yes or no? This candle. What do you think? You said this is easy. Yes, it is. Right? Because I treat it like a peanut butter and jelly sandwich, right? These 2 red candles are the bread, and then the green candle is the peanut butter or jelly, okay? The second we close below this open, this formulates a bearish order block. It's that signature in price. And like I said, you're gonna have to see it a lot to really like Get it? Now, would this be a bearish order block right here? Yes. Now, do you think that might be a good or bad order block?
Bad.
Why bad?
It's like a small candle.
Yeah, it's just a 2 wiki candle. Write down this. Do not use wiki candles for order blocks. They suck. The wiki candles for order blocks suck, okay? You'll lose money taking these. Now, does this technically still work and act as resistance? Yeah, it does, I guess, but. Now, would this be a better order block? Better or worse? Yeah, much better. So, remember what I said. The second we get that bearish order block, price tends to go down off that level, okay? Or just off the close in general. And then where do you think a good stop loss would be? Where's a good stop loss if we're taking a trade off an order block? If we know an order block is a real support and resistance. It's not a trick question, guys. It's above the order block. So the order block high would actually be here. So this is the order block high. Is this a swing high? No, but isn't it an order block high? So honestly, stop loss will be there. I think you could even drag your stop like to here, but that's just me. Yeah, but that would be the ideal stop loss. When we form that order block, that's like bearish to me. Okay. Now let me give you, okay, would this be an order block right here? Yep. Let me give you a trickier example. Would this be a bullish order block right here?
Yeah.
Why do you think yeah? It's still technically the same signature and price. It's just more discretionary. This is where it gets hard. This is still an order block. An order block definition is we're closing above the last like down close candle sequence. That's like what an actual order block is. So it's not necessarily the signature and price I drew. It's we're closing above the last down close sequence. This is where we're gonna start needing an indicator to show you this because it's not easy. Now, would this be an order block right here? What do you think? You? Yeah. Think that'd be an order block?
Yes.
Yes. It's just because we're still closing below the last up close sequence with all these green candles. Look what happened. Is this very algorithmic?
Yeah.
Look how strong this level is. This is real support and resistance, guys. Like this level is insane, okay? So that would be an order block. Now, would this, wait, let me turn this off. Would this be a bullish order block right here? Yes or no? Let's call it someone new. What do you think? Would this be a bullish order block? Yeah. This high, this candle right here, the red candle?
Yeah.
Yes, that would be a bullish order block. Now, before you, so let me see if I can go into FxReplay here real quick. We'll try to find some order block examples, and I'll try to take trades off them. What?
Why does every day should have the same like dark background and like the green candle, red candle?
Because it's ICT, all our mentors, we all learn from the same guy, but then most people learn from me after that. Yeah. All right, ready? We're gonna try to find some good examples, all right? Now, do we have any obvious order blocks here yet? What would we, okay, if someone can get this, you're actually a legend. How would we get a bullish order block here? Yeah. The last what?
Last high. Last high.
You're so close.
It was, yeah, the last low.
You're so close.
You're so
What do you think?
If one of the green candles like closed above that black candle.
Exactly. Dude, you're getting it.
You just said that.
So, no, you said the last low or high. It needs to.
You said the last
lower
high.
candle.
Tim, you're a legend.
Well, the red candle's the better. All right. I was surprised because you guys weren't getting anything last week. So, if we close above this red candle, that would be a what order block? Bullish or bearish?
Bullish.
Yeah, that'd be a bullish order block. So that would mean we're gonna go up. So let's see. Is this a bullish order block? Why? We only wicked above. What's the saying I told you guys? Wicks do the damage, bodies tell the story. Oh. So would we have ever looked for a long there? No. Oh. Okay. Is this an order block?
Yes.
Yes. So I would say price is likely to go back up here. All right. All right. TP hit. So the second I see us close back above this down close sequence of candles, I think that we're going to run back up there. Now, does this have anything to do with the market structure shift? No. You're going to see I'm going to start going away from market structure shifts because there's better. Order blocks and fair value gaps are better than market structure shifts eventually, which you'll learn. Okay? Now, someone come up and draw the liquidity sweep here before this order block formed. Yeah, come up. So we got an order block, but do you think you should just long off of any random thing that looks like an order block? Or should there be other confluences or context involved? Yeah, we should have what else, maybe? A what? What else should we have before an order block, maybe? What's one of those confluences on those checklists, the checklist from last week? What's like a super important thing we want to do in the market before any type of entry? It's the number one thing. What? What do you think, you know? What's the number one important thing we always want before an entry?
Oh, high volume.
No? No? You're
Security.
a liquidity sweep.
Damn.
Right there in your notes. That is the one thing like you guys should be looking for before any type of entry.
Why is it not drawing a line?
There you go. Okay, is that the liquidity sweep? Is that what you think?
Well, like, couldn't it be here too?
What low are we sweeping there?
Bro, just that's why I think, bro.
That's just a higher low.
So we're gonna be like,
No, don't go down, bro. Go up.
Well, he's kind of right. Wait, you had it. Do what you're about to do. Up more. Okay, now he's just drawing. Now he's just drawing the draw.
Come sit back down, bro. Come on.
All right, I'll let someone else do it. All right, where do you guys think the liquidity sweep was for the entry that I just took? Where do you guys think it was from here? Someone come up and draw it. Do you think you could draw it? You can try. Remember what I said. This goes for anything in life. Do not be afraid to fail. I promise you, it's not embarrassing. I failed a lot.
the best loser wins.
The best loser wins. The more times you fail, the more successful you're going to be. I promise you. And I don't care if you day trade. I don't care what you do. That's just going to be a lesson in life.
Remember the words of Kobe.
Okay, you're very close. I think there's a more obvious point though. I don't know, is it?
What does that mean, Kobe, bro?
All right, raise your hand if you agree. Raise your hand if you disagree. Great job. Yes, that is the liquidity sweep. That is the most obvious thing. So the second we get this liquidity sweep and then we close back above, I have two confluences. We just formed an order block and we just swept this low. Boom, perfect. Did we form a fair value gap here? Did we form a fair value gap there?
FBG right there? No, we don't.
No, it's not.
No, we don't have, right? Because all the wicks overlap. There's just none. At this point, I can't be like You just have to know what a fair value gap is, to be honest. But now, let's just keep playing price. See if we can find any more. Okay, technically this would be an order block, so I'd like to see that used as resistance, but because it's like way over here, I don't like using those ones. I like the ones where they're on the same leg. See how we have a leg here, here, here? Does it make sense how we're using this order block like 3 legs later, right? Because we have this leg and this leg in between. Versus this order block we used was on the same leg. Does that make sense? It was the V shape. We like the V shapes, right? So we're just not going to use that one. We'll probably just wait. Okay, look at this. Is this an order block? Right, because we're closing below the last up close candles. See what? So see how we're holding it? And then we go to sell side down there. See that? Now, where would the stop loss have been? Above that what? Above the order block, and then the target would have been here. So would that been a good trade? Yeah.
Because of all that liquidity just got stuck, could you like just blindly place a long there and have a good chance?
Oh, here?
Yeah.
That's called a turtle soup. Yes, but it has a lower win rate. I like to see more confirmation. I like to see a sweep to low, and then I like to see an inverse fair value gap. Does everyone see this bearish fair value gap here? Raise your hand if you see the bearish gap. So if we swap this liquidity and then we inverse this gap with a strong candle, then that's my entry model. Okay, so let's see what happens. And that's like that will make you millions of dollars. All right. Yeah. So do we have the inverse yet? No. Okay, there's the inverse. Now I'd expect us to go up. See that? So the entry would have been here, stop below the inverse, target the high again up there, right? See it? And bang, TB hit. All right, that's 3 back-to-back trades I just showed you that all won. All right? Why did I target up there?
Because that's like,
I don't know, bro. I'm running off.
Yeah.
That's where the previous high was.
That's where the previous high. Well, why did I not target there then? Because that's a previous high.
The other one's the higher high.
Yeah, this one's the most obvious. Right? So see how we swept this low and see how we, what's this called again? A what leg? It starts with an M. No. What is this leg? It's not a monkey leg. It could be, I guess, if you want to call it that. Remember, do names actually matter? No, you could literally call this the most inappropriate name of all time, which you guys, that's not you guys, but
Like the Red Rocket.
yeah, maybe. It depends on, okay, but the reason I'm saying the names I'm saying is just so we can communicate better. You know, how is China, when they're building their empire, supposed to communicate? Because they have to use the same language. It's different than English, but you need some sort of communication to somehow get the fact that I'm showing you this. This is called a manipulation leg, which is also called what? A liquidity sweep. So did we have 2 liquidity sweeps here technically before the entry? Yeah, we did. Did this one end up mattering? No, but this one did. And then if I saw this candle in live time, what would you be thinking?
enter.
Well, who's getting wrecked?
Retail traders.
Retail traders. Remember, there's 3 parties here. What are the 3 parties on this candle? What's happening here, the 3 parties? There's 2 getting wrecked and 1 that's not getting wrecked.
Smart money.
Smart money's doing what here?
Not getting wrecked.
Okay, so they're not getting wrecked by doing what below this low? Yeah, they buy below the low because, right, imagine how many people have their stop below this low. That's the only way they can get in and create a candle like this because that's fuel, right? This is our fuel to get in, all right? Now, who are the other 2 parties getting wrecked here? at these lows. Yep.
So by smart money, do you mean like all the big institutions?
Yep, exactly.
So them buying is causing the shares to be worth more and causing it to go up?
Yeah.
So if enough institutions like do something, they can like fulfill with their own orders?
Essentially, yeah. That's why they always win. But we're trying to be on the right side of that. Who are the two parties getting wrecked down here? Do you know? Okay. Do you know in the black?
Retail traders?
Yeah, but what strategies are people using here that might be getting them wrecked here? What?
People who actually do support and resistance.
Yeah, so support. So the first party getting wrecked down here is the support traders. Where do they have their stop loss? Below this low. They think they time the bottom. Right? They think, oh, we have a liquidity sweep here. I'm going to time the bottom. We go up kind of, but then we go re-hit their low. Do you see why I wait for this to inverse and why I don't just enter blindly on one liquidity sweep now?
Yeah.
I wait for the confirmation of like the bearish structure break. Now, is this also a market structure shift?
Yes. Yeah.
Someone come up and draw it. Can you come up and draw the market structure shift? Actually, wait, no, you do it. You have to. I'll help you out. Wait, first, what's the definition of a market structure shift? To the upside. When we break the last, what? Lower. Exactly. So you're going to find that. Now, could some of my entry models be market structure shifts and could some not be?
Yeah.
Yeah, sometimes they are, sometimes they aren't. But is the market structure shift the first thing I'm looking for?
No.
Not really. That is for beginners, which is why I said you guys should look for that first. But over time, we're going to get more advanced. Okay, where's the last lower high off this entry that we broke? Yeah, the last lower high. So draw the lower highs and lower lows, maybe with a highlighter.
Okay, where's the highlighter?
To the left in the brush tool. See where this says brush? It's a paintbrush. It's a rectangle. Yeah, click that arrow on the rectangle.
Okay.
And then highlighter. So maybe do some last lower lows and lower highs before we started going up.
Lower lows. Okay.
So that's a lower low, yep.
Right here.
Yep. So we have the swing point, the bottom of the bottom.
Oh, okay, here.
Yep.
Okay.
So that's a low. Now draw like a lower high before that.
Right here, right?
It's going to be swing points.
So up?
So start by drawing this high.
Okay.
See how it's a swing point?
Yeah, like there.
Yep. So that's going to be high.
Okay.
Now keep going to the right and draw the next lower high we put in.
Wait, oops, I didn't mean to do that.
Control Z. Okay, draw the next lower high.
Is it there?
Yep. All right, good. Now draw a lower low here. Yep. Now draw a lower high here. Last lower high, it's kind of obvious, I guess. Yep, exactly. So now draw where the market structure shift occurs with a line.
With the line, okay. Is it down here?
Agree or disagree? Is this where the market structure shift is?
No.
No, it's just a random ass low. Okay. It's when we break the last lower high. What's the last lower high you just drew?
This one?
Yes.
Okay.
Draw a line to the right there. Boom. There's your market structure shift. Do you see how this is the same thing as I was showing you in Minecraft?
Yeah.
All right, you're good. Good job. So after 10 tries, she finally got it. All right. Now, is that good or bad if it took her 10 tries?
Bad.
That's good because you can't be afraid to fail in life. Trust me. All right. So we go up there. It's also a market structure shift. Maybe it might have not been a market structure shift. It's just the way the market played out. Is the market technically random?
Yes.
Yes, we should believe it's random, but we also believe it's not random at the same time. If that makes sense. Okay. So that would be your market structure shift. Now, would this technically be an order block too?
Yeah.
Yeah, it technically would be. So there's actually multiple confluences here for us to go up. All right. Now, our next exercise, you guys are going to start drawing some order blocks. All right. Do not refer to this. Refer to the picture I drew. Draw draw 2 bullish order blocks and draw 2 bearish order blocks. Remember, what are the order blocks you want to avoid drawing out? The ones with the really wicky candles, okay? But see if you can mark a line at the open of the candle on your trading view chart and just draw 2 bullish order blocks and 2 bearish ones. If you're taking a picture of this now, you're already too late. This is not a good picture, but order block indicator and see what comes up and see if it's good. So let's see if we can find one that might be helpful for you guys who might need it. Order, what are we going to type in? Order block. All right. Let's try this one first, see what it looks like. Okay, do you think this is good or bad? Why bad? Yeah, what in the world is this? Get this off my chart. Hell no. All right, we're going to try another one. Order blocks by Nephew Sam. Okay, does this look better? Yeah, I don't even... These are not order blocks. Not order blocks.
Maybe order blocks and breakers.
But you guys don't know what breakers are yet. I guess we can do this one. Nope, I hate this one. Guys, there actually might not be a good order block indicator out there. This is horrible. I do have an indicator for my model, but let me type in ICT order block. That because we. Okay, we might maybe this one. I guess technically this is an order block, yeah. This is technically an order block. All right, honestly, you might need to figure this out on your own. These order block indicators suck. It's kind of hard to draw an order block. It's a little more subjective than a fair value gap, but it's still the same thing. All right, we're gonna be watching a YouTube video. Wait, what time is it? 11:23. Yeah, low key. Let's watch it when you get back. You guys can pack up.
Thank you, bro. I'm fucking hungry. When are you inviting
No.
Or you should invite a select few top students.
The top students? All right, I'm gonna invite you and you. So,
do you think this would be a good video to watch? Just on more stuff on order blocks?
Yeah. No. No. That's not an order block. See, some of these guys don't know what they're talking about. T-trades. Yeah. If this was a 1 minute time frame, what time frame would we have to be on for this to be one giant red candle?
5, maybe.
The 2 minute. Because there's 2 1 minute candles in the 2 minute time frame. Get what I'm saying? So if we're in the 2 minute time frame, this would be just 1 candle. Do you think if I'm using an order block, do you think it's going to be more obvious if it was 1 or 2 candles? Probably 1. But is this still an order block as you get more advanced? Should you know that? Yes. But that's like beginner level order blocks. Like just look for the 1.
And we get a move higher. For our last and final example, we are going to run through some price action and showing you how when price is moving in one direction towards a higher time frame PD array, it is likely to...
What's a PD array? Yeah. What are some examples of PD arrays? You have it in your notes. Order blocks and what? What's the other PD array? Do you know? Fair value gap. Good job. Those are the only 2 I've taught you so far.
To respect bullish or bearish order blocks along that range up. So for example here, we sweep this low, come back into the range and break
See it?
pressure. Here is the low being swept. Here is our break.
We close back above the down close candle that swept the low.
Our order block. to see displacement up into this area before returning to the fair value gap and order block. So there we go. We reach up into, you should be able to see it now, R.
That's a bearish one.
Right there. Swept this high, broke structure down. Now we want to see if we return and get supported here. There you go, you can see we drop down and price does get supported by this order block. Now as we go higher, where is our next order block? You see this?
See the order block off the order block now?
Let's swept this low. Before I move higher, I want to see price being supported here. And you can see
and boom.
Supported. I went a little ahead of myself, but as we reach higher here, we have a down close.
See the next order block? Right? See it right there? So these will just keep supporting price higher. All right?
Candle into a fair value gap. We would want to see this be supported as well, and so on until you reach your higher time frame objective. I would say experiment with.
What does higher time frame objective mean? What is an example of a higher time frame objective? You in the hoodie answer. You. What's a higher? What can it be an example of a higher time frame objective? Remember I listed all those levels earlier? Which one of those levels? You don't know? Did you not write it down? What's an example of a liquidity level? Where might stop losses be? At the highs, what type of highs though? What's an example of a type of high I talked about earlier? What? Lower high? Okay, remember I was talking about the time? What's an example using time of what a good high in the market would be? You know? What? London high. What's another one? Asia high. New York high. All these could be your objectives. All right? New York high, Asia high, London high, equal highs, trend line liquidity, news highs, which I haven't talked about yet. There's so many.
Versus the wick and single versus series, and figure out what works for you and what you enjoy the most. The last one I'm going to cover is what is the mean threshold of an order block.
What do you think the mean threshold is?
From volume high,
Probably what?
low, 0.5.
What's mean?
So instead
So
of
50%.
using the open of this order block, as we showed in the last example, you can look to enter on the mean threshold, which you can see works fairly well right there.
How much drawdown would you have if you entered long here?
Threshold is using my entry on the open.
How much? Oh wait. How much drawdown would you have if you
versus with the mean
entered right at that 50% level of this? How much drawdown would you have? 0. Because if you entered at this 50% of this order block, you're literally bottom ticking the entry. You're getting in at the exact bottom where a price went. Now, do you think you're going to catch every play if you try doing that? No. I would enter at the open of the order block and do your stop below it, like here. Notice where does he have a stop loss? The wick of the body? Yeah, he has his stop loss of the body. Is there multiple different ways to do it? Yeah, this is where people will start to branch off. Some people will put it to low. Some people will put it to body. It depends on what your experience is.
In threshold, you can see my stop size reduces from 3.5 points to 1.75 points. I hope you found this video helpful and useful. If you have any questions, please leave them in the comments below, and I will do my best to get to them as quick as I can.
No. All right, click off the video. All right, let me do a couple more order block examples on FxReplay. Watch and learn. If you actually are serious about day trading, this is definitely worth buying. But if you're not, don't get it.
What do you do on FxReplay?
It's backtesting. It will tell you the data and the statistics on how profitable you are. So I'm just gonna go to like maybe the 15-minute, and we'll just kind of look for some order blocks here. Are we uptrending right now or downtrending? Okay, what might be something that tells us that? Well, see how we keep putting in order blocks to the upside? Order block, order block, order block. Right, we're just putting in multiple order blocks. All right. We have an order block. Do we have an order block to the downside here? Raise your hand for true. Raise your hand for false. All right, have the class now raise your hand. Yes, we do. See it? The up close candle. All right. Now, why might this one be a little lower probability than what the examples we were just going over? What do you notice we don't have here? What's the main part of the model that you want to look for first? No, there's something before that. Liquidity sweep. Is there a liquidity sweep here?
No.
Someone come up here and tell me why there's not a liquidity sweep. Let's see here. Who wants to come up? You come up. Yeah, you. Yeah. So come tell me why there's not a liquidity sweep here. Draw where it kind of failed to sweep. I should probably know your names, but. So tell me why there's not a liquidity sweep. Like what did we fail to sweep? You're very close. Exactly. So draw a line there, extend it right. Now, what is this? Okay, you're good. Sit down. Good job. What is this more of? A double top. So that to me would probably not be the greatest entry to short. I would rather have this swept first. So would I enter a trade here?
No.
Nope. It's not A+. Just okay. Now, you can see, was it still respected to the tick? If you enter there. Yes or no? Yeah, look. We literally put in the order block. We respected it to the tick, which is why these levels are so damn algorithmic, which is why this is a $10,000 lesson. But there's one issue with this trade. What time is it? What session are we, what kill zone are we in?
Asia.
Yeah, we're in Asia. Right? What time's Asia? Remind me. It's 8 to 12, which in military time is what?
Oh, wait.
20 to 24?
20 to 0, yeah, 2000 to 000, which is midnight. See how what is this called? Chop or consolidation. So even if I enter this trade, I would not have been mad. I would not have wanted to sit in that trade. That just sucks. Imagine you're just sitting in a trade for like 10 hours and like you're in a live money position. You'd be staring at that, I promise. Now, look what happens. If we entered, it would have stopped us out. Now, like I said, why did I know that was a bad entry? Yeah, because we left a double top, so I know market's probably going to go back. So let's just keep playing price. Okay. Kind of looks pretty bearish here. So now I would say that this is better. Would you guys agree? Yeah. See how V-shaped this is? It's like a complete upside down V. So we'll try a trade entry here. I'll do stop. Like I like to combine confluences. So like see how there's a little tiny fair value up there. I'll probably just, if price gets all the way back up there, let's be honest, we're probably gonna get stopped. So I'll do that. Where should I go break even? Probably here. So see what we kind of get out of this. Now, what's important, I guess the target So maybe, I guess you can consider these relative equal lows. All right, relative equal lows is not when they're perfectly equal, but when there's lows here, because our stop loss is still sitting here. Yeah. Our stop loss is still sitting here now. Nope. If we had this, stop loss will not be there. But there are. So I'll probably try the entry. I'd go break even there. And I'd get stop break even. All right. Let's see what would happen. Again, the market should draw towards that low. Again, we're not in this trade, remember. Don't worry, it'll all make sense in a second. It all makes sense in a second. Just wait. Bang. Okay, so where did the market try to hunt? These two lows, because it knows your stop loss is there. That's why we kept rejecting up there. Now, I would have gotten stopped break even after probably taking a few parcels here. So I probably would have made, you know, $500 there, and then I would have still had like maybe 2 contracts on, and the rest would have gotten stop break even. Do you think I would have FOMO from getting stopped and not hitting the full TP here?
Yes.
As a beginner, yes, but as an experienced trader, no. Why do you think I want to have FOMO from being in this trade? Why do you think I would not have FOMO from sitting in this trade? Yeah, it's so bad. It's like just keeps going. Like, dude, it goes on for like 3 days, right? So we're on the 15-minute. So I would literally not be mad at all. I'd be like, okay, I made my money here. We just kept going. This sucks. Like, even though we hit TP, could I have maybe found another entry here and then maybe got there? Yeah. Yeah, what's up?
Do you have like a trade within a trade?
Yeah, you can have a trade within a trade. Exactly. So let's say it gets stop break even here. There might be a re-entry here on like the 1 minute time frame, or there might be a re-entry here in the 1 minute time frame. Right? I'm in the 15-minute time frame. So there can be all these 1 minute entries within the 15-minute. All right. Now, do you see how I'm hitting TP here? I can kind of predict where the market's going a little more than when I was doing this the first day and I kept losing on the market structure shifts.
Yeah.
Right? Why do you think I can, you know, predict the market a little more with everything I taught you? It's just more it's just how the market moves. Like the market structure is technically retail trader patterns, but order blocks and fair value gaps are going to like really tell you where the market's going to go, not the market structure shift essentially. So, you know, you're going to see me get a lot better at this now, but I couldn't do that the first day because you guys didn't know what any of this meant. Okay. So yeah, now I'd probably be looking for longs here. See how we hit that low and just instantly bounce? Right? And it just, again, because every single time we hit liquidity like this, smart money's just buy. Okay. If we get, honestly, if we like inversed this little tiny fair value gap and this fair value gap, that'd be pretty bullish. Oh, wow. But okay. Now, we should keep running higher here. Why? Yeah, there's news there. See it? Why should we keep running higher here? What do we have? Trend line. Okay, see how we ran the top of that trend line eventually? Right, and then you can see price will go back to the highest high. Why? Because we came down, tapped into this giant fair value gap, and we know price moves from fair value gap to highs. Who sees the model I've been teaching you the last 2 days? Who sees it? Remember that little tiny drawing with the 3 and the market structure with everything? Where's it? So here's a liquidity sweep right here. Boom, we swept the lows. Here's our market structure shift right here. See it? Here's the fair value gap right here, FVG. And then you'd honestly want to buy when you tap back into the fair value gap, stop below the fair value gap, and then target this high. Who sees it? See how it appears everywhere? This will appear everywhere. All right. So I'm gonna have you guys watch one more video real quick. This is just going to be to like market share. It's just what comes up. All right. Last video. Again, this is just gonna confirm everything I've already showed you.
How's it going, everyone? This video is going to be over market structure shifts, displacement, and fair value gaps. So let's get into it. What is market structure? Why do I need to know it? And how do I use it? So what is market structure? It simply just comes down to highs and lows, short-term highs and lows, swing highs and lows, relative equal highs and lows. As shown here, you have lower lows, lower lows, and then you can see trends change when you get those higher lows and higher highs. Now, why do you need to know this? Well,
What type of liquidity rests of the highs? Buy side or sell side?
Buy side.
And then what's of the lows?
Sell side.
Exactly. Oh, there's me.
Do you have a video on this?
Yeah, right here. That was from 2 years ago, though.
Put it on.
All right. The most asked question I've gotten in the ICT community is how do you tell the difference between a market structure shift and a liquidity sweep? So this takes time to understand. And I'm so blurry. I've been trading for about 5 years now. What? It's just my camera sucked. This is like kind of like I got rich like 2 years ago. This was kind of when I started really getting rich. And then I actually I upgraded my whole setup after that. So definitely taken me time to understand. But let me give you the overall gist of it. So a market structure shift looks something like this, where we can break a higher low, okay, and then we break the higher low. Now I'm going to remove this line, okay, and when we create a higher low and then break the higher low, that means nothing without context. So in ICT, the biggest thing that you have to understand. I don't even know what I said in this video, so. Great. Meaning, if we get a higher low and then break the higher low in the middle of nowhere, you really don't know if that's a market structure shift or not, because you need to look to the left, you need to see where liquidity rests, and that's how you figure out if it's truly a market structure shift. And time will help too. In this example, you've probably seen this plenty of times. We create a higher low, and then we break the higher low, but we end up going back to the high. So why does something like this happen? Well, it's simple. It all depends on liquidity. So, for example, right, if we have buy side liquidity or we have some sort of equal highs where stop losses are going to rest, and we kind of see a reaction over it like this, and then break a higher low to the downside, chances are it's probably a market structure shift, and there's probably going to be a fair value gap that causes us. Right, if we swept the high, it's probably a market structure shift. We have not hit buy side liquidity. A lot of times, if we still haven't hit that buy side liquidity, what will happen is that a market structure shift? Go down here. This will not be a market structure shift. This will be more because we haven't swept the high yet. Right here too. It's a trap. Remember, it's a trap. So it all depends on the question: have we hit liquidity or not? Have we hit liquidity? Very important question. For example, if I go into the market today, okay, we kind of saw this manipulation leg all the way down. Now, what happens here is if I just circle the highs and lows, I got a low, low, high, high, higher high. It kind of looks like this is a market structure shift because we create a lower low, lower high, lower low, and then higher high. See the pattern, the W? But here's the thing, that's hindsight. You need to know the example in the context in live time to be able to tell that that's truly a market structure shift, because in hindsight, it's very obvious that that is clearly a market structure shift, but we've already seen the move happen. So what are some things that could have told us this was going to be a market structure shift to the upside and not just a liquidity sweep to go lower? Well,
if we look to the left, what I'm noticing here is there's a lot.
Who sees it? Who sees the liquidity sweep? It's so obvious.
It's right there.
Yep.
And then right here. So to me, if I draw this whole range out, maybe on the 15-minute time frame, from this low to this high, it seems like we're relatively low compared to the range. Okay, so here's
If we're low, we want to buy. If we're high, we want to sell. Remember
we're
that.
relatively low. We kind of swap some liquidity. So to me, it doesn't really make sense to try to look for shorts that low in the range. So if I saw some sort of market structure shift, I would identify it as one, not a liquidity sweep, because it doesn't make sense to look for a liquidity sweep back to the downside all the way in this discounted area. So in this situation here, I could classify this as a market structure shift in live time, knowing that we're low in the higher time frame range and we swap this liquidity. So that's the first identification of how you would know that's a market structure shift and not a liquidity sweep. Why wouldn't you consider this a market structure shift or break of structure to the downside? Well, let me tell you.
Watch this.
We're very low in the range. We're severely in discount. We've already swept this liquidity. And even if we somehow did keep going down here, I would still identify this as a sweep or no break of structure. I would not, even if we did go down here, I would never identify this as a break of structure because.
So what I'm saying is, even if we kept going down here to this red line and then we went up, would long still be the idea either way? Yeah, like even if we hit it on here, then went up, it doesn't matter. It's just the fact we got it here after this liquidity sweep. So it's still a valid model and everything I was saying.
I wouldn't short this low, right? I need to see a sweep higher going back to buy side and then maybe a market structure shift. Okay, that would make the most sense to me. Okay, so see how down here in the range it doesn't make sense to look for a market structure shift here. And if it doesn't make sense to look for a market structure shift here to the downside because we're so low, it only makes sense for this to be a liquidity sweep. It's impossible to try to identify it as a market structure shift. Now, when we go back up and hit buy side, right, we create a higher low above buy side. This is where you're ideally looking for a short now because we hit buy side again and we're back up.
How bearish was the reaction at buy side here on a scale of 1 to 10? Like where my mouse is. How bearish, on a scale of 1 to 10, how bearish is this reaction at buy side? Yeah, like 1. We're not breaking structure here. We're not getting any big giant order blocks back to the downside. We kind of just stalled at this level and just we're not getting any like market structure shifts to the downside. So it tells me we're probably going to go higher at that point.
But premium in the range. We kind of made a higher low here, higher low here, higher low here. And then what happens when we break the higher low right here? Well, we just end up going down. We get a.
There's a structure break up there. Right, we never got a structure break here or here.
We get a model to the short side of this fair value gap.
So there's your what? Liquidity sweep right here. See it? Structure break here, fair value gap here. The 3 big things in the checklist.
Because we're now in the premium of the range, we're now.
And we're really high up in the range. What happens when the market's super high? Well, it starts with an R. Yeah, it'll retrace back down. So we want to look for shorts when we're super high. What happens when we're really low? Yeah, when we're low, we're in, starts with a D. Discount. Discount. All right.
Being a market structure shift. You wouldn't expect the market structure shift down here because we're too low in the range. But up here, it would make a lot more sense, and it wouldn't make sense to get a liquidity sweep and then
I got to make you guys engage somehow. So
go up again if we've already kind of taken on a decent amount of buy side and we're high in the range. So
all right, so is everyone getting it a little more? Right, sweep buy side, look for a manipulation lag or liquidity sweep. All right. Want me to go over one more example here? All right, we just swept buy side. Should we be looking for longs or shorts here? Shorts. So let's see if we get like a good confirmation for us to go down here. I don't even know. It looks like to me this is the last higher low, which we haven't broken yet. So will this be bearish yet? No. Just because we swept the high doesn't mean we're bearish yet. Let's see if we get a good break. Ooh. What do you think? That looks like it's going down. So that means I can probably short here, low key. What is this? These are fair value gaps. Do you think it's probably a smart idea to actually wait until these break? To short? What do you think? Do you think it's a smart idea to wait for these the body to close below? Yeah, you. Yeah? Right? Because if this is a bullish fair value gap, what happens at bullish fair value gaps? Well, people buy off them. Right? Now, is there any like really obvious fair value gaps that have not been filled? See how this one was filled here? All right, see how we tapped into it? Is there any other really obvious fair value gaps in this leg that we could maybe stall at? No, this was filled. This was filled technically, but not that obvious. See how this was never filled? See how we never tapped into it, don't tap into it. Now we're tapping into it. So we could bounce, but it doesn't make sense to bounce based off the context of us sweeping the high.
No.
Why not?
I don't know.
Because smart money's getting in here at the high, and this is just a giant death candle. So I'm assuming we're probably gonna go down here. So we'll try it, and if I lose, it'll probably be because we bounce right here where the entry is. But I'll try it anyways. Now, where should I target? There's not really any great built-up liquidity, so probably target this low inside this fair value gap, maybe. See how this is called an intermediate term low. Write this down. A low that bounces off an old fair value gap equals ITH, or intermediate term low. This is another liquidity target you want to add to the list of liquidity pools.
Wait, intermediate what?
Intermediate term low or high. When I say low, it can also mean high too. Remember, London high, Asia high, equal highs, trendline liquidity. This is also going to be one. A high or low inside of a fair value gap, or in other words, an ITH, or an intermediate term low. When you're investing, like if I bought Tesla right now, yeah, so an ITH. What? A low that bounces off a, what are we bouncing off of there? Fair value gap. This is a fair value gap. So an ITH or an ITL, intermediate term low or intermediate term high, equals higher low inside fair value gap, which is going to be another really good target. What causes price to literally bounce off this fair value gap? It's not a trick question. What is scientifically happening behind price here to make us bounce? Orders are getting filled. What type of orders? Buy orders or sells? Buy orders. So when we have what we call a smart money reversal off of the top, do you think these lows are now in danger?
Yeah.
Yeah, because in order for price to go up there, people put their stops there. Is it clicking? A little bit? Now, we're going to take a short here. How much money should I risk?
$3 million.
$3 million? I'm going to risk $1,000. Do you think that's good?
Yeah.
All right, we'll risk 1,000.
Risk $1 million.
Wait, 10,000?
It's fake money. Risk $1 billion.
All right, we're risking $1,000.
Risk it all, bro. What? Broke money don't make money.
Dude, why am I in a sell stop?
What?
Wait.
But your life's saving.
Yeah.
Sell your kid.
Dude, it's putting me in a sell stop. What in the world? Oh, there you go. What type of order do I need to go here?
Stop. Market.
Nope. What type of order do I have to put here? A sell what? I could put a sell limit. I could. But honestly, when we have a big candle like this, I do market. So I do market. Remember, I mainly use market. So we'll do sell market. We are now in the trade. So one of two things are going to happen here. We're going to keep flushing down because we broke market structure shift and we swept the highs, which I think is going to happen. But if we don't, you'll probably see what respect these fair value gaps. What do you think about this candle might respect this fair value gap if I'm wrong? What type? The starts with B. Yeah, the body. So if I get stopped on the trade, it's probably because this fair value gap isn't broken. So if I wanted to be safer, I would probably just want to wait for this to be broken. But we're going to take my chance here. What matters the most in trading again? Risk management. Am I still managing my risk in this trade? And is there still some sort of probability or edge based off what I showed you that we theoretically should go down here off this, you know, sweep? All right, let's see what happens. All right, now, would this have been a losing trade?
Yes.
No. Do you really think after this red candle right here, I'm not going break even?
Probably not. No.
No, I would go break even there. Okay.
Oh yeah.
I haven't taught you this yet, but this wick right here is actually a news wick. So Trump or something tweeted to cause these giant wicks. See how, do you think these look out of the ordinary?
Yes.
Yeah, this is news. And what you'll notice is these news highs and lows are very good targets. So I probably would have partialed there and went break even and probably would have gone stop break even. So see how perfectly we hit that? And then we went up again? So it would have been a scale / break even trade. Remember, if I'm in 4 contracts on micros here, how many can I get out at that line? Could I get out 1 contract? Yes or no? Raise your hand if you think yes. Okay, could I get out 2 contracts? Yeah. Could I get out 3 contracts? Yeah, I could get out however many contracts I have, right? If I'm in a short with 4 contracts, I could cover 1 there, 2 there, 3 there. It just depends. I'd probably cover 2 because half, but. All right, I want to go over one more example. All right, ready? So I'm going to go to the next session, I think. All right, ready? Now, are we very high or low?
High.
So do you think it's smart to look for longs here?
No.
Probably not. So, okay, could this be a market structure shift right here?
Yeah.
Yeah. Liquidity sweep here. All right. So let's see if we put in like a fair value gap. See how there's no fair value gap here? Is no fair value gap good or bad displacement? Yeah, bad, because we're not leaving like a giant candle to go down here. So let's just, I'm not going to short yet. Okay, what's this? What's that? Yeah. And or B, all right? This is an order block. So, my guess is we're probably going to go to the 50% of this up move. When I say PD array, write this in your notes. Write PD array equals premium / discount array. All right? Then write discount equals below 0.5, premium equals above 0.5. Now, do you think that I'm going to draw a range in this price condition or this price condition? Which one?
What's a range?
Or do you think I'm going to draw an impulse lag, basically?
A what?
Yeah, it probably doesn't make sense to you. Okay, what do you think?
For a premium discount array, it's like 0.5.
Yeah. So a premium discount array, that's just a name, but premium discount comes from premium and discount.
Is there any units on the 0.5 zone?
No, just 0.5.
If it's just 0.5.
It's just 0.5, no units attached. So above 0.5 equals premium, below 0.5 equals discount. I'll pull up a video on this in a second, all right? Now, what do you think I'm more likely to draw a impulse leg on, or a 50%, and why? Don't be afraid to be wrong. What do you think? This is getting really boring, damn. All right, where do you think I'm gonna draw the 0.5 on? A clean up healthy leg or a choppy range? Yeah, this one. Raise your hand if you agree. Do you even know what you're agreeing on? You were just talking. Okay. So I'm more likely to draw on this one because it's clean. This one just would have too many impulses. Now circle this, draw this out, and write this right here is an impulse. This is an impulse leg. Right here, impulse leg. Okay. So I'm more likely to draw it on this impulse leg. Do you see a lot of impulse legs in here? No. Yeah, there's impulse leg here, boom, boom, boom. Two of them I need to play with. This is going to be way more obvious. Remember I said we want to only trade price action where we're getting clean, healthy market structure, highs and highs and higher lows? Do you think this is cleaner or this is cleaner? Yeah, first one, obviously. Okay. So, see it right here? If I go to the line chart, see this giant obvious impulse leg? Raise your hand if you see that. You see it in the white? Yeah, you don't see it? All right, it's this giant up move. That's called an impulse leg. So ideally, the market likes to go back to the 0.5 before we go up again. So I'm guessing because of the word block here, we'll probably go back to 0.5, then go up. Remember, we're just trying to, like the market should move from premium to discount. Like the market, when we're uptrending, the market likes to go back to retrace and then go up again. Or same thing for the down. So if I draw 50% here, it'll go below the 50%. If I draw 50% here, it'll go before the 50%. This is essentially how the market moves, guys. Like it moves in retracements. Up, down, retrace. Up, down, retrace. And at some point we'll reverse. But like we want to see probably price here, go back. So I feel like with this bearish order block, we'll probably go back down to here. It's not the strongest in the world, but I'd try it. So let's just try it. We'll put a stop above like this high, because this is also bearish order block here. So just to be safe, let's see if this would work. Okay, so that one would have got stopped out, which is okay, right? I mean, it's a risk. I'm still not, I mean, I still think we might go down lower. Let's just see. Okay, this would be a re-entry. Would you guys agree? What is better about maybe this entry than the entry I just took? What do we have on this leg that we didn't have on these legs? Nope. You're close. It's one of those things on the checklist. Nope. Liquidity sweep. See how we wreck all these sellers here on this leg up? But were we really wrecking anyone here before my entry? No, we were just downtrending. And everyone who had their stops above this high and this high are safe. They're not getting stopped out. Now, we wreck these guys and have the fuel to go hopefully to that 0.5. So we're going to try one more entry, see what happens. Boom. See it? Do we smash TP? Yes, sir. So now we can stop trading. But you can see the liquidity sweep. See how if I'm missing something from the checklist, it's a lower probability trade? Versus here we actually have a sweep, so it would be higher probability. All right, now what else did we break here that you guys notice? We broke something very obvious. What do you think? We broke the bullish for rally gap. So that would be an A plus setup for my entry model. Sweep the high, break this bullish for rally gap, and then boom, retrace to the 0.5 where we know the market likes to go to. All right. All right, now you guys can go make some money. No, I'm just kidding. Probably not yet. I mean, you probably could now at this point. Honestly, like you're at a point where if you start paper trading, you can make money.
I'll leave it for like $6 grand.
I hit one yesterday.
For $6 grand? Okay. Nice. Now, what would we maybe be looking for here? At the 0.5 if we know how the market moves. By the way, let me teach you $1 million lesson here. Is this the same if we were to go in a 4-hour time frame or an hourly time frame? Yes, it is. Look. Still the same. Still the same. What does it look cleaner on? Yeah, it looks the cleanest on the 4-hour. Because it's like fewer candles. But it's the same idea. Remember I said all this is just the 15-minute candles is just 16 15-minute candles on a 4-hour candle. All this is a giant 4-hour candle, another 4-hour candle, another 4-hour candle. Now this 4-hour candle is just retracing there. But right now we're on the 15 minutes, so you can see a lot more candles within the 4-hour. Right, so now I'd actually probably be looking for some long setup. So let's see what we get. What are we looking for here first, maybe? A fair rally gap, what else? Order block, what else? Liquidity sweep, what else? What else are we looking for? Maybe like a market structure shift, right? Anything that shows us or convinces me that we're gonna go back up here. Do we have anything yet? Is this like that bullish? Yeah, nothing strong. We're just kind of weak. Like, this is just where I'd watch and just see what happens. Are we still downtrending? Yep. Still downtrending, still downtrending. No, we're still not breaking the last lower highs. Would we have lost money if we were trying to long here? No, because there's no setups. If we did long, I don't know what the hell you'd be longing. You'd be an idiot because there's nothing to long off of. Right? There's no bullish for rally gaps. There's no market structure shift. You'd just be gambling. Okay. So there's still nothing to actually enter off of here. Ooh. Okay. So yeah, there's news there. So we would not have lost money there because there was never any market structure shifts. So do you see how I'm avoiding taking losses or losing money if we're not getting the entry model I want? Right? See how we're not breaking those last lower highs? So I just wouldn't enter. All right. This is boring. But this is also going to make you thousands of dollars. So now, does anyone have any questions right now?
Who's gonna make the most money?
Any questions right now? Now, do you want to see something really cool? This is an example of all of my entry models. I don't really update this too much anymore, but so these are all examples of like A+ setups.
Wait, you too?
Yeah.
Sure.
See how many there are?
Wait, what's an LR again? LR.
It's trend line. I have so many setups in here, dude.
How many do you have?
So many.
Like,
Dude, there's so many. See,
Do you have like your team that does these?
I have a team.
Oh, okay.
But I show them the setup, and then sometimes they make it artistically better. All right. But do you see how every example I'm looking for a liquidity sweep, looking for like a bullish gap here to get completely closed under. All right. I'm just targeting like some, this was the next swing low, but at the end I'll probably give you guys a link to this somehow. This is just really good studying. What happened here with the 0.5? We what to it? After we made a bottom here, what did we do? We no.
Rejected.
We retraced back to the 0.5. What's here? A fair value gap. I take a trade off of the trade, right? I'm taking the confirmation entry, the fair value gap breaking off of this fair value gap. I don't like to enter just retracements on fair value gaps, but I'll teach you more in my model. This is a trade I took, this one. What does ITL mean?
Intermediate term low.
Exactly. Right? See how this one we swept the low inside the fair value gap, and then we got all that buying pressure, or all that buying, break the fair value gap, boom, I'm in, boom, I'm targeting the high. What happens at the high? We just instantly reject, right? Because there's a lot of people getting filled there. You guys get it? This one, swept sell side. What else did we sweep here that was, what type of sell side did we sweep here?
Wait, what?
What type of sell side did we sweep here?
Intermediate.
We swept an intermediate term low, because see how this low pushed out of this fair value gap? There's one other liquidity we swept here. It's so obvious.
The buy side.
No.
Sell side.
Trend line liquidity. See how obvious this was? The second Dow gets ran, that's more smart money coming in. What did we leave up here? Look at how many equal highs there are here. 1, 2, 3, 4, 5, 6. 6 equal highs. So I know when we get that strong displacement candle back up off that sell side, we're going to go back to the highs. Because the market hunts stop losses. So yeah, this is the news highs. This is a new. See how these are very like out of place. These wicks. These are very good liquidity pools. Okay. Write down this: a news high. You guys should have like a list somewhere of all the good liquidity pools. So keep adding to that list. What?
No, we have.
You told us a lot.
Yeah, now add news highs and news lows to that.
News highs already in there.
Yeah,
Okay.
news high and news lows are over.
All right, and an intermediate term high, intermediate term low. Okay, which is also low inside for a value
You
gap.
didn't tell us about data lows, dude.
Yeah, data lows is the same thing as news lows and highs. Data equals news, right? The data we get from CPI, the inflation numbers. That's just a news candle. CPI is once a month. All right, listen, CPI is once a month, and it tells us the inflation rates. Do we care about the CPI number?
No, we care about how it influences.
No, we care about the candlesticks and how it influences in the chart. Should we be aware of CPI and what time it is? Why might it be smart to know when CPI is?
So maybe like, I don't know.
Because if we're in a trade a minute before CPI, do you think we could blow all of our accounts? What would happen if we're in a trade a minute before CPI and we didn't know CPI was coming out at 8:30?
Oh,
Yeah, there could be a giant candle and you would get wrecked and your stop loss won't fill. So.
Or we get a Drake candle and we go up.
We could get a Drake candle, yeah, that's who. So yeah, you guys, that's pretty much all I got for like the basics of like ICT and market structure shift. Now I'm gonna go into more of my model.
Yes.
What? Now sometimes like people full port CPI. What does full porting mean?
Like
Go max size, max contracts. You either blow the account or you pass the account.
You can spend like 50% of your account.
So if you buy a fake account, which I'm going to tell you guys about, it's like a $50 account on a prop firm. You can full port it, and it basically means you buy like 6 minis. And how many?
Oh, you have to be eval for those.
Yeah, eval first. You full port the eval.
Yeah, but what? What if you don't pass the eval? Do they
They
give
need-
you your money back?
No, it's a write-off too. Do you guys know what write-offs mean?
Yes.
You can write off business write-offs.
We were able to write off. Oh no, we weren't able to write off the 100.
If you have an LLC, I'm not even gonna go into that, but what's an LLC?
Limited.
It's like basically you just own a company, and the company is your LLC.
Licensing company.
Yeah. But yeah, you can people call it full porting. If I took 6 minis on a trade, how many points is that per 1 point?
6 minis.
Yep. I'm 6 minis on a trade. If we went down 1 point, how much money would I be losing? 120. Any other answers?
Yeah. Well, that's just 6.
Raise your hand if you think it's 120.
That's just 6 times 20.
Yeah, 6 times 20. Now, what if it was 10 points?
Well, I don't know.
1,200. Right? So full porting, 10 points, you'd be like down or up in like seconds.
That's tough though. I know that.
All right. All right, let's find a funny video of someone full porting CPI.
Have you ever done that?
Yeah?
Did it work?
Yeah.
How much did you make?
Like 10K.
What's the most you've ever been up?
But it's on an eval account. It's not on a live. Do not full port CPI on a live account. You're gonna get screwed because you'll not get filled. With these fake paper accounts, you're gonna get filled at the exact price. With live accounts, you get filled a little off because it's a live market. Oh, there's. All right, ready? How to?
Who's eval trades?
How to full port?
Aval trades. He's good. He's just on TGR Island.
How to full port CPI?
There was some guy that only knew how to buy. He could like.
Yeah, I know. That dude's an idiot. Half the people on TGR Island were all idiots, dude.
Why weren't you there?
Because I'm not going on another grown-ass man's island, dude. Like, what?
Wait, I know.
I'm my own person.
Grown man's island.
Do you think I'm going to go and sign up for another grown man's island and compete in challenges? No.
Right off the floor.
Yeah, but how'd you get paid?
No, I'll make my own island. I'm, like, big enough.
Bro, look what we found on the internet.
Who?
Look at what we found on the internet. You don't
Let me see.
Can you explain this?
Dude, what? All right.
Can you explain how we found out? Like, we literally all we looked up.
So, as you can see in my reel that I posted about an hour ago is gaining traction. Why do you think this has 600 likes? How does 600 people understand this? Because it's just funny. Because this guy got wrecked and we thanked him for the liquidity.
Yeah.
Right? Most of my students today, they actually took a short. So that guy did not. So I don't claim him. No, I'm just kidding. No, I was sleeping, bro. I watched the Odyssey last night and I got, dude, it was so good.
I want to watch it.
There's a couple things that like,
I don't think you stole this.
yeah, I didn't. I know. I typed I was so tired. Now watch this. We're gonna look up some traders full porting CPI. All right, ready?
Legends never.
3, 2, 1.
See?
We did not. We did not leave. What? Did not leave. How?
All right, let's watch some other videos. All right. Watch what candle happens to CPI. So, did that go in his favor?
Yes.
Yeah, it did, honestly.
Wait, why does it say down there plus 3,000 then?
Because before he's even getting the order, he's placing a stop loss at the sell and buy, because if the CPI candle is always massive one direction, but we don't know, we can't predict it.
Yeah.
So basically, if it it will market fill you here because it's, you know, you can enter a stop position without even being in a trade.
Yeah. I was followed by a trader and I was like,
They might be a scammer. Oh, that's another thing.
Oh yeah, there's some guys.
You will get a lot of scammer accounts following you, whether it be my name. Has anyone got any scammers from my name?
Oh, I don't know.
Or any trader's name?
Yeah.
I got a trade.
You're gonna get scammer accounts following you, and they're gonna DM you and be like, "Hey, how's your trading going?" Do not answer. Okay.
I just let him follow you.
All right, watch.
Yeah, Lucky, when are we getting followed back?
I've been waiting, bro.
No.
I'll leave.
All right, ready?
That's how you post an account, bitch!
Okay, wait. Not that one. All right.
Life is never when it really sings. Once you wake up, it's just a dream.
So that's what happens when you full force CPI. So, and they're doing this on something called funded accounts, not real money. But basically, if you do like well enough, like you get paid real money. So now, if you full port CPI and you blow your account, you're only blowing like $60 or whatever you bought it for. You can buy a $50,000 account and blow your account on CPI and lose like $3K. You're not actually losing $3,000. You're losing whatever you bought the account for. Okay, which I'm gonna explain prop firms in a second. I'll actually explain them now. So prop firms are, I'm just gonna go to Apex. Okay, this is the prop firm I use. You have to be 18 to do this. Okay, or you can use, I'm not gonna say because I'm recording myself, but you all know what I'm gonna say. If you're 17,
if you're 17, make it. Wait till your 18th birthday.
Wait till your 18th birthday, yeah, sure.
Wait till your 18th birthday game.
Yeah. So this is a prop firm. So basically what this is, oh my God, I have to enter a freaking 2FA code.
Do you edit your videos?
No.
You could just edit that
My phone is not operating right now. What the, oh, there we go. Now, a prop firm. All right.
Famous people do it. You know Sean Yo, Dodgy's TV.
All right, are you guys ready?
Yeah.
So here's what a prop firm is. All right. You can go on these accounts. There's $25,000 account, a $50,000 account, a $100,000 account.
300,000.
Now there's other options, another 25. I think this is the best, a $50,000 Tradeify end of day trail down. And they give you rules. Now, if you can, so with my code right now, I'm pretty sure, I don't even know what
Bro,
code.
I entered it and the price went up.
No, it did not. Let's try to enter it real quick. Oh, I can't use my own code. All right, Nick. My friend.
Oh, is it like a monthly subscription?
Yeah. Yeah. So it makes this go from $490 to $49 if you use my code Dodgy. So do you guys think that's pretty cheap? You think that's pretty cheap?
You use code Nick.
All right, you can use code Nick. I don't care.
No, I want to use code Dodgy.
All right. So it goes to $49. This is the cheapest. These are the cheapest accounts in the entire game. So you're paying $49 for a $50,000 account, which is fake money. That is fake money. What?
How do you get real money out of it?
So now to get real money out of it, basically you have to hit a $3,000 profit target.
Oh my God.
So you have to make $3,000 in a $50,000 account. So if you get to 50,
Is there like a time limit? Yeah.
I would try to do it under a month, which gives you about 4. That's a pretty good time to make 3K.
That's not too bad.
Yeah, it's not bad.
Then you get
Especially if you're risking like $200 per trade, right? How many trades would you have to win?
like 10, 9.
15. What if?
Can you do that math?
1,000 divided by 10.
It's just.
I'm actually lying to you. That's 15 trades if you take 1R. What if you take 2R?
That's like
8.
Yeah, like 7, 8. What if you take 3R?
Like 4 or 5.
Yeah. What if you do? What if you take 2R? You take 10 wins and like 2 losses. Would you pass maybe?
What if I spend all 50K on one?
What if you take 10 wins and 5 losses at 2R? Yeah, you wouldn't be there yet.
What if I full port through?
You see, that's what I do. So I full port them. So if you have money and you don't care about 49 bucks, I full port news to get, because you have to basically pass this account to get to the funded account. A funded account basically just resets. You're back at 50K and it's still fake money. But this time, if you make $3,000 again, you'll get paid $2,600 to your bank account, like actual real money. What?
If you make 3K.
So if you make 3K in this, you get transferred to a funded account.
Oh, okay, yeah.
Now you're funded, all right, and then you can get a payout, and then they give you the money to your bank. So it's essentially you're only risking how much money here?
50 bucks.
50 bucks.
You can just full port this then.
So you can full port it and then buy another account for 50 bucks
Do that. Exactly.
until you pass one. If you're full porting, do you think you're gonna have to go minis or micros?
Minis.
Yeah, minis. Right, it's $20 per point instead of 2. So you have to be 18. All right.
You do?
I will say, I'm pretty sure when you first make an account, you don't have to put your age. You just have to be 18 to get a payout. But I don't know. It's probably still risky.
You still have to like get to the funded account first.
Yeah, you still have to get to the funded account. Once you get to the funded, they'll make you sign something and write your social security number, and that's how they know your age.
6.
So you can just like.
But on eval accounts, I'm pretty sure you can just trade.
Wait, what's your social?
Only 2 years.
My social security is 69, 17, 38, 69.
No, I just reported that.
I just heard 69. That's all I heard.
All right.
Why would you test 69?
It's 69, 67, 67, 17, 38. 420. 420.
You said it's 69.
Does anyone have any questions on prop firms? Does anyone not get the concept of a prop firm here?
No, I get it.
I get it.
There's no way.
I don't get it. It's like, why are they going to pay you for
Yeah.
Because 90% of traders fail.
97 actually?
Yeah. So if 90% of traders fail, do you think these prop firms are making money off blown accounts?
Hell yeah.
Yeah, but I'm trying to teach you how not to do that. All right. Now, it took me about 6 months to a year to get my first ever payout.
But that's because you were like low-key ass. Oh. At the beginning.
It's because my psychology, nothing to do with the strategy.
It's because you didn't have
It's because
to teach us.
I kept revenge trading, dude. I couldn't help myself.
We can't revenge trade.
Yeah, just don't revenge trade. Yeah, max 2 trades a day. All right.
Look at the magic that comes out there. Can we watch the first video you ever uploaded?
The first video I uploaded?
Yeah. Watch, he's gonna pull up. Bro, Juice World, bro. Why do 3 of like the same PFP just with a different t-shirt on?
This is the first one I ever uploaded.
Oh my god, look at the camera.
Bro, the camera's like at 120p, bro.
Alright, I'm gonna start recording.
Go!
Alright, so quick introduction for the people watching on YouTube.
I think I was
17.
I like 19 or 18.
I'm gonna be going over IC.
It says from 3 years ago, but I think it's more.
And it's basically helped me make way more money than like trend line trading and all that stuff. So yeah, hopefully you guys know like support and resistance.
I said hopefully you guys know support and resistance and all, like, because do you see how if you don't understand like support and resistance, like you wouldn't know how the market moves?
Yeah.
Like you gotta understand like how that's BS to know like how the market's fueled. So, all right, I'm gonna talk. So just going back to order blocks, right? Right, a bearish order block is always green. A bullish order block is always red. All right. I would go home and probably watch a bunch of more order block videos if you really don't get it. It's not the easiest to understand. But yeah, right. Now, when do the best order blocks form? When do the best fair value gaps form? After what? a liquidity sweep. We always want a liquidity sweep first. Where do you think you're going? I'm just kidding. I'm just kidding. All right. And now, if we do not close back below the opening price of that sandwich candle, would it be an order block?
No.
No, we have to close below the opening price. So if it's confirmed, it's only confirmed when the next candle closes above the surrounding green candles, right?
Over CPI again?
No. There's also NFP. People full port NFP.
What's NFP?
Non-farm payroll. It's just another data that comes out that moves the market. So, does anyone have any questions about order blocks?
Nah, actually, I think I feel like I understand.
It's funny because for long-term investing, I can literally go and like, let's look at like any, like let's look at Microsoft. If I go to Microsoft and I go to the weekly time frame and I want to take like a long-term investing position, even the month, let's go to the monthly. Actually 3 months. Okay, so this is the 3 month position, the 3 month chart of Microsoft. Let's say I wanted to start a Roth IRA. If you don't know what a Roth IRA is, you're dumb. You need to learn that, all right? It's basically a long-term investing account, okay? It's gonna make you a millionaire by the time you retire. Do you guys see the order block here? See the order block?
Yeah.
Right? So would now probably be a decent time to buy Microsoft? Right? Because we're probably gonna bounce soon. So that's how you can use this for long-term investing, right?
Buy it next month.
What? Yeah, maybe next month, but it's a good buy. I mean, we're on a retracement right now. Do you want to be buying way up here?
Yeah.
No, if we're like have a bunch of green candles, don't buy. It's funny, you have to learn to buy the red candles and learn to sell the green candles. It's very hard psychologically because you think green it goes up, so you're gonna want to buy naturally, but it's almost the opposite.
Or is it like, well, I feel like, wouldn't buying red candles be like buying something at a discount? Like you'd feel better buying
Exactly. Exactly. It's like when Apple drops or anything drops, you'd want to buy it.
Like, you don't want to mine Apple at $3.
Yeah, exactly.
I feel better.
So what makes an order block good? It occurred off a liquidity sweep or an important level. What's an important level? Someone give me one.
New York high.
New York high. What's another one? Asia high.
Double high.
What's another one in the back? Blue necklace.
High the day.
He's not even looking. Yeah, you. What's another important level? What's another important level? Yeah, like tell me. Yes? All right, what's okay.
You're right.
What's another important level?
That one.
Okay. A good order block can come off a London high, a New York high. What's another one?
Equal high.
Equal high. What's another one? Anyone? Trendline liquidity. Right, these are all important level. These are all where stop losses rest. Weekly high, yeah. The confirmation close is strong. It's decisive.
I'm so tired of hearing it.
All right. It's a sandwich candle. Remember the sandwich kind of thing I talked about? And then bad is confirmation candle sweeps too many highs in one high in one move. Do you guys know what that means? All right, this is going to be another $1 million lesson right here. Watch. Watch, watch, watch. Ready? Look at this. Do you guys agree this is a pretty good displacement bullish for a rally gap?
Yes.
What's wrong with this is it sweeps this high. So do you think this would be a good spot to buy in if we went back down it, if we don't have any more buy side liquidity? No, because we already swept this high. We don't, there's already stop losses swept. So that's what it means by like, a bad one is we already sweep too many highs as we're getting the order block. But if we get the order block and there's still leftover highs, it makes it way better. That's why like, look, right here. Who sees the bearish order block right here? See it? the up close sequence, we close below it with a giant death candle, and then we sweep liquidity here. What's down here that's really good? Trend line liquidity or double low. It's the same thing, right, in this scenario. So I know we'd go down there to those lows, all right? Do we even hit these? Yeah, there we go. So look at this. See how more obvious the 4-hour order block was? See it, guys? Isn't that so textbook? Yeah. Right, sweep this high. Can't look at how well this is used as resistance. Bang, algorithmic. So I would take a picture of this. Equal highs and equal lows. If we only have 2 wicks right next to each other, it's like 50% probability of being hit. 2 wicks several candles apart, 70, 80%. 3+ wicks stacked, 89%. And 4 wicks or very far apart wicks to the tick is like 90 to 95% probability. What do you think the trend is? The more equal highs, the more what? The more chance we, yeah, the more chance we sweep it or go towards them. Right, and then it talks about the 10-foot test. If I can back all the way up there, here, and I can see the cluster of highs and lows, it's probably pretty damn obvious, and we're probably gonna go hit them. All right, London high and London low. How to use this as a target. When you wake up in the morning, mark the high and low from London. Sometimes, if the high and low in London is from 2 to 5 a.m. Eastern, could you wake up at 8 a.m. and both highs are already swept from 2 to 5? Yeah, because 5 to 7 a.m. could have swept them already. What do you mark the London high or low in that situation? No, right? You only mark it if they're untapped. What do you do to an old stop loss line that's already been used? Yeah, you delete it off your chart. It doesn't matter anymore. So take a picture of this too. You know, mark London high and London low on your chart. Use the ICT kill zones indicator that I showed you guys if you want. And it kind of, like if New York sweeps the London low, we might look for a long. If New York sweeps the London high, we might look for a what? If New York sweeps buy side of London, or sweeps the high of London, we'll look for probably down movement, right? Right, don't force a reversal off London low or high if it's not there. Remember the situation earlier where we swept the buy side, but then we kept going higher? Does anyone remember why we kept going higher even though we swept liquidity? Yeah, all-time highs does this, but what did we not get after sweeping the high in the earlier example? We didn't get a market. Yeah, we never really changed structure. So sometimes if you see a sweep London high, but we don't ever get a reversal setup, what could be a reversal setup again? What could be something telling us we're now going to go down if we swept the London high? Lower lows, lower highs. What's the other big one we talked about today? A bearish what?
Bearish order block.
A bearish order block or a bearish fair value gap. So any sort of like good displacement downwards.
Is it value or value?
Value? Yeah. Fair value gap. Not a fair value gap, no. So we're a red candle forms at a key sell side level sandwiched between 2 green candles. The very next candle closes strongly above both surrounding green candles. All right? What's the incorrect interpretation? Let me see if I know the answer to this. The next. Okay, I know the answer. So it's a bearish signal. The sandwich red candle means selling pressure is taking over. Bullish order block confirmed. The open of the red candle is now a key support level to watch. The order block is valid only after 5 more confirming candles. Only valid if red candle appeared exactly at the London low. All right, we're going to do the get up from your seat. A is going to be there. A in that back corner. This is going to be harder than the other question. No, just get up and keep your laptops open. So if you think the answer is A, go over there. B over here. C over there. D over there. What? What?
Where was A, B, and
A, B, C, D.
get confused?
All right. Where are you guys? You guys are not in a corner. Get up from your chair then. Bro's been sitting for like 2 hours and they want to sit some more. What do you think? Or are you just not sure? If you're not sure, you can be a sheep. You can go follow them. I don't care.
I'm just gonna go there because everyone's there.
Yeah, that's fine. All right. What do you think?
I don't really read it.
Okay. All right, ready? The answer is, I'm sorry, it is B. Good job. All right, you can go sit down. This way we get some steps in. All right, hopefully you guys got like an extra 100 steps from that. So the answer is B. We confirm a bullish order block. We clearly closed above all the candles. All right, now the last activity of the day is going to be go on TradingView, try to find a bullish or bearish order block, and maybe mark out some equal highs or equal lows where it's going towards. All right, so pick a random day in the last like week. It can be in any time frame, ideally an NQ. Please do this on NQ, and identify an order block candle that is going towards buy side or sell side targets. Okay. Now, you'll get bonus points if they are equal highs or equal lows, but what could be a sell side or buy side you could look for an order block to go to?
This is a week. Is this individual or is this like a
No, you guys can work together.
we're working together.
All right, be quiet quick. What is an example of a buy side or sell side liquidity you could find that we're going towards from a bearish order block? We already started talking about it. There's 50 different answers. Yeah. Weekly high, weekly low. What else?
Asia high.
Asia high, Asia low, London high, London low, equal highs, equal lows, data highs, data lows, trend line liquidity, lows and highs inside fair value gaps, right? So those 12 levels, any of those levels are good. You got it? All right. So try to find a bearish or bullish order block leading to some type of liquidity that looks pretty good. All right. You got some people sleeping. It's all right.
Would this be on? Like, if this is your...
No, because that's not sandwiched. You think that it's a bullish order block?
That has to be...
That has to be a green candle, yep. Yep. Okay, wait. This is a trend line, yes, but for the wrong reason.
Oh, okay.
You want the trend line going down like that because see how these stop losses already ran?
Yeah.
Right, we already swept this high. This would be a broadening formation, which is something I haven't talked about.
Wait.
But yeah, you have the right idea, yeah.
Wait, so is there another trend line?
Not really, it's just a singular high you target, which...
Wait, I have like more of these.
Now, draw the RR tool, please. The risk to reward tool. the red and green shade boxes of the entry off the order block.
How many do you want?
I'll let you keep working for now. How's it going over here?
You know, it's good.
Hey. Oh, you're just blinking?
Chloe, be quiet.
You got it? You want to help? Yeah. Okay. Go on. You're in US Oil. Go to NQ.
I think looks all good.
She had a dream that she had.
Again, if you're trying to look to long-term invest, you could use this on like any of the long-term investing stuff too. But yeah, right there. All right, now look for a London high, London low, or like an Asia high, Asia low, and look for an order block that might be heading towards that, which you can take an entry off of.
Alright, okay.
So if you mark out your kill zones or mark out your times, right?
Okay, thank you.
No problem. So, okay, let's see this. Look for what's London session? Do you remember the times? 2 to 5. So why don't you go to like a range that's from 2 to 5, and then mark out the high and low 2 to 5.
Oh my god.
Where's 2 to 5?
Here.
2 o'clock to 5 o'clock a.m.
Is it 3 o'clock?
Oh yeah, exactly. Wait, 12, 3. That's 3 o'clock. You're gonna have to zoom way more. Okay. Go to like the 5-minute chart. All right, now zoom in more. Zoom in. Okay. Watch. Like this, and then using this. This looks really bad. Like that. Okay. Now go to 2 to 5 a.m. Anywhere in the chart, doesn't matter. It's not 2 to 5. Let's go back. Where's 2 to 5? Over here? Yeah. Now go here. No, here, the arrow, here, up, this arrow, do horizontal line, or vertical line, vertical. Draw that at 2 a.m. Yep, exactly. Now, hold down Command to duplicate it, I think, and then drag another one. Yeah, no, yep.
What?
And then drag this, it should duplicate it. Oh, nope. Hold down Control maybe. There's something which duplicates it? Okay, maybe not. I don't know what duplicates it, but I think it's Control or Command. So hold on Command. Now drag a blue line there. Damn. Okay, maybe not. Just draw another one, I guess. Oh, there you go. See how it duplicated? Yeah. So 2 to 5. Yeah. You're good. You just need a 2 to 5. Delete that one. Yep. Now zoom up or zoom down so you can see the candles better. There you go. Perfect. Now mark the low and high of inside this range. The lowest low and the highest high inside that range.
Oh, come on. Where's the
Up. Use that, yep. Where's the lowest low in that range?
Here.
Yeah. So mark that out. Nope, it's not precise. It has to be right at the low. Can't be close, it has to be right there.
No, I'm not talking to you.
Down. That's not the lowest low.
Oh, here?
Yeah, exactly.
Ryan, what do you mean by like order block reaching towards the
Like, if you see a good buy side level, like a London high, look for a bullish order block that's formed after liquidity sweep to tell us we're now going to go to the London high.
after liquidity?
Yeah. Okay, now draw out the highest high. Yeah, probably, yeah. But that's a bad one, because I would probably draw out this. What? What?
No.
Alright.
Let's do this one first.
Yeah, so draw me the order block here that tells. See, this is a bad example. Let me see if I can find you a better example. We're just going to use this high, for example. This high is way more obvious. See it?
No. You're gonna be out of
Okay, so there's our level. See how it's equal highs? Find me an order block within here that tells me when we're going to go up to that level. And then draw the RR tool. So look for a liquidity sweep. It's a liquidity sweep up to that level, and then an order block. How are you doing?
Fix my graph.
Yeah, what's wrong with that?
Why is it like so like?
Because you're in NDQ. Go to NQ.
NQ?
Yeah. Click NQ again. NQ, yeah, that right there. Click
This one right here?
Yeah. Should be better.
Okay, gotcha.
Now go to. Yeah, that should be good. Perfect.
Is this any good?
There's a sweep. The sweep kind of. That's not really the sweep, dude. The sweep would be like.
Or like right here.
Is it locked? Why can I move this?
It's my trackpad is weird.
Oh. It would be. You'd probably be sweeping this low.
It's like going this way.
What was that? Yeah, right there. But always start that point there.
Okay.
And yeah, the order block would be. I guess the order block would be here. When we close there. So it's here. You could have put this down more. See that sandwich red candle?
Yeah, I still don't completely understand order blocks.
Yeah, or you have to watch more videos. Let me see. Okay, there's your liquidity sweep. Now, where's the? That's good. Where's the order block now? Do you think it's obvious to find an order block here in this chop? No, it's not. There's so many. If I had to pick one, it'd probably be like actually maybe like here. Right? So when you break above that and close above that, that'll tell us we're going higher.
I'm going super low.
What else?
I would say like that, to be honest. So that's like a less obvious example, though. Anyone need help? What do you find? I'm curious.
No, it was just the photo from earlier.
Oh.
She didn't even do it. She
Dude.
Wait, what time is it?
My computer died. It's 5 minutes. My computer died.
All right, the last 5 minutes. You're gonna screenshot the quiz for tomorrow.
This is a fake Instagram
Yeah, that's
account
a.
of you.
Yeah, that's a high. Yeah.
I did too.
Yep.
This one,
Beautiful.
because there's 3 Polish OBs.
Yep, exactly.
The other one.
Come on.
Can you send me that, please?
Yep, exactly. All right, because we're breaking that down close sequence. Here's your entry in the retest. Boom, perfect. All right, ready, guys? So please do quiz 2. Here's the questions. By the way, forexfactory.com tells you just when news is. CPI, NFP. All right.
Is this our quiz for tonight?
Yeah, this is your quiz.
Is that it?
Nope. There's 40 more questions. I'm just kidding. No. All right, this. All right, so the trade that I took today was this trade right here, okay? Now, any guesses on why I might have taken that? Yeah. Yeah, I took off the big death. There's a big death candle here. Would you guys agree?
Yeah.
What's happening in this candle? Yeah, what's happening in this
People are
market?
trying to push the price up, the sellers are keeping it down.
Yeah, exactly. So at one point, the candle was way up here, and there's a green candle. But before the close, sellers pushed it way down there, proving that they were in control. So that to me is like super bearish. So I ended up shorting there. What is this? This right here? Yep, it's a fair value gap. See the bearish fair value gap?
Why is the IFVG up there?
So now, what's this? Fair value gap. Everyone see it? Look it. See how we held this fair value gap here, 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 right? So this is strong or weak, a strong or weak fair value gap if we held it 3 other times. Yeah, very strong. So what do you think that means when we get a death candle that just goes really through it? Yeah, you're cooked. Longs are cooked. All right, buyers are cooked. All right, so that's why I took a short. And what are the 2 levels the market likes to target? What are the 2 levels? Yeah, what? Okay, yes, stop loss. That's like the general thing. But there's 2. The market likes to target what and what? Liquidity, highs and lows. What's the other one? Who said fair value gaps? Yeah. So market always target 2 things, which this should be in your notes. But we target lows and highs, which are liquidity, and fair value gaps. We will always go to those 2 areas. Look at what I targeted today. Look at this. I'm going to go on the 1 month time frame. Do you think that's a pretty big time frame?
Yeah.
Oh yeah. You guys all see what I targeted? Raise your hand if you see what I targeted. Raise your hand if you don't see what I targeted. All right, I targeted the fair value gap. See it? Look. Let's see if the indicator marks it. FEG. It should, yeah. See it? So I was just targeting this fair value gap. All right, which essentially the start of that fair value gap is here. So that was my target. All right. Do I technically know where we're going to bounce inside this fair value gap? No, right? It could bounce. It could have bounced here, here, right? But that's why I only target here, right? Because I don't know how far we're going to go into it. And if I don't know how far we're going to go somewhere, do you think I'm just going to try to keep holding? No, I'm going to sell at the first initial target where we could bounce, all right? So that was kind of my plan. Again, the market likes to target 2 things, lows and highs and fair value gaps. On a scale of 1 to 10, put up with your fingers how obvious this fair value gap is. Yeah, it's like a 9 or 10. Like you can like I could literally be in the back corner of the room and I would be able to see this. Okay, it's giant. Now you're probably wondering, why am I targeting this one and not like looking for a bounce off this one? Well, that's what we're going to talk about today. Generally speaking, we like for price to go down to the bottom one because we like price to be in discount, right? And premium, discount premium, which we're going to talk more about that today. Now, before we start with today's quiz, we're at a kind of point in the course where like you're kind of getting it, or you're just like kind of just doing the motion at this point. If you are this far and you're like, maybe day trading's not for me, it's completely fine. Like you don't have to day trade, obviously, but maybe you learn something else, which maybe might help you like long-term investing, how to invest your money, etc. But at this point in the course, like if you're not like eager to go home and like learn more about this stuff in general, like you probably won't end up being like that motivated by it, which is fine. So yeah, like don't feel bad if you don't think day trading's for you, right? It's not for everyone. But we're at a point in the course where you're definitely gonna know or not, like if you want to do this. So just because it might not be for you doesn't mean you're like failing or anything. It doesn't really correlate. Just understand that maybe you're passionate about something else in life. Remember the first question I asked in the first day was, would you rather make $50,000 a year with your own freedom day trading, or would you rather be working in an office job making $100,000 a year? Which one?
First one.
I would do the first one, right? Because you're just more free. You can do whatever you want, right? And over time, you can build up that 50K per year. So, again, it's no pressure if you don't like day trading. All right. But yeah, like it's just the fact I can just print money out of thin air is just like so cool to me. That's why I love it. And it's like a game. Like where can I truly predict where the market's gonna go based off of fair value gaps, highs, and lows. So, I'm not gonna like call you out if you don't get it, or if you like order blocks yesterday are kind of difficult for some people. But that's just like a lot of repetition and practice, just like watching more videos on them. Even purchasing FxReplay to do like a little back testing. And just like maybe going back in your chart and just like looking for them, right? So, did you have a question? You have a question?
Me not.
Right.
Actually, yeah. When you like make the trade, you get taxed.
Do I get taxed?
Yeah.
If you're in profit. If you are profitable for the year, it's like it is taxed, yeah. But that's like that you don't need to worry about that yet. So
you do tax evasion?
No tax evasion here.
This
No.
is like
So
Tax manipulation.
yeah. But so again, just don't feel bad if it's not for you. If you're not like super ambitious, do the motions. Get this class over with. Get the credit. That's fine. But yeah, it's like I'm not gonna force you guys to like or not like something. Right? It's like if I have a kid in the future, I'm not gonna. Obviously, as much as I want to force him to like soccer and become a professional soccer player, I'm gonna let him do what he loves. I think that's the right way to do stuff in life. So yeah. I was at dinner yesterday with one of the UCLA guys, and I didn't know, but there was a survey, and apparently it says like I got like a really high rating. So if you fill out the survey for me, I don't know what it was.
We did.
Where is that?
I don't know.
The week ones or, it's about our teachers.
Yeah, I got like a really high rating.
You welcome.
Like a 10 out of 10.
I got a 9 out of 10, so I'm trying to help everyone out, but there's some people who got like 6 out of 10.
6 or 7.
Yeah.
Come on, bro. Come on. You're almost an adult.
We're gonna try to get a 10 out of 10 this week. So, all right. So, homework. Let's pull it up real quick.
Why are you taking that thick on your
Why so much?
Dude, I don't know.
It's like all the 5 things.
All right, here. It's on my other screen.
6 things.
Do you use Brave?
Yeah.
Is it just because
No ads. Brave's the best.
Oh. This guy's
All right. Was the homework a little harder than the first one, you think?
Yeah.
Yeah, a little harder, right? This is where like you just have to have more repetition and just like really, you know, just keep watching this stuff, all right? So let's go over the questions. All right, so Forex Factory, like I said, is a news website. And it says, should you check Forex Factory every day to see if there's news scheduled and which folder color matters the most? I never talked about the folder color. I want to see if you figure this out yourself. Do you think that ForexFactory.com showed me a news event that said red folder? Do you think that'd be worse news that can move a lot, or news that might not move a lot if it's a red folder news?
Worse.
Yeah, because red is bad. So that means there could be a ton of volatility. So might be an example of red folder news that I talked about? We watched some videos on people.
Oh. What's his name?
Remember we watched TGR Full Port? What was that news event called? Can you remember? CPI. So CPI would be an example of red folder because it can move a lot. There's also yellow folder, which is the least, and orange folder, which is between red and yellow. I really only care about red folder news. So I'm going to go on Forex Factory just to show you. But tomorrow, does anyone know what tomorrow is?
July 29th.
July 29th. Good job. You're correct.
Bank.
It's Wednesday. So tomorrow, I'm going to see all the yellow folders. I'm going to turn the yellow folders off.
It's the Federal Reserve.
So tomorrow, we have an FOMC press conference, which they will announce in the FOMC statement. Does anyone know what this announces?
The interest rate.
The interest rates. Do I care what the interest rates are?
No.
No, it's all nerd stuff. I literally don't care. I just care what the candles are doing. Alright? I literally just care what the candles are doing. So, tomorrow, should you ideally probably be trading 2 hours before this event?
Yeah.
No, we want to wait. It's called high impact news. In your notes, write down red folder news on forexfactory.com equals high impact. So red folder news is like equals high impact news, or red folder news basically. And you know they talk about other stuff like Kevin Morris and what he's gonna say, but I don't care. All right.
Jerome.
I'll see what the candlestick's telling me.
Jerome. He's not even the head anymore.
Okay, so that's Forex Factory. So, raise your hand. Wait, all right, raise your hand if you think the answer is D. Okay, raise your hand if you think the answer is B. A? Everyone think A? Yes, good job, A. So yes, always. News that creates the volatility, which is basically volatility equals a lot of up and down. That is ideal for the methods we were trading. We were trading ICT methods. Okay? Liquidity, fair value gaps. Red folder news matters the most. Okay? Pretty self-explanatory. Now, question 2. If there's no news scheduled on a given trading day, should you expect good price action? So this might have been a little harder. Okay. So knowing what we know about news and how the red folder creates a lot of up and down movement, if there's no news, should we expect good price action? Raise your hand for A. Okay, raise your hand for B. Raise your hand for C. Yep, C. So on these no news days, price tends to be a little choppier. Now, Do not write that in your notes. Do not write that in your notes. There is a lot of days which I've traded that doesn't have news that still is pretty good. At the end of the day, this is a guideline. If you see strong candlesticks and you're seeing a lot of strong bodies and and not wicks, and you're seeing us move up and down like in a very healthy structure, but there's no news that day, what are you going to trust more? What the candlesticks are telling you, or what the potential no news? Yeah, the candles. If we are getting giant candles throughout the whole day, who's moving price?
The big smart money.
Yeah, the big smart money. And we want to trade when smart money is moving price. If we're getting a lot of wicky or choppy candles that are just going sideways, do we really want to trade? No, because smart money's not participating in price action. So you're gonna have, it's just low probability setups, you know? So the answer would be C. Now, if you observe price going above and below a fair value gap repeatedly, without committing to a direction, so we're not going up or down, we're just kind of going sideways in the fair value gap. Is this good price action? Raise your hand for yes. All right. Raise your hand for B. Raise your hand for C. Yes. Okay. If we are disrespecting, what do we disrespect? Okay. Remember the indicator I drew in the first day, the EMAs? Remember how we kept going above and below the EMAs? We just weren't respecting them. If we do that to a fair value gap, do you think that fair value gap is probably important and you should probably trade? No. All right, let me just show you an example. If we're like trading, if there's a fair value gap and we're just trading like above and below it a ton, dude, what's going on, man? Where's my taskbar going? So I'll show you an example. So like, okay, ready? So like, there's like a really bad one. Okay, so like this. See this fair value gap right here? Everyone see that?
Yeah.
Right? From here to here. What do you think this means when we keep trading above and below it like that? Good or bad price action? Yeah, it's not good. Would you even try to trade this in the first place if you just see we're not even making higher highs or higher lows? No. Write in your notes, stay away from price action, not making higher highs and higher lows. And stay away from price action, not making lower highs and lower lows. Ideally, you want to trade price action that has some sort of clean or obvious trend. All right? Beautiful. Right. If I go to a line chart here, look, I literally can't identify a trend. We're just, we made a high here, a higher low, a lower high, a higher low, a lower high, a lower low, oh, but a higher high, higher low. It's just too complicated. All right? Raise your hand if that makes sense. All right, hopefully everyone. So, yeah. So the answer is B, or C, I mean, right? Now, 4. Does price always follow the AMD model? Raise your hand for D. Okay. Raise your hand for C. All right. Raise your hand for B. You think B? All right. Raise your hand for A. All right. The answer is C. Not always, but it's still used as a guide. Okay. Could it happen 8 out of 10 times? Yeah, it could in a 10-day period. Not likely, but it could. But C is going to be the right answer. Has anyone taken AP English? Dude, you know how like the questions are like there could always be two right answers?
Yeah.
Dude, I hate that. I'm trying like to make it kind of like that, but like not really.
Oh.
To make it a little harder, but I remember with AP English, bro, there was like a question, I was like, bro, these are both right. Alright, in a chart showing a clear bullish order block, alright, the red or black candle sandwiched between the two other colors, which correctly identifies the order block here. We're looking for a sandwich candle.
The red.
All right, raise your hand for A. You think A? All right. Raise your hand for B. This is a little trickier. Don't be discouraged if you don't get this right. Raise your hand for C. Yeah, we got like everyone. Okay, raise your hand for none of the above. Okay, someone picked every answer. All right, the answer is, let me just make sure, yeah. The answer is B. Okay. Because this red candle is sandwiched between a singular green candle and a singular green candle here. Right? Wait a minute, hold on.
But it says Dodgy FN.
Okay,
That's what I'm saying.
it's,
Dodgy.
this is kind of confusing.
It's
It's this. I think this is confusing because I think it thinks it's pointing to this. It's this candle.
What?
See the green candle?
Yeah, that's the red candle.
What?
Useful documents.
The red candle is not. Can you get a red bearish order block?
No, it's a green candle.
Can a bearish order block be a red candle? No, a bearish order block is always a green candle. A bullish order block is always a red candle. Think opposite. I think what I mean. I didn't make the graphic. I made the answers, just not the graphic. This should be pointing to this green candle. So see how this candle closes below the green candle? That would be the bearish order block. So it's B, yes. All right.
You tell me.
Yeah.
Wasn't the question asking about a bullish candle?
No, it says in a chart showing a clear bullish order block, which colored arrow correctly points to the order block?
Yeah.
So I guess yeah.
No, it's asking.
So I guess it'd be D because that's not a bullish order block.
No, come on.
Yeah, I think this could have been worded better. I feel like.
So what was it?
I guess it's D, but you still understand like this is a bearish order block, right? No matter what the question's at.
Yeah.
Right. Because it's that peanut butter and jelly sandwich, right? Here's your bread. Here's your bread. Here's your peanut butter and jelly. All right. At a given stage on the chart, do we recognize a valid order block forming to the downside? Yes, it's the rightmost red candle. Raise your hand for A. So you think it's A, okay. Raise your hand for B, we're unable to determine from the information. Raise your hand if it's C, no, we need to see more price action to develop to determine if it's valid. Alright, now raise your hand if it's D. Trick question, what? Order blocks aren't real? No. It is C. Alright? We don't, what confirms this to be an order block?
Another piece of bread.
Oh.
What confirms this to be an order block?
It needs to lower.
What?
The end.
A down candle where? Is this a sandwich yet?
No.
So what do we need to create the sandwich?
Another piece of bread.
We need another piece of bread. Alright?
It says rightmost red.
Yeah, that's the rightmost candle is the green candle, so this doesn't even make sense.
But the rightmost red candle is the
No, that doesn't mean that it's the
Yes,
last one.
it's the rightmost right candle. This is the rightmost. This is the rightmost right candle, and this is not an order block. All right. To confirm that this can't be an order block. Remember, red candle can't be an order block, or to the downside, or bearish order block. So we would need to see another candle do what?
Go red.
Go red and close where? Below the opening price. Right? So look back up again. See how this one is the peanut butter and jelly sandwich? It closes below opening price here, confirming the bearish order block. Again, if you don't get this, but you are wanting to learn about day trading, day you're ambitious about it, you're just gonna have to keep watching order block videos. You'll just eventually like see it. It'll be like secondhand day trading. So, all right, ready? Looking at one full price leg in a chart, how many valid order blocks can be identified within this leg?
How many cents?
This is a weird question. Raise your hand if you think it's A. Raise your hand if you think it's B. C? D? All right, raise your hand if you didn't raise your hand. Okay. It's technically like, see, discretionary wise, it's 3, but mechanically it's 2. Because this is more advanced. See how this up close candle closes below this down close candle, standards between here? But this doesn't matter because it's the weak candles. We don't care about that. That could count as 1. But this and this are definitely order blocks, right? You guys agree?
Yeah.
Right? 2 sandwich candles, right candle between green and green, right candle between green and green. Those have to be order blocks. So if you said B or C, I would have accepted both. Alright, so C or B is the answer. Now, are these strong or weak order blocks? Why are they weak?
Big wick.
Yeah, because we have a big wick around the candle. We don't like that.
Big wick.
Now, what does price need to do for a bullish order block to actually be formed and confirmed? We already kind of went over this, but A, we form a green candle shooting above the black-red candle, creating the sandwich pattern. B, there's no way to know. C, form another red candle shooting further to the downside. Or D, form a green candle sitting directly below the black candle to its left. Someone raise your hand and tell me what you think. Don't be afraid to be wrong. Here. You think it's A? All right, how many people agree? Raise your hand if you agree. Raise your hand if you disagree. All right, it's A. Good job. So yeah, like I said, we have a green candle here. In order to create that sandwich pattern, we need to close back above and make a green candle. And we have to close above the what price? Yeah, we need to close above the opening price for it to confirm the support level. All right, looking at this chart, where the rightmost green candle swept all this buy side. See it? We swept all liquidity within a single massive candle. Would this still be a valid order block? Yes, you made a sandwich. Is this okay? Let me ask a question. Is this red candle sandwiched between this green and this green? These are both green candles. So yeah, I'm gonna say yeah. All right, it is a sandwich pattern. Yes. No, we swept all the buys of liquidity with a single candle, which invalidates it as an order block. C, yes, it represents a clean change of structure. Or no, we need a down close candle for it to be considered an order block at all. Raise your hand if you think it's A. Raise your hand if you think it's B. C? D? Alright, the answer is B. Okay? If we are forming a giant candle that is technically an order block, but we take out a gazillion highs in the process, what happens if we now long after all those highs are taken out? Do we have any more targets? No. Right? Because we already took out all our targets. you guys see how this could be like a 4 times double top? Now what about, like, if the candle closed down here and we didn't get this giant wick, it would have been a good long. But if you ever see like a Trump candle take out 50 million highs or lows in the same candle, do not enter that candle. There's no more liquidity because we took everyone's stop losses. And remember, that's where you thank people for the liquidity. All right?
Thank you.
So if we have ever a giant candle and it takes out all the highs or lows in the same candle, not ideal. Now, will watching my boot camp 10 times make you profitable? Someone raise your hand and tell me what you think. Yeah. Raise your hand if you agree with C. Raise your hand if you don't agree. Yeah, C. Watching my boot camp will help you learn the concepts, but actually like watching the candlesticks in live time every day will just get you a lot more screen time and a lot more like, you'll just start to understand things better. Right. So just because you watch a video that says, my strategy has an 80% win rate, copy this. Does that mean you're going to be profitable if you copy it? No. Right. By putting in significant screen time, what will you be at? What screen time? Someone tell me. You tell me the right half.
Time like looking at the stocks.
Yeah. Exactly. Time just looking at the charts. Right? If you have 3 years of screen time and you're trading against your friend who has about a month of screen time, who do you think is going to be more profitable? You. Okay. Now let's say you've been trading for 3 years and your friend's been trading for a month, but you want to get back your losses after you lose, but your friend never does that. Who's going to be more profitable? Your friend. So does time and trading really matter? For that aspect? For the risk management aspect? No. For the strategy aspect? Probably yeah. Okay. Now, by putting in significant screen time, what we would identify, it's pretty easy. What's the answer? Yeah, that's it. Right? Just everything. Liquidity targets, momentum candles, how fast we're reacting to something, and just signatures and different prices. Do you think if you see the same, what does signature and price mean? Anyone have an idea what signature and price means? You know what it means? Signature and price? It means like a pattern. Like if you see the same pattern 50 times, that is a signature and price you want to note down and remember. Do you think if you saw the same signature and price 20 different times, or no, 2,000 different times, do you think you'd be pretty confident at being able to read the market?
Yeah.
Okay, what if you saw the signature and price 2 times? Yeah, you'd probably be like, yeah, like I don't know enough about it yet, which is okay. Now, if 2 candles sitting right next to each other form equal highs, would this be considered a significant equal high to a target? Yes, most significant. No, but equal highs are not good targets in general. Yes, but not the most significant. The proximity and spacing matter. Or no, not significant, just ignore it. Raise your hand if you think it's C. Raise your hand if you think it's B. A? D? C? A? B? C? D? The answer is C. Alright? So, yes, it is significant, but if the highs were more spread apart, like if there's another high here, it would just be more significant. So it's not the most significant, but it's pretty significant. Do you all have the picture of the equal highs thing I did? Remember the equal highs chart? It said the strength is like 2x, 3x, 4x. Alright, 2 equal highs are shown sitting extremely close in proximity to each other on a chart. Would these be considered equal highs to target? How do you know the answer to this one? It's kind of like not, I don't know. Okay, raise your hand if you think it's A. Alright, you think it's A? Okay, what about B? C? D? What if you're, raise your hand if you're just like kind of unsure. I'm kind of unsure here. I would say A. Because it looks like they're not perfect to the tick. Right? No, if they're this close in proximity, ideally. See, this is where trading starts to get discretionary. Right? Someone trading for 7 years and another trader trading for 10 years, they're just going to start to think differently. So you have to, you know, you can't be like, oh, our teacher doesn't know. It's not that I don't know, it's just this is where it comes down to discretion. What's discretion mean again? Yeah, like kind of just your own opinion based off of what? Your experience. And this goes for any job in life. If you're trying to be a mechanical engineer, you might have a different way of doing something. You guys want to hear something crazy? I was invited to the New York Stock Exchange, which you cannot get into, right? You can't just publicly go into, you gotta be invited or something. Dude, I go into the New York Stock Exchange and all these older guys are trading EMAs, and I'm looking at them like knowing when they're gonna get stopped or not, knowing when they're gonna get wrecked. And I'm not saying anything. And we as a young generation, we have a new way of thinking. And you know how like old people are like stuck in their ways a little bit? So I'm like critiquing these 60-year-old people working at the New York Stock Exchange, one of the highest prestigious jobs you can have in the entire world, and I'm just a 24-year-old kid who can read candlesticks better than them. So it's just kind of interesting to be there, and you know, discretionary-wise, like, can I read candlesticks better than them? Yes. Are they trading billions of dollars more than me? Yes. But like, it's funny because they're never going to understand this because they got their old ways from years ago. They're never going to change. But it's kind of funny because like, I'm just a normal dude who learned from YouTube and then learned from what? My own experience, right? And I truly believe I have like a better method than these guys working at the exchange, which is crazy to think. I mean, that just sounds wild to say, but I mean, hey man, whatever makes money makes money. I mean, they still make money, but I think there's just better ways to do it, which is the way I'm teaching now. So the answer is, let's see what it says here. Oh, the answer is A, yeah. So the answer is A. I don't like this question though. I think it could have been more clear. Now, what is a good rule of thumb for identifying whether equal highs or equal lows is significant enough to target? If you think it's A, stand up. All right, you can sit down again. If you think it's B, stand up. Yeah, proud. You're proud to answer that, and you answered it wrong. It is A. So you're saying equal highs and equal lows are never good liquidity targets?
Yeah.
Oh, you're good, you're good. Okay, so you got an A for 14?
Yeah.
All right, good job. I was gonna say. Yeah, you might as well quit if you thought it was B. Okay. By the way, in some of my videos, you'll see like I call people donuts. I'm like, you're a donut if you didn't take this. It's rage bait. Or if I say you should quit trading if you didn't take this, it's rage bait. All right.
Doctor.
Dude, I call it like people like people literally meet up with me like at my like fan meetups and be like, yo, can you FaceTime my friend and call him a donut? I'm like, yeah, sure. But, all right, what are considered good liquidity pools to target according to the boot camp? Stand up if you think it's C. Stand up if you think it's D. Start doing the sprinkler dance if you think it's B. Oh, it is. Alright, stand up if you think it's B. Yeah. I'm watching you guys, I don't really care. Alright, ready? That's it, it's B. Good job. Alright. Good job. A little harder quiz, but so today we're going to go over more in depth on premium and discount. Okay, and bias. What's a bias again? An opinion on where what? It's an opinion on where you think the market's going to go. Bias. So right, bias equals opinion on where the market's going to go. So if I think the market's going to go up for the day, I'm going to have a bullish bias, which realistically means I want to take only what setups?
Long.
Probably only long setups. If I'm taking shorts and I have a bullish bias, do you think I'd probably be pretty emotional?
What?
If I was bullish bias, but I tried a short setup, do you think I'd be emotional? Why do you think I'd be emotional?
Because you feel like you run against what?
I'm going against my bias. And it's like, oh, if I think the market's going to go up to these equal highs and I'm just trying to short, I'm like, oh, I don't know if this is going to work. Now I'm going to be worried, right? So, write this little thing down. Just draw like a red and green zone. This is not an RR tool. This is a discount or premium zone. This is when everything's on discount at the grocery store, and this is when everything's on premium, okay? Your best odds of taking buy positions are going to be below the 0.5, and your worst odds are going to be below the 0.5 for longs, right? And this relates a lot to investing, right? Let's say day trading, you don't want to day trade, but you want to invest money or start a Roth IRA, which is going to be smart, all right? If I go to like any long-term chart, like, I don't know, McDonald's or something, let's see. If I go to McDonald's, it's not
MQ1.
It's McDonald's. Oh, they did not.
Yeah, futures.
Yeah, apparently. If I go to McDonald's and we look at the McDonald's chart
Why'd you got that? Wow, it's so cheap.
on the weekly, do you think it might be a good buy now?
Almost.
Based on the trend, do you think it'd be a good buy?
Yeah.
I would say yeah. We're like, if we know long-term stocks just go up and we're not going to get, like in futures, this could happen, but this isn't the future, this is stocks. So generally we're uptrending here. So I would say this is a good spot to maybe buy McDonald's. All right. Now, if I base it off the last impulse range, I would say it's from here to here, which I'm going to turn off this. The 0.705 is something else, but I'm going to draw it from like here to here. So if I was a long-term investor, I would say this is a pretty good buy. All right. Now, if we go to SpaceX, do you think this is a good or bad buy?
Is that it?
It's only been covered.
For an investor, is this good or bad?
Bad.
This is a good buy. We're really low. You're thinking
Oh,
bad.
yeah.
Why are you thinking a bad buy? So that is a good point. Is there any history of a chart to see much?
No.
No. So you could argue like maybe wait 6 months or a year for more candlesticks to be formed. How many weekly candlesticks should be formed by the end of the next year?
52.
Exactly, 52. So we'll have 50 more tube candles to work with. But generally speaking, as an investor, I want to buy the red blood, right? Because no one's buying here. So this is like probably a better spot to buy. But you can see we're weighing discount. Now, the thing with premium discount is this. Is this a swing low? Not yet, right? Because we don't have that third candle. We don't have the higher low yet. So technically, would this range be valid yet? No, it wouldn't, because there's no swing low to base it off of. What is it every single reversal? A swing low or swing high. Right? Every single reversal, every single time the market bounces up or down, there's always swing high. Is this a reversal yet? No, it's not, right? It's not a swing low yet. So we really can't draw the range yet if there's no swing high. Okay. So that's like just as a long-term investor. So yeah, really good thing to draw. I used to have this in my notes and just based off this. But the 0.5 just splits the range. Also write 0.5 equals equilibrium. We call it equilibrium too. So. Now, as a day trader who we're just trying to buy and sell in the 1 to 5 minute time frame, it is a little riskier to just buy in premium, but as a beginner, you wait for discount. Is there certain scenarios that will still buy in premium? Yeah, but not, it just depends. This is where it tries to get discretionary. But as a beginner, try to buy here and try to short up there. As a beginner, all right? We'll go more in depth in this in FxReplay. So, step 1, you find a clear impulse leg. Can anyone come up here and draw me what an impulse leg is? I'm going to pick someone's time. Where's my chart? Someone call me, or someone write an example of an impulse leg for a trend. Who wants to come up? You come up.
Well, I don't know.
Okay. You come up. Dude, here, go to. Okay. Alright, fine, you come on. Tell me what an impulse leg is. Okay, now circle what it is. Exactly. That's the impulse leg. Wait. Draw me what a not impulse leg would be. Like a really bad example. Like draw me a really bad example you want to stay away from. Exactly. Why is that the bad impulse leg? It's just not obvious. Right? Good job. So, this is obvious. It's just a singular uptrend. This is just too choppy. It's not good at all. Alright? So, good job. So, step 1 is you find a clear impulse leg. Now, step 2 is you draw a fib from the origin to the endpoint. When I go on the chart, do you really think I'm trying to draw like you can kind of tell but kind of can't tell? Am I trying to draw those ones? No, I'm trying to draw the ones that stick out where I can be all the way in the back of the room and just clearly just see it, okay? And then the trade entry is a fair value gap in discount. And then time frame note, 1 to 5 minute. That's kind of confusing. Don't worry about that. No, I don't want to confuse you guys. So let's do an example. All right. Do you think I can draw an impulse leg from here to here? Stand up if you think I do. Don't stand up if you don't think. So, can I draw an impulse leg from like here to here? All right. No one's standing up. Why is no one standing up? You answer. It's just not. It's not like a. It's just not obvious. All right. Could I draw an impulse leg from here to here? Yeah? Why yeah? All right. Tell me why.
It's like from the bottom to the top. It's like a
So you're saying this is the bottom and this is the top?
It could be. If you're going to the top of the top, that's better.
Exactly. If you're going to the top of the top, that's better. So no. I would only draw it from here to here. The top of the very top. Do you see how this sticks out so much? Do you guys agree this like sticks out? And anyone, your grandma could literally see this? All right, your literal grandma can see that, or your grandpa, or your mom, or your dad, whoever. Okay. That's what we want to draw for impulse legs. Now, if we are trying to take a investing position right now, is it a good or bad idea? Wait, you answered. Yeah, is it a good or bad idea to take a long-term buy investing position where we are now, based off a premium and discount? Why not? You're saying it's not a good idea, which is right, but why is it right? Yeah, because we're in what? We're above the. Yeah, we're above equilibrium, right? We're above the 0.5, right? So we are in what? Starts with a P. We're in premium up here. If I want to take long-term buy position, or I want to tell my parents to buy stocks and make thousands of dollars so I can go on a free cruise next year, all right? Or maybe you want to do that. Tell them to buy like when we tap below the 0.5, not right now. And when we will, we'll go back up, and then you get a free vacation, all right? And you'll make more money for your parents. So try not to buy here, okay? Now, another example. Look at this. See how we came in the discount and price held discount and we bought launch again? See how that correlates with healthy market? What's a better market trend? This or this? What do you think's healthier?
Number 2.
1 or 2?
2.
Why 2? Let me ask you a question. If we know the government does not want retail traders to win, and do you think retail traders would get wrecked more in this where we're just going straight up, or this where we're making nice retracements? If you're a retail trader just entering the market and you're just like, oh, I'm a caveman, I just literally see price do whatever I do with price. If price is a green candle, they literally buy. Where would they get wrecked more? The second one. If price action looked like this and we barely retraced, the most idiots of all people would literally just keep buying and they just keep making money. Does the government want that? No. So that's why we get these retracements. Let's go stop out people and get fuel to go back up. Stop out people, go fuel to get back up. All right? Never forget that. So, the daily bias. There's no, you're going to see a YouTube video and it's going to be like, how to find the daily bias. There's so many different ways to find the daily bias. Do you think you could use fair value gaps to find the daily bias? Yeah. Do you think you could just see trendline liquidity but no fair value gaps and know the daily bias is going to go towards the trendline liquidity? Yeah. There's like so many different ways you can do it. All right. So this is a good checklist. Some things I like to check for to see where the market's going in the morning is, are there equal highs or equal lows from overnight? Okay. Is there maybe a bullish or bearish order block on the 1 or 4 hour time frame? That's like if I'm trading, dude, it's crazy. I could teach this class for like 2 months straight probably and never run out of content. If there's an order block on the 1 hour or 4 hour, all right. Ideally, what time frame are we gonna try to focus on trading for you guys? I would say like more the 1 to 5 minute. If I'm trading on a 1 minute time frame, do you think the monthly fair value gaps matter as much versus like a hourly fair value gap? Why?
Actually, maybe.
Listen, if I'm basing a trade on the 1 minute time frame, where there's, how many candles on the 1 minute do you think are even in monthly? That would be 12 months. That'd be like 12 times 60 times 20. That'd be a really big number. Dude, yeah, there'd be more than that. Right? I'm only looking for a small piece of move of the day. I'm not looking to catch like a giant move from top to bottom. I'm looking for what type of RR? 1 to 2. Okay, 1 to 2. So when I take a 1 minute trade, I'm only looking at like the 1 or 4 hour order block. I don't really care. Like the daily, the weekly, chart, like, yeah, I guess they're kind of important, but like, I will still check them if there's something obvious, but the 1 hour or 4 hour is gonna make a lot more sense for what we're trading, for bias. Same with fair value gaps. Looking for fair value gaps in the 1 hour. Remember what you asked the other day about, can you find the trade in the trade? Ideally, what we're looking for is us to tap into a giant 1 hour or 4 hour fair value gap. Following? And then find a 1 minute entry out of that fair value gap. So it's a trade off of a trade. Does that make sense? So our main method to find the best entries are going to be marking a higher time frame fair value gap, like where's an example one? Like here, okay? Do you guys agree this is a 15-minute fair value gap? So I would be looking for like this to happen right now. This is live time, by the way. I would be looking for that to happen. So I would be looking for price to come into this 15-minute, and am I just going to straight up long in the 15-minute? No, I want to see a 1 minute setup out of the 15-minute. So if I thought the 15-minute was going to do this, and get like a, this is where it gets a little complicated, a candle like this, a red candle, okay, and then what type of candle shooting out of it? Green candle. Will this be a lot more candles on the 1 minute? Yeah, so if I go to the 1 minute, I want to see something. Someone give me like an example of a scenario I might want to see in the 1 minute. Someone come up here and draw it. Remember the model that it's so important? Let's see if you can draw it. Just draw like an example of something I might want to see out of the 1 minute using kind of what we know for timing reversals. Like maybe a little example. There could be a couple of right answers here.
Reversal?
What? Yeah. Well, reversal out of the fair value gap to bullish again. So maybe draw like an example. So start from there. Yep.
Do I go all the way through the fair value gap?
No, anywhere. We usually bounce somewhere inside here. So wherever you want. Yeah, maybe right there. Okay, so that's what we want to see. Exactly. Now, wait. Is this technically the model that I want you guys to understand with all the like the liquidity sweep, the market structure, all that? So, yeah, it is, but you're not showing it. Try to draw more impulse legs down here to show the market structure shift and everything. So Control Z, the backspace. Control Z again. Okay, there you go. Now go back to the 1 minute time frame. Okay, now draw a little more like detailed. Yes. There you go. Oh, okay. So you don't get so I guess we're not getting a retracement there to get back in, which is fine. Hey, maybe we don't get an entry. Okay. Yep. There we go. Exactly. Does everyone see it? See the market structure? So draw the market structure shift real quick for me, if you wouldn't mind. Yep, right there. Exactly. All right, you're good. So that would be like an example of what we're looking for. A 1 minute out of a 15-minute gap with a market structure shift here. And then what could I enter off of here? What might this be? There's two answers. What do you think? What can I enter off of here? A what? A fair value gap or a what? Or an order block, right? Those two PD rates I can be entering after the market structure shift. All right. So that's perfect. So another thing I want to point out is this. Based off a premium or discount, would that probably be a better spot to buy down here than up here?
Yeah.
Yeah. And maybe the impulse leg would be this low to this high. So maybe coming down a little more, like that. Right? Remember, it looks like this, it would look like that in the 4 hour. With like, this could be, this whole move on the higher time frame is like literally 3 candles, guys. This is just all the mini candles. So this could just be 3 candles, 1 candle back down, retracement, and then we go up again, right? Just how the market moves. That's how the market moves, like that. Or like that, all right? Simple. So, that's that. Again, well, this is not, we're going to go way more over this, but it's Tuesday. I got, how many hours left of this?
50 minutes.
I still got an hour and 3 hours today, and then Wednesday, Thursday. All right, so I got about 11 hours left. So I have to get through this all in 11 hours, which is not going to be easy. Do you think 11 hours is enough backtesting?
No.
Who plays video games in here? All right. What's your most played video game? Yeah. How many hours do you think you got in that? Thousands. That's what you need on the charts.
Thousands of hours.
Yeah. I think I had on Fortnite. I think I had like.
I've heard of it.
Dude, I had some ridiculous amount of days played. It was like thousands of hours. I don't know what it was exactly. Does anyone know how many hours it takes to master something? So you think it takes 100 days to master something?
100 days? 100 hours?
Or 100 hours, I mean?
It's like 40.
Does anyone know the number?
Master?
Yeah, it's a master. 10,000. Yeah, it's like a little saying. I don't know where it is, but it takes 10,000 hours to master something. All right? None of you are even nowhere close to 10,000 hours for this, okay? I am. But that's where you're going to start to figure this out more and more and more. So, journaling. You should be journaling your trades. Write down in stars in your notes. Journal your trades. So this is an example of journaling. Screenshot the setup, the risk reward, the entry, exit, stop loss. Why did you take the trade? What did you see? How were your emotions? Were you happy, sad, calm, aggravated, annoyed, aggressive, mad? You wanted the revenge trade? Did you FOMO? What could you have done better? All right? This goes for anything in life. Journaling is very underestimated. You know, it kind of sounds, I'm not going to say the word here, but it kind of just sounds like corny to journal. But, you know, maybe you do your own private Discord server. Maybe you do a Notion. Notion is like a good thing to journal. Maybe you do an Excel or a spreadsheet, which I think is a little more complicated. But that's more for numerical analysis. Or maybe just you do a handwritten journal, all right? But if you can screenshot the setup you take and draw like the reasons on like maybe what you can improve on or whatever, this is the difference between a millionaire and someone who's gonna go broke, all right? Trading, right? The millionaires are gonna journal their trade, look back and be like, okay, how can I do this differently? Yeah.
What do you use for journaling? Like, how do you do it?
I upload all my screenshots of trades to my trade recap channel, my Discord, and remember the drive I showed you with all those thousands of setups? Yeah, so I just get to look back at them and just kind of, because it will show my mind, okay, here's what a winning trade looks like, here's what a losing trade looks like. Now in my time, I'm going to try to avoid what the losing trades look like. Where do you think most of my losing trades come from? What type of price action? Bad price action or what price action? Like choppy, yeah. A lot of my losses occur during choppy days where I can't predict if it's going to be choppy or not. But that's why I manage my risk, okay? So please journal. So accepting losses. Ego is the real enemy, all right? With my strategy, it's interesting because my strategy using the broken fair value gap, so if you haven't talked about too much yet, you know, it's very easy to win. So oftentimes I'm winning 5-6 wins in a row and my ego inflates. And then I take a loss. if you take 20 wins in a row in a basketball game or lacrosse, you know, you get, not cheerleading, that doesn't make sense, tennis, and then you lose once, what do you think is going to be more memorable, the 20 wins or the one loss? Exactly. How many of you, it's like going to a restaurant. Most people remember really bad restaurant experiences, but you almost never remember the good ones, right? That's why if you take 5 wins in a row, you have to be very careful because now you don't think you can be wrong. So what happens when you are wrong? You're going to try to get it back after taking that many wins in a row. That's where people get cooked. And it's not that the wins didn't cause this. The refusal to accept the loss did. So always think in terms of losses, not wins. If you take 6 wins in a row, great. You're going to be happy. I would too. You know, you're doing really good actually. But not sustainable to not revenge trade, okay? Now, there is one way to combat this. Tradeify is a broker, which you can put money in, or prop firms. And there's called a daily lockout feature. What do you think a daily lockout feature does? Yeah, what do you think? Yeah. Yeah, locks you out. And you can set some restrictions on it. So you can put a number like, I like how you fist bump them when you get the right answer. Basically, if you go down like $300 for the day, that would be your daily lockout. Then it will basically not let you take another trade. It will X everything out. It will block you out. Why do you think this might be helpful? So you stop. How many people think it would be easy for you to stop? Yeah, you probably think that now, but wait till you actually get in a trade. It's not easy, dude. You're gonna be like, oh, I need this loss back. All right? Do you guys all understand that? Yeah. I promise you, a daily lockout feature will make you a millionaire if you use it. Because you basically cannot lose, it will not let, there's even a button on Tradeify that you can literally press to say, do not let me change the lockout feature. So there's a lockout feature, and then there's something saying, do not let me change the lockout feature. Because what people used to do is, like, this is a gambler, bro. Dude, you lose $400 in a trade, and then it's like, oh, my daily lockout feature hit. It's like, maybe I'll turn it off. They turn off their daily lockout feature, then they keep trading. I'm like, bro, you can't do that. So you have to turn on the button that doesn't allow you to turn it back on. All right, so this is going to be on your broker. All right, this is going to be on like the prop firm. Usually it's on Tradeify. I'll have to show that at some point. But that's gambling. All right. It's kind of funny. I saw something today where I posted on my second account. One of the prop firms is getting sued by this guy. Every account on Apex is about $100. All right, $100 for a $50,000 account. This guy bought over 5,000 accounts and made zero money. So he spent over $400,000 buying these accounts. He bought 10 to 15 accounts a day, just full porting them all, gambling. Okay?
And he made nothing.
And he made nothing. And he is trying to sue Apex for like scamming him, even though he's just not a good trader. So he's just, yeah, it's just sad. Okay? That is a real gambling addiction. We're not gamblers. We are what?
Risk managers.
We are risk managers, all right? So I also, another big rule in trading is the 2-loss rule. 2 losses, if you talk to like any professional day trader, they'll usually say they're done after 2 losses. Even if I think I'm in sync with the market and I took 2 losses and I see like another really, really good setup, I'm like, oh, there's trend line liquidity above, there's a fair value gap, this is good. Do you think it's smart taking that third trade if I already took 2 losses? No. Listen, because even if I think, I know you're joking. Even if I think I'm going to be right on the third trade, it's like you're not in tune to the market because you clearly took 2 losses before. So you don't know. So you're probably not going to be right, even though you think you're going to be right. What does that mean about price action for the day? Do you think it's good or bad? It's probably, if I'm losing 2, for my model, I'm going to teach you, if I'm losing 2 setups in a day, that means price action is probably not good for my model that day. So I got to stop, dude. there could be another A+ setup with liquidity sweep, a market structure shift, a fair value gap, and I won't take it. Because the day's already told me that I'm going to likely keep losing. All right? Now, all this stuff you're just going to build up by actually taking real trades. All right? You're going to see this now, and it's not going to make sense. But once you start taking real trades, if you take real trades for a month and you look at this again, you'll be like, damn, like this is all really good. All right? So make sure you like have this written down somewhere. But there's a lot of things that happen. Sometimes you can get stopped out, and then the second you get stopped out, we reverse and go your way. That sucks. But I'm trying to. Usually, my model will not happen too much. My model. What else could happen? Sometimes you'll see like a really good setup kind of forming, and you're like, oh, we have all this liquidity above, and then in one candle, like liquidity all gets ran, and you don't even get an entry. You're like, and then you feel FOMO because you're like, you knew where the market was going, but you missed the entry. That sucks. Again, there's so many. You're gonna learn so many psychological things about yourself and just like how you react to these things. It's a long journey. Now, there's something called light bulb price action. Write this down. Light bulb price action is price action where it's like a light bulb pops in your head where you instantly see where it's gonna go. So when you go on YouTube and watch a guy who posts a video, it's like this strategy has a 94% win rate. Okay. Do you think he's going to show the best possible hindsight examples because you already saw where price is going? Yeah. Yeah, they're not going to show the live time price action, okay? I call this light bulb price action or YouTube price action. Ideally, you want to take, it's just price action that's obvious to you, or price action that, like, listen, I know there's equal highs above here, I know there's a market structure shift, we're clearly going to go here. But if you can't determine that, it's probably not light bulb, okay? So light bulb is something that you've seen before, you've taken before, you've taken the same trade 1,000 times. You don't understand yet that yet because you haven't taken any trades yet. But all the confluences aligned. You know you got the shift, the market structure shift, the fair value gap, the sweep. You're in maybe discount for longs. You're in a kill zone. Right? There's a nice curve or a nice. What does curve mean? Basically, just means uptrend. There's a nice uptrend or a bearish reversal going to uptrend. Right? So this is a light bulb setup. Everything just will click. Like, it's something that maybe I taught you. You're like, oh, Dachi taught me, or Ryan taught me. Right? So, yeah. A non-light bulb setup is you kind of think it looks good, right? You're kind of like, this kind of looks good. Or, there's one thing missing. Maybe there's no liquidity sweep. Or there's just choppy candles, no momentum. Lots of smaller moves, and you have to convince. If you have to convince yourself something's a good setup, does that mean it's a good setup? No. You need to let it come to you. You gotta let it come to you. All right. So a Judas swing. Does anyone know who Judas was in the Bible? Yeah. What did he do? Great betrayer. He betrayed Jesus. Right? So Judas, he betrayed Jesus, okay, in the Bible. So, think betrayal. Remember I talked about that fake move at open where we go up and then down for the day to collect what? What do we collect when we do the fake move at open? So what do we do? Yeah, it's a stop hunt. We are stopping people at open. Okay? That's what a Judas swing is. It's basically a false move at open. See how it correlates with, Judas betraying Jesus? So a Judas swing is basically a move to the opposite price of where we're actually going to go. If I think the market's going to go down for the day, do you think it's better for the market to go up first, then down, or just straight down? Up first, then down, to gather all the fuel to go down, because we need to trick people first. Right? We need to trick all the retail traders. We need to trick people and be like, yeah, we're going to go down. Oh, nope, and then we're going to go up, and then it's going to make people change their minds, and then we're going to wreck them both ways. All right. So a Judas swing typically appears around 9:30 when the market opens. It's basically just like the false move, and it's most common at 9:30. It can appear other times, but 9:30 is the best. So price usually pumps it open, sweeping some sort of high. What's an example of a high we could sweep it open? What? London high. What else? Asia high. What else?
Double high.
Double top or double high, equal highs. Triple highs. Trendline liquidity, quadruple highs. Quintuple highs.
What's the sixth?
Six.
Sextuple.
Six is, I think it, I don't know.
Hex.
Okay.
Hexagonal.
Yeah. So Judah swing is like what is a confluence, is not actually an entry signal. Alright? What that means is a Judah swing is just like a term. It's not like a mod. It's like I'm still entering off of what? A fair value gap? You guys agree? I'm still entering off fair value gap, which is the Judah swing. Okay, so just don't forget that. Now, if we have consolidation, like we're chopping, and then all of a sudden we spike above or below the chop, that could be a Judah swing. Remember what retail traders think if that happens? Remember what I said? If we're chopping like this, boom, 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 and we keep rejecting the same level, and then we break out, what are retail traders doing here? What is all the like, new traders think is going to happen here?
It's going to keep going.
It's going to go up because we broke out of a key level. So usually this is a Judah swing. That's a trap. That's what the Judah swing would be. So it's just like another terminology that I'm going to refer to. It's like a false move. So again, if you were just coming into the market and it was your first day class and I showed you this, oh guys, we're rejecting this 300 level 5 times. Should we short it? You probably all say, yeah, let's short it. Or, oh, we rejected the 300 level 5 times, but now we broke it. You'd probably think to what? You'd probably think to long, right? Because it's a level we broke. So this is where we get our Judah swings. Now, was there a Judah swing today? Let's see. No. Kind of. So, see it? Today, market opened here, 9:30, right? It's probably better in the 15-second chart. But see how the market opens first? It opens here, runs up immediately. At one point, this candle looked really bullish. Would you guys agree? That would what they were, yeah. All the new people buy, and then we just drop the rest of the day. So all these people are fuel for the market to reverse. Okay, that's why we go up first and then down. Does it happen every day? No, but it's like a guideline. It's like it happens a lot. Okay, yeah.
What percentage of retail traders do you think are like over profitable?
10%? Yeah. It's not easy, dude. Do you think this is because strategy or psychology? Yeah, mostly psychology. Psychological issues. Now, this is my model. This is my model. So we're going to learn about my model now. Do you have any questions before I go on? Any questions? Any preguntas? No? Yes? Yeah.
Are you religious?
Am I what? Religious? Yeah.
You are?
Yeah.
Are you ready to meet your maker?
What? I'm Christian. I got a cross necklace, bro. Alright, take a picture of this. So, ideally the first thing I'm looking before my model is a liquidity sweep. Why do I want a liquidity sweep before almost every model, no matter what model I'm taking? So there's fuel to go the other way. Alright, we need fuel to go the other way. Alright? Now, sell side or buy side, we want swept. Without a sweep, there's no order flow fuel. Okay? So we want a giant high to be ran, or maybe a giant low to be ran. All right. Now, 2, we must find an obvious fair value gap, one that stands out. Sometimes you can get like these like 2 or 3 tick fair value gaps where they're tiny or less than 1 point, and they just don't stand out. Yeah, what's up?
Is it always bearish fair value gap?
No, it could be bullish. This is just for this is for the long position, but it would be opposite for a short, right? You can mirror all this. All right. Now, once we find that obvious fair value gap, which I'll show you right now, we wait for a body close above the gap, and then we enter at market close. So when the body closes, the second the body closes, if we're on a 5-minute time frame and it's 9:54, when will the body close? On the 5-minute. If it's 9:54 and we're on a 5-minute time frame, what time will the body close? 9:55. If we're at 10:03 on a 1-minute time frame, what time will the next body close? Okay, if we're at 11:09, okay, 11:06, sure, and we're in the hourly time frame, what time will the next body close? 12. Okay.
12.
Yep. Any questions about that? So, why do you think these IPGs work? It's because retail traders are getting smarter, and they short the bearish fair value gap because, bearish fair value gap, I'm going to short. Usually when we have a bearish or bullish fair value gap, is it good displacement or bad displacement?
Good displacement.
It's usually pretty good displacement. If that good displacement gets totally wrecked and V-shapes to the whole other side, do you think that's wrecking a lot of people? Yeah. That's the side. I want to be in the side wrecking all those people, all right? So let's pull up a video on inverse fair value gap. So here's an example, okay? Let's pull up a video on inverse fair value gaps by my boy T-Trade. Now, I taught IVGs to the whole day trading community. So like I'm the creator of this.
Really?
Yeah. So like every video I pull up is funny because like I taught all these people. But again, I'm here now. Like I'm here now. You guys are going to listen to another perspective other than mine, all right? Because I'm already teaching. But yeah, I taught everyone this.
You created this.
You taught T-Trade?
You created this?
Yeah, I created this model basically. So IPG was created by the guy named ICT, who's got 1 million subscribers on YouTube, but he never really explained it. I kind of took that with my own experience and I taught the whole space. Like, if you go on your day trading feed, after following me, you'll see a lot of IPG traders. Like I taught them all. All right. If you go back to my YouTube video from 3 years ago, teaching them when no one else knew what they were, when no one else was using them. Right. Yeah. Yeah, it's the IPG model. That's what I take. Okay. I take the IPG model. People name it some dumbass names, but I don't rename it. All right. I don't like renaming concepts. Like, what did someone rename? Some people renamed it. Here's an example of some names: the mech model, the motion model. It's all the same. It's all IPGs. It's all my model, but they just rename it because. Why do you think they might rename something if they sell a course? It just seems cooler and more original, right? So be careful about that. I don't rename this. It's literally an inverse fair value gap, and it's a concept, right? So let's watch this video.
How's it going, everyone? This video is going to be over inversions. We'll first hop into a PDF to go over what inversions are. We will then quickly discuss the consequent encroachment of fair value gaps and how it is used before talking about old civvies and bissies and how they can be used on the buy side and sell side.
None of that makes sense.
Go ahead and get into it. So here we are in the PDF.
A bissie is a bullish fair value gap, a civvy is a bearish fair value gap. Just a different
fair value gap. Now, if you don't know what a fair value gap is, I suggest you click the link in the top top right corner to watch my video on that. But for a quick reminder, a fair value gap is a 3 candlestick pattern, which the first candle's low does not overlap with the third candle's high, or when the first candle's high does not overlap with the third candle's low. So now that you understand that, what is an inversion? An inversion is when a fair value gap, and in this case a city or a bearish fair value gap, gets closed over or disrespected. So if we continue ahead here, you can see how the next candle closes over this city, which creates an inversion. Now if we extend this out, we can expect price to either retrace into the...
Now, did the body close above that fair value gap?
Yeah.
Yeah, so that creates an inversion. What if the body doesn't close?
Doesn't count.
Doesn't count.
The zone, or just move higher. So you can see it retraces into this zone, or the old fair value gap. It respects the consequent encroachment, and then continues higher. So what is the consequent encroachment? The consequent encroachment is a 0.5 or 50% of a fair value gap. So I can mark this out by just taking a fib from this high to this low and getting 50%. Now what I want to see with consequent encroachment is if price comes in and respects this area, then I anticipate it to move higher. Now if we go back and price comes in and violates this area, then I can anticipate price to move lower. And you can see here how it closes below the fair value gap and creates an inversion. So let's hop into the charts and find a few examples of inversion. So here we are with our first example. We have Euro USD on the 60-minute chart, and we have an hourly sweep right here. So let's drop down to the 5-minute chart. So here we are on the 5-minute chart, and if we're going to be watching for an inversion, we want to see a busy or a bullish fair value gap get disrespected. So marking out this bullish fair value gap here, we want to see when price closes below that. So you can see we didn't close below it yet.
Now would it be an inverse?
No.
Why not? Well, what did I say? What is an inverse? What did I say an inverse just was? It closes back below the candle. The fair value gap. Write this: bullish IFEG equals when price closes above a bearish fair value gap. So a bullish IFEG equals when price closes above a bearish fair value gap, right? Now, what do you think a bearish IFEG is?
The price closes below.
When a bullet or bearish IFEG is when price closes below a bullish fair value gap. So that's the definition with an inverse. All right, write that down.
Right here, we close below it. So now we can anticipate price to reach back into this area or continue to sell off to where? These lows down here. So there are a few ways to look for an entry here. I can look to just market sell this, or I can look for a retest of this inversion. I stop above an opposing candle and then looking to target these lows. So let's see how this works out. It's tagged in. You can see now fair value gaps are supporting price lower. And there we hit the lows. So now let's drop back out to the hourly chart to see what this looks like. So you can see we just took these buy stops and then ran to the other side of the range, sweeping this sell side liquidity. Now if you watch my previous video on external and internal liquidity, what do you notice after taking these lows and closing back inside? Well, we sweep external liquidity, and what do we have resting right here? Internal liquidity. So this gives...
Internal... Okay, wait. Internal and external liquidity, you don't know yet, but look. What do you think external means? Outside or inside?
Out.
Yeah, so like external liquidity would mean like if I drew this range from here to here, where do you think external liquidity would be? Do you think it'd be in the inside or this and this? Yeah. External liquidity, all the internal liquidity is like the highs and lows inside the range. Right? External liquidity equals the most obvious highs and lows outside the range. And then internal liquidity, highs and lows inside the range. There's like still other terminology that'll be. And then consequent encroachment is a 50% of a fair value gap. That's really stupid. Yeah, when he says internal liquidity, like this is internal liquidity, right? Because it's inside the giant move. Bless you.
Bless you. Your bless.
This is a framework to trade in the opposite direction. So let's drop back down to the 5-minute chart. So here we are on the 5-minute chart. You can see after we took these lows, we consolidated and created a range. Price tried to move higher. You can see we retch into a fair value gap here. And then price goes back lower before making a new low. Now what do you notice about this new low? We swept sell stops here and then created a fair value gap. When price trades and closes over this fair value gap, it creates an inversion. Now, if I'm looking to take an entry off this inversion with my stop on this low and targeting the midpoint of this fair value gap, that's about 1R, which does not meet my requirements for entry. So how can I adjust my entry? Well, what I can do is mark out the consequent encroachment of this city here, and by marking that out, I can look to take an entry at the consequent encroachment.
I do not do this. I get in the second this candle closes. I get in here. Do you think if we're reversing all these sell orders, do you think we're going to retrace here a lot? No, because all these people are going to start to cover, and when they cover their position, what's going to happen? It's just going to keep going up, and that's where we cause the short squeezes. So that's what happened with GME. Remember the GameStop? Does anyone know what happened with GameStop? Like 4 years ago.
Wait, smart money was trying to
GameStop went from like $10 a share to like $400 a share within like a day.
Yeah. Is it?
Yeah, like went up like 10,000%, which is unheard of, because people kept trying to short and they were just getting short squeezed.
I thought it was big money that was trying to short.
Yeah.
Everybody.
Because GameStop's like a shit company now, you know? Like they're not. The GameStop is like dead. It used to be live way back then. But why would a bad company go from $10 to $400 a share when they're not actually worth that much?
Of that whole city or the inversion. Let's see how this plays out.
Hindsight, he's just finding hindsight examples.
So you can see we hit our entry, get displacement out, price respects a fair value gap, and continues into the hourly city. So let's go ahead and look back out at the hourly chart to see what this looks like. So back out here on the hourly chart, just to review what happened, we had buy stops resting above old highs, price traded above those old highs, then closed back inside the range, giving us a narrative to trade lower to sell side liquidity. A 5-minute inversion was used as price traded lower. Here, after sweeping sell side liquidity, or the sell stops, resting below old lows, price goes from external to internal liquidity, and a 5-minute inversion was used once again. So here we are on NQ 2-minute chart, and you can see we get an aggressive move down and then back up. So looking for this to be a retracement, I want to see follow through to the upside. However, we do not get that. After sweeping these highs, we can't close outside the range, and we just fall back in. So with consolidation, I'll be waiting for manipulation, or I'm waiting for external range.
What's manipulation? Liquidity sweep. Remember, manipulation equals liquidity sweep?
Liquidity to be hit. So I'm waiting for this low or this high to be hit. So you can see price does respect this fair value gap and then trades to sell side liquidity. Price cannot display.
Is that now manipulation? It should be. Do we know for sure without any confirmation of what's coming back up here? No, but we'll watch. We watch for what here? We're gonna watch and see how we starts on R at this level. What? No. We're gonna watch how we react, and we kind of feel out. We're gonna feel out the candlesticks here. We're just gonna see are these candlesticks big or small? From the low.
Is out of the range, and you can see we get another sweep there, and then we have a city resting here.
What's a SIBI?
Oh.
Bearish fair value gap. It's just a fancy name. Don't just use fair value gap. It's dumb.
Now, if we want this to be in
a SIBI stands for sell side imbalance, buy side inefficiency. It's all just nerd terms.
Inversion, we want to see a close over. Now we are closing over the consequent encroachment, which gives us a hint.
What's consequent encroachment? It's the 50% of the fair value gap. Do I use it ever? No. But what would be the 50% of this fair value gap? Where would it be? In the middle. Raise your hand if you understand that. Pretty easy, right? Again, it's just a fancy name for the 50%.
To close over the city or to become an inversion. So letting another candle play out, we do get that close over. So then looking for a...
So is this an inversion? Yep, because we had a bearish fair value gap that swept the low, and now we closed way above it.
Return to the city. I'll have my stop on this low, and then I'll be looking to target the other side of the range for partials or full take profit. So you can see price returns back into that inversion, and here now I want to see it respect that consequent encroachment, and you can see that it is.
Hindsight.
And there we go. We sweep one more time before displacing over, validating this as an order block. Price then respects that.
See the order block? The red candle sandwich between this green and this green? Look how, what's respecting this? The bodies or the wicks? Both. Right? The bodies hold above it, and the wick. When you see the wicks come down below the order block and buyers push it right back up, this is still called respection, but respection isn't a word. It's still being respected. Remember the wick, like the wicks are trying to do the damage, but it's still holding the order block.
And continues higher to make a new high. So we are going to continue on with this example and talk about how we can use inversions within trend. So you can see we're trending up here, so making a higher high, we want to see a higher low put in.
What's an uptrend mean?
Higher highs
and higher lows.
And what do we have? Well, we have an order block, and an order block off that order block, so a propulsion block. So let's see what happens if price retraces there. It does. And if you notice, what does it do when it retraces to this propulsion block? It creates a fair value gap, or
Propulsion block is an order block off an order block. Another dumb term. It's still totally an order block. You'll learn all these terms if you get more curious.
The price closes over it. This is an opportunity to get an entry into the trend. So let's see how this works out. See, it's pretty choppy.
Is that bad or good price action?
High.
Really
now we
bad.
made a higher high. Are we going to make a higher
that's a
low?
kind of
We have a fair value gap here. So if we're going to make a higher low here, what do we have? We have a city. So if we trade over this, we can anticipate price to retest it or at least go higher.
All right, what do you think should happen? Higher.
Make a higher high. Now we want to see a higher low.
Why did we know price was likely to go higher there once that candle closed? Because it broke the bearish rally gap, right? And if we're breaking a bearish rally gap, well, that's not bearish. Like this is literally my whole
You
model,
can
guys.
see we test this inversion.
This is how I make millions, right here.
And then continue higher. And the one I just missed is we have an inversion here. We close over, retest it, and continue higher. So you can see if price is trending in one direction, those opposing PD arrays that fail are actually off.
What's a PD array? What's an example of one? FEG or
order block.
Order block.
Opportunities to get into that trend. Let's go ahead and go back into the PDF to learn about how to use old cities and busies. So back here in the PDF, we can use old fair value gaps to look for reaccumulation or redistribution. So for example, here we are on the sell side of the curve. Here we have the smart money reversal, change in the state of delivery, the inversion, market structure shift, all of that. Now we are on the buy side of the curve. What I can look for is old fair value gaps from the sell side of the curve to support price higher. So for example, we have
See how he's
fair
using
value
this
gap
old
here
fair value gaps?
that gets traded above
Support
and then
price.
is used as support to trade higher. So let's go look at a few examples of this. So here we are on gold daily chart. We have equal highs resting above us. And let's mark out our city right here. Now if we're going to have a smart money reversal, I'd like to see a close over this city and a close over these down close candles. And we get both of those. So now I'd like to see a short-term low be put in. So we do get a short-term low. So now confirming our smart money reversal, do we have any old fair value gaps on the sell side of the curve? We do. So dragging that out, when price closes over this fair value gap, it can then use it as support to move higher. Here you can see it reaches back into this old fair value gap, so I'd anticipate it to move higher. And there we get a sweep of that buy side liquidity. I hope this example shows you how you can use old fair.
All right, let's go get some examples on TradingView, and I'm gonna come around and help you guys. So, what you're gonna do now is try to find a liquidity sweep and then an IPG. So find a spot where we sweep a higher low and then a conversion for value. And nature of the sweep is pretty obvious. So guys, look at this. Everyone look. We have a live example potentially playing out right now. A couple of people drew it, but watch. Ready? So, if we go to the 5 minute, we have a bearish rally gap there. Do you guys agree? Sure do. Alright. Is there an entry model to go long here yet?
Not yet.
Why not yet?
Because it hasn't broken that.
Yeah, we haven't broken the zone yet. We haven't closed. What do we need to do to get an entry?
You need to close above.
Close above. So, if we close above, you can take a paper trade. Entry would be around here. And then where'd your target be?
Top
of the top, right?
Yeah.
Right here. Now, I have a question. Alright, listen. What else do we have that's very key element to this trade before the fair value gap got inversed? Yeah.
You got a liquidity sweep?
Yeah, we have a liquidity sweep. Does everyone see a liquidity sweep? Yeah, we swept this low. So, we swept this low. That's part of our checklist. So we have liquidity sweep. We have a potential buy side liquidity. Do you guys think this is stacked up with stop losses? Yes or no?
Yeah. Yes.
Yeah.
Yes. Okay. Do you think this is stacked up with stop losses? If it looked like this, would this be stacked? Would this be a better or worse play? Why worse? Because the stop loss has now been ran.
They've been ran.
Yeah. So look. Look. Ready? See it? It's kind of a trend line. Is this a good or bad trend line? Yeah, it's like not the greatest. If it looked like this, if the wicks came up here like this, and then like this, it'd be way better. Like that. But it just doesn't. But is this still engineered? Alright, everyone write in your notes. Domino effect. Domino effect on a trend line. Write that down. Domino effect on a trend line. Alright. The domino effect is when we have all these high or lower lows or lower highs, like here, here, and here. And why do you think I call it the domino effect to run those highs? Yeah, because if their stop loss is here, they're just going to trigger these stop losses to be triggered, and then these stop losses to be triggered. So we call that engineered liquidity. Okay, and it's like a domino effect where it discloses, will break the whole zone. Okay? Now, I'm going to try to do some live trading on Thursday, but I'm basically doing live trading right now. What are we doing? What is me doing? I'm live trading right now, technically. What am I doing now? No? I'm not doing anything. I'm just waiting for this. So I just sit. So live trading is we just wait. So we have a liquidity sweep. We don't have to close above, so we do nothing. We just watch price until.
We haven't even been filled yet.
Yeah, we haven't been
filled. We're not
yet.
even in the trading. So
we watch price until it fills us. Now, what time is it?
13:49.
What time is it in Eastern?
4:49.
Who said 3:49? It's 3:49. It's 4:49 Eastern. 3 hours ahead.
6, 7.
All right. Shut up. So what happens at 4:49? Are we in any sort of kill zone?
No.
No. This is like really slow. The market's about to close at what time? Is the futures market? Futures close at 5. So 10 more minutes until the market closes. Do you really think we're gonna do anything in the next 10 minutes before market close?
No.
Or really?
What if there's a lot of
There won't. And then at 6 o'clock when Asia opens, then maybe we'll get a move. But, so yeah, live trading is just sitting your desk. Live trading is basically you sit at your desk for an hour until you get your entry. Like you could be literally playing like Fortnite or Clash of Clans or literally anything while you wait for your trade entry. Minecraft. And then when you see your trade entry, you lock in, you pay attention, and then that's your trade, and then you can go back to playing Minecraft. So, and then you can go golf later. Then you can go out to dinner to a nice restaurant. Then you can go to a Lakers game. What?
I didn't say anything.
Then you can go hang out with some girls at night. You know?
But not get kicked out from Summer Discovery UCLA.
Yeah.
Wow.
So.
It's like, wow, bro, come on, low bar, bro. You're the one saying 6, 7 jokes. God forbid I make it. It's like, wow, alright.
So that's that. All right, now we're gonna go on FxReplay, and I'm gonna try to backtest. This is where the money's made. What are you guys talking about?
This guy's talking about Ryan Wilson, right?
Is there something you'd like to share with the class? No. Yo, what are you guys playing over there?
Well, I'm watching my trade.
Yeah, I'm watching my trade, so I'm running some balls.
All right, ready? Is there anything obvious here?
Yeah, there's a low.
Yeah, there's a low right here. Higher low. High right here. What time is it? I always check. I'm just gonna go to next New York session. All right, here's the next New York session. We're just gonna go on the 1 minute time frame.
Wait, how are we doing the next if that's right now?
Because we're backtesting.
Oh.
So I'm just gonna play the candlesticks and see what I think. Now it is before 9:30 open, so I'm gonna look for any liquidity. We have liquidity here, but what's wrong with this? It was already ran. So it looks like we came down to this low, and this is our liquidity sweep. Raise your hand if you see the liquidity sweep there. So there might have been an entry there, but I was probably sleeping, so I didn't catch it. Usually, when we have a liquidity sweep here, it tells us we're going to go back to the highest high from maybe overnight. Now this was yesterday's high of day. This is yesterday's high of day. You can tell because it was created at 10:24 on Friday, and it's now Monday. So this is previous day high. Why isn't previous day high on Saturday or Sunday? The market's closed. Futures is closed, markets, everything's closed. I hate the weekends, dude. All right. So what do you think our bias is right now?
Market's going up.
Yeah, so our bias is what? Bullish. Yeah, let's say our bias is bullish, to be honest. It looks like we kind of have a bunch of leftover stop losses here too. So I'm probably going to look for a long entry.
Those have been ran.
Yeah. Where?
Yeah, that one's been ran.
Let's see, wait.
No, not that one. One right below. Not, I just said.
What's this?
That's a double.
That's a double
Double
high
top.
right there. No,
So
one
these
right
ones
below.
were ran, yes. but we still have a double top. Do you think it's random that a $20,000 index is leaving the same double top at almost the same exact spot? Do you think that's random? No, that is an algorithm. That is built up liquidity for us to go to those highs. So, if this were a live time right now, all right, I would guess we're going to do this. I would guess we're going to do this. So, let's just see what happens. All right, red candle. Does it matter? Why does it matter? Well, because I'm not in a trade. I'm not losing money. Here's what I thought was going to happen, but I'm not losing a trade. Now, this is open. What is likely, what do we like to look for at open? What? On the open, 9:30 open. What did I say? Yeah. The Judas swing. What's the Judas swing? So we go down then up, or we go up and then down. So could we get a potential entry here if we maybe sweep this low? Yeah, so let's see. Okay, we swept this low. Do we know how we're going to react here yet?
No.
No, we're just going to kind of watch and see, I guess. Okay, good reaction.
Nice little trade.
Where's our bearish fair value gap? Right here, right?
Let's run.
So do you guys think this would be a good long?
Yeah.
If we what? Close above it?
Yeah.
So let's do this.
Yeah.
Alright, we're just going to keep playing price. Is this good or bad price action? Yeah, not really bad price action. We're not getting any speed and momentum to it.
Oh, shit. Come on, go straight. Straight can.
Is there an entry yet?
No. Straight can. Let's run it.
Is there an entry yet?
No. We get a Drake.
Alright, it is now lunchtime. There's still no entry. So would we have taken a trade?
No.
We would have 0 trades this day.
Oh. You need Drake candles, bro. We need
Yeah, that's just terrible price action. Holy. This is so bad. Do you see how making a plan is gonna keep you out of this? Our plan was long there. No, we're not, now this just looks garbage. That is the most garbage price action I've ever seen in my life. What the hell? Alright, next session. Screw that. I'm not trading that. So, we never got the entry there. So, our bias is wrong, but it didn't matter because we don't have an entry. Now, there's something I didn't teach you yet, and it's called a new week opening gap, which is what we had here. It's this giant gap. These gaps love to be filled. All right? These weeks gaps love to be filled. All right?
Mr. Wilson.
Mr. Wilson.
I'm talking about the chart. All right, let's be professional, please.
Yes, you're right.
So these giant gaps in the market, they're literally like giant spaces. All right, do you see these?
Yeah.
They're giant spaces. Can I see this if I back up all the way over there?
Yeah.
Right? If I come all the way back here, can I see this? Yes. So, is this a fair value gap?
Yeah.
No, it's called it's a new week opening gap. It's from it's funny because the gap from Friday to you know how sometimes Trump tweets in the weekends?
Yeah.
There's something called the weekend market, which you can't actually trade, but it'll estimate what price is going to open back up on Monday. So a lot of times what happens is Trump knows this, so he launches a lot of the attacks on Iran over the weekend. Because it affects the stock market when we'll gap up or down. All right? So here's a giant gap. These giant gaps will always be filled, and the more obvious they are, the more likely. Okay? So yeah, this is just a really giant one, and then we'll fill them. So we see how we went to fill the whole thing, but it's really bad price action. So we're just gonna go to the next day. Next New York session. Oh no. So all the liquidity is ran. Damn it. I was gonna try to take that. Oh my god, look at this entry.
Thanks for the liquidity.
No.
You're welcome.
Do you see the entry, guys?
Yeah.
Holy.
Jesus, it's perfect.
So it went back along to the bias. That would have been a 5R trade.
5R.
Oh my god, I fumbled that.
I would have hit that, bro.
And see how it's at 9:30. See how it's a down move at first, and then we sweep the liquidity. I would have just taken that a lot of time.
Wait, that's what I call a FOMO trade. I don't trade it.
No, I would have taken that. I just skipped to the next day back.
How much money will we make?
No, you just had a FOMO
Wait. How much money will we make?
I'll try to find bigger trades.
Actually, no, that's a good idea.
What?
How much money will we make?
Because the double top.
Oh.
We never took it, and I know prices don't back to it.
Alright, see like
What?
No.
Alright, that would have been an amazing entry. Ugh, that's so annoying.
You're getting FOMO, bro.
Yeah, that's called FOMO. But like, I could have just showed you guys that a lot of time. So we're just gonna next New York session. Alright, where's liquidity? There's not great liquidity here. Okay, right now, I feel like I'm gonna base my bias based off these fair value gaps. So, yo, can you guys slide down, if you don't mind? I'm gonna base my bias off of this giant fair value gap, just because it's super obvious. So I'm just gonna see what happens. Okay, we broke it. So,
Let's take a look.
probably bearish. We're gonna go to this low. It's so obvious. And then maybe when you sweep that low, we'll get along. All right, boom, there it is. So when that started to break, right, I knew we'd go to this low. Put your hands up. How obvious is this low on a scale of 1 to 10? Yeah, I get 10. This is so obvious. Once we start having the momentum, the lows like that, we always hit them. Now, this is where smart money likes to buy. So we're going to be maybe looking for a market structure shift or an inverse fair value gap or something on the 1 minute time frame that's going to tell me we might go back up. Is this a market structure shift? Raise your hand if you think that's a market structure shift. Raise your hand if you don't think it is. Raise your hand if you think it's a market structure shift. Yes, it is. But what did we not break?
the fair value.
The fair value.
We never broke the fair value gap. So that's why I don't use market structure shifts anymore. I think fair value gaps are more important. So I'm going to use this one, and then this one. Can I combine these two?
Yeah, maybe.
Yeah, I can combine the two. So I'm just going to do that. So I would have not long there. So see how we just can't break over this zone? Alright, so we're just not going to break it. So I'm just going to next New York session. Alright. Alright. Ooh, okay. So, this looks pretty bullish. We broke above this bearish fair value gap. You guys see it?
Yeah.
What's wrong with the long here? I kind of talked about it before.
Big wicks.
We took way too much liquid. We took already these highs out first. So I just don't like that one.
What'd I say, bro? What'd I say?
So it ends up working.
What did I say, bro?
But this is where trading will get discretionary because some of you might have taken that. But that was a horrible, it was kind of bad price action. But some of you would have taken that.
Boom.
Alright? So that would have been a good trade. I'm going to go next to New York session. I'm trying to do, okay.
Alright.
Ooh, look at that. What's the bias here and why? Why do you think bullish? You think it's bullish because there's big death candles?
Really, bro? Come on, man. It's
What are you saying?
I don't know.
This is my son for his
Bearish.
Alright, what do we think the bias is here? Why bearish?
Because it's like, if you look at the most recent trade session, it's going way down all day.
We have a giant what candle here? A giant death candle. But why else are we bearish? There's a better reason. Yeah. What's the most important thing in the market? The number one thing we look for? Liquidity.
We're going to sweep those guys.
We're risk managers, and the number one thing we look for in strategy is liquidity. Where do you think all liquidity is? Come up here and draw it.
Draw it first.
Let's go.
Let's go.
I don't know, I think it's here, bro.
Where?
Bro, draw it.
Right there.
Draw it.
Okay, draw it. You can say that.
There you go. Boom. Perfect. Yeah. Okay. And I draw more right. Hold shift too. Hold shift when you hold it, and then draw more right. Select it. Yep. Shift. Hold shift. Yep. Hold shift. Okay. Guys, this is a day trading class, not computer mechanics.
I love this guy.
All right, you hold. Put the line right there.
Yo, can you borrow?
Put the line right here. Start it there. You want to be precise. Yeah, there you go.
There we go.
Try to use like the magnet.
Here, let me do it. You're good. You're good. Okay.
And it's barely up.
Now, he has this drawn. Is this the only good liquidity?
No.
What type of liquidity do we have here? Trend line liquidity. Do you guys agree?
Yeah.
All right. Someone come up and draw the trend line. You want to come up and draw? Let's see if she can do it. No need to clap every time someone comes.
No, but that guy's never done it.
Oh, geez. I thought that was
Draw like a rough. Yeah. I think you can go a little higher, maybe. Try to yeah, right there. Boom. Perfect. So what you're about to see is us have another giant death candle here. Do you think I could use that to my advantage to make $1 million in this trade? Yeah. So we're gonna short $1 million here. Short here. All right. The entry was actually here, but I missed it. See the entry right here when he broke this fair value gap?
Yeah.
The entry would have been there.
Yeah.
We're gonna FOMO in though, stop up there, and we're gonna take $1 million knowing we're gonna dump to this trend line. If I'm wrong here,
You're going to McDonald's.
I'm going to McDonald's. I'm working at McDonald's. What's up?
Oh my god. How much money do you have to have in the first place to be able to have the chance to win $1 million?
$1 million.
If you risk $100,000 in a trade, how much R do you need to make $1 million? 10 R. If you risk $10,000 in a trade, how much money would you need? Or how much R?
100.
You need to have a 100 R trade.
Yeah, I got that's a 100.
That's not bad, bro. That's
Very
not bad.
unlikely.
That's not even half a year, bro.
Just give me all I need is
All I need is
a dollar, bro.
So we're gonna do our position tool.
$1.
What type of order are we gonna do?
Limit. Stop.
Market order?
Market.
You're just saying every once to get it right.
Market.
Sell limit, and we're gonna risk $1 million.
Yeah.
Alright? So we're risking 100% of our account. So our estimated loss is $1 million that we lose, and our take profit is about $2 million.
Let's see.
That's good.
Alright.
That's all I got. No way.
We're gonna get this done quickly.
I hope you lose all your money.
Alright.
Yo.
So,
This is all your fault. Oh my god, you gotta work at McDonald's now.
if you were in this trade, would you know you're pretty bad?
Bro, I'd kill myself, bro.
That's why trading's hard, right there. Okay? We'll blow it.
It almost
touched it within
if I was you, I would have moved it.
So we were up about 1.8 mil there, and then it came back and hit her.
Yo, I would have moved it to break even.
So raise your hand if you think you would have moved the stop to break even.
Yes.
100%. Because should we be reversing here?
No.
What did we just create here?
Another stop.
We just created another double low.
Oh my god, double.
So now we're gonna. Are we still bullish or bearish here?
Go back, bro. Go back.
No, we broke even. It's fine.
We're gonna break even.
Yeah, we're break even trader. Are we bullish or bearish here though still?
Make it all back.
Bearish.
Wait, how much money
Bearish.
do you have in the account now? Oh, you still have 3 million.
Bro, just risk another million, bro.
Because we're still bearish here, guys. Because we let the double bottom. I would not like to long this. So let's see if we get another entry.
Let it play out.
Risk another million.
Yeah, risk another million.
Yeah, we're gonna revenge trade here.
No, we would have broke even though.
So the last higher low is right here.
Take a short.
Let's see if we like break it. We can't just short just to short.
Oh, we're gonna break. Yeah, here we go.
Yeah, you got a short right there.
This is
Again, it's not really offering us any entries right now.
the price action is shit.
No, it's just going down.
Acting like he's been a trader.
Oh, okay. What do you think about this?
Take short it, short it, short it, short it.
No, wait.
Wait, why?
Someone come up and tell me where the liquidity sweep is.
Oh.
Yeah, you come up.
Right there, bro. No, why don't I go?
Wait, no. You don't come up.
Me.
You come up.
Oh.
Yeah.
Yo, you. Get up there, bro. Get up there. You got that ring?
Come show me where the liquidity sweep is. It's really obvious.
It's like really off.
See how it stands out, bro?
Yeah. I can
See how
see
it
it.
stands out?
I can see it from the back of the there.
Where we were judging, it's like it's to the downside. The liquidity is the downside. No, it's if we're bearish, we look for liquidity sweeps at the highs or lows. The highs. So where's the liquidity sweep at the high?
Bro.
Got it, bro.
Right there.
No.
Whoa.
Yeah.
Close, closer.
Cold.
Colder.
Cold.
Hotter. Oh, colder. Colder. Hotter. Hotter. No.
Oh, you're freezing.
Warmer.
You're almost there.
Warmer. Oh, burning.
Right there.
Oh, it's burning.
Draw a line there.
Oh.
Alright, draw a line there. And extend it to the right. See it?
Hey.
There you go.
That looks like a double high.
No, it's liquidity sweep. See how the wicks just go right
Yeah.
now? Now, our fair value gap is where? You come up and draw fair value gap that we broke. We just broke a fair value gap.
Oh wait.
Oh, is it right there?
I see it.
You see it?
You go right
Draw.
up first.
You go draw.
Is it not right there?
Everything is
Draw the fair value
Say
gap.
Drake candle, bro.
Drake candle.
When you say D candle, something.
well, like death candle.
Alright, raise your hand if you agree.
That even is fair.
What about you guys in the back? You ladies in the back.
I can't see it.
Alright. We all good? Fair value gap?
Yeah.
Rosie and Cheerios. Where are those?
Where did that back in?
Grabbing a whole
Okay. So, we're going to take another short here in revenge trade. Alright? We're going to revenge trade here. We're not. But I'm a teacher. I'm doing this for a reason. So, we're going to try another trade. Knowing we have a double bottom below. So we're going to do the same risk, $1 million.
Yes.
Yeah.
$1 million, bro.
Come on.
$1 million.
Come on. No!
No. Wait.
Ah!
And not down.
Now,
Yo,
but again, bro, like
Now.
again with the break even.
Would we have probably gone break even if we're up that much money?
Yes.
Yes. Okay. So,
Let's
are
do
we
one
still bearish or bullish here?
No.
We're still bearish because we have not taken out the sell side yet. So, we're going to keep trading and revenge trade another time.
That's why you just go now.
So now, we have this fair value gap, which is kind of maybe this broke. Let's see. Okay.
There you go.
Now, what time is it? What session are we in?
Probably Asia.
Yeah, we're in Asia. This is horrible, but we're gonna try it anyways. Not a time I'd ever be trading in my life, but you can.
You want to be trading at 8 o'clock?
We ideally want to trade during New York Open, but what's gonna happen is I'm gonna go to New York Open, and do you think this liquidity is still gonna be here?
No.
Probably not.
It's gonna break.
So we'll try it. Let's see. All right, ready? $1 million.
$1 billion. Yo, we up.
And topped out. Now, we're going to keep playing price. That's really slow, so that's bad, but let's just keep playing price here. Do you guys think this looks a little more obvious now?
We should put 3 million on one trade.
Your entire account on one trade.
Yeah, otherwise you're going.
So we're just going to go to next session. This is ass.
Oh.
So now next session. This is where people get mixed up and confused. Does this look bullish, Joe?
That looks like a triple high, bro.
Does this still look bullish?
Yeah.
That still looks pretty bullish. Do you guys agree?
Yeah.
So
It's gonna go big.
people are like, oh yeah, we're uptrending, we're gonna go bullish, but we still have those double lows. So I'm still gonna be looking for some sort of short entry. Maybe if we like come up and sweep this high, we'll go down again.
That's a triple high.
That's a triple high.
Like maybe like this. Okay. So let's see if we get a fake move.
There was news.
So we just don't ever get an entry.
Someone tweeted.
There was news. Trump.
Yeah, it looks like news at 10. Oh, it's PMI. It's just red folder. It's like not that big of a deal. So would we've ever gotten a short entry here? No, because we never broke this fair value gap.
Not yet.
But I'm still like, even though this definitely is bullish, I'm gonna note this for the future. But we're pretty bullish now on the higher time frame, unfortunately. So we're just gonna save those lows for another time. So let's just go to next New York session. All right, we're gonna look for more liquidity. Oh, okay. There's a 3-minute here. So it looks like there's a bullish rally gap right here. It broke. Do we know if this is a good entry or not?
Maybe.
What else do we need to look for? We just need to look for more context. This is called a pattern trade where you just see an IPG and that's it. So, do we have any good liquidity? I mean, we kind of do. It's not great, but are we like tapping into anything? Oh, look at this. See that? That looks good, right? And there's a fair value gap here. There's a giant fair value gap we just tapped into. Who sees this giant 4-hour gap? It's actually way bigger. This is it right there. Yeah, that's huge, bro. Look at that. So maybe we'll get a short here. Let's see. Honestly, to be safe, I'd probably wait for like maybe this 5-minute inverse because it's the last one of the leg. All right, this looks good. So we're gonna take this, stop above the high of the death candle, and then maybe target down here. So place order, market.
$1 million.
All right, it would have been probably a break-even trade, but right, I would have gone break-even at that low. I haven't really explained my break-even method yet because I want to teach you guys the entry first. But again, it would have been another break-even trade because what's happening at this low? Is this a bullish or bearish reaction based on what's happening to wicks? Pretty bullish. See how they're just being bought up instantly? So I would go break even in that trade. So I would not want to see that reaction. And if I'm right, I know we're gonna just flush down there.
Is that like a hammer?
Yeah, we got a hammer candle back to the upside, and you do not want to see that if you're in a position there. All right, so I would have probably gonna start break even again. So we're just gonna we're gonna go to the next session. The annoying part is we're at all-time highs, and remember what I said happens at all-time highs? The market just keeps going up and up and up, and there's nothing you can do about it. So it's kind of risky to short here, to be honest, but we just swept all-time highs again. we left all these. You gotta realize, like, retail traders are printing here because they're just buying. We just keep going up. They're all gonna get wrecked at some point. I just don't know why. All right. So let's just. I'm gonna try to get away from all-time highs, to be honest. I hate this. I cannot. I don't want to teach all-time highs. See how we're just sitting up here doing nothing? This is why all-time highs suck. Okay, there we go. So we kind of got to move down here. All right, so we're at next session. Let's see what happens. How is downtrending? Is there any entry? Is there any type of reversal going on yet? No, we're just like going down and down and down. I would not be able to enter here, so I just go to next day. If we just go straight down, I can't enter. All right. So here's open. Again, I'm going to try to look for good liquidity. I just don't see any yet. Wait, why is it? All right. Okay. Did we remember that double bottom? We sold the double bottom. I'd honestly probably wait for a price to break this fair value gap and then probably be short bias. But let me see if I'm see, this is not what you want to trade. You want to wait for obvious stuff. Next session.
How many days would you want that trading right now?
Maybe if we break this. Is this fair value gap in discount or premium? Why discount? Because it's at the point, it's below the 0.5. Well, half of it is, right? Now, if we broke that fair value gap, I'd be bearish. See how it looked like it was going to be very bearish there and it goes back up? That is not bearish. We need to close. If we close below, we should dump, but let's see. Oh, no close. See how buyers are just defending this fair value gap? So we're just not going down. Again, this is what happens all the time highs. I can't do anything about it. It sucks. But. Would we be trading here yet? No, we just wait. Yo, what's up?
Do you only trade NASDAQ? Or
Yeah.
do you ever move something?
I only trade NASDAQ.
So if it's not good, you just like don't trade.
I mean, you can if you want to move around. I know people trade oil, ES. Look how well this is being defended. What's this an example of?
You're negative 930.
What's this an example of? Yeah. Wicks doing the damage. Bodies telling the story. The bodies just keep holding and holding and holding and holding the gap. Every time we come down to the gap, it just holds. So I cannot short this yet. So we're just gonna keep going to the left. All right. This is I hate backtesting all the time, bro.
So you wouldn't trade that week at all?
No, I would. I find entries in the lower time frame. I'm trying to do the higher time frame because you guys are beginners. Like if I go to the 1 minute time frame, let me try the 1 minute. It's just gonna move fast. Okay. All right. So this candle is cutting through this fair value gap and this fair value gap. See how we held it? See how we held these fair value gaps here, here, and here? So what can we maybe conclude right now is going to happen? We should keep dumping here. Do you guys agree?
Yeah.
We just broke a giant ass zone, right? Let's see. So short there. Should I target here? What about here? Yeah, a little better. So let's see what happens. Okay, do you think it's a good idea to maybe go break even?
Yeah.
Yeah, if you don't go break even here, you're cooked. Alright, as you saw in the other trade. So we're gonna go break even. And what I'm gonna do here is something interesting. I think that there's more liquidity here too. So I'm actually gonna move this down and kind of base it off of what I see. Let's see how we react to this low. Okay, should I take partials here?
Yeah.
Honestly, not with this candle. See how this is just a death candle, just how do you get this low and there's no sign of buying? I wouldn't sell there yet. I wouldn't cover there yet.
And then your account balance will be negative.
So I'm actually, what I'm gonna do is I'm gonna hold till here. I'm gonna take half off here. I'm gonna take half off. So I'm gonna see if we hit it. Oh, that's kind of bullish, but it doesn't matter. Okay, wait. So close. Did we hit it? Not yet. Remember, have we ran stop losses yet?
No.
No. You'll be able to tell. Boom. Now have you ran them?
Yeah.
So I'm going to sell half here. So I'm going to only sell half my position. So I'm currently up $162,000 here. I'm up. So I'm going to take 80K off here. All right. Now, to you guys, this will probably be like $200. All right. Everyone starts somewhere though. And I'm actually going to look to the left, and I'm going to see. It kind of looks like we have a giant like trend line here too. So I might see if I can maybe catch this.
Oh my, there's no way.
With the other half of the position.
It's like 10R.
Yeah. Let's just see. Do I have any risk on the trade anymore? No, I have no risk on the trade because my stops break even. Sometimes it hits, sometimes it doesn't.
Cannot.
All right, ready? Probably gonna get stopped here. So stop the break even. So I made 80,000. The rest got stop break even. And now we might have another potential short to go for a move like this if I go to the next session. Because we kind of saved all the liquidity. So I'd actually probably be happier because that would give me another trade idea. So here's, we're going to the next session. Ooh. This looks good. Here's the liquidity sweep. Oops, right there. All right. Did this candle technically close below? Did the body close below this fair value gap? No, close to the tick. I would still think discretionary wise, we're probably going to go down. I want to take this so bad. We're just going to play it. Right, dude. I should have taken that. So I should have taken that, but we're going to take this anyways. Stop there. And remember that old trend line that I drawn? We're going to go for a giant trade here. We're going to see if we can catch like a giant trade.
What?
Why do you think I'm trying to go for all this liquidity? Because that's how the market moves, right? So let's see. I'm trying to like show off right now, but like. So we're going to try this. Oh, that's not good. Okay, so I would have got stopped out. But how many times can I take a trade like this and still be profitable if I stop out? Yeah, you can take this 10 times in a row, and if one hits, you're green. So that's like the power risk reward, right? So I should keep watching. I'm still kind of bearish here, but We just got a really bullish reaction with the slow, so I really couldn't do anything. Alright, we're just not going down. Again, this is what happens at all-time highs, which is fine. So we're going to go next session. Next session. I'm just waiting for something obvious. Holy bro, this is just going up and up and up and up and up. So you guys can just see the daily chart just, it's not going down. I can't do anything. Maybe I'll wait for us to get a reverse in the daily.
There's all that news.
Yeah, there's a lot. The only way I'd be bearish again is if we like close below that giant gap. Like, bro, what are we gonna do? It's just going up. Okay, there you go. Did we close below this gap? No. Nope. Are we bearish yet? By the way, I backtested for over 10,000 hours before I got profitable.
What?
Bro, it's not easy, dude. You have to. If you're addicted, you're addicted. Oh, my chart's broken. All right. See if we can break this. Still not breaking it. Oh, this is so annoying. Nope. Nope. What is happening here again?
Wicks doing the damage.
The wick's doing all the damage, but we're still not closing below the fair value gap, so we can't short yet. This is where trading gets really boring because you just have to wait and wait and wait and wait.
What time frame is this?
I'm on the daily right now. Oh, here we go. Still no close. Still no close. This is trash. Again, you don't do anything here. This is all-time highs. This sucks.
Trash.
I mean, I'm not losing money, but
Oh.
now we close. So now can we short?
Yeah.
Now we can short.
Risk $1 million. $1 million.
So we'll go to maybe this sell side. So we're gonna risk $1 million. All right, save and journal. Boom. Let's see.
Wait.
All right, should I go break even here?
Yeah.
Yeah.
Probably.
Oh, you bet $1 million.
We're pretty close to this low now. Break even for sure. Boom.
Oh,
It's GG.
There's TP. You guys see that?
How much did you make?
How much do we?
So I made about $1 million on that. All right.
Oh shit. Bro.
Now
You should buy
I'm gonna sell half here.
What do you mean?
I'm gonna sell half, and I'm gonna keep targeting a little lower.
This is called revenge trading.
This is called leaving runners. So in your notes, I want you to write, if you scale half the position or scale majority position, and you leave one contract, that would be called a runner. Does a runner ever have any risk?
No.
Why doesn't a runner have risk?
There's already one.
Because you already won the trade, and your stop for your runner is where? Break even. Yeah.
Can you repeat that?
So basically, right.
If you still have position.
So it's write this. If I enter 5 contracts in a trade, so write that. If I enter 5 contracts in a trade, and I sell 4 of them, and leave one contract left, that equals a runner. And then in parentheses, right, stop loss should be a break even. Raise your hand if you need more time. Okay, so I'm gonna leave a runner all the way down here at this double bottom. See it?
Yeah.
See the double bottom, everyone? Yep. So, does it matter if I get stopped out now? No.
Wait, the runner is 500,000.
The runner's 3 million. If I hit the runner, I make 3 mil.
Oh. Oh.
Well.
Now, let me show you guys something. Why do you think we're stalling here? There's always a reason for a price to stall. Why do you think we might be stalling there? What's to the left? A fair value gap. Who sees it? Look. See how we tapped that zone and we're just bouncing? That's we call that a speed bump. So I'm not really too confident unless we break this, we're gonna dump.
Sell.
I'm already gonna sell. Back in the fair value gap.
Oh.
There we go.
Okay.
Oh.
Are we pretty confident now that we're gonna keep going down now that
Let's
this
make
zone
3
broke?
million, baby.
Yeah.
I'm pretty confident. So
Run it.
if this does not hit, I will be very annoyed. But now we broke that zone, so we should just flush here.
Right
Oh.
Bang. So notice how I said we should flush there, right? So that trade is a 6R trade.
You're up 3 million, bro.
So now I'm at 4 million again.
No, realized P&L. That's it.
Oh yeah, well my compounds at 4 million, but yeah, I made 3 mil on that trade. All right, so you guys, that might be $300 or $400, right? Because you might be in a couple micros. Now, what would we probably be looking for now? Shorts or longs?
Long. It's gonna go back.
Where might be a good target? Raise your hand if you know where a good target is based off looking at this. You in the white.
Back up.
Yeah, where?
Where all the people were sound.
Yeah, where all the people were shorting. But this is actually a new concept I haven't taught yet. What do you notice here that does not look right? What do you notice on the chart that looks the gap? This is called a, let's see which one this is. A new week opening gap is the Friday to Sunday. Okay, this is a new week opening gap. See how it says Sunday right here? That means this was Friday. So write new week opening gap in your notes. NWOG equals new week opening gap, which is the gap from Friday to Sunday. Who's on FxReplay before? You were, right?
Wait, can you repeat that again?
You were on FxReplay? And you just made like a free account?
Yeah.
Okay, so you can make a free account and
Yeah,
backtest.
you can't like go backwards or anything, but you can like
Yeah, okay.
play 2 sessions.
2 sessions?
Yeah, or like 2 time periods, I guess, I'm not sure.
Alright, maybe I'll do that. So ideally, we're probably going to go up and fill this whole zone. So I would only be looking for longs here. Where's New York session? We're going to do New York session. All right, here's the New York session. Now, you can see how we filled the whole gap yet? No. So I'm going to be looking for longs. What did we leave up here? Trendline liquidity. See it? So I would definitely be looking for longs right now off of open. This is 9:30. Do we have any longs yet? They look good? Not really. Do we have any market structure shifts to the upside? No, we're just literally just going down, so I cannot long this yet. Ooh, okay. What do we have here? We have something here. It's a PD array.
PD array, fair value. Order block.
We have an order block. Who can come up and draw the word block? You want to come up? Let's see if she can draw the word block. Is this strong or weak displacement? Strong or weak? Yeah, you. Strong or weak displacement to the upside? Strong. Right? A lot of big green candle equals strong. Yeah, that would be an order block. Now there's one more, I think a little more obvious. See if you can draw it. There's only 2 order blocks here. Oh, you had it. Exactly. So, see the order block? So, ideally, this would be along off an order block. And we would want price to go up here off this order block and run this whole trend line liquidity. So another about 4-hour trade.
Put a million.
A million.
A million.
So have a million.
3 million.
3 million. Hey, broke money don't make money. Come on. Yes. Yes.
Yeah, we just made 3 million.
Alright. See how fast that was?
You're up 6 million.
Now, if I put $200 in this trade, how much would I have just made? About 800. It's almost a 4-hour trade. Alright?
You should have made it 10.
What?
You should have made it 10.
Isn't that cool? I can just print money out of thin air like that and know exactly where the market's going.
Thanks for the liquidity.
No, you don't thank me for liquidity. I hit the trade, little boy.
Ooh.
I hit the trade.
Ooh. Make it 6-7 to make it 6-7.
Thank you for the liquidity. So, what was the reason behind that trade? Well, we swept this double bottom here, kind of a double bottom. See it? See how we went below that low? We swept this double bottom. We got an order block to the upside. It wasn't an IPG, it wasn't a fair value gap, but it was an order block, another entry model. And what do we have above? What was I targeting? All those stop losses, which is what starts with a D? Domino effect.
Oh.
Remember, once you run this one, we'll run this one, and then this one, so I know we're going to spool towards the upside, or basically just run up. Now, in order for you to get this good, your next steps are going to just be doing this yourself and backtesting a lot. Like, I cannot, if I could sit in here all day and show you 1,000 examples, it would make sense after 1,000 examples, but I've only showed you 5 so far. So it still probably doesn't make sense to some of you. But this is where you can put in the work yourself and really backtest and understand, like, okay, this is a good trade or this isn't. And yeah, honestly, like, it's kind of fun because you like get to see if you're right or wrong and where price action is going. You can't go back in hindsight. Where I'm trading, you can see what's going to happen, so it's not as fun. But like, if you're just going to sit up here and watch me do this all day, you're going to get bored, right? I already see, people sleeping, which is fine, but you just got to do it yourself at that point. And it's not like, not even the best teacher in the world could teach you this. What's the best teacher in the world?
Experience.
Experience. All right. Want me to try to find one more?
Yeah. This time put like 10 million.
Put 10 million this time? Okay.
Put a billion.
All right, we'll go to the next session.
Just use the money you made.
Put 7 million.
Yeah. 6 or 7 million.
Dude.
Kind of looks like we're just in an uptrend. We don't have great liquidity, in my opinion. I don't like this liquidity pool, guys, because see how it took out this high?
Yeah.
Would that be engineered?
Yeah. Oh, wait.
Why isn't that engineered? Because we have no what? Or we already took out what? We already swept liquidity up here, so it's whatever. I don't like that target. So I'm just going to pick another day to go to next session and just, yeah, look, see how he didn't hit it? See how he left the double top there now? Now would it be good liquidity? Now it would be good. Because all the retail traders are going to try to short thinking, oh, look at how bearish this is. And we're going to take their liquidity. All right. So here's open. Low key, if this 5-minute gets inverse, I already like this long. All right, we're taking this. What is this?
block.
Order block plus a what? An inverse fair value gap. See this tiny bearish one and this big bearish one? That's a bearish fair value gap. Now, how many confluences do we already have in this trade? We already have like 2 or 3 confluences now. Do you see how if you just take fair value gaps and you know nothing else, that's kind of bad?
Yeah.
You kind of want like multiple confluences. So we have an order block here. We close above this fair value gap. We have liquidity sweep. Yeah, we do, honestly. This is a manipulation leg. Right? That's a manipulation leg. So, and look at this. Trend line liquidity. 1, 2, 3, 4 the order block, 5 the IPG. We have and we're uptrending, and we have a market structure shift. We have like 6 confluences here. So what do? We full port, right?
Yeah.
We want to put our whole account on this trade?
Everything.
Yeah.
Put the house on.
Put our house on it?
Put the
Alright.
G-Wagon on it.
We'll put my Lambo on it. Let's see if I'll lose my Lambo.
Flex. Subtle flex thrower.
Alright, let's see.
Wow.
All 3 of your cars on it.
Put all
Put your life on.
No.
Life on the line, bro. Are you taking the trade?
Damn.
Roll. Sell one of your kidneys.
No. Trade
The Lambo is gone.
Both kids.
Okay, should we maybe take some off here?
Break even.
Yeah, let's
Break
take
even.
some. Let's
Break
take like
even.
50% off here. We're up about 1.5 R. We're kind of stalling, so we're gonna take some off.
Break even.
Break even.
And we're gonna go what? Break even.
Yeah, break even.
So now we're gonna lower the risk. Okay, we already ran the trend line liquidity.
Put 2 kids.
And where do we want to target?
That high.
The double
To the
top,
moon, bro.
the moon. To the moon. This is where the moon is, right?
Yeah.
We're so done.
Where's the moon one? So we're gonna be targeting the moon. Alright, and we're gonna put like a little magnet up here to see if it can help us.
An old man.
Oh,
magnet. I don't think there's a magnet emoji.
Yeah, there is. I use it all the time.
Oh.
Alright, so we're gonna try to draw price towards here, the moon, and see if we can get lucky. And break even. So,
We still made it laugh.
Oh my goodness.
now, we just made some profit. But is there opportunity for more?
Yeah.
Yeah, because we still got the top up there, so we're still gonna
Put
look for
another
trade.
trade on.
Wait, but we should
We're gonna start to
follow our
over trade
plan.
now, right?
We should follow our plan.
Exactly, we should follow our plan. This
Our
is
plan is
Go shake on, bro.
Our plan is to lose all our kidneys.
all our kids.
What are you talking about? Who's that guy talking? I don't know.
Alright, this doesn't look bad.
We need a filter, bro.
I feel like this doesn't look bad. What do you guys think?
Yeah,
It's not too bad.
Inverse right here.
There's the FEG.
Yeah, there's a fair value gap here. The liquidity sweep here is alright. We swept the internal or external low. Is this an internal or external?
Internal.
Oh,
It's an internal, right? So, I don't know. Maybe we could try it. This would be a 7R for him, so that'd be crazy.
A milli.
In New York.
Oh.
Yo, filter, bro. Oh shit.
Oh.
Oh, we're
We've been stopped.
We hit it, bro. We hit it.
Alright, so he stopped out.
But
Now, we have an order block here.
Right, order. Put another bid.
So, we stopped out for -1R. Alright, watch this. We stopped out for -1R, so we're down 1R, potentially. We now have maybe another order block here.
My bad.
No, that's
Yeah. You gotta wipe.
You should pump here.
What's happening? Is it like we're out of the death zone?
Oh.
Okay, so we're down 1R,
Take her to the moon.
and now,
Oh.
Take it to the moon.
There you go.
Oh,
There we go.
oh,
Oh, come on.
Let's go.
Bang.
13 million.
So I just took a 1 hour trade, and then we just hit win or loss, a 6 hour win. So how much money am I up?
5 hours.
About 5 hour. If I risk $200 on both trades, how much money would I be up?
Yeah, why don't you do this on
800.
Oh.
Now, what's funny and why I kept trading here is because I saw something that I knew why we get this big candle.
What do you think?
News.
I knew news was coming out.
And you knew
Usually if I'm right about the draw on liquidity, what happens is I don't care what the CPI number is, it will pump us if we have good liquidity above. Remember, I drew the double top here and I was like, guys, look how obvious this is. Retail is shorting the hell out of this, which is why we squeeze so hard, because they think it's a double top. So that's why I just kept trying to enter and I knew it was going to be able to catch a big trade. Isn't this fun? We can predict like all these good moves. So now you can tell your parents when to buy and sell. Don't ask for that. But. Now, how are you gonna master this?
Screen time.
By one, having a reason to trade. You have to have motivation behind trading. You can't just trade because you're in this class and you want to take a day trading class or your friend told you. Two, you're gonna have to be ambitious about going home and being like, oh, I'm gonna watch more videos on this term I don't understand. Because you're like, if you have that mindset, you're just gonna want to go home and watch more videos of this stuff, especially if you think this is interesting. Three, you just want to give yourself a better life, and maybe this is the way to do it. So, now, do you guys want to try backtesting a little bit? All right, so everyone's gonna download FxReplay. Go on the app FxReplay, and we're all gonna make free accounts. And it's 2:51, so your homework's going to be to do this now, and I'm going to give you the quiz. So go to FxReplay, make an account, and I'm pretty sure there's a free what did you backtest on? It's called US Tech 100 or US.
I just thought it was.
The free version is US. Yeah. So the free version will let you pull up NAS 100. That's where we're on. So just go to FxReplay, make an account. I don't think you do not iPad. Wait.
Start for free?
If you're on iPad, you won't be able to do it. So FxReplay. Don't pay for anything.
United States.
Does anyone need help? I treat FxReplay like a video game. It'll tell you all your statistics, if you're profitable or not. Yep, right there. Or the 4 hour to determine where price is currently sitting. Okay, in the larger context, all right? Raise your hand if you're still kind of confused what that means and you want to see a visual example. All right, let's do it. So what I mean is this. If we go on our trading view chart right now, and we just look at price, okay? Look at this. Is price weighing discount or premium right now? Price is right here. Is it very low or high right now? If you look at this whole range, in this whole screenshot I have here, the highest high is way up there, and the lowest low is right there. We're way close. We're really low right now, okay? Now, this is the 15-minute time frame. Does that mean we're really low on the daily time frame or the weekly?
No. So if I go to the weekly, are we still technically in premium of this leg? Yes. And what I think is going to happen is I think the weekly time frame here is actually going to keep going lower, which is why the lower time frame probably won't retrace for now to this 50% level. Okay? Yeah.
Where do you find that tool?
Oh, it's right there, below the trend line tool. So like if I were to buy long term right now for anything, Nvidia, Tesla, SpaceX, I would actually kind of wait for NQ to hit this 50%. The market moves to the to where? Where does the market like to move to? Fair value gaps and liquidity or stop losses, same thing. Okay. If I were to pick a third thing that the market likes to move to, it's the 50% level. It's not. That's not really how the algorithm works. It more moves to the fair value gaps and order box, but it does move back to the 60% level quite a bit. Okay, if we have like a giant move up, because if we just kept going up with the highs, everyone would be rich, all right? And if every single person in the world is buying, then who are they buying from if everyone's buying? No one. So that's why the market just can't keep going up. Remember, because buyers need sellers, right? So if everyone's buying at the top, but there's no one willing to sell to, like the market's going to have to retrace at some point. That's why we go back to the 50% before we're going back up again all the time. Would you say the momentum is pretty strong right now towards this 50% level? Yeah, pretty strong. Like look at how this is like a death candle. So I think we're going to just keep dropping. So we don't know for sure. This is kind of live trading, but should be right. And then maybe we'll hit this fair value gap right here and then bounce. So I'd be looking for like this on the higher time frame right now. I'd be looking for that. So, all right. Can you identify daily bias using multiple time frames, or do you specifically have to be looking at the daily time frame to figure out a daily bias? Yes, time is fractal and you're identifying where price is sitting, waiting to hunt regardless of the specific time frame. No, daily bias can only be identified in the daily time frame itself, hence the name. Yes, but there isn't a clear reason why this works. Or no, only the 4-hour daily time frames work since they have a higher range. Stand up if you think it's B. You think it's B? What? All right, stand up if you think it's C. Stand up if you think it's A. All right. Everyone? You don't think it's A? Yeah, you. Okay. All right, everyone can sit down now. Yes, it is A. So, remember, time is fractal. Can the 1 minute and 5 minute chart still tell me the same thing? Can I technically see the same trend line on a 5 minute and a 1 minute? Yeah. Can I see the same trend line on a 1 minute and daily chart?
No.
No, way too far apart. All right, that's a trick question, but yeah, if it's like a 1 minute and a 5 minute, I can still tell the bias of the market structure on both time frames pretty close, right? You have to realize something. You know how like the time frame, some of you guys probably wonder this. You know how the time frames are like only 1 minute, 2 minute, 3 minute, 4 minute, 5 minute? Like, you know how like those are the only options TradingView gives you? It doesn't even give you a 4 minute option. Do you guys realize like you can still go in like the 6 minute time frame, the 7 minute time frame, the 8 minute time frame, right? You can still do that, but TradingView just gives you the 1, 2, 3, 4, or 5. So do you really think time frames matter if you can go in any time frame you want? No, it's all about just where the candlesticks are telling you how they're printing, how fast they're printing, and generally you'll see the same thing in every time frame. Okay. Time is fractal is something that took me a long time to understand. I never understood it like for a while, but it technically all tells you the same stuff. Now, if you journal your trades using a paid journaling program like TradeZella, that's what I use, will this guarantee you become profitable with the most accurate journal possible? Raise your hand. What do you think? Yeah. You think B? No, everyone is different. Use whatever journaling method actually works for you in your brain. Raise your hand if you agree. Exactly. It goes for anything in life. Okay, if we are all going to a beauty school and trying to, work in beauty, right? Maybe you're doing makeup, maybe you're doing something. Will one person try to maybe do makeup on someone a little differently than someone else, right? Maybe depending on how they see their face shape. Yeah, 100%. They're never going to do it the same way, right? Same thing with like how to hit a curveball in baseball. There's one method to hit a curveball in baseball, but there's like maybe a baseball player just thinks, oh, maybe if I see his right hand releasing down here, I know it's a curveball. Well, another batter might think, maybe he studied the pitcher and they do something else and he sees something else, right? Another example would be like, what's another example? If I showed you a chart on TradingView, some of you might think the chart is very obvious and is very obviously telling us the trend. Well, others of you might be like, it's not clear to me. So what might those other people do? Wait or try to take a trade? Wait. Well, the people who think it's clear will trade. There's just so many different ways to see things, and you have to understand at the end of the day, it's like there's never one right answer, okay? What is the purpose of journaling your trades? I'm just going to say the answer. This is easy. It's A. Raise your hand if you agree it's A. Right, you journal your trades to look back and journal and see your mistakes, right? Pretty obvious. It also helps you create your own personal edge. Do you think if you took the same 20 setups in a row, do you think you'd start to trust that model a little more? Yeah, because you're seeing the same thing play over and over again. And it's funny, some of you guys are gonna get in the trades and your heart's gonna beat. I guarantee you, if you get into a trade, your first ever trade, your heart's gonna beat. You're gonna be like, oh shit, like I'm losing and making money right now. Guarantee it. I think my heart was beat in a trade for like probably 2 years, and then finally it disappeared. Because why do you think it disappeared? I just got used to being in the same trade all the time. Like it just felt normal. But at first, you guys are gonna feel a little anxiety when you enter a trade, but that's okay. That's what you need to. Again, it's a hard journey, but all right, you just took 5 winning trades in a row, $200 each. You then take a long from a fair value gap expecting a bounce, but price isn't reading as expected. All right, so maybe you try to buy here, this fair value gap, we just blow by it. What do? Wait until your count is down to your last 100 before cutting the loss. Average down. Does anyone know what average down means? If you're in 2 contracts at like 300 on Apple, and Apple goes to 250, you can buy 2 more. What would your average then be? 275. So now your average is lower. I would very advise against that. Okay, do not average down on trades. Trust me, you're gonna blow your account. Remember, if you're wrong, you're wrong. Just cut it. All right. Or cut your losses as soon as you don't see a price reacting to your thesis. Learn how to lose and take it on the chin. Keep longing. It'll eventually work out. At C, I'm not going to ask you guys that. If you thought it was anything different, you probably shouldn't be trading. So yeah, you always want to cut your loss. Learning how to lose is one of the most important factors of becoming a long-term trader. True or false? First of all, raise your hand if true. Okay, now raise your hand if you think it's A. B? Yeah, it's B. It sustains your emotional stability and keeps you trading much longer as a trader. It's funny because one of the biggest mistakes I see with people is they just can't accept being red for the day, so they keep trying to trade, and then they blow their account. And then the next day, they see the most A+ setup in the world with so many good confluences. There's liquidity sweep, there's a market structure shift, there's equal highs above, like it looks perfect. And you know why they can't take the trade? Because they blew their account the previous day. But if they didn't blow their account the previous day and they cut their loss when they were supposed to, do you think they could have taken the trade? Yeah, and people just aren't patient enough to wait for the next day. You know how on FxReplay I can just skip to the next day? That's part of the problem because we're kind of used to that, but you don't get that a lot of time. So comparing a long setup taken too early versus one taken at the proper, more developed point, what is the key internal trait? Damn, this question sounds nerdy. What is the key internal trait you need to, in order to consistently take higher probability setups? Patience, daily bias, understanding IFEGs, or understanding the regular fair value gaps. So basically what it's saying is, maybe you take a setup before a developed point. So maybe you try to long here instead of waiting for liquidity sweep and then up here. All right. So yeah, it's saying like if you long here versus if you long at this fair value gap here after the liquidity sweep and market structure shift. What's the answer? Raise your hand if you think it's A. Okay, raise your hand if you think it's B. C? D? The answer is A. Just patience. Like really waiting for that. Does anyone know that meme where like it's like the gamer guy sitting in his chair and then he sits up? Has anyone seen that before? It's like that. Like you have to, if that's the feeling you get, let me, wait. It's this one, right? Wait, where is it? Dude, it's not even here. Oh, yeah, yeah. This. It's like this. It's like, unless you get this feeling, don't take a trade, all right? Usually this is how I am most of the trading session, and all of a sudden I'll see something that's like, okay, like it's starting to click. Like my brain will start to click and see setup, and it's like I start to lock in, right? So remember that. A blue box is highlighted on a chart representing a specific price concept. What is this considered? A patience, daily bias, a high or low, or a Judas swing? Raise your hand if you think it's A. Sit down if you think it's D. Stand up if you think it's D. All right. By the way, if you're not standing up, you're only hurting your health. This is more exercise and better health. Okay. All right, you can sit down now. Yes, the answer is D. What's a Judas swing again?
Like fake.
It's like it's a pump fake basically. It's like if we're playing basketball, like, and then I shoot, and then I make a three on him and splash it in his face. So, all right. This is what happens when in the opposite direction of where you actually want price to go. What is this called? Everyone say it. Judas swing. All right, remember, Judah betrayed Jesus. That's where the name comes from. Is a Judas swing a reliable standalone entry model on its own? No, but if you use it to influence your entry model, not the entry itself. No, but if you pair it with equal lows and equal highs, it becomes 100% accurate. Yes, it's the most profitable entry model, or Judas swings aren't real, they're a myth. Raise your hand if you think it's A. Raise your hand if you think it's B. C? D. It's A, good job. So yeah, it's just a confluence, right? It's not the entry itself. What would be the entry on a Judas swing, or potential entry? Like how could we enter a Judas swing? What do we need? A fair value gap, or a order block, or a, well, the Judas swing is a liquidity sweep, basically. Or a FEG. So there's fair value gap, order block, and our third PD array that I've introduced is inversion fair value gap. So now you know 3 different entry types. Basically what an inversion fair value gap is when a fair value gap breaks or gets closed below or above.
So it's like a candle that closes below it?
Yeah.
Or above.
Yeah. Yeah. And it's best paired with like a liquidity sweep. The best inverse fair value gaps are the one that inverse after what specific condition? A major liquidity level has been swept, you're shorting well in discount, they deliver from the middle of nowhere with no context, or you're longing in premium. Raise your hand for A. Why aren't you raising your hand? What do you think it is? What do you think it is? The question is 14. The best IFGs are the ones that inverse after what specific condition? We have a liquidity sweep, you're shorting well in discount, they deliver from the middle of nowhere, or you're longing well in premium. What do you think it is? A. Good job. Did someone tell you that? All right. Good. So, before any trade setup, no matter if I'm using order blocks, fair value gaps, or IFGs, what do I ideally want to see? A nice liquidity sweep, which is going to be used as what? Fuel to reverse or pump the market. Okay. Price just swept major sell-side liquidity, and now you see a bearish fair value gap get inversed. A candle body closes above it. Will this be a good long entry? Raise your hand if you think it's C. B? D? Good job. So, yes, we just saw major liquidity, and now the market will target in it. What's an inefficiency? What's an inefficiency? It's the same word as what? Starts with an F. Fair value gap. Fair value gap equals an inefficiency. I think I had you write that down. Also, fair value gap and balance and efficiency all mean the same thing. Oh, BISI or SIBI. All four of those. Like if you're on YouTube, you might hear all four, but just understand it's all fair value gap at the end of the day. All right, raise your hand if you got more than 10 right. 11, 12, 13, 14, 15. You got all 15 right? All right, 16? No. All right, good job. If you got like at least like 12 right, you'll get 15 right by like next week if you keep looking at this stuff. All right, pretty easy. I know, but just in general, bro.
So what's your gift for us?
Nothing. There's no such thing as like the education never ends in life. I'm still learning it today.
I like that.
So even when class ends, education in life never ends. All right, now I have a question for you guys. And again, answer honestly. Raise your hand if you got into this day trading class and you are going to keep day trading and you kind of love it and you're just going to keep looking at stuff like this. All right. Now raise your hand if you're like, maybe it's not for me. Maybe I'm more passionate about something else. You can be honest. All right. Now, is that a bad thing? No, that's just trial and error. I know so many of my friends who have literally tried like 4 different majors in college, and then they finally found something they loved in life, and now they're doing well because of it. But just because you're in one class doesn't mean that's going to be your passion, all right? So make sure to actually like stick to something that you're passionate about. So if I come over to you and you're not maybe understanding what's going on, that's okay. You know, maybe you're just not passionate about day trading. But my best advice for you guys in life after this class is please do something you're passionate about, because then time will go by very quickly, right? You do not want time to go by slow. So just don't forget that, right? And it's okay. Like some people think, oh yeah, it's bad that I don't like day trading. No, it's not bad, okay? So this is a little more advanced entry models and market structure, all right? Oh God. Yeah, this is very advanced. This is a lot of, I would like take a picture of this and probably watch YouTube videos on like SMTs, propulsion. What's a propulsion block? Does anyone remember what I said? It's an order block off an order block. Yeah, I would probably watch videos on this too. I'm going to explain all this stuff now, but you're going to want to go more in depth and watch videos on stuff like this. If you type in DataWix, my videos will come up 100% because I made that. Like this is like a concept I made. I didn't even learn this from ICT. I made that myself, but it's all over YouTube now because I taught everyone. Breaker blocks. What do you think this is? Do you think this is another guideline or another PD array?
PD array.
Yeah, this is another PD array. So that would be the 4th one I introduced you to. Propulsion blocks would be a PD array. That's 5. Remember, there's 81 different PD arrays. I only use about 2 though. Do you think if you try using all 81, do you think that's going to help you or hurt you?
Hurt you.
Yeah, because then you don't have like a standard entry model. You're just going to get screwed. All right. So yeah, I would watch videos on this stuff. SMTs too. So again, this is going to be a little more in depth, and you know, you won't understand this in one day. But oh, there's a typo. It says IVGs. So we don't look at the market in terms of IVGs. What do we look at the market in terms of first? Where what? Where stop losses are resting. If you go on Instagram, all these new traders in Instagram, they look for the IVG first. That's really bad. Because if you don't know where stop loss, if you don't know where stop losses are, do you know if the IVG will work or not? No, because you always need to like know where the stop losses are. So like, this is going to be a beginner's guide, but rule 1 is the IVG must be singular. If you want to take an IVG, it should be singular as a beginner. It must be big and it must be obvious. All right, there must be liquidity swept nearby. And rule 4 is we haven't already taken out those highs. Remember the one candle I showed you where we took out all the highs at the same time as the entry? That was bad because we already took out too many highs. All right. Now, who wants to see an example of this? All right, ready? An example of this would be my chart. Oh, here it is. An example of this would be right. Okay, right here.
Wait, the typo is supposed to be IFEG or IFEG?
IFEG. All right, is this big, singular, and obvious? Yes. What do I mean by singular fair value gap? There's only one. If I go to like the lower time frame here, oh, there's still only one. How many are there now? There's one here and there's one here. So theoretically, if we broke above this one, could we still reject this one? Yes. And as a beginner who will not have a strong understanding of liquidity yet, who might not take this setup because they're not confident we're going to go higher, this is not a good idea to take a setup like this. You want to wait for a singular gap that's only one right here, where I can just use one zone instead of multiple as a beginner. Now, if I were to go back to the 2-minute time frame, if I wanted to long here, what do you think I should wait for as an advanced trader? One to inverse or both to inverse? What? Both? We want to wait for both these to inverse. Because I don't want the possibility of, oh, if I long this close above this, it could just reject here. So I would wait for both. But it's not singular. Okay? Really the main thing you have to understand, and write this in your notes, is try to focus on singular fair value gaps. Okay? Singular, obvious fair value gaps. And this is going to be more prominent in like your first year of trading. And then as time goes on, you'll be able to get more advanced and wait for like double fair value gaps and then wait for those to get inversed. But try to focus on like these singular ones. All right. Now, what would be an example of a not singular fair value gap? Right here. See how there's a fair value gap there and a fair value gap here? Could I combine them?
Yeah.
Yes, I can combine them. And then would it kind of be singular? Yes, but that's kind of advanced for some of you, I feel like. Because technically, by definition, is this a fair value gap? No, it's a fair value can only be in one candle. But using discretion and maybe liquidity, maybe there's trendline liquidity way up there we can't see. if this closed above, maybe I take it. And that is something you will have to figure out on your own with trading experience. All right? I can't really teach that. All right? I was talking with one of the UCLA directors, and he basically said they had to get rid of one of their instructors. And I'm like, why? It's because the kids came to them and goes, hey, like, they don't even know what they're talking about. They don't know. It was some like forensics class or something. They don't know what they're talking about. And they had to say, hey, like, you can't teach this. You don't know what you're talking about. The kids aren't interested, whatever. When I say I can't teach this discretion, it's different than someone who doesn't know what they're talking about. I'm telling you I can't teach this because experience will teach it. So see how it's a little different than if I like didn't know my stuff in general? Right? I'm teaching you to learn off experience in this situation. But some stuff I can teach you, some stuff is just going to be taught through your experience. Right? If I didn't even know what a candlestick was and I was trying to come up here and tell you the market trend, well then I wouldn't know my stuff. But this is one of those situations where like if you trade for a while, you'll start to like gain your own insight and experience. All right? And maybe some of you will make something up that you see in the market that no one's made up before, right? So by singular and obvious, I just mean those like really giant obvious fair value gaps, right? So would this be singular right here? Yes or no? Raise your hand for yes. Raise your hand for no. You think no? Why no? You think yeah? Anyone think no? All right, you're all wrong. It's no. Because there's a fair value gap here, fair value gap here. There's 3 in a row. Do you see how there's not a singular obvious one here? Now, we're on the 3-minute time frame. Where could there be a singular one? Maybe.
In the 5 minutes.
Maybe the 5-minute. Let's check. Is there a singular one in the 5-minute? Okay, where should we check next? We don't use a 10-minute. I mean, we can, but 15-minute would be the next one. Is there a single one in the 15-minute? Yes, this looks way better. Now, technically still no, because there's this one here. But on an obvious discretionary scale,
1 hour.
this looks way more obvious. Do you guys agree? Maybe in the 1 hour too. 1 hour has a singular one. See it? All right.
Why is there a 67-minute timer?
67 and 69 minute? Oh, it just felt like putting in there. So that would be singular. Does everyone raise your hand if you understand the concept of singular now? Raise your hand if you don't understand it. Raise your hand if you didn't raise your hand. Why didn't you raise your hand? Well, I said raise your hand if you don't understand, and you didn't.
Oh.
Okay, look.
Maybe.
Maybe you're like double reverse psychology me. All right, see, look. Look. See how this is a singular fair value gap? There's no other like fair value gaps in the sequence. See it? Look at this. If I turn on the indicator, remember the fair value gap indicator? Look, is this singular? Is there only one green zone?
Yeah.
Yep. Now, if I go to the 5-minute, is there now 2 here?
Yeah.
That would not be singular. So see how there's 2 here and here?
The indicator kind of didn't mark it.
What?
Like the indicator didn't mark the other one.
Yeah, the indicator didn't mark this one up here. It should have, but the indicator's not perfect.
The indicator sucks.
Yeah, indicators suck. Ideally, you want no indicators eventually and just do this yourself. How many people took the fair value gap indicator out their chart now because they can find a fair value gap on their own? All right, good job. So yeah, eventually we'll not need this. This is gonna mark, what's the problem with this fair value gap indicator?
It won't mark all of the fair value gap.
Yeah, and what? Kind of opposite from that. What do you think the problem is with this fair value gap indicator?
It doesn't get it right all the time.
Well, it does mark every single fair value gap it marks is right. It what? It marks insignificant ones, exactly. So this is going to start spam marking fair value gaps you will not need, okay? You want to look for the obvious ones. All right, so this is really good to remember. Must be big and obvious, must be singular. There must be a liquidity sweep, and we haven't already hit the high. So this is the difference between a good signature and price versus a bad signature and price. A good signature is, it's a single directional leg down, which you probably don't, that doesn't make sense. It's one singular bearish fair value gap visible. All right, so if we're gonna have an inverse to the upside, we only have one bearish fair value gap. It's obvious to the naked eye. You don't have to force it. You don't have to look for it. We swept equal lows or sell side nearby. Price is in discount. Next high is unswept. What does unswept mean? It hasn't gone above the high yet. So there's still what resting above? Still stop losses resting above. And the body closes above the gap. So you enter long. This is a 90% win rate probability if you wait for stuff like that. Do you think that's a pretty high win rate? Yes. That is abnormally high. Most people in day trading will never achieve that, but you can using this.
66.
But you're gonna have to be pretty patient. All right. A bad signature in price is something you might want to skip as a beginner. Is there's multiple fair value gaps in the leg, so you might not know which one to choose. It's hard to pick which gap is the obvious gap. It's not a clean signature. Maybe it already hit a prior high. Liquidity not yet swept. The gap is in premium. And it might be too far left. Write this in your notes. Too far left equals out of proximity. Right, too far left equals out of proximity. Who wants to see a chart example of what this means? All right, ready? Okay, so let's say we have a trend here. And this fair value gap, we get an IFG right here. Everyone see it? We take our entry right there, right, and boom, TP hits. Now, do you think this is too far left?
No.
Why not? What? Why is it not too far left? Because it literally occurs in the leg on the reversal. Someone come up here and draw what a fair value gap that we might use for an entry might be too far left. You come up. Yeah. What? Draw an example of maybe a potential fair value gap in this trend that could be too far left to maybe use for an entry point.
I don't know. Be too far away.
Never say you don't know. You always got to try. Well, don't say I don't know. That's a bad mindset. That's a failure mindset already. You're kind of close, yeah. I think there's a more left one though. Yeah. Okay. Now, wait. If price rejected here, what do you think it could have rejected out of? What do you think it could have rejected out of? The fair value gap. No, there could be a fair value gap. The fair value gap would be there.
Okay.
Exactly. Now draw a little higher. Draw this a little higher. Yep. Now extend that to the right. Exactly. Good job. This is too far left. Now, going back to the other question, what do I mean by too far left now? It's too far left. That's what I literally mean. It's way back in the old trend, so it might not matter as much anymore. The ones that occur like instantaneously with like a 3 to 6 candle reversal are going to be way higher probability than using the fair value gaps like the old ones in the leg. And yes, these can work. You can get entries off these, and they will work sometimes. So you could literally enter out that break. But do you think the win rate is statistically higher or lower? Lower. Little lower. All right, these are going to be much better occurring right at the liquidity sweep. And with these ones, you're going to have more or less of a chance to go break even. Like, will you have more or less of a chance to be able to move your stop to break even if you're longing in discount? Yeah, you'll have more of a chance because even if the bias is still going down, price will probably still retrace to like the 50%, which is maybe where you can go break even. Versus, is there any guarantee this just keeps spooling upwards in premium? No, because price likes to retrace. So if we're this high already, there's a good chance we come down, wreck those guys, and then go up. But I'm not getting wrecked because I already got in down there. All right. Okay, write down this. SMT equals smart money technique. Do not trade this religiously. Just because we have an SMT does not mean we're going to reverse, but it can be a sign of a reversal. All right? Now, do you think we can use SMTs only on NQ? No. We must use the other asset for SMTs. What was the other asset I talked about? There's NASDAQ and there's ES, which is what? Do you know what the ES is? Yeah. S&P 500. These go hand in hand, right? NASDAQ and S&P go hand in hand. That you ideally want the NASDAQ and S&P in your notes to be the same direction. That's called correlation. That's called the market is in sync, or it's in rhythm. So, a bullish SMT, which you're going to write down, is when NQ takes a low, but ES does not, or vice versa. All right? And a bearish SMT is when NQ takes at a high, but ES does not. And it suggests that the highs are manipulated. Now we're going to go downwards. And that's where you might look for an entry model. So I'll show you an example on the chart in a second. Raise your hand if you need more time. Raise your hand if you're just not going to write it down in your notes. That's okay, I'm not forcing you to. Okay, ready? Can I see an SMT right now? Raise your hand if you think I can see an SMT right now. Raise your hand if you don't think I can see it. Why do you not think I can see an SMT? Yeah. Yeah, you. What did I just say an SMT was? Yep. So, do you agree with that? Yeah? So, can I see the SMT here? No. Why yes? Why no?
I don't know.
I only have NQ pulled up in the chart. What else do I need to look at to see an SMT?
Yes.
I need to see ES too. Makes sense now?
Yes.
How in the world do I have any idea what ES is doing here? I don't. So, I'm going to use a split screen tool, which you guys cannot use because you don't have the paid version of TradingView.
No.
And I'm going to look at ES. So this is ES. Okay, we're trading about $7,400 right now, or $7,400. Now, would this be an SMT? Would that be an SMT? No, because they're both making lower lows. See what I mean? Now look. Look. Ready? would okay, look at this. Would this be an SMT? Would that be an SMT? A smart money technique. Raise your hand for yes. Raise your hand for no. All right, what is, you in the green, what is the definition of an SMT?
Smart money technique?
Yeah, what is it though that you wrote in your notes?
Oh. When one index takes out high low, another does not.
Okay, so would this be an SMT?
Yeah.
Yes. Why?
Because the one on the right does and the other doesn't.
Exactly. There you go. Now you're thinking. All right. That's good. Good job. I'm being so serious. Good job. All right. So see how the one on the left, we never take the high, right? See how we never take the high, and ES does, right there. That is a smart money technique, which tells us a reversal is coming. Look at how much we reversed down from that point. Isn't that crazy? We dumped so much. So a lot of these big moves will start with an SMT. But remember, do not use this as a complete guideline or a complete entry model. Because sometimes you might get faked out and it might just be a double top and we might go up and hit that double top. This is why it will get difficult and very discretionary. Okay. All right. So let's look for some other examples. Okay. There's an SMT here, so I'm gonna come draw it. See how my crosshair is like at the same point on ES as it is in NQ? See if someone can come draw the SMT. There's a really obvious one here.
I like that one.
Thanks, man.
You did hear it.
I know, I did hear it.
I like that one.
Gonna catch cold. All right. So someone come up here and draw an SMT. You want to come draw it?
Yeah,
Bet. It's pretty easy.
I like that one.
This is great.
It's called being a content creator, man.
I was hating, bro.
No, I know you're not hitting. Dude, you'll see some wild stuff I post.
Like the
All right, let's see it.
cleavage video.
Yeah. All right, good. And you can draw way more precise. Yeah, exactly. There you go. Boom, perfect. Do you guys agree?
Yes.
I said perfect, so yeah, you should. So, does everyone see what an SMT is now?
Yeah.
It's just like when one makes a higher high and one makes a lower high, and it's like a good reversal point. Now, we're in the hourly time frame right now. Could you theoretically see this in every single time frame?
Yeah.
Like if we were trading in 1 minute, yeah. So if we're scalping in the 1 minute, we can see like lower time frame SMTs too. And I use these as a confirmation entry or confluence. I don't go into the market just being like, oh, where's an SMT? I'm still looking for liquidity sweep first, a fair value gap, a market structure shift, all that stuff before I look for an SMT. This is like 5th on my checklist, okay? Some people get carried away and try to make sure there's an SMT every trade, but I don't do that, okay? Again, you'll probably have to watch more videos on this later. So yeah. We'll do like an activity where I have you find an SMT and a couple other things in a little bit. So, a bullish SMT occurs when? At the lows or highs? Yeah. Bullish SMT forms at the highs? So if we're super high up and one takes out a higher high and one takes it and we reverse down, that's a bullish SMT? No. That's a bearish SMT. Yeah. So bullish SMT always occurs at the bottom and a bearish SMT always occurs at the top. So again, you need to know this, and you can look at this for another confluence. How many, if you were to create a checklist right now for a trade, how many things could you theoretically maybe have in that checklist based off what we talked about so far? You probably have about 5 things on the checklist. Do you think a trade with 2 things checked off from the checklist is going to be higher probability or 5? Yeah, if we have like 5 different confluences, SMT, liquidity sweep, market structure shift, equal highs, we're in the kill zone, right? That is a high probability trade and you are likely to make money. Now, a propulsion block, honestly, just write down in your notes, it's an order block off an order block. I'd never label this on my chart ever, all right? But some of you might like it, all right? So you know what an order block is. It's just an order block that bounces off another order block. Raise your hand if you want to see an example on the chart. All right. Let me see if I can find one. It's literally just an order block off an order block. All right, here's one right here. All right, look at this. Do you all agree this is an order block? Raise your hand if you think that's an order block. The sandwich candle, the red candle between the green and the green. Where's the order block off the order block? Someone come up here and draw it for me. It's very obvious and close. You want to come up? So draw the propulsion block. It's basically just an order block off an order block. Draw like the black line where it would be. You're good. All right, do you guys agree or disagree? Agree. See how price launches off this level? So that would be a propulsion block. Again, it's just something to know. I don't use that term much, but. So that's that. Now, this is going to be more for finding trade entries. All right. Everyone's going to have a different checklist. When you come into the day 9:30, everyone's going to have a different way of finding out where the market's going to go. Do you guys agree with that statement? Like, you're not all going to come in and be like, oh, 15-minute fair value gap, 1 hour equal highs. That's it. Like, you're going to use other things. So an example of maybe finding or using SMTs to read the direction of the market would be this. Step 1, and write this down in like a little checklist thing to find bias. Step 1 would be you find a very obvious 1 hour or 4 hour fair value gap when you wake up in the morning. So we're close or we're inside of a 1 hour or 4 hour fair value gap. It's pretty obvious, it stands out. Or maybe even the 15-minute. I say 15-minute and above for higher time frame bias. I don't really use the 15-minute above to like actually enter trades. So you might, step 1 would be find an obvious 1 hour, 4 hour fair value gap. This is going to be the start of how you're going to make money. Step 2, watch the reaction. Are we respecting the bullish fair value gap or are we breaking below it? What happens if we close below it? The longs are getting cooked. Okay? Which means we want to position ourselves in probably what type of trade? Short. Probably a short. Okay? But if we get a really good V-shaped reaction from the hourly bullish fair value gap, and there's the bullish SMT at the bottom, we're going to be what for the day? We're going to be probably bullish. And then step 3 is you add SMT confirmation. Is there an SMT? Is there some sort of like high or low that's just being respected? All right. All right. If we have a bullish reaction, but then there's a death candle, like an instant candle just downwards through that bullish fair value gap, instantly flip bias or you will get cooked. Okay, very fast or large candle that slices through a major fair value gap without pausing equals death candle. Retail traders will try to long that gap, and smart money is using it to go to the other direction, so the bias will flip. All right. I wouldn't worry about this for now. That's kind of confusing. So, it's basically just saying shorting and discount is not high probability. You guys all understand that, right? If you short really low. So be careful of using IFGs when we're super low. We want to see a sweep above a, what to use a bearish short rally gap? Above a high. If it's below low and then we get an IFG, that's not great. All right. So, we had the new week opening gap. Write this down. You guys wrote down new week opening gap, right? Yeah. It's basically the gap from Friday's close and Sunday's 6 p.m. open. Now, let's see who's smart in here. This has nothing to do with trading. Well, it does, but it doesn't. If you don't know what a new day opening gap is or a new week opening gap is there a tool or anything you could do to know what it is or use? Google, you're close. An indicator. There's a new week opening gap and new day opening gap indicator. There's a ton of them, and they will just mark them for you. So if you're still a little confused on that, you can do that. I don't use new day opening gaps and new week opening gaps every day. I probably only use them like once a week. I only use them if they're obvious too. Like if we get a giant gap from the weekend, I'll use that to like, I'll be like, all right, we're probably gonna fill it. But if we don't, we don't. It just depends on the week and the month and how much Trump's tweeting and stuff. And what do you think a new day opening gap is if a new week opening gap's to close and to open of Friday to Sunday? What's a new day opening gap? If new week opening gap's Friday to Sunday, a new day opening gap would be like what? Again, guys, don't be afraid to be wrong.
Friday to Monday. Monday to Tuesday.
Monday to Tuesday. What? Tuesday to Wednesday. Yeah, all those like Tuesday to Wednesday, Wednesday to Thursday. Those are new day opening gaps. Do you think it's more likely to get a bigger gap from Friday to Sunday or from Monday to Tuesday?
Friday to Sunday.
Why?
Yeah.
What? It's just a longer time for stuff to happen. Like Trump could literally be tweeting about the Strait of Hormuz all weekend and the price just fluctuates a lot. Right? Versus overnight, it's only an hour. What's the hour that we could get the gap from for futures? 5 to 6. Because we close at 5, open back up at 6. So we only have our potential Trump tweets or big news versus the weekend we have like what, 48 hours? I mean, less than, it's not exact, but less than that. So these are just more terms. Okay. Macro times. There's something called macro times. These are times where price is very likely to run a high or low. Don't religiously use these, but know about them. Do not write down this. Do not write down that, okay? The 20 to 40, don't write that down. That's BS. And yeah, don't write this down. The big macro times I use is 8:50 to 9:10, 9:50 to 10:10, and 10:50 to 11:10, because that's the time window I like to trade. So write down 8:50 to 9:10 equals macro. 9:10 or 9:50 to 10:10 equals macro. And then 10:50 to 11:10 equals macro. How do you think you can find all the macro times? Indicator, yeah, probably. Or just Google. If you go to Google and then images, if you type in macro times ICT and just go to Google and go to images, it'll tell you all of them. I usually only use the ones that like are in my time window I trade. But typically during macro times, price will make a pretty decent move to like the liquidity we may be targeting. So if there was equal highs above and price was trending towards them and it's 9:55, do you think there's a good chance we hit them in the next 5-10 minutes? Why? Yeah.
Because it's like a meaningful, like.
It's a meaningful macro time. It's a basically the answer is yes, because it is a macro time. All right. So that's how we kind of word it. So if we were close to a liquidity pool and it's 10:35, when would I maybe expect that liquidity pool to potentially hit? If it's 10:35. Nope.
Sometime before 11:10.
Sometime before 11, so maybe from 10:50 to 11:10. So if price is being really slow and choppy from like 10:30 to 10:40, it's probably waiting for the macro time. It's funny because I tell you everything about price, candlesticks, and everything, but I think the most important thing in trading is time. And that's where it gets very advanced and where like I can't teach, I can make a whole lecture on that. I can make a whole other 20-hour course on time, but how do you think I learned time? And what time the market like to make certain moves? How do you think I learned that? Experience. Just experience, man. Like it's all experience. All right, that's where it starts getting really advanced. All right, knowing when the market's going to make its move, knowing when it's going to reverse. Write down your notes. 10 a.m. equals great reversal time. There's something called PO3, which is a power of 3. Okay, who understands this concept? If I were to show you a daily and weekly chart, if you were to go on a weekly or daily chart right now on your chart, do you think it'd be easy or hard to find candles with no wicks?
Hard.
Very hard. Almost every candle has a wick, even if it's small.
Big wick.
Okay. Now, does anyone see where I'm going with this? If we're looking at a weekly candle and the weekly price, and right when the weekly opens on that Sunday night when futures open, what are we likely to do on the lower time frame? If price opens right here on Sunday night and we know we're expecting a bullish week, what will we do first? If we know every candle forms a wick. Yeah. We'll drop first to create the weekly wick. And that's where the best entry is, below the opening price of the higher time frame candle. Or if we're shorting and we think it's going to be bearish week, we know the weekly is going to go up. Look. If I go to a weekly chart, almost every single one of these candles has a wick. See it? Like, there's no candles here without a wick. So this week on Monday or Sunday, price opened here. And what did we do before going down? We formed a wick. Now, is this an objective open level no matter what time frame, no matter what we're on for anything? Is this ever going to change, the opening price? Why no? Because that's where we open. Could the wick change? Yes. But wherever the weekly candle opens, no matter what, it's always going to remain the same. So do you think it's better to buy or sell above or below opening price if we're bearish? Do you think it's better to buy or sell above opening price if we know there's going to be a bearish candle? Sell. Same thing if we're bullish. If we're in this week and the price opens here, buys would be best below opening price. Do you think you could apply this to an hourly time frame? Yes. So when you note down 10 a.m. is their good reversal time, all right? It's just a good reversal time. Look at this. Isn't this insane? Look at this right here from yesterday. When did this candle form? 10 a.m. And it's the bottom for a short period of time. And we just reverse. All right? Today, the 10 a.m. reversal, I don't think it worked today. it was trying to reverse the 10. This is 10 a.m. today. But what this is basically doing is 10 a.m. reversals are basically, it's when the hourly candle closes and the 4-hour candle closes. How many people knew that was when the 4-hour candle closes? Probably not, right? How do you know that in the future? By just remembering. When does the next 4-hour candle close if the first one closes at 10 a.m.? 2. What about before 10 a.m.? 6 a.m. So the 10 a.m. reversal is a very key thing because the wicks. Now, you're not going to all understand that. That's just very complicated. It's not complicated once you get it, but right now, since you're beginners, it definitely is a little more complicated. So what could you do later? Just type in YouTube videos, type in, if you want to note this down to watch later, type in PO3, what is PO3 ICT? Yeah, power of 3 ICT. It's accumulation, manipulation, and distribution. That's what it is. But it'll explain how we're using the higher time frame like wicks to time entries. But that's where it gets a little more advanced. I'm trying to keep this a little more basic. Like I said, dude, I could do like a whole another I could do a whole another 2 weeks on this stuff. All right. It's crazy because I make my YouTube videos max like 10 minutes. And this lecture, how long have we been doing this so far? Like 32 hours? And I can still talk more and more and more and more. There's so much. So think about how much value you're getting here compared to what you're going to get to my YouTube videos. If I retaught this course again to you guys, it'd be so easy. This is really basic stuff for now. All right, you guys all have DataWick noted down, right? Yeah. Yeah, so DataWick is formed off a Red Folder News event, which we can find on what website? Forex Factory. Note this down, but another good resource for this is called Financial Juice. I think that's better than the Forex Factory, but Forex Factory is for beginners and easier. So financialjuice.com.
Financial juice?
Yeah, Financial Juice. So, what? Who wants to watch a video on the DataWick? All right, so this is a model I created for the whole training community. All right, a lot of people on Instagram use this now because of me. I made it up. Me and my buddy found this ourselves. All right, I did not learn this from anyone. But I call it the one setup for life. If I can only take one setup for the rest of my life, this would be it. All right, this is a very high win rate. So we're just gonna type in one setup for life. So I'm the second video here. All right, so I'm gonna show you my official one setup for life framework. I have multiple videos on this.
8:30.
Oh, it says you have an event.
Where?
I'm just kidding.
All right, ready? Listen.
Yo, what is going on, ladies and gentlemen? I'm not a financial advisor. This is not financial advice. If you want to watch me live trade in Discord every single day in the New York area, really nice community of a lot of experienced traders. And it's
this was before I did face cam.
So just the two of us running it. So there's not gonna be any confusions or anything.
Dude, stop.
Yeah, pretty legit. So an Apex 90% working on the side. Mechanical strategy. So a few accounts, just click the Apex. So this has been a long-awaited video. I wanted to make this for a long time, but this is gonna be regarding the thread I just posted, and it has to do with data lows and data highs. Okay. What is by data high? It's literally just saying data high. Okay. This is what I'm saying. Data high or data low. Okay. Now, what is a data high or data low? All it is it's a low or high we get on an 8:30 news candle. It could be a 10 o'clock news candle. It could be a FOMC news candle. And the thing that they all have in common is you want to see either one of the wicks have like a normal size. So if we look at this one, this is
Oh,
a
wait.
quick example. I'm going to go over this video.
Someone remind me at 1:58, we're going to watch the market. At 2 o'clock, there's going to be a big move. Does anyone know why? So at 10:58, because 11, 12, yeah. So they're going to announce the interest rate decision. It'll be fun to watch.
So these setups are very rare.
By the way, this is like, this will make, if you pay attention to this video and then watch more videos on this from my channel, this will make you a lot of money, all right?
Form
I'll be right
once
back.
every 2 weeks, okay, but it is very accurate. Now, what I look for is, I look for a normal size wick, that's the first thing, and I make sure that wick is on the 1 minute. It is also a swing low. Okay, so by a swing low, it has to be a low, and then here's a lower low, and then here's a higher low, so it has to be a swing low. Okay, and you really want it to be like a normal size. You don't want it to be a wick like this. Okay? It has to be like this. Okay, and a lot of times the market does close under barely, so this would be your short. You see, okay, now this is getting violated. You short there, okay, and then you just play the candles. Stop goes to break even when we hit the next internal target, which maybe it's here for you, maybe it's here for you. Okay, and then you hold the rest till those data high.
See how we broke this fair value gap and we left the news wick?
All you want to see is you want to see a wick or big abnormal wick traded at 8:30 on the news, or
Does anyone have any questions about this? So what's the first step to finding a news wick? Does no one know?
News has to be dropped.
Yeah, where are you gonna check the news? Forex Factory.
Or
Financial Juice. Forex Factory for beginners. So, the first thing we're looking for is if we're gonna have news for that day. Should you theoretically check before the week starts what time we're gonna have news? So 8:30, 10 a.m., and sometimes 2 p.m. for FOMC, but barely 2 p.m. That's like once every 2 months. Is going to be all your news events. Do you think there's some news events that don't actually form a wick like this? Yes or no?
Yeah.
Yeah, sometimes we won't form the wick like that. So would it be the one setup for life that I'm talking about? No. Because the requirements to find this setup is there must be a big abnormal news candle on the 1 minute time frame. Like this. All right.
2 p.m. It doesn't matter. You want to see us put in a bunch of bullish fair value gaps, and you short once those textbook, which they have to be single fair value gap. Once these are violated, if there's multiple fair value gaps in the same leg, try to go to the higher time frame. Use that one instead. But you can see this one. This wasn't a loss. It was just a win and then a break even trade. And then we got another entry to when we violated this. Okay. Now we think we're going to go to these lows. Typically, I wouldn't short this. Okay, I got a low and one day
So
the
yeah,
last couple.
that's like the framework. Also, what other PD rate did we get here when we close here? Does anyone see it? Yeah, we get an order block. See how we closed below the sequence of these up candles? So that'd be an order block too. So that was a pretty damn good setup. So that's like my one setup for life framework. All right. Now, there's statistics that tell me about 85% of the time you form a news wick like that, we will hit it in the same day. Is that good information to probably know?
Yeah.
Why? Because we have a what?
Edge.
We have an edge knowing that. So should we be mad if we lose? No, because there's an edge. And again, this is a kind of a new concept to you, like seeing the news wick and just like, it's a very good magnet. Like it is literally an infinite money glitch. Like you can literally print money out of thin air if you see that wick. All right. How do you think you're going to be able to backtest that setup I just showed? and backtest it for your own. For what?
Yes.
Yeah, so you go on FxReplay and you go to Forex Factory and you'll be like, let me go a year back and let me check a year ago and see what days have news. And on Forex Factory, skip to those days where you day 30 news and try to find those setups of the data wicks. Do you think this one video is going to make you fully understand the concept? No. So what should you do? Type in one setup for life, then my channel name, maybe when you get home, and you can watch more. I'm telling you, this is repetition. So now what we're going to do is we're going to do a little live trading, and I'm going to show you something cool. No. So we're going to watch the chart a live timer now, and watch this FOMC press conference. All right. This is the fun. This is the boring stuff. Live trading. Yeah. Okay. So I like to watch a 1 minute time frame. What do you guys think the trend is right now? What do you think it is overall on the higher time frame?
Bullish.
On the higher time frame, you're saying this is bullish? Bearish. What do you think it is in the lower time frame? Bullish. See how we have a bullish trend within a bearish trend? See how we're making lower lows, lower highs, but then see how this right here is an uptrend? Do you think if I'm trading like a 1 minute time frame, could I still make money in this short little uptrend even though this is a bigger downtrend? Why yes? Because I'm only trying to catch a small move. Like I could. Do you think I could find a 2-hour setup here? Do you guys think I could find a 2-hour setup here?
Yeah.
Yeah, 100%. Look. So, who sees the market structure shift here? Market structure shift, fair value gap, liquidity sweep. Everyone see it? Raise your hand if you see it. Entry in the fair value gap, stop below the fair value gap or the swing low. Maybe target this high inside this fair value gap. Does anyone know why this high inside the fair value gap would be a good target? It's because what caused price to go down here in this specific moment at 10:20? How does price go down there? What has to happen? People have to what? Sell. And where do they put their stop losses? Above that high. So now this is called the smart money reversal. And when we get that market structure shift back up, you'll see, let's go back up. Now there is 40 seconds until you get a giant candle here or a fast move. So pay attention. This is going to be the FOMC interest rate announcement. So 30 seconds. All right, sometimes people full port this, but we are not doing that. So if I pull up something I have to do super quick, what you're going to see is you're going to see the interest rates come in right here real quick, and we're going to giant candle in about 10 seconds. Ready? And it's going to tell us, do I care what the interest rate number is here? I literally do not care. Okay, so let's see what happens. 3, 2, 1. All right, let's see what happens. All right, boom. So giant up candle. All right. So notice how I counted that down. I knew exactly where we were going to get a big candle. So sometimes people full port that. All right. They'll like just full port long or sell. All right. So let's see what Financial Juice says the interest rates are. We'll refresh it. Okay. So 2 p.m. U.S. interest rate decision actual 3.75%, and that's exactly what they forecast. So they always forecast a number. And do you think if this was like lower or higher, that would be maybe kind of bad than the actual forecast? Yeah, probably.
Well, wouldn't it be better if it was lower?
Yeah, technically. If it was lower or the same, sometimes we usually pump, but if it's higher than we think, it will dump. So see how big that candle was? Isn't that cool?
Yeah, that was epic.
All right, I literally timed that to the absolute second. All right. Why did I make a trade? Because that's gambling. But if you do it on a prop firm account and you don't care about $50 and you want a full port long to get to the funded stage quickly, you can. If you would have passed an account if you full ported minis on that. If you took 4 minis here at 725 and you sold at, let's say, 825, how much money would you have made? 80 times what? 100. You made $8,000. Why 80? 4 times 20. $20 per contract. You were in 4 minis. That's $80 per point. And we make 100 points. That'd be $8,000. Does anyone remember how much money you need on a $50,000 account to pass? 3,000. Yeah, you need 3,000. So you would have passed instantly. So currently in my Discord, my student right now is live.
Join.
Yeah, I'll join. Yo. Oh, I don't think I can connect. It might block me.
Why?
Because it might block Discord.
Why would it block Discord?
The Wi-Fi might block Discord.
Save the goat.
So there's about 500 people watching my student right now. So that's 500 people on stream watching him trade. I taught this guy everything I know. All right. Now, do you think if I was in here, there'd be a lot more people?
Yeah.
Probably. I usually have like, if I go live on TikTok, YouTube, and Discord, I have about 3,000 people watching me at the same time. So, do you think that might be a little nerve-wracking?
Yeah.
Well, not anymore because I do so much. Let's turn on my hotspot and see if we can join.
Oh, more people are joining.
Yeah, because they all see I'm in now, but I'm not. I mean, all right. Does anyone see my hotspot showing up? Why don't I see this? Let me try this. Bruh. It's kind of annoying. Dude, why can't I join? I'm trying to, my Wi-Fi's not pulling up here. Maybe let me try this. Nope. Can anyone try turning on their hotspot and see if I can connect? Does anyone have a hotspot?
I got you.
I just want to see if this works. What is it?
Oliver.
Oh, what's your password?
Oh, password. Hold up. I think it's literally just Oliver123 with a capital L.
See if this works. You can check what the password is. It says connecting. It's connecting. Does it say that's definitely your password?
That's definitely my password.
You checked?
I'm reading it right now.
Oh wait, I see mine too now. Let me try out mine.
Okay.
He streams whenever he's not there, so if he has a flight or he's busy in the morning, I'm there to support him. Okay?
So that's him.
Turn on your camera. Turn on your camera.
But yeah, I've been trading IFGs for 3 years, so any and every question you have about him, I could probably answer.
Can you hear me?
What's up, man?
Yeah, we're live with
I can hear you now.
we're live with my UCLA class right now. They can all see you.
What up, UCLA?
All right.
What is it, Bruins?
Yeah.
Go Bruins.
So I just kind of showed them. We were just watching price, and I go, I was like, I counted down. I'm like, ready, watch this. 3, 2, 1. And then we get the giant candle. They're like, whoa. It's so funny. Yo. All right, that's AI. That's AI. I did not mean to open up chat. So, all right, reliable. So I have a question. What are you looking for to happen, and why?
So right now, I'm looking for price to run 28,066.
Oh wait, don't say why. Don't say why. Don't say why. All right, guys. So he says he's looking for price to run higher. Why do you think he's looking for price to run higher?
Sell stop.
There's all those. There's all those.
Funded Dodgers Discord.
There's all those stop losses above what?
Above
the
high.
What is this called though?
Trend line.
Trend line. So that creates what in the market to go hit it?
Should we hit the trade right now?
No. Fuel. It's fuel, exactly. Good job. So right now, Reliable is looking for higher price. All right. And are we in an uptrend or downtrend here?
Uptrend.
Yeah, we are uptrending. Okay. So if I go back to my chart, we can see we're uptrend. All right. Thanks, Reliable.
Yep. We'll catch you later, guys.
Yeah, I'll see you later. Good luck.
Yo, Dodgy, what is this, bro?
Bro.
We have AI photos.
We have more AI photos than we can imagine, Dodgy.
Ryan, when did you take that picture? Price is going berserk right now.
What's your name?
I didn't, bro. It's AI.
Valencia, that's like an hour and a half. That's like 30 minutes.
Now you see this stuff? No, wait, so what?
All right, so we're gonna look at our own. We're gonna look at this trend line liquidity. What happens if we hit this high? The what effect?
The domino effect.
The domino effect, where we just keep running higher. All right, now look. We have a fair value gap here, this tiny fair value gap here, and it combines with this fair value gap here. Do you see it? Right? So what needs to happen for us to maybe take a long position here?
Close above.
Who said that? Good job. It's clicking, right? Yeah. I can tell when it's clicking with you guys. All right, so if we close above this, this will be trade entry, and where we target? The what? Yeah, we'll target higher, but where? Are we going to target up here? No. Are we going to target here? What about here? Yeah. Right, it's the highest high. So, I guess, live trading sucks, so we'll just sit here until we get the entry, and I won't really be able to say much. Like, we all understand why we think price is going to go up, but can we really do anything without the entry? No, we can't do anything right now, so.
Should I take that trade right now?
Take it on paper, yeah.
Okay.
Take a paper trade, yeah. If we get the close above, but if we don't take it. Now, Matt Warsh, he speaks at 2:30. So maybe he'll pump price more. Let me see.
I gotta open up the compu.
I'm on the 5-minute right now. So, did the body close above there? Did the body close above yet? So, how long more do we need to wait for a potential body close above? If it's 210, we need to wait until what time? 2:15.
Wait, what are we doing?
So, we're gonna watch this in paper trade if we get it.
Are we on the agreement? Are we on MNQ?
MNQ, yeah, probably. If you're paper trading, you could do NQ, but I would get used to MNQ first. Now, do you think this, in live time, do you think this is pretty strong or weak displacement?
Strong.
Yeah, pretty strong, honestly.
How do I add a button?
So I would log into paper trading on TradingView, and then, okay, let's say we want to risk $200 here. How many contracts could you take?
How many points is
It's 27,879 to 27,748. If we wanted to risk $200, how many contracts did you take in this? What? 10 minis? Are you joking? Okay, I'm gonna assume that's a joke.
$1,000. $1,500.
How many micros could we take if we want to risk $200 on this trade?
I don't know, bro, but I'm gonna make one.
Come on, someone's got to know.
I don't know how many points.
It's 130 points.
So 130 points.
What? What do you say? You can't. Trick question. One micro here, if it's 130 point stop loss, would be how much money?
260.
260.
260.
Yeah, so I would take one micro on paper, and their stop is going to be about 160 bucks. Okay. Now, raise your hand if you're still kind of confused about the concept I was talking about, where sometimes we might close too high and run all the liquidity, so the answer would be bad. Was anyone confused on that? Be honest. Raise your hand.
It's going straight up right now.
Basically, what I mean by that is, could this candle theoretically go all the way up there before the close?
Yeah.
Would I enter then? No, right? I'd have to wait for the, like, I just want to enter. Then the RR would be messed up. Is anyone an NFL fan in here? Anyone watch football a lot?
I'm a Patriots.
Anyone see Tony Romo get pulled over?
Yeah.
That was so dumb, bro. So, while we wait for this entry, what might we want to do? What? Play video games, Minecraft, Clash of Clans, Clash Royale.
We're just sitting there watching.
What? Brawl Stars. So that's what trading is, and that's why it's so fun, because you could do whatever, and then when we get the entry, remember, what meme did I show you guys before? The lock-in meme. The second we get this entry, no, we lock in and we take it. So I'm not going to watch this for now. We're just going to wait, and I'll probably set an alert here. So I'm going to send an alert to see if we get back up here. So add alert, and I'll only check back if it closes above. All right. All right. So just to continue, and someone tell me if it gets back up there, please, so I don't miss it. But you'll start to know this. You'll start to know how to draw fair value gaps. Just like how you know 2 + 2 is 4, fair value gaps will start to come pretty easy. Right? A liquidity void is basically a gigantic candle completely out of place. And I don't mean a candle like the one we just got. I mean an even bigger candle than that.
Yeah, it's dropping, bro. I can't.
It's dropping?
Yeah, I can't.
So yeah, we can't enter then.
I already entered, bro.
You can't enter before the close. Are you in on paper right now?
I already entered.
Bro, you can't just enter, dude.
I'm down $100.
I'm sorry.
Did you get stopped?
No, I don't get stopped until I lose.
Yeah, you can't enter yet. That's why you have to wait for the confirmation of the candle to close. So it's usually just a random 50 to 100 point dumper pump with no context, and it just creates. It's something called a void. And usually, well, that fair value gap is actually really bad to use for like a bounce or rejection. We use it for a fill. So we want price to fill it. Does that make sense? Okay. It will almost always be filled, not rejected. Now, if there's like 10 fair value gaps in a row, that will most likely all be filled too. Don't worry about that. That's going to be more of an experience thing, though, to be honest. Like, this is definitely an experience thing, especially that. Let me see if my mic's connected real quick. All right. So it's a giant candle completely out of place, usually 50 to 100 point plus dump or no contest. All right. It's pretty obvious. It's going to look pretty abnormal in the PA. Or what does PA stand for? Does anyone know what PA stands for? Yeah, what does PA stand for? I've said it 50 million times. PA. Price action. Price action. So your one setter for life might be different than my one setter for life. Why might this be different?
Because sometimes you can get it wrong.
Well, you might see a setup where you see, oh my God, like this specific setup where there's an SMT at London low and there's double highs, works every time. And maybe, just maybe, you wait for that setup and you size up in that setup and that's your one setup for life. Does that make sense? I'm saying you're gonna find a setup in the market on your own that like you're really gonna have a lot of conviction in and confidence, and that's gonna be your one setup for life. So my one setup for life is the news.
Oh, no.
What?
No, it's going.
Well, he bounced. What did we just bounce off of on the 5 minute? Go to the 5 minute time frame. What are we kind of bouncing off of? Yeah, we're kind of holding the fair value gap, but is that my entry model?
No.
No, I wait for the inverse.
I'm still up though. I'm still up.
I wait for the inverse. So, the formula, you want to identify a major liquidity target that you see is the highest probability ever. Double tops, double bottoms, what else?
New high.
What? What is? Wait, you go. Okay. All right, Asia high. Awkward.
You got
Yeah, make a 6
Asia low, London high, London low.
Wait, could it be Asia high too or no?
Yeah. You look for a structure shift or some convincing candle that tells us we're going to reverse. And then maybe you add a macro time into that. Maybe you only trade during the macro. Do you see how you can start creating your own checklist with all the confluences I'm telling you? Raise your hand if you can see that. Right, so I'm giving you all these little confluences, and you can kind of check to see, you can make your own checklist, all right? All right, we got, how many more slides left? 8. I'm probably just going to live trade tomorrow. Well, I'm going to do a little psychology speak about my journey tomorrow, and then probably do some live trading. And, yeah, it's crazy, dude. I could have done a whole another 2-week course on advanced stuff. Okay. It's 10:05 a.m. NQ sweeps. Okay, someone read this to me. You read it.
It's 10:05 a.m.
Everyone be quiet.
NQ sweeps the sell side low, but ES does not. A singular, obvious bearish FVG sits just above. A strong 1-minute body closes above the gap. There is a data wick high from 8:30 a.m. news, still untouched above. What does this represent and what do you do?
All right, so an SMT alone equals signal to go long immediately. Don't wait. Skip it. There's too many confluences. There's 3 confluences, or short the gap. Raise your hand if you think it's A. Stand up if you think it's B. Start jumping up and down if you think it's C.
Thank you.
All right, you can sit down. All right, so the answer would be C. There's 3 confluences. There's an SMT, there's an IPG trigger, which was where the body closes. There's a data wick target. So this would be a high probability long. Maybe you want to size up and target the data wick. All right? Good job. Wait, why is it highlighted green? They kind of just gave.
That's what I said.
No, you didn't.
Yes, I did.
No, you didn't.
I mean, you still know why that's the answer, right?
Yeah.
It's pretty obvious.
For example, the liquors.
I'm trying to think how I'm going to plan this.
I've actually been getting into booking. What's one thing that's been on the rotation for Mbappe? For example, nothing.
All right, so there's about 7 sides left. 1, 2, 3, 4, 5, 6, 7. About 7 sides left. I'm going to finish. Can everyone be quiet quick? I'm going to finish this by the end of today. Give you some rules to write down when it comes to looking for trades as a beginner. And then we'll do some group work of like just finding entries and exits on FxReplay. You guys can practice start taking trades. And then, which by the way, do you think in your first week of practicing taking trades, you think you're going to have a high win rate?
No.
You're going to, how are you going to obtain this high win rate?
Experience.
Just experience. It's just like doing this a lot, all right? Quiz question, or pop quiz. What should you do if you don't exactly know what price is going to do?
Wait.
You don't trade, you just wait. All right. So what if you're in FxReplay and you see New York's chopping around the whole session? What are you going to do?
Just wait.
Just wait. You go to the next day, the next session. Okay. All right. Honestly, you guys are probably released for now. What time is it? Yeah, you guys can leave a little early, and then we'll finish those slides today, then do some group work and practice going into the end. Which I'm going to come around to everyone. So,
What's a London high?
what? London high is the high between 2 and 5 a.m. Eastern.
I thought you were.
If you're watching the market during lunch, you guys can see that the trade ended up hitting, okay? I literally just printed money and showed you how to print money out of thin air by clicking a button on a mouse, and you could have made 500 bucks.
We also could have lost.
You also could have lost. But if you truly are listening to what I'm saying, your win rate will be very high and you'll mostly win. But that's not how trading works.
If not, I sue you.
No, I'm not a financial advisor. So, can we go over in replay mode what we were looking for? Remember live time, I said we're going to long here? Can someone come up here and just draw everything out and tell me the context and explanation and what we're looking for here? If you do a really good job, I will give you an Airwan smoothie tomorrow.
I got you on everything.
You have to explain everything we talked about in live time.
You're still taking us out though.
Right here.
All right, you got it. Come up here.
I had it.
No. Go the other way.
Bro, you have this much space, bro, for you to just...
All right, so I want you to explain to the whole class what you're drawing, what you see here, and what we kind of talked about. Everyone listen up, please.
Listen up, bro.
Guys, please be quiet.
All right.
So let's hear it. Let's speak with like a loud tone towards the class. Project your voice.
All right. First.
Why are you longing there?
Huh?
Why are you longing there?
Why am I longing there?
You just bought.
Okay. First, I have a trend line here.
Okay. What's cool about that? What's good about the trend line?
It builds up liquidity.
Okay, and where does the market like to target?
Stop losses.
Yeah, so the first confluence is we see where stop losses are and the market is trending towards it, right?
Wait, Mr. Kowalski, where are the stop losses?
All of the stop losses are built up.
Show us all the highs with a highlighter where the stop losses are.
Okay. Where's the highlighter?
Right there, highlighter, yep.
First, we got stop losses here.
Yep.
Here.
Yep.
Here.
Yep.
And here.
Yes, exactly. So we have a bunch of built up stop losses. So that's the first confluence. What's the next? Okay, now where do we, what's the market spooling towards, or where are we getting momentum right now, up or down?
Getting momentum up.
Up. Okay, now how do we enter this? What was I drawing out that said, okay, we're gonna look for an entry here?
Huh?
Like, where do we get in? Why do we get in?
In the retracement.
There is a specific entry I said we were waiting for. There's a specific entry to get in this play. I drew out and I said we're going to wait for this to enter.
The IFPG?
Yeah, okay, where is the IFPG? Like, I literally told you guys how to make money out of thin air. Literally pressing a button on your mouse. And half of you weren't paying attention. That's the bottom. That you could have entered down there, but we didn't. Where in live time was I trying to enter? Remember before lunch I said, hey, if we do this.
Yeah, here.
Yes, but based on where's the fair value gap we're breaking?
To the left, to the left. Right. No. Up. Right.
Okay. Draw that right. To the right. Okay. You're missing one more. It's very tiny.
Then we have a liquidity sweep.
Okay, where's the liquidity sweep?
Just like.
Yep, so we swept those lows. We even have a manipulation leg at the lows. Draw the manipulation leg at the lows. Down here, there's another liquidity sweep. That's line with a line.
Not too much for an arrow once, man.
Yeah, I don't think he's gonna get one.
What, yo?
Where's the manipulation leg?
Like here?
No, he's dumb as well.
Yo, wait, what? Wait, what's a manipulation like?
Yo, someone else come up here. You come up. You come up. It's a liquidity sweep.
He doesn't know about it.
It's just like,
I think I mean, it's just like the leg that goes down.
Then I already have
it's the last leg that goes down.
You already have that, right? Pretty sweet, bro.
All right, get out of here.
Yo.
All right, where's the manipulation leg? Yeah, draw a line there. Yeah, draw the line.
Yo, that's already.
Okay, if you don't know how to draw a line on TradingView at this point,
No, don't let him break.
It keeps dragging.
But why would? What are you doing?
Click on the line.
Wait, why is your line there?
wait, why is? Oh, I see. Yeah, there you go.
Okay.
Okay. Okay, so we had the liquidity sweep, and then this right here would be the manipulation leg. Raise your hand if you agree.
Yo.
Good job. Click it. What are you doing? That line's not even straight. There you go. Okay, now draw the entry I was looking for in order to print money out of thin air.
I got you.
Where was I looking to enter? There's a tiny. Okay.
Wait, is it?
There's a tiny fair value. Remember I talked about the singular fair value gap? There's one higher that's really tiny. You really have the good eye to see it. Left. It's really tiny, dude.
No, bro, he's already too far. Let me do it.
Tiny. Right? Oh, you're close. See it? It was right. Yes, right there. You just had it.
You're on
nope,
it,
right.
Bro. Just start jumping.
Right. Rope. All right, you come up here. Yo, you come up here. Actually, yeah. If he doesn't get it, you come up. Remember what I said. If it's not a singular fair value gap and there's multiple, we should wait for what?
Where is it? Huh? Wait, what?
Yeah.
Your mouse is
Above both of them, exactly. So there's a tiny fair value gap here.
Oh, I see it.
Rectangle. Draw a rectangle.
I see it. It's right there. And that one's.
Yes, exactly. Now combine both of them. Now let me wait. Stay there. Remember how I said the EMAs are all bullshit? All right. This tiny little zone is still being respected by what? The body's still respecting it. This is how I'm like. This is why I know this is an algorithm. Do you think this is really random?
No.
Hell no, this is not random. This is clearly respecting this little tiny 1 point zone, and it's a real fair value gap. This is why what I'm teaching you is how the market moves, okay? And we can clearly tell. So what do we need for us to enter here?
The body to.
The body to close where?
On top.
Above both of these. So draw the zone, make it one zone now. And is there any other?
You know what I did?
Oh no. I clicked forward. How do I click back now?
Let me see.
Oh, here. Right. Select bar.
Select bar, go.
Right there, that one. Right?
Yeah.
Or,
yeah, like right there. Yeah, there.
Right here.
Yep. Now, let me ask you a question, right? So the entry would be if we close above. Did we close above there? Could we have entered?
No.
Nope.
Did you go forward?
Now, why is the entry like above these two and not anywhere else over here? Does anyone know? Because there is no fair value gaps over there. There's nothing blocking price from going up. Right? This fair value gap was already, is what? Is this relevant or irrelevant? Irrelevant. Why? Because we've already like traded through it 50 times and used it. Does that make sense? And now that's where all the stop losses are. So that's why I'm only using these two. So make the zone one zone now.
Oh, what? What do you mean?
Make it one zone instead of two.
Like that?
Well, make one rectangle.
I know, but I can just like.
I guess, yeah. All right, so in order for us to know that the market is going to go to those buy stops at that trend line, we need to see a close above this zone. So play price. No. Pause. Click this button next to the pause button. Click pause. Okay, nope, go back.
Oh my days.
If you click the play button, it goes automatically. You can control it by clicking this. So click play. All right, so, okay, what's that? What are we doing now? We're tapping into what? We're tapping into a bullish fair value gap now. Could this theoretically be your model where you buy inside this bullish fair value gap if you think liquidity is above? It could be. Is that my model?
No.
No, I wait for the IFG to confirm. What do you notice the wicks doing here?
It's bouncing.
Yeah, the wicks are going below the fair value gap, but the bodies are closing above. Remember the bodies? Not yet. Remember the bodies tell the story, the wicks do the damage? Now play another candle. Okay, do you think this is a light bulb candle? Where you like completely lock, you're like, oh my God, like lock in?
Yes.
Yes. And where do you target? The top of the trend line. Stop maybe up more. Do it below that giant candle. We call it a Drake candle, or if you follow my Instagram, sometimes I call it, starts with a B, but I'm not going to say that. All right? So, you got it?
I think so.
All right, so we're going to put a stop at the low. And what else do we have here that formed?
Fair value. Retracement.
No.
Order block.
Order block.
We already had the market structure shut down there, telling us we're in an uptrend now. Order block, exactly.
I just said that. I just said that.
Draw out the order block. Draw out the order block.
I need to delete these then.
Nah, the man didn't tweak it.
No one gets in there.
Draw out the order block.
How about we all get a free air once we
No, no one knows because no one gets it.
How many paid for
Nah. Right there, that's
He's already taken it.
I'm wrong. Foods. Where's the order block, bro?
I see it.
Dude, it's so obvious.
Oh, crap.
Yo, you're like.
If you watch, who saw my Instagram reel
I did.
with a fork?
I made mine.
Yeah.
Come put it, bro. Come put it. I'm calling up my student now.
There's a more obvious one. I mean, technically that is an order block, but there's a more obvious one.
Now the student becomes a master.
Yo,
what did you do, bro?
Full screen.
Bro, Josh, you're looking just
All right, draw the line.
It's okay, I got
Up. No, what are you doing?
Yo, what?
It's the sequence of, it's when we close above the sequence, it's a bullish order block. Does anyone see the order block? You come draw it.
Oh, that's
not right.
Bro, come on, you're my student, bro. You gotta.
It's right.
Dude, a girl's about to mog you. Go sit down. Go sit down.
I need one.
Go sit down.
No, it's right there.
No, it's not.
Yes, it is.
It definitely.
Let's see.
Is that not an order block?
It's not the, yeah, there you go. That's the best order block. Bang. All right, so you guys can see way more obvious. We close above it, and that is the entry. And then TP hits. Now, why do I sell here? Guys, why do I sell here and not just go for a random high up there? Because trendline liquidity is just a very good liquidity pool, and a lot of times when we hit this, we will reverse. Do we know if we're going to reverse for sure here, though? No, we don't. All right.
We already swept it.
But we swept it, so that's our target. Now, I'm getting in.
Yo, so before I give you.
Guys, look, I'm getting in here. The second this candle closes. So I'm getting in here. So do you guys see how I'm just getting in, marketing enter, not even waiting for retracement?
Yeah.
So I get in the second I see the order block, and we close above this tiny fair value gap, which is also this fair value gap. And is this a strong or weak candle?
Strong.
Yeah, so that is like an A+ setup. I literally it to you guys in live time. I said, take this on paper if we get it. And I showed you how to print money out of thin air. If you took 2 micros would have made you $800. And boom, there's where you sell. Okay? Now, if I X out, okay, and I delete all this, turn this back on, okay, 1 second. I'm gonna log into paper trading and show you. Show you the execution. This was the live time execution. Is this hindsight?
What's hindsight?
Hindsight is hindsight. Like a hindsight warrior is a guru on YouTube, or does everyone know what guru means? Guru. It's like a teacher. There's something called a guru and a furu. What is a furu? A fake teacher. They're hindsight warriors. They'll go on price action and YouTube and they'll tell you what's gonna happen, but they already know what's gonna happen.
Because they're doing it like.
They're doing it in hindsight, dude. Like they already know.
Are you a guru?
No, I just showed you guys this in live time.
This already happened.
Yeah, but you can see him execute. I can't get these executions unless I enter it in live time.
It was an FxReplay.
This isn't FxReplay. This is TradingView. Now, if you showed someone this chart and you're like, look at my entry and look where I exited, do you think they're gonna be like, no way? How do you get out at the top?
No.
Yeah, they're gonna be like, how'd I time the top?
I feel like I'm better. They're gonna say you're hacking.
Yeah, like it looks like I'm hacking, right? Because I timed the top in live time.
I think you're cheating. No.
Right? So it's just, it sounds really corny and like just really nerdy, I know. But, you know, it's funny because I played sports. I literally played 6 sports in high school. Like, I was like, I think 6 or 7. You know, and I used to be in band class in 9th grade and I couldn't do it because there's just too many, like, just people I wasn't hanging around a lot. But all the sports guys, you know, I clicked more with them because we talk about sports, all that stuff. And if I try to teach them this, they'll think this is corny. Like, it just low-key is, but like it makes money. So
That's not corny, bro.
it's corny at first, and then like it just starts becoming like, you know, your own like niche kind of thing. So,
You're really niche.
but you can see that's where he took profit, and that was a play learned in live time. Now, look at this. Do you guys see another potential entry to the other side? There's a short. Someone come draw me where the short is. Who thinks they can draw it with the RR tool?
Oh, with the RR tool, that's pretty easy.
Yeah, draw the exact position and entry.
I got you.
You want to? Okay, have you come up?
What? Nah, I didn't.
You can come up.
Yeah, you got that.
I want everyone to do
All right, ready? Watch and learn.
All right, bro.
So, what do we have first before the short? First of all,
So before the short,
we have a liquidity sweep. That's the first thing you look for. Mark the liquidity sweep. It's already marked, but
yeah, it's right there, bro.
yeah, right there.
There's also a fair value gap right here, bro.
Okay. It's in the pin.
I'm gonna slime you out.
All right, ready? Where's the fair value gap? Okay.
There's 2 actually.
Okay, draw the other one.
There's another one right here.
All right. All right.
Right there, bro.
All right.
Wrong.
Now draw where the entry would be.
That's so small.
Why there?
Right there?
Yeah.
Because it broke the.
Okay.
Broke the fair value.
But I remember I entered on the market close. Oh, hindsight. That's hindsight.
I would have done right here, right here, right here.
There you go.
Everyone's familiar or what?
No. All right, you're wrong. You're very close.
Wait, wouldn't it be like? Is
Oh,
there
no.
another fair value gap?
Yeah. There's another fair value gap you missed.
Hold up. It's right here.
Dude, no one looks smooth.
Just put it below.
Right there, bro.
All right, so where would the entry be?
Right there.
Oh, yeah, so we closed below there? There, yeah, there you go. Now, let me ask you a question. This is going to be for your own experience. Do you really think if we scroll up a little bit, do you really think if we have 2 giant death candles here, we're going to retrace all the way back up into these fair value gaps? No, right? Not at all. Okay, we're just going to keep probably spooling down here, okay, to this low. So that would be the short entry. So you could have printed money out of thin air with a mouse by clicking a button twice in a row. The second one, what's the stop? How many points is the stop loss there? 7, 11.
7, 12
to what?
410. 410.
That's the stop loss?
Is it micros or
Oh, what? Stop loss.
How many points is the stop loss, first of all?
180.
Nope. Yeah, you're right, actually, yeah. So about 180 points, and then TP is how many points?
301.
How much?
301.
So 1 micro would be $600 there. Because 300 times 2. Wait, are you sure?
Close.
Oh yeah, you're right. Wow, that's a lot of volatility. Holy, I didn't even realize. Okay, that is a lot of volatility. So how much would you have had to risk 1 micro at least on that trade if you want to take 1 micro? At least. It was a 180 point stop loss. Yeah, you would have had to risk $360 to make 600 bucks.
Yo, that's low-key not worth it though.
That's worth
It is. No, it is. The RR is good. That's just insane volatility.
That's like 1 point.
Do you guys?
Hey bro, I know. What's the number, bro? 1
I'm
point
not
what?
saying it.
Do you guys know why the volatility is that high? It's because of news. Matt Walsh was speaking. It's never like that though. Typically that would be like a 50 point stop. Isn't that crazy? Like that's usually a 50 point stop. That's like. No, you still messed up a little bit.
A little bit.
All right.
Come sit down. How about when you take us to Airwell tomorrow, you solve that?
So that's that. All right.
That's that.
You got us on lunch?
Now you pretty much have all the tools you need to get the experience and go live trade yourself. So the class is now over. Goodbye.
Oh.
Just kidding. All right. So let's talk a little bit more about this and finish the slideshow. Then we'll do some practice on FxReplay. All right.
My FxReplay doesn't work.
All right, that's fine.
Because I'm on.
Yeah, I know.
I'm glad it was you. It was you.
All right, so this is going to be, we're going to talk about the manipulation leg a little bit, which is, the manipulation leg is also a what? Yeah, make sure you write in your notes, manipulation leg equals liquidity sweep. All right? Write that in your notes, all right? Yeah. Yeah. All right. What? Manipulation leg equals liquidity sweep. Now, sometimes when price goes down and sweeps a liquidity level from the previous day, and we get an IFG back up, could that be a fake out, the first IFG back up?
Pump fake?
Yeah, Judas.
That could be a pump fake. And that's where the manipulation leg comes in. The manipulation leg basically says this. The manipulation leg says this. If we're downtrending, or we have a liquidity sweep up there, distribute all the way down here, and then we get an IFG here, could this still technically be a liquidity sweep?
Yeah.
Yes. Is this still a liquidity sweep?
Yes. 6 out of how many?
So could this be an entry?
Shut up, bro.
It's because he's the king.
I'm throwing Tracy.
Could that be the entry?
Yeah.
Yes. And what you guys don't know yet is this actually is not the greatest entry.
You need the retracing. Okay.
We like to see, and this is sometimes a pump fake. Okay, and this is why so many people get wrecked in trading. What happens after these big down moves is we'll create a low. All these people who think they're smart think, oh yeah, I just timed the low, I just longed here, my stop loss not below there. And then we re-manipulate, and then we go up. Because it gives us more fuel. So a lot of times this entry will fail, we'll re-manipulate, and then we'll get the IVG, and then the market starts to shift, then go up.
Can you remember the name of your best trade ever?
Okay, so this is going to be a higher probability, and write down this model. Write down this, and then write down manipulation leg. All right. Now, there's one other like big concept that I really haven't talked much about. But what would make this even higher probability trade if we look to the left?
If there was like a low.
Close. If there was a what? If we came here and bounced, what would make a bounce from this specific area a very high probability trade? What? This is the liquidity sweep though. There's something else.
Equal low.
No. This could be equal lows. This could be equal lows. This could be Asia low. That could be London low. No. There's a very important level that could be over here. Yes, fair value gap. The highest probability setup usually bounces off of some sort of fair value gap to the left. So everyone draw this diagram in your notes.
Isn't that like too left? Like too left, it's like too far left.
No, that's when we want to use the too far left. We only care about the too far left is only for the entry model. So you want to use an IVG that's pretty close in proximity, right? And the part that's we could have a fair value gap left, but because we're not taking an entry from the fair value gap, because we're not guessing if we're going to bounce here or not, we're waiting for the confirmation. We don't care how far left the fair value gap is.
Oh, so it just might bounce.
It might bounce, and if we see it bounce in hindsight or if we see it bounce in live time, we're not actually entering. We watch the bounce in live time, and then if we get strong displacement out of it, that tells me we're going to fully reverse.
Oh, wait.
Make sense? Yeah.
So if you see like a fair value gap, and like for a while it hasn't like been
balanced, yeah, and we come down and balance it like a following, yeah.
So couldn't you just track it until like
You-
it goes down? And
exactly.
bounces, like, oh shit.
Exactly. That's why like remembering those levels helps, and having a memory is good. So everyone draw this out. This is an A+ diagram right here for an A+ checklist. Now, what's another thing we could add here? Another confluence I talked about earlier that could be at these lows.
Trend lines.
What could this line be?
Trend line.
Do you, in the white, do you know what this line could be? Talked about earlier.
What's that trend line called, bro?
What's this called?
Gotta pass it.
All right, pass it to your friend. What could this potentially be?
Double it and get it.
I know who the guys, I know you're gonna get it.
You might need a phone a friend.
No, I'm confused.
What could this line be? We talked about it earlier. Remember when you came up?
Yeah, I do. Oh,
What is it called? You already know it. Yeah, what? Yeah, there you go. 1 for 1 of the day. All right. So that could be an SMT, all right?
How do you know?
You don't actually know, but it could, if we looked at ES right now, you would know.
Wait, that's not fair because you don't.
I'm just saying you could add another confluence here and be like, oh, there's also an SMT.
No, but what if it wasn't an SMT? Why could also be like.
Even if it's not an SMT, we don't care because I said not to prioritize SMTs. So if there's an SMT, it might go from like a 9.5 out of 10 setup to a 10 out of 10 setup. Would you still want to statistically take a 9.5 out of 10 setup?
Yeah.
Probably. All right. So that would be the manipulation leg, okay? So let me see if I can find an example of this.
Josh, we're gonna have you sent home right now. I've never been sent home. You're sent home Sunday afternoon. Sunday morning. You were gone by then. I was in the
All right, watch. I'm gonna do a little role play action here, a little acting.
Is this live? Oh, it's not live.
Did you say you're about to do a little role play?
I'm about to do a little role play. All right, ready?
First day.
We're gonna pretend like I'm a brand new trader trying to time a reversal. Okay? So pretend I'm a brand new trader trying to time a reversal. All right, ready?
Yeah.
Okay. Let me see if I can do something here.
They came in nothing.
Okay, ready? Watch this. Ready?
You're like all this support and resistance on.
All right, watch me do a little acting here. All right, guys. So pretend I'm a live trader and I'm telling you where price goes, but I'm a beginner live trader. All right?
With your model or like?
No, this is just where I'm a complete beginner. I'm acting. Ready?
Oh, you're acting?
All right, guys, all listening? All right, 3, 2, 1, go. All right, guys, so we're going to be looking for a bounce here, right? We're going to be looking for a bounce. So let's check to the left and see if there's any levels where we could bounce off of. Let's go to the daily. All right, it looks like there's a daily order block over here. Do you guys see the daily order block, the sandwich candle? So maybe we'll bounce there. Okay, so I'm going to actually try long here. I'm going to try long here at this daily order block, all right?
All right, thanks for the liquidity.
All right, we're going to try long here. We're going to risk 4 micros. And we'll do my stop, you know, I don't know, maybe we'll do my stop here. All right, let's see. All right, this looks pretty good. All right, I'm gonna average in a little more micros. All right, now I'm gonna put my stop a little low. Right, we just got a big down move, and I'm gonna target up here. All right.
Thanks for the liquidity, bro.
Let's see.
Wait, what is it?
Oh, all right. Well, I was clearly. All right, watch this. Watch this. All right. Well, I was clearly wrong. I'm now gonna take a short because we broke all my zones.
Thanks for the liquidity, buddy.
All right, we're shorting now because we just broke my zones and I just got stopped out. We're definitely not going to hold this daily order block.
You're gonna go up.
Let's see. Oh, I was the liquidity again. Oh, I lost my whole house. So, okay, do you see how retail traders think? That's how they're thinking.
Bro, how are you gonna do that play and then blame it on retail trading?
No, I was acting, I told you.
He was playing role play.
Yeah, I was role playing a beginner trader. That's what they would do. They're trying to time reversal. They time it, put their stop with a low, or they see this green candle, then they're like, oh, this is definitely it. They get manipulated right there before the actual reversal. So they get manipulated there, and then we end up going up.
All right, now let's role play you, bro.
No. Raise your hand if you see what I'm talking about with that.
That's why you need to wait for the MSS.
Everyone raise your hand. You see what I'm talking about there? Yeah, exactly. So me acting as a beginning trader, when I was trying along here, what did we not have?
Drake candles.
I mean, we kind of did. We didn't have a fair value gap. We didn't have. We had an order block.
Liquidity sweep. You didn't have a MSS.
We didn't have a really good liquidity sweep. We didn't have an MSS. It was kind of choppy.
You got a manipulation.
Right. Now we manipulate. Now we have a better order block over this down close candle, and then you maybe buy there. Or you could wait for this market structure shift. So, you come up here and draw the market structure shift.
I got you.
Yeah, dude, yeah, you.
Pass this one off.
No, you don't. Dude, you gotta come up here and draw it. I got you.
Phone a friend.
No phoning your friend. Dude, has anyone ever seen that Jeopardy clip where the guy is like about to win $1 million and he phones a friend? He's like, hey, I actually don't need your help. I'm just saying I'm about to win $1 million. That was sick. That would be me, bro. That would be me.
Don't make me laugh.
Dude. All right, where's the last lower high?
I'd like throw tomatoes at you.
Paintbrush is a rectangle tool. It's in the rectangle. Go click the rectangle. Up. Right there. Click the arrow. And then highlighter. All right, show where the last lower high is. The last lower swing high before the reversal.
This one.
You're so close. There's a more obvious point. What's the point? What's the mountain point in that leg? Right there you go. So now draw the line that would be the market structure shift.
Yo, he deserves the Air One smoothie.
Come on, kid. Right here.
Yep, exactly. Draw a little more right, just to show it a little bit.
Play with your.
Just hold the right one. Hold the right and then drag it. Hold the right circle and drag it over. Yeah, drag it over. Boom. There you go. Now, draw the fair value gap where you could have entered off of based on the beginner model.
I had to pause, bro.
With a rectangle.
Shut up, Zach.
18K?
Yep, it's in the geometric shapes. Yeah, right there. Draw the potential fair value gap retracement entry after the market structure. It's after the market structure occurred. That's before it occurred. After the market structure shift is after we break the high. Yeah, it's got to be after this because we don't have the market structure shift yet there. Now draw the fair value gap that we trace into. There you go. Yeah, there you go. Perfect. Draw it to the right a little more. Now there's one more smaller fair value gap right below that. Draw that too.
No,
Yep. Right. Yeah, right there. Is that a fair value gap?
Nah, that's
Yeah, it's not a fair value gap.
Dude, I don't like this sound. Right here.
Yep, exactly. Exactly. So that would be the retracement entry you buy, stop below that, and then we go up. See it? See how it's a model I've been teaching every day?
Yeah.
All right, good. You're good.
I just got nervous.
No, you're good. All right. So, does everyone see the model I've been having you draw out repeatedly? All right. It's the same thing over and over and over again. This will literally absolutely print money out of thin air. All right.
Do you invent this?
What?
Do you invent this?
ICT did, my mentor. I invented some of this stuff, but not everything. All right. Stand up if you understand manipulation legs now.
I don't know.
I didn't understand manipulation.
Bro, she's trying not to look at me. All right, you can sit down now.
What?
She's trying to hide behind the pole. All right. A buy and a sell model. Guys, can we please lower our voices a little bit? Quiet down. All right. What do you think a buy model is? Do you think a buy model is going up or down? Duh. Do you think a sell model is going up or down?
Up.
You guys think it's going down? A sell model?
Up.
Well, I'm sorry, but you are correct. Good job. All right. So, it's a curve. This is a curve, all right? A buy model is basically like a cup, a coffee cup. Can everyone write buy model equals coffee cup? Right, buy model equals coffee cup. And also write buy model equals MMBM, market maker buy model. MMBM equals market maker buy model, which equals cup-like shape.
Can you restart? Sorry.
MMBM equals market maker buy model, which is a cup-like shape. It looks like a coffee cup. Sorry, you wanna? It looks like a coffee cup.
It looks like a coffee cup.
You said it looks like a coffee cup?
Yep, it looks like a coffee cup.
Wait.
What does the coffee cup look like?
Now, write SM equals market maker what model?
Seller.
Sell model equals upside down cup. This is an upside down cup.
We're gonna get you sent home right now.
All right, now look at this. This is a retail trading pattern.
Who's Ross?
I actually do know that guy. Funny enough.
You know him?
Yeah, he looks like a chud. You're right.
He looks like a what?
He looks kind of.
All right. Do you guys see where I'm going with this? How it looks like a cup?
Yeah.
Okay. If we were to think about a coffee cup, can the coffee cup ever start at this point and not complete its final point? That would not be a coffee cup. The coffee would spill out of the top, right?
It's like you have like a disciplined kid.
A coffee cup is always a flat top. Where does a coffee cup always complete? The other side. Where does a cup always complete? The start of the cup.
Wait, so it's gonna look like that?
It's going to look like this. This is what we call market maker my model. This is a retail pattern. This is bad. I'm just showing, it's saying to buy here, but in reality we can buy here using what we know. Now, do you see where you can get a market structure shift down here?
Yeah.
It's just in form of a cup this time. So we could theoretically get in here, Meanwhile, it's saying the cup and handle, it's saying to get in here. This is for idiots and beginners, okay? We do not do that. That's way too high now. We're in what at this point?
You're in premium.
We're already in premium. We already missed the move. Everyone trying to follow the strategy is not a good trader, okay?
So do use this, but like buy earlier.
I use the buy and sell model, and I kind of try to, if we have a curve, I know it's going to complete back at the top. I'll show you chart examples in a second.
Okay.
Now, do you guys see what the opposite of this would be?
Yeah.
Just the upside down version.
Horseshoe kind of.
Yeah, like a horseshoe. So look. So a buy model, a high peak forms, we go down and we have all these things called accumulation phase, smart money reversal, lower highs, lower lows. But the thing about this cup or this curvature is we always complete where it started. And that's how the market moves. What is resting at the top of where we started the cup?
Josh, let's calm down. Sorry.
Stop losses. Look. Does everyone see the cup right now?
Yeah.
See it?
Yeah, see it? Yeah.
Where does it complete? The start of the cup. So if I'm taking along here, I target the start of the cup. Now,
That's so easy.
I know.
It's just like,
Oh my God.
it's just like a liquidity.
So should you short at the other end?
Come on, bro.
Now, let me ask you another question. All right, who sees it? See the cup? Where does it complete? Bottom of the cup. All right. Now, do you see the cup? Does it ever complete?
No.
No, and this is why it's not, trading's not as easy as you think, okay? These are all hindsight examples. All right, we're gonna watch a video on this in a second, but, okay, see the cup here? See how it never completes to the top? What ended up happening up there? I showed this example earlier. It was a bearish what? It was a bearish SMT. So this is NQ, but ES. Remember ES hit the high? Remember I showed you earlier?
Yeah.
So let's call the smart money reversal. All right? And then we go to the, we do another cup, okay? But in general, even if you were to get in somewhere in the curvature, the buy model of the cup, you should probably be taking some partials along the way to make some money. Who wants to watch another YouTube video on this?
No, I don't want to watch you.
Can we watch you?
Yeah, we want to watch you.
I think there's a better video out there. Market.
You role play?
No. All right. This is one of the best videos out here. Right here. Oh, this is 35 minutes.
I'm going to be showing you guys everything you need to know.
Hell no, we're not watching that. Market maker, buy and sell model ICT. See what comes up here.
Did the ICT guy make this video?
What?
Who is ICT? We're yet
ICT is my main mentor.
Oh.
So this is my video, but I want you guys to watch another video.
ICT is your
Let's watch your video.
Dude. Okay. This is my video.
Oh.
Wait, why does it say
What's going on, guys? Do you suck at trading? If so, watch this video. Tell me if you like that hook. Does that hook you into the video? Hopefully it does. Alright, so I'm not doing the... If you want to watch...
Wait.
Where did the music come from?
That's my Discord.
Watch me live stream every single day. Make sure to...
Alright.
9% win rate if I had to guess. So,
Alright, watch.
description of
Everyone pay attention. See the cup?
Yeah.
It's got this like nice curve to it. You'll see it as you trade more. All right, listen. You can't hear me if you guys are talking, all right?
Alright, so I'm going to be going over the market maker model, market maker buy and sell model. Okay, if you ever see the term this on Twitter, usually they're referring to some sort of market maker model, which
That could be
essentially
buy or
is
sell.
Like if you come from the retail trading fairyland, it's kind of like cup and handle, but it's really not. So if I just Google MMXM ICT, okay, the market maker model ideally looks something like this. It just has a little really nice curve to it, okay, and my favorite type of market maker models are when we kind of save equal highs or some sort of equal highs at some sort of original consolidation, and then we trade away from those. Okay, and like once we like, so let's say for example these are equal highs, even though they kind of are actually. Okay, so we have equal highs here. So I like when the market
see the equal highs.
these little equal highs at the top, and I like when we trade away from them at first, because that tells you if we create equal highs or equal lows, or we trade away from them, that tells you there's likely a market maker model that's going to start coming intact. Now, typically you will not know it's a market maker model until we actually get the reversal and kind of get our first fair value gap entry. So this is really when you know it's the market maker model. But you know it's the market maker model because we left these equal highs from previous day or whatever it may be, and we trade away from those. Okay, trading away from those equal highs or equal lows is actually the key to finding like a textbook market maker model, because it makes you pretty confident we're going to go back up and hit them. So in this example, that's really the first thing I look for. I look for some sort of equal highs or equal lows that we trade away from, and that's when you kind of start looking for the model. So in this example, I'm just going to tell you something important about time. So typically when you're in the 5 or 15 and you're looking for these market maker models, keep in mind they do appear in every time frame. When you're in like the 5 or 15, a lot of the accumulation periods, okay, so let me just show you the chart real quick. A lot of these accumulation periods that you see here, okay, let's see if I can do this out. Like this right here, more of this, and this. So the blue and red. Most of these occurred during the New York session. Okay, and I'll show you what I mean by
What time's New York session?
Here's what I mean.
8:30 to 11 is a kill zone, but New York opens at 9:30.
Market maker buy mile or whatever. Usually the entry happens during the New York AM kill zone, and you can see if we draw a vertical line here, the entry does appear during the New York kill zone.
10:15, right? AM.
That's when the kill zone starts. So that's the sign of a high probability model. And then you can see we end up respecting this fair value gap right here at 11:30, and then we respect this fair value gap here at
See how precise that is?
2 o'clock.
Bearish fair value gap, bounce in, go down. Bearish fair value gap, bounce in, go down.
Market maker models, again, they start at some sort of New York kill zone, okay, usually the AM, that's when they start, and then they usually end the following day or the following session. So my favorite market maker models, when I start to like this curve, you get a decent dump, okay, at the New York AM session. Okay, and this one you can clearly see how we inverse all this, like see how we inverse this really obvious for everybody. Like how many people do you think want to prolong this? Probably a lot, because when looking, they're like, oh, you equal highs above, this is a really obvious long, right? So a lot of people want to long this probably, and that gets blown through, so that's a short. But this was at 10:15, okay, and then entries, all the other entries have been in the New York kill zone. And my favorite types of buy models or sell models are the ones that form like some sort of reversal with an SMT overnight, okay? And overnight, you can see we start chopping around, and then this is where you get like some sort of smart money technique, okay? So if we look at,
What am I looking for right now?
back a little bit.
Why am I having two charts open?
Clear divergence.
To look for an SMT.
Yes, and NQ. Okay, so
See it?
right here. See this little divergence? See how we don't take out this low here, but on ES we do take out this low. So when I wake up in the morning, like this is my favorite type of reversal. Okay, like I love this type of reversal, man. It's so textbook. And if you want to take this reversal, maybe you should buy a few Apex discount off codes. 71% sale right now. You can literally buy a $50 or 50K account for about $30 right now. It's a reversal. Okay, you're probably not going to catch it overnight. A lot of people think, oh, I missed the entry. I wake up in the morning, I missed the entry.
Yeah, what a lot of people think for these market maker models is they think they have to get in down here. But can you still catch a piece of the pie or a 1 to 2 hour move if we know we're going to complete the model?
Yeah.
Yeah, so it doesn't matter if we're not getting the bottom. We just need to see that smart money reversal at the bottom.
That's where time comes in. Whenever we have a nice, really good buy model, we usually get, like I said, just like before, okay, how we get our distribution here, distribution here. When we start to accumulate, it will typically be in that New York AM session again. Okay, so this example is perfect. This was 8:30. This was the start of this New York kill zone. We went up. We didn't really get an obvious structure break.
Now, this is the 15-minute time frame. Does everyone see how he came down in New York and tapped into these fair value gaps?
Yeah.
And we form a singular, what here? Order block to the upside. Do you think if I went to the 1, 2, or maybe 3-minute time frame on this formation, do you think there could have been an IFG here?
Yeah.
Yeah, 100%. And that's where I'm entering. But I can't see it right now. What are you doing? Are you like AI me or something right now? All right.
Bullish, we created a really nice fair value gap. In discount, and you can see New York ends up accumulating.
And look, we were traced to the 50% too of that impulse
Now,
leg.
if I had to guess, if this was during Asia session, would this have happened? Probably not, because one, Asia is so not volatile at all, and New York is. And two, we typically consolidate during Asia. That's what Asia is known for. Okay, so this is where the real smart money is getting in, and then this is just the accumulation. Okay, so you can see.
So smart money is typically entering here, but this is where more smart money enters. Okay, and that's called the reaccumulation. What is accumulation again? What?
Sideways.
It's kind of sideways, but accumulation is sideways, and then usually will go up. But I'll show you an example of that.
What happens here, and then another entry happens in that same morning session on this order block / fair value gap.
And then there's another fair value gap there, another order block, a propulsion block. See the propulsion block? It just made stairs, and price just kept climbing higher and higher and higher.
Accumulation and distribution in the New York kill zone. Okay, if it's during Asia, it's probably not a high probability one. You want it to be during like the New York kill zone. All right, so even like if you look at this one right here, okay, this is a lot sloppier, but in this one right here, we swept this low. Okay, we get a really uglier curve to this one. Okay, really ugly curve here, but it's still kind of classified as one. But the thing is, like, you can see when we start to accumulate to go to these highs, what time does the market start to expand here? 9:30. Okay, and that's a big key. And this was an SMT, by the way, as well. Okay, that's your key. And this SMT did start to form overnight. Okay, it started during London, I believe. Okay, so it was an SMT with the London low. And that's where you'll usually get the SMT off of. So again, if I had to give you guys a list, like MMX models, you want accumulation. Okay, so accumulation to happen in New York kill zone, and then you want reversal / SMT overnight. That's usually how it's done. Usually, like the London session will give like the reversal overnight, and then
I did something worse of YouTube.
And then we kind of accumulate the New York kill zone right here. There's probably like an hourly fair value gap or something, right?
All right, so the rest of this video is pretty boring. It just shows the market maker sell model that just looks like this cup. Okay, now you're gonna draw this out on a big giant piece of paper. Ready? Draw exactly what I'm drawing. I'm gonna come check all your notes after this and make sure you drew it.
Can I just take a picture?
You could.
No, he just said to write it down.
All right, ready? Actually, no, write it down because you'll remember it more. Do you think you're going to remember something more if you write it down 50 times or you take a picture of it once?
Well, I'll take a picture.
If you write it down 50 times, you're going to remember it way more. Again, that's just being a smart thinker and a creative thinker and a good learner, okay? That applies to life, not just trading. Draw this.
Don't answer this bum, bro.
So, this right here is a what? A market maker buy model. Manipulation occurs here. The market structure shift occurs here. The IFEG might form before the market structure shift, which maybe you want to get in. The fair value gap forms after the market structure shift, which is here. And we might have a London high or an Asia high or equal highs, anything like that. Okay? And then we could have an SMT.
Damn.
SMT with ES. That's pretty much the start of a market maker model to tell me we're going to trade higher. Now, what if we flipped it upside down? It would be a market maker what model? Sell model. This is a buy model. So draw that out. Now, if you go on my Twitter, I used to post these all the time. All right? See it? There's so many annotations here. There's trendline liquidity. I marked an order block. I marked the accumulation before the move up, the reaccumulation, the distribution, back down again, the equal lows, all the fair value gaps. Same thing with this, right? How does this model start? Well, it starts with an inversion fair value gap. It's a 1 hour. There's relative equal highs there. More buy side here. Double top here, right? And then you get your smart money getting in here, your more smart money getting in here, and then we go higher, okay? There's so many ways to see this, but it's all the same what? It's the same curve. It's got like a curve to it. This is a Halloween themed one I made because I was bored. So this is a sell model. There's an SMT at the top. We swept the high at the top. There's a new day opening gap we inversed. All right. Notice how I just said we inversed the new day opening gap.
Can you scroll down the comments?
Yeah, can we go down the comments?
I'm going trick or treating to your house later. If I don't get a Lamborghini, I'll tell all the kids to boycott your house in the neighborhood. Okay. That was when I was 21.
That was like 3 years.
Bro tweaking, best model ever. Hindsight. This is you'll see. Like I'll get some hate on my Instagram, but why am I gay? The inner Picasso just came out of me. Maybe he was gay too.
What?
Work of art. The color's nice. Aesthetically pleasing. See, this is just some. Do you think a guy with 47 followers, no profile picture, and his name is Daddy G? Do you think he lives in his mom's basement?
Yeah.
Probably. Okay. Trash. Love it.
Daddy G.
Yeah. Looks cool. That's the pumpkin model. So again, it's funny. Like online is just funny. How many of you have ever posted something online and you've gotten hate before? Raise your hand. You've gotten hate? Your friends will be like, what are you posting? Right? It's the same thing. If you post online, you just got to kind of expect it. Now, I'm going to teach you something. If no one is hating on you, does that mean you're relevant? No. The only worst thing about not being hated on is not being talked about at all. Because that means no one cares about you.
What is ES?
Whoa.
Don't ever forget that.
What's ES?
ES is the S&P. So there's NASDAQ, was all the tech stocks, NVIDIA, Tesla, SPY. ES is all like the banks and all that stuff. All right? So this is a market maker buy model. I could probably talk 2 or 3 classes on that. Okay? Now, draw a little scribbly like this. Like more scribble, like that. That is a little more what it looks like. We have the original consolidation here. Original consolidation. And then what would this be called right here? And you remember? Starts with an A. This would be accumulation, yep. And that's where smart money is basically trying to get in and pump the market back up. What would be down here? What's this?
All the retail.
It starts with an S. Smart. Smart money.
Technique.
Well, yeah, but smart money reversal. A smart money technique is an SMT. So, but the whole thing itself is a smart money reversal. So the SMT, the market structure shift, the IFEG, that's all a smart money reversal. That is where a bunch of buyers are loading up. All right. So it looks something like this. Now, if I type in market maker buy model on Google, this is what it shows me right here. So this is like a little better picture. See it? Right, we could get a fair value gap here, a breaker block, which I haven't taught you what a breaker block is yet. Right, SMR is a smart money reversal. Here's the liquidity sweep. This is your low risk buy inside the fair value gap after the market structure shift. What could we be bouncing off to the left? What could we be bouncing off to the left? A fair value gap. When could that fair value gap be from?
Like ages ago.
Maybe from the previous day. Raise your hand if you think it could be from the previous day. Yep. Could it be from the previous week maybe?
Yeah.
Could it be from the previous year?
Yeah.
I mean, yeah, that's kind of getting a little far, but could it be from the previous session? Maybe like from London?
Yeah.
Yes. It could be from either three of those. All right. So that's what that is. Okay, breaker blocks. This is where, like, this is getting a little more scientific, but I promise once you start backtesting this, it'll come so easy. Like, this is like information overload at this point, but then when you start backtesting, you'll start to see all this. A breaker block. No, I'm not doing that. A breaker block is a failed order block. Like, it's a failed order block. Every single PD array there is can technically be an inverse. Raise your hand if you understand that. Everything could be an inverse to the opposite side. So if you think if a bullish order block completely gets wrecked, what do you think is probably going to happen? Well, an inverse order block, which is called a breaker block. But there's a special set of rules that comes with a breaker block. It's when a bullish order block breaks, but the bullish order block has to be a swing low or a swing high. It has to be a pivot point, okay? So write this. Breaker block equals failed order block, okay? Breaker block equals failed order block. And then write the order block must be a swing point. And then write there must be a liquidity sweep. The liquidity sweep is always the most important thing.
The order block must be a swing point and what?
Yep. And then there must be a liquidity sweep for the breaker. If there's no liquidity sweep, it's called a mitigation block. That's a 7th PD array, but we're not talking about that. That's like, I don't even use that. There's so many PD arrays. All right, so this is going to be really confusing. Do you guys raise your hand if a lot of these words are confusing? Like, if you looked at this, you want to read that? No, I wouldn't either if I was in your position. My job is to try to simplify this for you guys, all right? So what you have around in your notes is just think this. A breaker block is basically an order block that fails, and the order block must be a swing point, and there must be a liquidity sweep before. Let me just show you an example, because it'll help visually better instead of reading all those damn words. Who knows the meme where it's like, happy for you, bro, not reading all that?
Yeah.
That's what I would send if someone told me that on Twitter. All right. All right. Oh, I see one right here. See it? See how it's an order block initially? See how it's an order block for us to go up first? And see how we close back below it? Now this is resistance. But what makes this an actual breaker that I just told you right in your notes? It's a swing point. See how it's a swing point? Now, do you think you're going to understand this fully right now? Do you think you're going to understand if you do a little more back testing? Probably. The liquidity sweep would be when we take that high out and to the left. There'd be like 2 liquidity sweeps here, basically, right there. So that would be a breaker block. Take a picture of this. Now, could you theoretically name this anything you want and not a breaker block and be funny? Sure, but.
No, that'd be like.
So it's when we get an order block at a swing point, we go up and take liquidity once that order block's formed, and then we go re-inverse that order block. That tells us we're going to go down, and this is now going to be resistance, and we're going to keep going down. If we know the market's going to go down from there, can we theoretically print money out of thin air? Oh yeah, we can print a lot of it. All right. We can literally click a buy button on our mouse, or we can literally click the sell button with one click, wait 10 minutes, click the buy button with one click, and in 2 clicks, I'm up $1,000. Yo, raise your hand if you think $20,000 is a good salary for the year. All right, raise your hand if you think $60,000 is a decent salary for the year. All right, what do you guys think?
Like 190.
Like maybe you're 25. What do you think a good salary for a 25-year-old would be?
Wait,
to make per year.
But how'd they go to college?
25, yeah.
100.
100K?
That's a question, bro. How'd they go to college?
They went to college.
Oh, like
I'd say like 140.
That's like
really high. No, it's not.
So some of you have really good sense of money. Some of you are, I'm not going to say that word in here.
Spoiled, yeah.
Little spoiled.
You just graduated college.
I would say if you just graduate, $60,000 a year to $80,000 a year is a pretty decent salary to start.
100.
I didn't say 190.
100 by maybe like 30 or 35. If you're lucky. You know how much a teacher makes a year?
They make like 80.
Like less.
In my school district,
A teacher makes like $50,000 to $60,000 a year. A principal makes like maybe $100K a year.
my principal makes 250K a year.
What?
How much would you say, like, about?
How much do I make a year? Want me to tell you how much I make a month?
Yes.
No, a year.
I make over $100K a month.
Oh.
Yeah, that's so.
The average teacher salary per year is about $60K.
Well, you make over 100K a month.
Yeah, well over.
So that's like.
So you make
you make like at
million.
least $1 million a year.
Yeah, easily.
Yeah, bro.
All right. The reason why you have to understand the concept of money here is because it makes you realize how powerful taking $500 a day in a trade is and stopping. There's 252 day trading days in a year, okay? If you can be green 200 of those days and red the other 50, we'll do 200 times 500, that's $100,000 a year, but then minus that by 50 times, let's say you lost $300 a day. 15,000. Okay, let's say you lost
Wait, how much on each?
more. Let's even say you lost more than that. Let's say you lost $500 a day. So 25,000. $100,000 minus 25,000 is 75,000. So by taking $500 per trade, 200 winning days a year and 50 losing days a year, which is what win rate? About a 75%. Well, yeah, a little less actually. It's above a 60% win rate, so about a 60 to 70% win rate. You can, by clicking 2 buttons on a mouse, you can make well over what a teacher's making for working 8 hours a day, talking to kids, and meanwhile, you had to sit on the chart for an hour a day just to make that 500 because you knew where the New York session was going. All right, isn't that pretty amazing? All right, and that's why like this is going to be so powerful and why this is so addicting to try to make this work because. Dude, like if you go to McDonald's, you know, you don't think anything of it, but you get a drink. The worker in the McDonald's is making about $12 an hour. working 8 hours. Oh, it's 20 here? Okay, 17, minimum wage, whatever it is. Let's say they make $20 an hour, okay? So after 1 hour, they made 20 bucks. Now watch,
$20 an hour for past 2 weeks.
now watch this. If I go into replay mode and I see this on the 5-minute time frame, and I think, oh, we have a breaker block, we're going to go down at least the low. I'm going to short this with 1 micro, which is the tiniest amount of micros you can get in with. In 5 minutes, we are up $200. Well, it takes a McDonald's worker a whole hour to make $20. And meanwhile, I'm just sitting in my chair like a fat ass who just clicked the button and made that much money in about 5 minutes. And then full TP hits, 400 bucks in 15 minutes, and I'm done for the day. Repeat that 200 times a year, you're green, because my strategy should get you there. And then 50 red days, because you're gonna have red days too. You're up about $75,000 just from clicking buttons. And that's very small money. Imagine you're risking $1,000 when you get more comfortable, $2,000. Right? Yeah.
If you just take like really safe trades, is it still viable?
If you take really safe trades, like 2 to 3 trades a week, risk like 400 bucks on each trade, you win at least 2 of those trades, lose 1, 66% win rate, that's still like north of $50,000 a year. Which is going to be better than almost every entry-level job, because here's the real difference. The entry-level job, you're automatically working 9 to 5 that whole day, working for 300 bucks the whole day. And I just showed you can make 200 bucks in a click of a button in 5 minutes with the minimum amount of micros that you can even enter on futures. All right? Do you guys see why I needed to make day trading work now? I was not going to work. I was not going to work, dude. So that's like my whole motivation behind this, and that's going to be a little bit of a precursor for a psychology talk tomorrow. I'm just going to talk straight psychology, you know, my struggles as a trader and when I, you know, everything, okay? So that's, you guys need to understand that if you want to be more motivated to learn this, because some of you are going to wake up after hearing that, all right? But I can't force you to wake up. Again, if you're not passionate about day trading, you're not passionate about day trading, but just know you're missing out, all right? Especially if you can make this work. Now, we're not going to go over mitigation blocks. Mitigation blocks would basically be if we did not have a liquidity sweep. Don't use these. So like, this might be a mitigation block. So now this breaker block turns into a mitigation block because we didn't have a liquidity sweep. Make sense? Basically what it is. Don't worry about that. So, write this down. We're going to build a trading plan. Right? My trading plan. All right? We're going to write my trading plan. So, step 1. We're going to look for where stop losses are resting. This should be part of everyone's trading plan. Find where stop losses are resting. All right. Now, this step 2 is find an entry model to get there. What's an example? What could be an entry model? That's not an entry model. Yeah. An IFEG, which is mine. What else?
Order block.
Order block. What else?
Liquidity sweep.
Liquidity sweep. What else?
Liquidity. Equal highs.
That's where stop loss are resting. I didn't tell you this yet, but a liquidity sweep is an entry model. It's called the turtle soup. It has a lower win rate, but theoretically you could bottom tick using liquidity sweep. So you have to have tight stops, and that's how you get like 10-hour plays, but lower win rate. So IFEG, order block, fair value gap. Those 3 things, you look for an entry model. You have to pick which one resonates with you, all right? And then 3 is scale along the way based on what the candlesticks are doing and manage your risk, all right? If I'm in a trade that's in profit, what's one thing I would do to manage my risk? Move to break even, right? Because if I'm right about the market and we're having high momentum candles, should those high momentum candles stop or should they go run that liquidity pool? Yo, did your trade hit?
Yeah.
I know. Good job.
It doesn't deserve everyone.
Yeah, pipe down, G. This guy's just saying stuff at this point. All right. Raise your hand if you need more time. What?
Wait, let's take a pic. Go back.
Raise your hand if you need more time. So we must have, so now write this, must have a sweep of liquidity. This is a lot of words. We don't like words. We want to simplify this, all right? I already explained all this. I mean, take a picture of it and look and maybe use it as a guideline, but we must have a sweep of liquidity, stop losses that need to be run. Stop losses, write this down. Stop losses that need to be run equals draw on liquidity. So we need to have a draw on liquidity if we're going to try to find an entry, which is the same thing as stop losses that need to be run. So stop losses that need to be run is just basically means draw on liquidity or DOL. So if you hear me say DOL on Instagram, that's what I mean. Okay, ready? And then must have your entry model. An IFG, fair value gap, whatever you're most comfortable with. Some of you are going to like order blocks better, but I've back tested it and I think IFGs are the best. So, the most important takeaways. We have one slide left. All right? Gem 1. It's hindsight until it isn't. You're going to find SMTs look very obvious in hindsight. It's not going to be as easy to spot in live time. Do not trust anyone posting them after the fact. Market maker models. The last 50% of a market maker model is tradable in live time. The first 50% is mostly hindsight. So I like to draw market maker models on Twitter, but a lot of that's hindsight besides the last 50% of the curve. But that's where I catch a piece of the pie to get in. All right, you only trust a signal after price confirms it, so you don't enter before a close above an IFG. Okay, wait for the close, and then maybe an SMT could be your trigger. Same applies to propulsion blocks, IFGs, everything. All right. Gem 2, you only need fair value gaps plus highs and lows. Okay. You don't need any indicator, anything else besides fair value gaps and highs and lows. You could create a whole trading model around that. Fair value gaps, highs and lows. All right. And then my third gem is repetition / screen time, and just doing a lot of back testing is going to be the only way to master this. If you sit up here and you think this 36-hour course is going to make you profitable, all right, you're full of BS. That's not going to help. Experience is the best teacher. All right, I'm only a guideline to help you, okay? You're going to have to go on your own after this. And that's where the real work comes in, all right? Or you can go work for someone and have a boss and they can tell you what to do all day and you can be a little dog. That's fine too. All right? They'll be like, good boy, go do your paperwork.
Good little boy.
Good little boy. Who hates being told what to do? Probably everyone, right? This is why you day trade. No one tells you what to do. I have a food review channel and it's at about 7,000 followers now, and it started blowing up because I started making food videos a couple weeks ago in my hometown in Rochester, New York, which is where I'm from. And basically all my videos were getting like 100,000 views because I was reviewing the restaurants, and because our town is so niche, everyone sees me on the For You page. So I would go to any restaurant and everyone would know me. The kitchen would stare at me and be like, oh shit, like he's about to probably, because I talk a lot of shit about our food in my hometown because it sucks. But I will shout out the good restaurants, so I'm very honest about it. And they hate to see me coming in because they're like all nervous. So all the managers come fill my water. All like the owner of the restaurants come and talk to me. But anyways, like I have that. So I do that for the food review channel. All right. Where was I just going with this? What was I talking about before?
You were talking about food. You're talking about your food.
Wait, before that.
This? Oh, experience like whatever.
Dude, there's something. What? Oh, yeah. Not getting told what to do. Okay, so basically I went to all these restaurants, and I went to this one restaurant. It was like my golf course restaurant, and I absolutely shit on this restaurant because the service sucked, whatever. The owner of the golf course, who has a big ego in our town, fires random employees for no reason. I basically saw their group chat messages who were like talking crap about me coming to the restaurant saying some guy came in and said that service was terrible, whatever. Basically, someone from the group chat, because I know people who work there because that's my hometown, sent me the screenshots. And basically the owner immediately fired like 2 people who sent me the screenshots and say they're no longer working here because he somehow knew they sent the screenshots. Anyways, this guy is very controlling. But does it matter what I post since I'm not working for him? No, but if I was working for that dude, I would be screwed. And that's what sucks about social media or posting anything in general. If you're working for someone and you post something, anything controversial on social media, you're screwed. If you truly want freedom of speech in life and truly want freedom, not working for anyone is going to be the only way to do it. Because I can literally post anything I want. No one's telling me what to do. No one's telling me what to post, not to post. So it's the greatest feeling in the world. Yeah. Rochester, New York. Upstate New York. All right.
Wait, where are you from?
Upstate New York.
Wait, what city? Where are you?
All right. The golden rule.
What's your social?
Yeah. What's up? Why do I call myself Dodgy? Basically, it used to be an old nickname that. My old nickname used to be Doogie, which was kind of in middle school, and then it went to Doogs, and then in middle school, me and my friends created meme pages, and it was always an adjective and then our nickname. So I looked up adjective that started with D, so I named my page Dodgy Doogs, and then people started slowly calling me Dodgy instead of Doogs, and then I made it my gamer tag, and then it just stuck from there.
Your gamer tag is the Dodgy.
My gamer tag was Dodgy the Legend, but yeah.
So you're like a good dog.
What's the what? DD stands for due diligence.
Dirty dog.
But it was better for when I did penny stocks because you actually have to, you know how like when you think of day trading, did any of you think you're going to come in here and start researching about stocks?
No.
Okay. I'm not going to lie, guys. There was another day trading course before this semester one. My friend did at Stock Market Wolf. His name is Andrew Diaz. He did a day trading course exactly like this one, but he trades very different. Okay. He researches the stocks and like looks at their like PE ratio and all that BS. And no hate to him because he is profitable and he's made probably $20 million doing it. But it's a lot more work.
Wait, so has he made more than you then?
Probably, yeah.
Oh. How old is he?
He's like probably 40. Yeah.
I heard the last professor would give the students money so that they could.
No, that's no. So basically, would that be more boring or more fun for what I was doing?
Boring.
Probably more boring. Just researching companies. Oh, this company should go up because of PE ratio. What's going to tell us we're going to go up?
The market.
The candles and how they form and the momentum and how we get the market structure shift. I don't care what the technicals are, guys. They don't matter. So one of my rules is I try not to long with equal lows below. Why do you think that's bad? It's going to go down in equal lows and you can get wrecked. And yeah, so this is like my one major rule. Occasionally I will not follow this rule, but it's like very discretionary. But this is a very important rule at the end of your journey. And yeah, that's going to be it for the slides. So,
Business casual one?
what?
You want a business casual one?
Business casual, sure.
No.
Yeah. So that's gonna be it for the slides. What time is it? So the last 30 minutes, we're gonna do some back testing and start putting this into practice. This is where you're gonna. Wait, I have one more thing to say for now. I have been trading since I was 16, which is about 8 years. Okay, let's say 7 years because I just turned 24. All right.
Wait, you're 24?
I just turned 24. Yeah.
You're Solo's
I think
age.
you're like 26.
What?
He's Solo's age.
You look older.
I do. I hate being old, bro. 24 even feels like I'm old.
When are you getting married?
You ain't my girlfriend yet, bro.
All right.
Damn.
Dude, girls in my age are hard, bro. All they do is drink, party, and do nothing, and lay in bed all day. They lay in bed all day.
What if he wants to?
Or they sleep in the back of class.
Yo, you
Right?
guys ever thought of this, bro? What if he wants a
All right, listen.
What if he wants a boyfriend?
Yeah, exactly. Thank you for inclusion.
Yeah, actually, I have picture evidence, bro. Yo, what's this?
Dude. What was I just saying, bro?
How you might want to date him.
What was that? I was just saying. Shoot.
You're saying stuff about everybody. Girls, you're
No, it was before that.
Oh, back testing and everything. Oh, you said you were training for 7 years.
Oh yeah. So I've been trading for 7 years. I look at the market from about 9 to 11 every day. Okay, so that's 2 hours a day. There's 252 trading days in a year.
9 to 11. Yes.
So 252 trading days in a year times how many years? About 7. I have looked at the market for this many days for about 2 hours. So
Well, that's a lot.
I probably have close to 4,000 hours of just watching the market in general, because some days I watch it more than 2 hours, but always minimum 2 hours, okay? Plus, I probably have another 2,000 to 3,000 hours back testing, okay? Plus stuff like this. So I probably have over 10,000 hours in trading and day trading in general, okay? You guys are not, until you're at like 2,000 to 3,000 hours, this is not going to be secondhand nature to you. Like I can literally go in a chart right now and find a market structure shift for a rally gap liquidity sweep in about 0.5 seconds and just see it. Okay, but this takes about 3,000, 4,000 hours to even get to, and you just have to understand. Don't actually think about that. All you have to do is show up every day, be disciplined, look at the market. You know, it's going to seem really slow. Like when you show up every day and look at it for 2 hours a day, it's going to add up over the years. But that's called screen time, and that's like the next most important thing. Okay, so just don't forget that. So we're going to do some back testing, but before you guys get out your laptops, tomorrow I'm going to come in the morning. We're going to do live trading tomorrow for 2 hours.
Yes.
I'll try to catch some trades maybe, but it's going to be hard because why is it going to be hard? Based on what time we come in.
It's not like it's no morning.
Yeah, it's not the near kill zone. It's kind of after the morning. Okay. And then the last session tomorrow, I'm just going to kind of talk about my day trading journey and my struggles and answer questions from you guys, basically. So, all right, everyone get out your laptops. We're going to do some practice and put this into perspective and put this into practice. We're going to try to take maybe like 3 to 4 trades before 3, and just see if you can win or lose, see what your win rate is, see if you can catch some moves, maybe 1 2 hour plays. Doesn't matter, honestly. Maybe MNQ. If you do not have a FxReplay, maybe go work with someone. We are doing some live trading today. We've just entered a live trade, all right, as you can see. Now, I have you can't see how much I'm up or down. It's in ticks. How many ticks is in a point? 4 ticks in a point. Okay, so I'm going to explain this trade in a second. You know, whether it's a win or loss at this point, I don't care, right? Because we are what? We're not traders, we're risk managers, right? What do you think turning off P&L maybe helps with a little bit? P&L is like how much money you're up. Why do you think being on ticks instead of seeing the dollar amount here might be a little better for psychology? No, not so you won't revenge trade, but so you won't be like, so you won't know how much you're up or down, because if you know you're down like $1,000, you're probably going to be scared. But if you don't know how much you're down, it's easier for you to follow your what? Yeah, if you don't know how much you're up or down on a trade, it's way easier like psychologically. So, all right, now someone come up here and tell me where the liquidity is that I might be targeting.
Thanks for the liquidity.
So someone come up here in my chart. And by the way, everything I do is on paper. This is not financial advice.
Where's the liquidity we're sweeping is what you're asking?
Why am I targeting up there? All right.
Because there's stop losses.
Yeah, but show me where.
Oh.
By the way, it's 12:54 p.m. This is not a kill zone, so it's not a good time to trade, but we're going to try to trade anyways. And even if this does lose, it's going to be good to see, me manage my risk and how I handle the loss, all right? So can someone come up here and try to find the higher time frame draw on liquidity I'm going for? You want to come up? I'll give you a hint. You really can't see it right now.
Wait, aren't you just going for like the top of your
Yeah, if you guys look at your own trading view charts, you might be able to see it.
All right. You have to go to higher time.
Who thinks they know what I'm talking about on your own trading view charts? Anyone see it? All right.
Can I stay here, or do you want me to go back?
No, you can do whatever you want. Why do you think I'm trying to target higher? Okay, why there though?
That's all the stop loss is.
Okay, but that's just a singular point. Do you think there's another reason I might be going for the high? There you go. All right, what did he just draw out, guys? He just drew out equal highs. So, do we know where stop losses are resting right now? Yes, the equal highs. So, now that we see the equal highs, and what time frame are you on? The 15 minute? We go down to the 1 minute, the 2 minute, and we look for our entry. What am I entering off of here? Yeah.
I looked at the church last night and there was like a triple bottom at the, before the session. And they used to like never like trade or like equal lows.
Yeah, see, that's where it gets a little subjective. Yeah, we have a triple bottom at the low of day today. That will be safe for later, but we should go up and then go hit it later. So why am I entering there? There's an IFG and a what?
And an order.
There's like everything here. All right. So the IFG is marked. You guys see the bearish for value gap? See how he broke above it? So that's the first reason I'm in the trade. The second reason is where's the fair value gap? Mark the fair value gap.
Right here.
That's a bearish fair value gap. That's an inverse.
Oh, right here, bro.
All right. So there's a fair value gap. So that's another entry model, which I could have gotten in when we pulled back into there, which I basically did. I just got in on the closure. And now mark the liquidity sweep.
Here or here?
I don't know, mark it. There you go. And there's the liquidity sweep. All right, now mark where the mark the market structure shift. It's subtle, but it's there.
Is it like right here?
Exactly. Right there. There's a market structure shift. So see how we have, good job, you can go sit down.
That was like deserved an air once movie.
All right, so see how we have a high, a lower low, lower high, lower low, lower high. See how we break that last lower high? Right there. So, we broke the last lower high. There's our MSS. Okay. And now we just, what do we do now? We just watch and we just don't do anything. Now, do you think it's probably a good idea to go break even yet?
No.
Probably not. We're barely up. We barely moved. What might we want to see to get a break even trade or to go break even?
A Drake candle.
A what candle? A Drake candle? Yeah. Honestly, if you got like a Drake candle up here that maybe like closed way above this last lower high there, then I'd probably go break even. But is there really much I can do right now besides manage my risk? No. So we're just gonna wait. We're gonna watch, and some of you, if you were in this with live money right now, your heart would be beating because you don't trust it enough yet. But after trading for years, you just start to trust this. Now, remember that the model with the arrows or the lines I had you draw, like just an example, market structure shift, liquidity sweep, whatever. This is literally just what I've been having you guys repeatedly draw, right? Who is this in their notes? right? Who is that in their notes? Raise your hand if you have that in your notes. Right? Everyone should have that in your notes. Literally, we are just looking for this, a reversal with a liquidity sweep, go below this low, maybe an IFG here, and then a market restrictor up there, fair value gap there. Right? It's the same. Do you guys see how it's the same thing? It's the same exact thing, okay? Now, right now, we are actually engineering a little bit of tinier stop losses or tinier trend line liquidity, which is right here. See it? See how you have like a little tiny trend line here? Yeah. So this tinier trend line, I mean, it does give me a little more conviction. We might pop over here, and then maybe I'll go break even if we hit there. But hopefully we don't reject that. Sometimes we do reject trend lines, but we don't trade trend lines like that because we know there's stop loss above them. And that's where you're going to get like hopefully these little pops. So now on a scale of 1 to 10, oh, there it is. See, there's the pop. See how I just said that was going to happen? Because we had all the stop loss at the trend line. What is that called again? When we hit that high? Starts with a D. Domino effect. Remember when we had this mini trend line being built and we had the lows here, we had the low here or the high here? We'll domino over there. So now, do you think this would be a little better spot to go break even? Yeah, I'd probably go break even here. So we're gonna now minimize my risk. All right. Remember, this is in live time. This is not hindsight, guys. Minimize my risk to break even. All right, which I can't move this. What in the world? Oh, there we go. So stop to break even. All right. I'm currently up. I'm up 40 points, and I'm in 2 NQ contracts. How many points am I up? Or how much money?
2 contracts.
I'm in 2 minis, and I'm currently up 40 points here. How much money would I be up? What? I'm in 2 minis, and we're at 40 points.
No, 1,600. Triple.
I'm currently up $1,000 and $1,600 right now.
Good job, man.
So I'm up $1,600, but now we're gonna move my south break even, and we should just pump here, okay? Now, do you think it might be a good idea to take a contract off here? Maybe take one off here. Yes, I would probably think it's a good idea. You can kind of see there's a fair value gap over here, and this could be a what? A speed bump, right? So could be a speed bump. Now, what's cool about this is there's also a fair value gap here. See this fair value gap? So could I maybe trail my stop loss even a little higher if we broke this inversion fair value gap? Yes, because we broke this one. Now we just broke this one. Do you think we would probably be screwed if we went back below this one now? Yeah. Which held as resistance 1, 2, 3 times. And we have a Drake candle over it, all right? So again, now we're safe. We shouldn't be nervous anymore. Does anyone know how to take partials? Raise your hand if you know how to take partials. Anyone? All right, so to take partials, basically I'm in 2 contracts right now. What you do is you click this plus button where you want to take a partial, like here, click the plus button. You click sell 2 contracts here, and then you just change this to 1 instead of 2. So now I'd only be selling 1 contract if that hit, all right? Also, here's my executions. You can see that's a lot of time execution, right? Now, we were just up $1,600, and now we're still up $1,600 here. Do you think it might be annoying or maybe piss you off if we went down and stopped you break even if you were up $1,600? Yeah. And psychologically, you have to overcome that. That sucks. So we're up a pretty good amount right now, but we're following our what?
Plan.
Yeah, we're following our plan. We think price is going to go up. Now, what are we inside right now? What do we just tap into? Yeah, we have another fair value gap. So theoretically, if I'm right, should this higher fair value gap keep pushing us higher? Should that keep pushing us higher? Yeah. Now, would this be a worse entry or a better entry than the one I'm already in? If we were to re-enter here, would this be a worse or better entry?
Better.
Why a better entry? Why would this be a better entry?
Oh, there's an FVG.
Okay, you're guys. Would this be a worse or better entry here?
That'd be a worse entry.
Why a worse entry?
Because it's not as strong.
No, is it not me?
Why? What do you think? Yeah, we're higher now buying a premium. If you could have entered here, there's more risk automatically of you entering here because this is a break-even trade yet. No, this is not a break-even trade yet, okay? And again, everyone should be, hopefully everyone on paper trading is in this with me right now. But again, this would be a worse entry, but I still want to see it hold for my position because if this holds, that's a good sign we're going to keep pumping up, all right? So again, we're just going to wait. It's 105, and so far the fair value gap's holding, so it looks good. There's a little tiny fair value gap here too. Again, you can see this is a speed bump right here. See it? See how the bodies are respecting this tiny. Well, we did close above it actually. Never mind, I take that back. So the body did close above that, so it really shouldn't matter. We should pump here. Now, what happens if we close above this candle right here? What would that be? If we close above this down close candle, what would this be? It would be an order block. Now, is this an order block yet? When does the order block confirm? When the candle closes above what? The open of the down close candle. So here's the open of the candle. We must close above it, and then this should act as what? If we close above this line should act as, it should act as a trampoline or support, right? So you got about 30 seconds to the close. It should just keep going up here, all right? So now this will probably be turned into an order block. We don't know yet, but it looks like it will. And then that should act as a trampoline. Hit our first TP here. And then, yeah. Let's see. Okay, that was a good order block. It wasn't a strong candle close. Do you guys agree that wasn't really a strong candle close? Because it's really wicky at the top. So, not the greatest price action, but does it really matter? No, what matters?
Our plan.
Our plan and risk management. I physically cannot lose money here, guys. I'm literally up over $2,000 right now on this trade, and I cannot lose money.
You're better than.
If you guys saw $2,000, do you think you'd sell? Yeah, because that size is too big for your mind to comprehend right now. But no, that used to be me too, though. You start to grow into it.
Look, it's dying.
Yeah, so now we're dying because the candle close kind of sucked there, but
That's no.
again, we're just gonna wait.
Wicks did the damage.
Now, do you think this would be much more entertaining if you could see how much money was up and down instead of the ticks?
Yeah.
Probably, but this isn't supposed to be entertaining, and you're not supposed to be emotional based off how much you're up or down. That's just gonna just kill you and destroy your trading. All right, and that's the boring part. So, yes, it's cool. We're up about $2,000 right now, but it doesn't really matter. What matters more than money amount? Well, sticking to the plan and starts with an R. Your risk to reward. All right. Do you guys think this is a pretty good risk reward play? Yeah, this is good. Remember I said on the first day, if any Furu shows you this in hindsight, they're full of it because it's so big.
Can we get a free funded account?
Obviously, like I've been doing this for a while, so I can show you this in a lot of time, but most people can't, all right?
Can they get a free trading account?
No.
Yo, you said you were giving them away though.
Make sexual jokes.
Apex told me not to give them away here because too many people under 18.
I'm 18 though.
I know.
I'm sure Apex won't hate you if you give away one.
Well, I don't want to get in trouble, bro.
I'm sure he doesn't want to give them one.
Again, we're just gonna watch and just chill here. Now, do you think it'd be a good idea to maybe like be, playing a video game while you're in a trade?
Yeah.
Yeah, if you once you move stop to break even, you could go for a walk, go for a run, do whatever. Some people don't like looking at their trade. Like some of you, if you watch this in live time, you might be really emotional because it's funny. You're literally seeing the numbers go up and down so quick. Like all of a sudden you're up 400, down 200, up 400, down 300, up 200. And you're like, and it's like, it's just very new when you're going up and down so much money so quickly. Because it's not like you work a job. When you work a job, you only get money, and you get money every hour, like 20 bucks an hour, 30 bucks an hour. Here, you could be up 500, up 300, up 100, up 500 again. Do you guys think your minds are used to that?
Yes.
Hell no. Not yet. Unless you're like a professional gambler at a casino.
Oh my god.
I'm a road runner. Do you gamble?
No, I hate gambling. I'd rather put like $10,000 on a setup like this that I know I have an edge on. Like I have an edge here. Why do I know I have an edge here? This hopefully working out.
You know what, look, you don't know it either.
Why do I have an edge?
I think a lot of people are selling.
Yeah, right now.
Because you have experience.
I have experience, but what did I do to gain an edge?
Screen time.
By doing what?
Watch.
What's practicing?
Practice
Looking at them more.
We did it yesterday.
FxReplay.
Yeah, by back testing and seeing my statistics, how much I was green, how much I was red.
Green FM?
All right.
Real screen time is.
Wait, why is your thing dodgy FM? What does FM stand for?
Fortnite.
Why are you laughing?
Again, this isn't looking the greatest right now. But does it matter? No, because my stocks will break even. And sometimes this will just happen.
I'm gonna put another million.
Okay, this is pretty trash here. Do you guys see like how if we entered in this fair value gap, we still would basically not be in profit, versus here I'm already way in profit. Yeah. So it's like just less stressful. That's why entering higher kind of sucks. So. Not really what I want to see, but can't really control this. Now, look at this. We just put in, so we had lower lows and lower highs. Here's a higher low, or higher high, higher low, higher high, higher high. What do we want to see put in here? A higher what? Yeah, we want to see you put a lot higher low in here, okay? But Again, this is getting really like lethargic. What does lethargic mean?
It means like lazy, boring.
Lazy, boring, slow. But again, I'm not stressed. My stops are break even. And again, when you guys are in your trade yourself, you're going to be like, you're going to be freaking out, I guarantee you. If 99% of you tried entering this trade right now with real money, you wouldn't be able to do it. But you will after practice. Is there really much I can say right now? Yeah, not really. It's just whatever happens, happens. This is why live trading is so funny, because like I try to make up stuff to say, but sometimes I can't. This is what trading is, guys. Can't really do much. Now, let me ask you a question. If you were a long-term investor trying to buy long-term stocks, for maybe you guys who want to long-term invest, could this chart theoretically look the same exact way in a weekly time frame? Yes. But we happen to be in a 1 minute chart right now, so the candles are going to close much quicker. But this could have been a weekly time frame. Do you think if I showed you a random chart and I didn't tell you the time frame, I didn't tell you anything about it, you would be able to guess what time frame I'm on?
No.
Probably not. It's very difficult. All right.
I would. I'm just thinking.
Sometimes, if you're in like a really low time frame, sometimes you can see by the candles, but.
Wait. Are you paper trading this, or is this real money?
No, this is just a paper trade. I can't legally like take real money in front of you guys, because I don't want to get I don't want to be liable. So I just say it's for entertainment purposes. How many people are in on paper? Anyone? Yeah. You're in on paper? Let me see.
I put mine lower.
Oh, it's okay. Nice.
I think it's the same one.
Yeah, same one. I mean, you just didn't get filled. Right, see how you have a limit there?
Like after I was
Yeah, that's fine, that's fine. As long as you see it, though. All right, guys, look. Does this candle look really good?
Yes.
So this should hit, or else I'm, actually, wait, I can't say that here. If this doesn't hit, I'll quit trading, all right? I usually say something else, but it's kind of not appropriate for here. All right, ready? Now, this is more discretionary, but sometimes I might want to place my limit a little higher and then maybe, okay, this is more advanced, but what I'm going to do is I'm actually not going to place a limit there yet because I think we go higher than this. I'm going to place a limit here. I'm going to put a sell stop for one of my contracts only, and I'm going to trail at the high because sometimes if I am right, we will blast through this, and then I'll trail my limit here, and that's where I'll still get out, even if I delimit. So this limit being here and this sell stop being here is still a sell order no matter what. Does that make sense? So like if we go above this line and I have a stop loss now at this line for one contract, that's still a sell limit order. I'm still getting out. So let's see if we blast above here. If we blast above here, I'll keep raising my limit. Remember, we want to feel out the vibe of the candle. Like, is it strong? If it's really this strong here, should I sell probably? Probably not. So we'll see. It's because I think we go higher. If I didn't think we would go higher, I would honestly just take a limit there and that would be it.
Why are they locally respecting this?
They're respecting this high? Because it's trying to fake out, it's trying to create a double top up here. Because it's trying to make retail traders short, which will give us what? Which will give us fuel to go back up. So it's literally trying to trap traders right now as we speak, and then all of a sudden we're going to go poof right through it because traders are going to start to think, oh, this is the double top. If you were a new trader and you saw this, wouldn't you think this is bearish or double top?
Yeah, I'd short that. But
right?
If I was an idiot.
Yeah, if you're a beginner and if you learned off YouTube and had no idea who I was, you would short this, guaranteed.
Oh my damn. Okay. We'll put on the 30-second timer. This is a little boring.
This is what trading is. 30 seconds is gonna say. I mean, 30 seconds is gonna be quicker, but there's another fair value gap here, so I want to see this fair value gap pulled here. All right. All right. Let's see. Okay, so there's the first TP. Let's see if we get like a strong candle here. If we don't, I'm just gonna take off one. So I'm currently up 80 times. I'm currently up about 3K right now. So, okay. So now what I'm going to do is I'm going to trail this stop here, and I'm going to actually delete this limit. So is this the same thing as the limit order being getting out, the sell stop? Yeah, same exact thing. It would still get me out for profit, all right? But I'm only doing one contract here because I want to hold the second one till up here. Now, remember what I said. There's a fair value gap here to the left, and there's a fair value gap here. So I'm going to combine the two. Okay. I'm going to shade this a little lighter. Ideally, if we get through that, we're 100% going to the high. But if we stall here, I'm going to get stopped in profit for one contract, which my stop in profit's at 188. My entry is at 122. How many points is that? 188 minus 122. 66. So how many points would one mini be on 66 points? 66 times what? One contract. 66 times 20. All right, I don't even know what that is, but that's how much money I'm up for one contract. But because we had a strong displacement candle above this old high, is there any point in maybe getting out yet? No, so that's why my stop loss here for this contract. This is more advanced. Like I barely even do this. Low key, I usually just sell here, but I'm trying to like be a little more discretionary right now. I'm trying to like teach you how to read the candlesticks to like see if they're strong, weak, you know. Now, another question. You know how I said like we look for liquidity sweeps at old highs and lows right here? Why would I not look for a liquidity sweep here? Why would I not look for us to sweep this high and then go down again? Yeah, because there's a more important higher one. So maybe out there I would because that's the highest point, but right here I would not be looking for liquidity sweep. I'd be looking for a what? Starts with a B.
Bearish.
Break of structure. This is where I look for a break of structure, not a liquidity sweep, all right? So we're just gonna chill here. We have our stops placed. Again, I'm literally teaching you guys how to print money out of thin air right now, all right? All right, looks like this sell stop's gonna be hit, which I'm perfectly okay with. Okay, so boom. Sell stop hit. I still have one contract left, but it's okay. I just made about $1,300 on that one contract, and we still have one left, okay? So one left's gonna be a break even. There's still no risk. And you can see the fair value gap to the left is still kind of, it's just a speed bump. It's just high resistant right now. So, you know, I can't do anything about it. That's why we trail our stop and we take a partial, all right? Because I don't know if that's going to break or not. If there was no fair value gap here, do you think I'd be a little more confident in us just running up there? If this wasn't here, there wouldn't be anything to stop us. Unfortunately, it's kind of stopping price right now, which that's why I take off one contract for about $1,300. So there's your first TP. Let's see if we can blast up and hit that second TP here. Again, this is literally what trading is, guys. It's really addicting once you get it. Like, it's really addicting once you like go from like 9:30 to like 11. It's just like try to predict like where the market's gonna move, make money out of thin air. 99% of people in the world cannot do what I just did. All right, knowing how to get in there and we shoot up. But I taught you guys the entry model that tells me that. All right. Now, what else could, okay, we could form something here that would push us higher. What might that be? A what? Order block. We could get an order block here, maybe. We'd have to close above these down close candles, though.
Well, are you guys gonna wear something nice? I'm really gonna wear something.
To where?
We're going on the
Oh yeah, I think I'm going on that.
You're going. Oh,
I think maybe, yeah. Look, yeah, I might just wear this. Yo,
hey, invite us to Nobu, bro. Oh my god.
Well, I think I'm gonna go to Nobu Saturday now because I forgot about the dinner cruise.
Nobu.
Yo, do you guys like my new shoes?
I saw you throw away the pants.
Yeah.
This guy threw them away, bro. Threw away shoes.
I was rage bait. I didn't actually.
Yes, you did, bro.
If I make a trade worth the
Yo, do you know where I got these shoes? Take a guess.
Louis Vuitton.
No.
Is it like an actual store?
It's my favorite clothing brand.
It's a kit?
Yeah. How do you know?
I have Kith in my room.
Dude, Kith is so fire.
We went to Kith the other day at Rodeo.
Really? Yeah, that's where I was there. That's where I was.
Stuff, we actually do have pictures.
Raise your hand if you know what Kith is.
Raise
your hand if you know what Chrome Hearts is.
Ooh, Chrome Hearts.
Oh, I love Chrome Hearts.
If you day trade, you can afford all that. But if you don't, then you can't.
At the Win.
Let me see.
Or the
Oh, that's sick.
Wait.
Oh, you took it on the stair, next to the stairs?
If I beat you in ones, can I get a pair of shoes?
No.
You're like worth a shot.
Yeah, bro. You're supposed to spread the wealth, bro.
I do spread I'm literally spreading the wealth right now by showing you guys how to print money out of thin air. Like, I'm literally giving you a life skill where if you learn what I'm teaching you, you will literally print money out of thin air. And you'll have so much money you don't even know what to do with it. That's where I'm at right now.
I know what I'm going to do with the hell of a lot.
Wait, if you don't know what to do with it, you can just give it to us.
Just 5
eval.
Yeah, I wouldn't say my parents.
I wouldn't say my parents are rich. I just say I'm comfortable, bro. But that's not the average salary, but somebody like living comfortably is making
You were in the trade? Let me see.
Yeah. I'm gonna go on FxReplay if I make $1 billion right now.
Did like 3 partials.
Ollie, you're literally rolling.
Okay, so you bought there where I bought?
Yeah.
Right? Yeah, nice. So that's fine. You just secured profit. You know, as a beginner, you might that's fine because low key, you might not have the conviction to go higher.
Yeah.
And that's fine. That's just going to be that's just what happens when you're new. Like, I have so much conviction to go higher here, so I'm holding a runner no matter what because I'm not afraid to get stopped out for nothing. Some of you guys, it might suck because if you're up $1,000 and you got stopped out for nothing after being up $1,000, that's going to fuck with your head. Because you're like, damn, I could have just sold for $1,000. You know what I'm saying?
Yeah.
So up, should you sell or should you wait?
As a beginner, as a beginner, you're going to sell because you're going to be like, you're going to see the money, but you should wait. Like, I'm waiting. But I've also been doing this for years, so it's easy for me to just keep holding. Are you watching it too? Are you watching too?
He was trying to rizz me up yesterday. He was like,
if I beat you in ones, can I get something?
No.
Yeah, that's fair. Bears? Yo, if I can guess your age.
Hopefully I can make my threes today. I just chuck them up and they just go in.
I haven't played in a few days.
Really?
No,
a few days, bro. I haven't played in 2 months. Dude, I don't play basketball anymore.
Me and Terry whooped this guy, bro. Me and Terry had this guy BTA, bro.
Can we stop saying you and Terry?
Terry and I, bro. Terry and I.
Terry's insane.
Terry is insane. He walked through you like you were a ghost, bro. He walked through you like you were a phantom. He just walked.
I weigh like 5 pounds.
Yeah, compared to him, bro. Yeah.
So this straight rally gap looks like it is breaking. Is that a good or bad sign?
I scored 3 points though. That's
Good or bad sign that this straight rally gap's breaking right now to the downside? Pretty bad sign. We really don't want to see us shoot back through this bullish rally gap, right? But am I going to change anything about my position?
No.
No, because I can't lose any money right now. I literally just gonna keep it. All right.
I wonder who made this.
It's not that funny. Looks at worse. Good morning, Terry's the last day, but because of my customers, please make sure you get moves Furthermore, those suitcases must be downstairs, so maybe that's this isn't even okay. Hey, me too. I have $7 in my account. I don't have any money. Yeah, but these are
All right, what's happening right now? Are the bodies respecting the fair value gap?
Yeah.
Yeah, they're respecting so far. The wicks went below, but the bodies are respecting. Doesn't really mean much for my position, but it's something, we call that tape reading. We call that like feeling out the candle, right?
Give me some, bro, please. Please, bro. Please, bro.
I'll think about it. Yeah, what is search?
Really? Good banking. After every single banking. I told DHS, I was like, hey, let them stay in the video. I do that. Please, man, have some.
Let's use AI.
Oh, that's tasty. Good Maria Antonia gave you that. She likes you, bro.
Everyone is
Let's bring that back up.
I'm just doing something right now. Again, whenever I'm like sitting in a trade like this, I just kind of do whatever. I mean, there's not really much we can do. Raise your hand if you think live trading is boring. All right. Raise your hand if you were in a trade at 9:35. It would be not boring. You'd probably be freaking out. Yeah, everyone should have their hand raised.
I'd be going insane.
Dude, because like you gotta realize, like when you enter the market at 9:30, you're not like there's gonna be a move. You're like, how can I print money out of thin air? It's like kind of nerve-wracking a little bit at first.
It costs $10 for everything, so one person gets There's a million. Plus, you might have to pack out those stuff today.
Yeah.
I'll pack up just right.
What's up? Yeah. No, I deleted them. I said make them kiss. All right, so we just closed underneath this fair value gap, okay? So would this be a potential short position now? Okay, so that's a, now we have potential short. Does that mean I'm still gonna I'm gonna change this now? No. But is that ever the right or wrong answer? No. Some of you guys are gonna start trading for years, and you're just gonna cut your trade after you see this short now. And some of you guys are just gonna cut in profit. Okay? Because I've been trading for so long and I have my own experiences, I just still think there's a chance we go for those equal highs, and I'm just gonna trust my stop loss. Because in reality, should you be looking for shorts with equal highs above when we're this close? Remember the last slide I talked about yesterday? Should you be looking for shorts if we have a double top above? No. No, hell no, you're gonna get wrecked. So even though this is a short, I still kind of want to see this for short, or this IVG fail, and for us to go back higher, because what's number one in the market? What's number one in the market? The stop losses or liquidity. And right now, liquidity is resting higher. So even though it failed, I don't really care that much. This should just intraday, this is kind of just chopping around at this point. And again, we're just going to watch and wait, all right? I guess I can use this as a time to see if this speaker works.
Wait, why is this one conditional? What does it mean provisional? Like, you're not fully drivers? This isn't a full driver. You want to say gone?
Now, this is even more advanced, but with this short, okay, this short failing back to the upside, probably be a good sign for my long. So that's like the reverse of the reverse. But we don't trade like that. It's just like tape reading. It's like, okay, we have a short. We want to see the short fail to go higher.
I want a double pump fake.
So it's like a double pump fake, yeah. Okay, so it looks like I might go back up. We'll see, we'll see.
Oh, get Scotty again.
Why don't you take normal credit? It's actually deals. I'll go there. I'm sorry. I like cherry cones.
It is so boring. It's actually not boring, but it like is. Uh-oh. All right, is this a good or bad candle? Not good for our position. But does it matter? No, because I already took $1,300 off the table, so we're up $1,300, and my stops to break even. All right. Yeah, I already made $1,300 in this trade. All right. So this is not good. But the thing with this is, like, if I do get stop to break even, is the draw on liquidity going to change? No, the draw on liquidity still remains the same. So what does that mean? Yeah. Yeah, we'll probably go back up, which means we could get what? Yeah, re-entry, exactly. That's the nice thing about knowing where the market's going to go. And if we don't go back up, so what? I just made $1,300. Boo-hoo, I'm going to go cry in my bedroom with $1,300 on my face. So... to just, again, if we were like if we were in the kill zone, do you think this would probably move a little quicker? Yeah, usually quicker, but it gets slow in the afternoon and. What? Why don't I ever what? Short double tops? Because double tops are where all the stop losses are. Retail traders are shorting stop losses. We do the opposite. So. Okay, this is kind of a good bet. We're kind of holding this bottom for a value gap now. Pretty good self-defense here. Now, do we have another potential fair value gap or an inverse fair value gap here maybe? Could this be like another potential inverse if we inverse this? Yep, we could get another higher entry here. Does everyone know what average up means? You can average up. Do you guys who knows what average down means? Do you know what average down means?
It's like where you keep adding like.
You keep adding when we keep going below your entry. So what do you think averaging up means?
Keep like moving it up.
No, we buy more here. So if I bought more here, my average would now move to here. I don't really ever do that, but you can make a lot of money because if you know this low is now protected and I bought here, you can be in double the contracts, put every stop here and still be in profit. And then if we rip up higher, you can make like 4 times the money. That's how you can make $1 million pretty quick, but you gotta be really good.
Did you play BO2? Probably.
Not really. I played like Nuketown with my friends on the 1v1 map all the time, but that was it. What? And I played gun game a lot.
BO2 came out on PS5, so I bought BO1 and BO2.
So, guys, look at this. This would be cool if this played out, but this could be another very high RR entry. All right, look at that. There's another entry here. It's a this is a 5.3R entry right here. Now, someone come up here and draw the liquidity sweep for this play. You want to come up? So we have another entry here. Take this on paper trading, guys. You should long it. It's 5R. Do you think 5R is statistically pretty probable? No, but that's so you have to basically win 1 out of 5 of these trades to be profitable. But I'm good at what I do, so draw a liquidity sweep, a little lower, right? Yeah, right there. So we swept the low inside the fair value gap, right? There's your liquidity sweep, and then draw the internal trend line liquidity that we're forming right now. It's like tiny, but it's there. Up, no, to the upside. Oh, down, right there. Oh, you had it right there. There's a trend line there. Nope, more 45-degree angle. Yeah, there you go. So, do you see how this is going way up now because the trend line?
Shit, that is like a 45-degree angle.
Yeah. Are you guys in the trade again?
Yeah, I'm good.
I told you to enter. Look, we're already up how much R? Dude, I'm actually insane. What the hell?
Yeah. She's out my league, yeah.
What?
Is that an MSS?
Yeah, we now have an MSS here, but I got in before the MSS. Well, you would have gotten in before the MSS. Now, how much R could you have just made there? 1.5. Would 1.5 R trade there be pretty good?
Yeah.
Yeah, but I'm going for a home run. I'm going to try to flex.
Home run. 20 R. Joke's on you, Rod. We are listening. Airball.
Right, I'm sorry.
I didn't work that out. It looks over.
Guys, if this trade hits, this would literally be insane, and I'll post this online after. It's just so crazy. Like, I can literally call out these big R moves, and like, I would be break even here by now for this, but I'm still not losing money because I can still predict when we're gonna get a good jump and go break even. Because if I'm right, we will pump here. I guarantee it. We'll like just accelerate to those highs.
Notify anyway. Notify anyway. Notify anyway.
So mad.
We should get a. I mean, I want a big candle here. Let's join my. Let's join my Discord and see what they're talking about here. Yo. Ah, shoot, I can't. Yo, can you guys hear me? Did you just alert that entry?
We might be able to get a retrace play.
I think you just did it too.
Target. If not, then that'll probably just be our only trade for the day.
Yo, can you hear me? Yo, can you hear me?
Are we going?
All right, I guarantee you my analysts in my Discord probably just alerted the same entry I just told you guys. So let's see.
And they cleared it for us to go?
All right, Reliable, did you just alert this 1 minute entry? Hello? Dude, why can't you hear me?
I'm paying for the Uber. I need somebody to pay for
I cannot hear you, no. Can you guys hear him? I have my headphones on and everything, so I don't know what that's about.
Half, bro? Are you gonna give me half? Is like $30. Are you gonna give me half for the Uber, bro? $5. Is that what we're gonna do, bro? Boys, why are you going? Hey, don't go if you don't have any money. What? I was like, where's my $2? How much does it cost? Yeah, $62. That's gonna be like my entire budget. This is $3.
I wonder if Sir Dodgy is in this one. I'm guessing he will tell me. Able to figure out his.
All right, can you hear me? All right, guys, so here's Reliable, my analyst live streaming. Reliable, can you hear me? Hello?
How many of you guys are still in there?
Bro, how can no one hear me?
Because the equal highs. I think these are good.
Hello, can you hear me?
Yes, we can hear you.
Okay, so guys, look at this. So, this is my guy, taught everything I know. He just alerted the same trade I just told you guys to take in live time. All right? Say, yo, wave to them, Reliable.
I did. Hi guys, how you doing?
Hey. All right, so you can see how when I teach everyone this, everyone takes the same exact entry? Did I not just tell you guys to take the same entry? And I taught him too. That's going to be you guys by next year, hopefully. All right? What? That's you now? Yeah, right. So, all right, there we go. Yeah, you can say, they can hear you.
Yo, what's good, stream?
Yo, what's good, chat?
Oh, okay. Hi guys. Is Dodgy teaching you a lot of cool things today?
Type 1 in the chat if you
Dude,
think
I literally
Dodgy's
just.
the goat.
Wait, what did you just say?
Type 1 in the chat if you think Dodgy's the GOAT.
Type 0 in the chat.
Yeah.
One.
No one's gonna. These are like older people. They're not kids, guys. So Reliable. I have a question.
Nobody's typing.
Shoot, what was I gonna say? So I called the. So I'm actually in from lower. I called the entry. So I'm in a paper trader now on stream. I took the entry. Yeah, right there. You see it right there. Yep, I took that. So I partialed. Yeah. So I partialed at the high, and I have one contract left.
Nice.
Dude, I'm literally.
Look at the entry I got.
Damn, nice. Yeah, that's a bottom tick entry. So, guys, look at this. These are Reliable's executions. Same thing.
Retrace entry.
See the blue arrow? He got in at the exact bottom, and then we went up.
Do they call him the old one?
No, they call him the Mexican Reliable.
Oh, I'm Mexican, bro.
Hey. All right, I'll see you later, Reliable.
See you guys.
Now, if you start following these traders on Instagram like me, you're gonna see everyone take the same entry, which is kind of cool. But
Wait, I got stopped.
you got stopped out.
Yeah, but I'm still up. I had some good pulls in it.
How do you get stopped out? Where the hell did you enter?
Dude, I sold late.
You can't enter after the actual entry, dude. That's horrible.
Yeah, but I told my girl on free. I was watching my
You can't wait to go back to the UK. Oh, I heard you guys are renting a mansion. I heard you guys are renting a mansion.
Yeah, we're doing a month. After this, I'm 4 days when I'm flying to Europe.
Go random. Are you going to the Are you going to the B&B, bro? How's the body plan? Can I go?
It's like 10 or something.
I found myself out. Never mind. Never mind. Soda? How much was it?
Why are we, guys? Why are we stalling here? Remember, why are we stalling?
Fair Valley.
Yeah, the fair value to the left still isn't breaking. We want to see a lot of momentum to that, but do you see why we partialed here? Because I knew this was going to be like a spot of resistance, basically. And like I said, all right, watch this. Watch this. Ready? If we had this, if it looked like this, would that be a fair value gap now? Would that be a fair value gap? Yes or no? All right, stand up if you think this would be a fair value gap.
Yo, I'll pay for
What'd you say? I like it.
All right, stand up if you think this wouldn't be a fair value gap if the wicks looked like this.
Yeah. Live trading.
I guess no one wants to
showing them
stand.
How to print money out of thin air and have
All right, so if the wicks look like this would not be a fair value gap, which would mean what? Which would mean we probably would not be stalling here, right? But because it is, we just are. So there's so many different scenarios in the market. All right, so this is going to be the final class. All right, we're going to talk about psychology, life, not really the candlesticks too much, my journey, what I think is going to be best for you guys, your next step, everything else, all right? So now that we've talked about day trading, my name is Ryan. Everyone calls me Dodgy Online. Now, the reason I didn't tell you guys who I was in the beginning is because you would have treated me differently if you saw like, oh, this guy has so many followers, and I hate being treated like that. I like when people don't know who I am. About 500,000. Yeah, I have 100K in YouTube, 200K in Instagram, 100K in Twitter. What?
Oh, I did add you on Snapchat.
So it's like, it's cool teaching to people who have no idea who I am. It just feels better and more like genuine because you guys aren't, like some of these guys, they suck me off, right? And it's annoying, you know? It's like if you saw LeBron James right now, you'd probably like freak out. All right.
There'd be a win right as I saw it.
Yeah.
If LeBron would give me an autograph, I would.
So, when I posted a story, I'm like, I just alerted these kids in entry, told them how to make money, and like half of them didn't care. And half the replies were like, dude, I'd kill to be there right now. Like, I can't believe they're not like listening, right? There's all these people who like know who I am and like they'd kill, even tomorrow my event, you know, they're all gonna ask me to take pictures, everything. But I don't like that, right? I want you guys to like see me as a normal person, okay? Anyways, I started trading when I was 16, and the first thing I ever looked up, I was at my dad's house one day, and actually I'm gonna talk about this first. The average age in here is probably like 16 or 17, maybe 17. Okay. When I was like 17 or 18, it was kind of like on and off. And then when I got to like 20, I was like, oh shit, like I'm actually about to have to start working 9 to 5. And it got scarier and scarier as the years went on, and the more motivated I got. And it's funny because if I was in your guys' seats right now, I wouldn't have probably fully paid attention yet, but like the scarier and closer you get to like actually working a real-time job, it'll really scare you. And when it scares you, you become more passionate about doing, okay, how can I make money? I need to make money now. Whereas now, for some of you, it might seem a little far away. You're 15, right? Yeah. So you don't really have to worry about much in the next 3 years. So it might be hard for you to be scared about a job, which might not push you as much as if you were like older. Does that make sense? So as time went on, I started getting 19, 20. I started doing day trading more. I wasn't like looking at the markets every day. But by the time I was 20, I was constantly looking at the markets every single day because I was scared as shit that I was going to have to work a job. And I was like, dude, I can't do this for the rest of my life because I saw how my parents, you know, went to school every day. My mom was a psychologist, and she came home, literally watched, she watched a soap opera, eat dinner, then go to bed. All right, and then repeat the next day. Then the only time you have off is weekends, and that just sounds miserable. So I was on my dad's couch one night, and I typed in how to make money online. I was 16, because I started to have the feeling of, okay, I'm kind of 2 years away from high school. Like, I kind of got lucky I started this a little earlier. But I'm like, it was when I was a dishwasher. I started off as a dishwasher, and I learned to love things a lot. So like, I learned to make things fun, but at first I hated it. How do you make a dishwashing job fun?
Hey, you make a game.
You make a game out of it, or you have your friends work with you, and then you mess around with your friends. So I started doing stuff like that. I learned to love it, even though I hated it at first. But the closer I got to high school and graduating, I just became scared that I'd like have to work for someone or something in my life. And working as a dishwasher, I had a boss telling me what to do, and I just didn't like being told what to do. And that like started my motivation, okay? So I started watching YouTube videos on and off. I wouldn't do it every day because I was in like kind of the same boat as you guys. Like I wasn't sure if I was going to do it, but I like kind of wanted to look into it a little bit more. So I would probably watch YouTube videos like 2 or 3 times a week, all right? And, you know, as years went on, it would be like, it would go from 2 times a week to 3 to 4 because it kept getting scarier because I was getting closer to actually having to work a job. And that's what I didn't want. So I literally typed in how to make money online, went through all the videos, and day trading appealed to me the most because the thumbnails looked the best. They just looked like a video game. And I was a semi-professional Fortnite player. I had earnings playing video games, and I didn't really have that much, but I was really competitive already, so I wanted some way to like make money online. Because imagine you play a game, and like imagine you're playing chess, and all of a sudden you get $1,000 to your bank account for like winning a match. That's basically what's happening in Fortnite. So it was like super cool. I was like, damn, I can really make money by playing with a controller. So I wanted something similar to that. And the only thing I found was really day trading. Drop shipping, you have to do a lot more work. You have to like buy physical products, sell them. There's a couple other things that I'm not too educated about, so I'm not going to speak on. Like there's wholesaling and just other stuff that people do online. Who knows Brez Scales? Yeah. So Brez Scales, he's not, like he's legit, but he does something called brand scaling where he basically has a whole sales team and sells people anything. If you can sell people anything, you can do anything in life, right? Brez is a really good marketer, right? He can sell you stuff, okay? And I was never a good salesman before, and now I am. I could sell you guys on anything pretty much, but I literally just started watching day trading videos, and I didn't really get it at first. I started watching all the videos about indicators, and my first thought was this. You know how like indicators I was showing you, like they kind of give you a signal on when to buy or sell? Like remember the MACD, I said when if it crossed over, it'd be like you buy. I thought that if I combined like 10 indicators and they all gave me a buy signal at the same time, I would be 100% win rate and never lose money. That's what my initial thought. And I was like, oh, this will be easy. Lost a lot of money trying that. Okay, not it. I started with penny stocks. Does anyone know what penny stocks are?
Like the little companies.
They're really little companies, okay? They're called small caps, and they're below, I think, 50 million evaluation, I think. And then I think mid caps are like 50 million to 100, and then 100 plus is like large caps. But I used to trade penny stocks where I was taking shares of like dollar penny stocks, moving to $2. How much percent of a move is $1 to $2? 100%, right? So I would have like 100% gain. I get what you're saying, but so like I'd be up like 50% and just taking shares, okay? And I actually made money with that because I used to join these discords where they tell me when to get in and when to get out. How many people? How does that sound tempting to you guys? Just having someone tell you when to get in and out. It's very, 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 very tempting when you first start. Okay, I used to join discords all the time, and I'm not gonna lie, some of them did help me. But I would say most of them actually help me know what not to do, okay? So while there are signal services out there that will literally tell you when to buy or sell, sometimes it's hard, especially with my model, because you have to be ready when the candle closes, so it's hard to signal that over like text. But I used to do that. I used to make money doing that, but sometimes if they didn't alert a trade, I try to trade on my own, and then I get wrecked. Why am I to get wrecked on my own if I can't copy someone's signal?
Because you don't know how to do it yourself.
Yeah, I don't know how to do it myself, right? And that kind of cooked me a little bit. Then I moved to something called options, which I could do a whole nother course on, okay? Options, I'm not even gonna explain, but options are the closest thing you're gonna get to a casino, okay? It's all leverage, and in options, like basically, you know how like I said NQ is QQQ and SPY is ES? You could trade options on SPY and QQQ. And basically, if like SPY goes from like $450 to like $455, and you're in an option or a call option that's $455, you can be up like 400 to 500% like instantly. And it's very tempting because you can literally turn $1,000 into like $10,000 in like minutes, only risking $1,000 on options. And that's what that's with contracts that expire that day. But you can also take monthly contracts, which will move up slower. But I tried like the contracts that expired that day, and dude, I would get cooked because if I was wrong, like I'd get wrecked immediately. I probably lost like $5,000 trading options. So I started with penny stocks. I didn't start bad, lost money with options. At this point, I was like 20, but I was really discouraged. And then one day out of the blue, my buddy hits me up. He had no profile picture on Twitter. He had no I think his name was DC on Twitter. 0 followers, just DM me out of nowhere. And he goes, hey man, like I'm from California, whatever. And this is the great thing about online and why I would really encourage you to maybe even start a trading Instagram or Twitter and separate from your personal account and follow trading people on your personal account. I used to never follow traders on my personal account because I didn't want my friends to see. That would have been corny. They'd be like, what are you doing? Why are you following these guys? Right? So I created a whole separate account. And if you ever do that, block your friends that know nothing. Okay? You do not, if you end up posting about trading content, block all your friends that would make fun of you. Okay? I promise it's a very good idea. Or also like extend your videos and be like, oh, look at this guy. Okay? Anyways, like I started Twitter, I got a DM from this random dude, and I just replied. I'm like, he asked for my number. He's like, hey, like, I can help you trade this strategy. Okay, and I was getting wrecked. So I was like, sure, why not? This dude has 0 profile picture, sounded genuine. So I just kind of said, sure, okay. He lived in California. And we started learning the strategy. I became a little more profitable. He helped me. It was actually called the Strat. That's what it was literally called. If you like type in the Strat in Google, it's like another strategy. It's actually not bad. It's kind of based off liquidity. But it's basically a strategy where like if we have a daily candle and then we go above the daily candle's high, you basically buy and you target like another high. It's pretty simple. It's not really how the market moves, but we started learning that together. And I started to make a little money, but then this guy, ICT, okay, which I'm gonna show you is YouTube, the same guy, DC, goes, hey, there's this guy in YouTube posting these videos for his daughter. It's this guy right here, okay? He has 2.1 million, 2 million subscribers. When I found this guy, he was like at less than 50,000 subscribers. No one knew who he was, okay? And this guy is literally, like, he taught me everything I need to know, okay? But it is very hard to learn from him. He uses all this terminology. It's hard to learn. There's something called the 2022 mentorship, and basically this DC guy goes, hey, you know, I know you've been struggling. There's this guy out there making these videos for his daughter. You should watch his mentorship. So I go to this guy's channel, and I literally go to videos, or I go to playlist. There's a 2022 mentorship, right? Where is it? 2022 mentorship. Oh, right there. 2022 mentorship. It's right here. And there's 41 episodes. And when I found this guy, he had 2 episodes out, I think. So now he's 41. It's been done for about 4 years now. And the first video, he starts talking about fair value gaps and liquidity. Do you think I had any idea what a fair value gap was? No. Not a single clue. Bro, this guy showed me like an example of like a fair value gap working so precise, and I was literally in awe. Where is it? What did he show me that like hooked me? Look, he bought here and sold here, and I'm like, holy, like that's precise. I think it was in the video, the second video he showed me. He started drawing a fair value gap. Look, so here's all his executions. You cannot fake this. And I had never seen better executions in my life. I mean, he timed the top, bought the bottom. This one was a break-even trade, but timed the top again, timed like a bottom again. And I was like, and I've never seen anything like that before, okay? So I was just interested, and then he starts teaching. He draws the liquidity sweep right there. See it? See how it says buy side, buy stops? And I was like, wait a minute. I was like, I never realized it, but every single time he broke a low, we went back up. And I never thought that way before. Like I would always think like, oh, if we broke below a slow, we'd go down. And this like totally opened my eyes, okay? So I was like, okay, this guy's gotta be legit. What he's saying is completely accurate. He ended up drawing a fair value gap that was respected so well. Yeah, look at this. He drew this fair value gap. Oh yeah, this too. He drew this tiny fair value gap, and we tapped into it, rejected, and went straight down. And like, ever since I saw that, bro, I was hooked. I was like, holy shit, like you can actually be precise in the market, because I didn't really believe in precision before. I thought, you know, maybe I would take EMA bounces, because I used to trade EMAs. I remember my worst day, I was trading EMA bounces. I think I was buying off like the 9 EMA. I had a $500 account on a broker called Webull, which you might see it. Dude, I lost all $500 in like 20 minutes because I bought the EMA and then we just knifed. Like we just had a giant death candle and I just lost everything. And that was like a month work of my money from dishwashing. So I had to hide it from my mom. By the way, don't tell your parents. I mean, you might have to if they support you, but try not to tell your friends or parents you day trade, or you're trying to. You're gonna, especially until you're profitable. I got cooked. I lost my whole account that day. I almost quit. And it's funny. You guys are lucky. Obviously you guys know what Reddit is, right? Yeah. There's a thing on Reddit called Wall Street Bets, and everyone on this feed, they're like 40 years old posting about their wins and losses. There are literally people or adults who are like 40 years old getting into this stuff, losing hundreds of thousands of dollars in weeks on Reddit. Why? How do you think they can lose $100,000 in weeks when they're older? Yeah, but like, where do they get the money from? Yeah, they've gotten the money from years of working. The lucky thing about you guys now is you don't have that yet, or most of you don't. And if you did, you'd be more tempted to use it, right? Because if you're blowing accounts, you're gonna wanna keep putting more and more in. So thankfully, because I started so young, I wasn't putting $100,000 in the market. I was playing with like 200, 300, 400 bucks. So I got really lucky because you will lose when you start. I guarantee it. Maybe some of you get lucky because what I do teach, it does work and is accurate. I never learned this when I started, which I wish I did. But if you're losing 300, 400, 500 bucks, you're in so many better places than all these 40-year-olds or adults trying to learn day trading because you don't have that much to lose. And that's the nice thing about trading. If you don't have much to lose, you're almost at bottom anyways. And the only way to go up is, going up. That sounds kind of repetitive, but so yeah, like I would lose 300 bucks and I'd be pissed, but I didn't realize it in the moment. But that was probably really good that I didn't have a lot of money because I would have lost like $20,000 if I had more. Okay, so if you're ever going to start like a live account or any account or get into this, do not play with more than $1,000. Okay, obviously you guys have the benefit of a prop firm now, which you do need to be 18 to trade, but you can trade it without putting your social security on the eval stage if you want to practice for now. So you guys are lucky in that aspect. So I started watching this IGT guy 3-4 years, and I had a Fortnite channel. It was called Dodgy FN. I think I got 2K subscribers. I'm not going to show it, but I had a, actually, you know what? I will show it, okay? So I was already making content before I got into day trading, okay? So this is all my content, okay? When I got into day trading, I didn't know it at the time, but I started making my own day trading content, okay? Which helped me get brand deals, opportunities like this, just so much more than if I were just to day trade. So if you do end up getting into this and you feel comfortable with that, I think that would be a good idea down the line too. Start your own thing. If you follow me, you're going to see like a lot of other, people with really low follower counts trying to do the same thing I'm doing. They're just not getting as many views, which is fine. That's good, but everyone starts somewhere, okay? So yeah, that was kind of my journey. I bought my first car, Corvette C8. Who knows what a Corvette is? Hopefully everyone. Bought a Corvette C8 2021 when I was 21 years old. I bought it in my hometown. In my hometown, there is no car, like no supercars. Here, there's a lot of Corvettes, but I was in like a really tiny town. Do you think it might be really, really motivating to drive a Corvette in a town where there's like no supercars? Oh yeah. That like motivated the shit out of me, okay? Now, could I have afforded 10 Corvettes at the time? No. They say the golden rule is don't buy something unless you can afford 10. But Andrew Tate, whether you like him or not, actually has some good advice. He says if you can afford a cool car that's going to make you motivated, just buy it, okay? I could afford it. I bought it, and he was right, okay? I literally 10x my business. I moved to Florida the year after, okay? Not going to go too much into detail about this, but I had to drive home a girl I really liked with another guy, and the next day I was like, yeah, I'm moving to Florida. And ever since then, I went from like here to here, okay? I like, the second I moved, within 3 months of moving to Florida, I went from making like 10K a month to like 50K a month, okay? Whether it was content, everything, okay?
Why'd you move to Florida?
So, Florida, does anyone know why Florida is one of the best states to live in?
No income tax?
There's no income, there's no estate tax, yeah, good job. So, in Florida, there's no estate taxes. This is one of the worst states to live in. So, although I would love a house here, maybe for 3 months, I have to be in Florida for more than 6 months, okay? Or else I pay income tax. That means basically, if I made a trade here and I made about 2K, I'd probably have to pay 1K of that back to the government, which sucks. In Florida, probably like 600 back, okay? So a lot better. And add that up over 20 million trades, you're gonna save a lot of money, okay? Even in like business too, right? You're not paying state taxes there. So I moved to Florida, met with a lot of people. The more I grew following, the more like celebrities and influencers that I know. I was talking to them. I don't know if anyone knows Coco Gauff. She's like the #2 tennis player. I'm like really good friends with her. Yeah. So I'm really good friends with her. I hung out with her in France. She invited me to like her French Open like suite, like when she played in the French Open. Who's watched iCarly? So Chuck Chambers, the little kid in iCarly, like he used to prank his parents. Like I'm really good friends with him. Ryan Ochoa.
Wait, I have one question.
I'm friends with a guy that was in what's that airplane? What's a plane movie called? Oh my God, Top Gun. Yeah, Top Gun 2. No, there's another guy in there. One of the fighter jet guys. Like, I just like met so many people, and it's all from day trading, just meeting people. You know, Peter Tuchman from the New York Stock Exchange. I met him through Apex because Apex asked me to work with them because I was so big on social media. And you just meet so many people. QCP. Does anyone know who that is? Who else? There's
I have one question.
Yeah.
Are you dipping in the chocolate?
No.
Dude, why would you ask?
So,
That's not even wild.
all right, listen. So,
That's a disgusting.
that was kind of my journey, and yeah, now I just know a lot of cool people, can do a lot of cool things, have a lot of opportunities. Like, for example, doing this class, which Peter Tuchman from the Stock Exchange asked me to do, I met the director that like invited me to do this, and now he invited me to Bali for free for a whole month from November to December, and I was like, yeah, sure, why not? Because he liked me so much, right? So the more you put yourself out there in life, whether it be trading or whatever you do, you can get so many cool opportunities. So if you think about, I think posting content, some of the best thing I did, or also want to be here right now, right? So that's super important. Now, struggles, okay? I went through a lot more struggles than just losing all the money, okay? I think one of my worst trading days, when I learned ICT, was this guy, ICT, he like made it seem like we had to be right every time. And as I taught you guys, is that the important part about trading? No, it's taking losses, okay? One of my worst days, like I took like 3 or 4 wins. I was on like a 10-day win streak, whatever. I think I made like 10, 20K across like all my prop firms. And then literally in one single trade, I blew it all because I took a loss, but I moved my stop loss, kept moving it down because I'm like, I have to be right, kept moving it down. We kept going down, kept moving it down more. And then I blew my account. And that was like the day that I woke up and I'm like, damn, like it's never the strategy, it's the person, it's the psychology. And some of the issues you guys are gonna go through is sometimes you might be up $500 in a trade and it might come back and stop you out or stop you out break even. You're gonna experience it and you're gonna be really pissed. Some of you guys will move your stop losses. Even though I tell you not to, you don't like being told what to do. Neither did I. So you're just not gonna listen. And you're gonna move your stop loss and you're gonna learn through that experience that moving your stop loss is probably not a good idea. But you're never gonna realize that by me telling you. You're only gonna realize that by experiencing it yourself, because it's gonna create a connection in your brain where you're gonna be like, damn, like, I don't wanna feel this way anymore, right? It's if you go through a heartbreak, right? You go to the gym right after because you don't wanna feel like that anymore. You wanna prove to yourself that you can be better, all right? One of the other psychological issues is taking a loss and then going on social media and seeing everyone take a win. That really sucks. What else? Sometimes there's been times in trades where like Trump tweets something and you can't do anything about it and you get wrecked. I mean, that sucks. But there's gonna be so many issues you guys go through. Like obviously when you go on Instagram, you're gonna have to understand something. Most people only share the wins. And it's weird because I share a lot of wins too, but I will share the losses when I have them. But I don't lose as much as people think because I'm really patient, or I've been doing this for a long time. So you'll see on my Instagram, sometimes people hate on me. Now I would say like 10% of people hated me. 90% of people like, glaze me, which is great. But at the end of the day, I'm just a person. I want to be everyone's friend and I want to make people like me. So it sucks for the 10% of people because you always try to get everyone to like you. So I care more about the 10% than the 90%. That's just how my brain works, okay? But like some people are like, oh, show your losses. But you guys saw me learn in live time a win, right? That could have very well been a loss. But that's what I do most of the time because I've just been doing it for so long. So that's like something you're gonna have to deal with. But yeah, there's like a lot of psychological battles in trading. Even that guy Diego you're watching earlier, dude, he's been getting hammered. He's been getting wrecked. And like, you'll see he posts videos online like why I'm struggling day trading. Like, if I go to YouTube and just pull this up real quick, it's like Diego day trading IFG. It's dude, where is this guy? I don't know. It might be this guy actually. Yeah, this guy. Like this guy, like he has about 8,000 subscribers. But like, look at his title name. It's like, I may never succeed as a day trader, blowing my accounts, winning trading day, but lots of bad habits and emotions. Does bad habits and emotions have anything to do with day trading? If you never joined this class, would you think this has a lot to do with day trading? No, but now you do, because I'm telling you, okay? Winning trading day, but letting my emotions take over. Full porting trades, tired of eval jail. That means he can't pass an eval count, and now he's gotten to the point where he's just full porting, buying more, full porting, buying more. What does that sound like? Starts with a C. No, that's a casino, okay? Perfect trade, but still blowing my accounts. WTF. 97% of traders fail, and I understand why blowing my account. Do you see how negative he is? This guy just been getting cooked, and he's real about it, which I like, but he also plays the victim. Is this a mindset? Yes, he's being very negative. It's just his mindset, and you can't change that about some people. You got to look at the positive side, right? So he can't learn from his mistakes, and I think the one problem that you guys are going to go through is this. You're going to take a trade, and it's going to look textbook, and it's A+, it's something I taught you, and it's going to lose. And you're going to revenge trade, and then you're going to blow your account. It's going to happen to you, I guarantee it. And you're going to be like, okay, I know I lost. I'm not going to revenge trade anymore. And then what are you going to do again? You're still going to revenge trade. That is the hardest part, because you're going to say, like, you're going to tell yourself, okay, I'm not going to do this anymore, and you're still going to do it. And I cannot help you. That's the one thing I physically cannot help you with, unless I was at your house and I was literally breaking your arm so you couldn't click your mouse, okay? I promise you, you're going to be locked up alone in a room facing your literal darkest demons, trying to make money by yourself, no one telling what you to do, right? You're your own boss. You can literally make a decision, and you're going to revenge trade even though you just said you're not going to, okay? And it's weird because, like, you said you're not going to, but you're still going to, which means you're just not disciplined, okay? If I put you right now, if I put you on a professional basketball court and you were playing for the Lakers and you were going up against the New York Knicks, okay, who just won the chip, do you think you'd be able to contribute any points, any rebounds, anything? No. Even you who's played basketball your whole life? No. Hell no, okay? You're going to get mauled by like these 6'10" guys, all right? Now, when I put you on a chart, on a day trading chart, you are literally going against the algorithms that control the market and the best day traders in the entire world. This is the only thing where you can literally just enter a professional-ass battlefield and be facing the best of the best immediately, right? You can't just go in the NBA. You can't just go in the MLB. You have to work years and years and years and years, and then you finally get put in the NBA or MLB or, you know, MLS, whatever. But this is really, truly the only thing that if I said, okay, go take a trade, you are literally trading against someone who could be at the New York Stock Exchange who's been doing it their whole life, okay? And that's why you need to treat this like a business. Every single time you click a button on your mouse, it is a business decision, okay? Think about if you're running a normal business, an electrical engineering business, I don't know, beauty business, okay? You're gonna go through your documents, your transactions, your transaction history of how many people are paying for your stuff, right? Just to check. And do you think you're gonna have to make decisions on like how much beauty supply to buy for the next week or how much electrical cord to buy? Yeah. Right? You're gonna have to make those decisions. Same thing with this. Every single time you enter buy or sell and click those two buttons right there, you're gonna have to decide, is this a good trade? Can I manage my risk? Will I accept the loss? Will I be happy if I take this loss? Because if you go to see a trade and you're like, there's no liquidity sweep, so maybe I would be mad if I took it. Should you take the trade? No, you should be fully happy of taking any trade because you see, okay, it's something I've seen before, it's textbook, it's there. All right, you should be very, very, very happy, okay? And that too is like, you know, hesitation in trading. You know, maybe you're hesitating. You're like, Dodgy said, you know, there is a liquidity sweep, but maybe I don't see it, right? Is that a good trade you should enter? Hell no, don't even touch it, okay? It should be there, it should be light bulb, it should be obvious. But every single time you click that button, it is a business decision, okay? Now, many of you are gonna get to rock bottom. You're going to be depressed because you're going to lose money. I guarantee you half of you in this, actually probably 70% of your room are going to lose money first. This guy told me at Erewhon, he goes, my brother said this is not going to work for me. His brother's 19. How many weeks do you think his brother traded to say that to him? He traded 1 week and then he gave up. And he said, oh, day trading's not going to work. It didn't work for me. It took me 3 years to really get this, okay? Does anyone know how many years it takes a doctor to get their degree?
It's like 4 or 5, like 8. It's like 12 total years.
It's 12 total years.
What?
A lawyer's
Nah.
And how much will a doctor make? Like $200K a year. Do you really think quitting in a week or quitting in a year, quitting in 2 years when you're not making 10K a month, which is just as much as a doctor, is going to be worth it? No. It takes a doctor 12 years to get their degree, a doctorate, okay, to be a legit doctor, surgeon, anesthesiologist, whatever.
MD, not PhD.
Or yeah, MD, okay? It takes them 12 years. You can, in 4 years, if you go through all the psychology bullshit I just said, because you're going to have to, you can literally make just as much, if not more, than a doctor in 4 years, the same as it takes them 12 years. But not only that, you can do it clicking a button for an hour a day. They are doing a lot of prep, a lot of research, doing procedures on patients that are taking them the whole day. Okay, so it's a much, much different life. You're going to be able to do this an hour a day, travel wherever you want in the world, go to Bali, trade from Bali. Can I bring my laptop and trade from anywhere? Right? Maybe not from the middle of the ocean where I might be drowning, but anywhere else on land I can trade with Wi-Fi, okay? So that's like the beauty of this, and that's like why you're so motivated. And it kind of sucks for some of you because some of you are still too young and you're not scared enough. You're not scared that you're going to have to go into the workforce someday and work for someone because you're not close to that point. But the closer you get to that point, I promise you, the more ambitious you're going to be for something, whether it be day trading, whether it be starting a business. I don't care what. It's something that maybe it's you're passionate about, right? I don't know if anyone wants to be an actor in here, but to be an actor, you have to start to know people, start to network, start to go out maybe in LA, and all of a sudden you know someone, right? I know a guy, his name's James. You know those, like, does anyone see those short movies on TikTok? Yeah. Like one of my friends, James, he's the main character in like half those, okay? And I'm really good friends with him now. But he knows all these other actors. He got me connected with Ryan Ochoa, but I never would have got connected with him if it wasn't for knowing James, okay? So you just gotta like go out, get yourself out there, and you know, it's always funny because for spring break, I had these guys, I had my friend come down, he took a bunch of girls with him, they all stayed at my place, some of y'all rented an Airbnb, it was a fun time, I bought a yacht, I rented a yacht for everyone, okay? So I rented a yacht for everyone for spring break, and these are guys who go to college, they mostly went to Clemson, one went to FSU, and they're on this yacht, and they had never been on a yacht in Miami before, okay? That is full-on LARPing, like no one ever does that unless you like know someone who has money. So we're on a yacht, we're looking at the Miami skyline, and in that moment, all of those guys were like, I'm gonna make this work, I'm so motivated right now. Like, you know, they're all drinking, but like they're like, I'm gonna make this work, I'm gonna be a millionaire. What do you think happens to their mindset the next day? It's completely gone. They wake up, they're like, maybe not for me. And they go back to partying every weekend and drinking and whatever. And drinking and partying and stuff, it's not a bad thing. I don't drink. I go to clubs like once a month in Miami. Like I'll go to like Space or Live, you know, where all the big celebrities go, like Rick Ross and all that. But like I barely go. It's like once a month thing, okay? And it's not a bad thing, but it also like can demotivate you because if you really rely on like drinking and partying to make you happy, like I don't know what to tell you. Right, you gotta rely on like the natural highness of just life, and like, dude, honestly, like hitting TP for me is like one of my motivations. Like, it just feels so good to like come to the market, be able to predict. Like, it feels so good to show you guys like a play that I took, and it just hits. And you guys watch in a lot of time. Like, I literally showed you how to make 3K in a lot of time. It just feels so good, and I would rather hit. I make jokes all the time, but I would literally rather hit TP on 10 trades in a row than meet LeBron, okay? And I know this sounds retarded, but like LeBron is LeBron. We all see him. Like, you got to realize something. Do you think if you hit TP on 20 or on 200 trades, or no, let's say this, on 5,000 trades in the next 10 years, Do you think you're going to be rich? Yes. Do you think you're going to start to create connections because you're rich that will connect you then to LeBron James?
Yes.
Yes. Okay. You don't want to be the guy like, oh yeah, I'm poor, I just want to be LeBron and that's it. You want to be the guy that LeBron James notices, okay? You want to be the guy that is getting so rich that other people start noticing you, okay? So while it might be cool and temporary happiness to see LeBron right now, it's just like, bro, you want to grind enough to make him see you first, okay? And that's what I believe in, that's what I do, okay?
Have you met LeBron?
No, but I've met a couple people like that are in his family or know him. I'll get there. I'm still grind. I met a lot of famous people. LeBron is not one of them. All right. Does anyone know Tyreek Withers? You know him? He's like the star of the movie Him. Yeah, I sat next to him and talked to him the whole time at Coco Gauff's like box of the French Open. So that was pretty cool. We were just like chat like. And any like random person, any normal person would be like freaking out, but I'm just talking to him because I'm on the same level as him. I still make a lot of money, right? I'm still like, you know, we're on the same level, right? And I'm trying to get to the same level as these guys, like these celebrities and all these actors and these, you know, obviously I'm never gonna get the same level as LeBron. That's just, LeBron's LeBron, right? He's like a generational athlete, but I make more money than like most like role players in the NBA making like $2 million a year, right? I make more money than them. And I just click buttons on a screen, they're putting in work. And it's like, I don't care about the money, but I care about the level I'm at to meet all these people and get all these connections to which lead me to here, which again, do I get bored every day? Yeah. I get pretty bored. So this is like fulfilling for me, okay? I saw a Reddit post yesterday and I posted this on Instagram, but this billionaire who posted on Reddit, he goes, I've been a millionaire and I've been a billionaire, okay? And he said this, once you have like $2 to $3 million to your name, you essentially have the same life as Jeff Bezos, okay? Even though Jeff Bezos has $1 billion and you only have $2 to $3 million, you're still gonna have a paid off car, a paid off house. Really the only thing that matters at that point, you're still gonna have the freedom, hopefully, right? Jeff Bezos has freedom, you're gonna have freedom. Right, the same cheeseburger you eat, Jeff Bezos is going to eat that same cheeseburger, okay? The only really big difference is Jeff Bezos can own a giant mega yacht, which does that offer any like value in our life? Or would maybe talking to your mom or calling your mom or spending time with people offer more value? Yeah, that. Okay, when I got rich and I had freedom, I make a lot of effort to do things with my grandpa now, who's thankfully still alive. We're going to London in October, which is super cool. And you know, I'm super grateful, but that feels a lot more fulfilling to me than going on a yacht. Now, I brought my grandpa on a yacht in Miami. That was one of my most fun yacht experiences I've ever had because he was there. And it just felt so cool, like giving him that opportunity because he was a pastor his whole life. He lived in a small town. He'd never been to a big city like Miami before. So like just being able to do that is much more fulfilling. And it just like proves that, you know, once you get to a certain point of life, you can basically be retired and still live the same quality of life as Jeff Bezos, minus the helicopters he's taking and the private jets. But you can still take an airplane. It's the same thing. It gets you from A to B and whatever, right? The private jet's a little more luxurious, but I don't know. Some people don't like private jets because they do have more crashes because they're smaller. And I don't know. I like flying commercial. But so, yeah, just never forget that. So yeah, it's basically like about me, psychology. Anything else I'm missing for now? I think that's pretty much it. So what time is it?
2.
So now,
Live trade.
now I'm gonna offer you guys like time to ask me stuff, and maybe I'll expand on stuff, like just like about my life. Maybe you want to do something other than day trading, and you want like business advice or like literally just anything. Yeah.
Based on what we've been taught so far, how long do you think it would take like a random one of us to become profitable?
Great question. So he just said, based on what I've taught you so far, how long could it take one of you guys to get profitable or get rich? Okay. It's going to depend on how much work you put in. That sounds kind of gay because it's like, oh yeah, put in $10,000, put in 10,000 hours worth of work and you're going to be profitable. Do you think that's the case? No. If you put in 1,000, remember I said earlier, if you put in 1,000 hours worth of work and you never revenge trade, but your friend puts in 10,000 hours of work, but he still has a tendency to revenge trade, who's going to be more profitable? The person with 1,000 hours. So does the time trading really matter?
No.
What matters?
Yes, a little bit.
A little bit, but what really truly matters? What you get from it, if you're going to manage your stop loss, right? Everything, yeah.
Since we're going to be starting off and we won't be able to afford like QQQ or ES, what would you say that we should start with?
MNQ.
MNQ? Because
you can risk $200 on MNQ in a 50K prop account. Like, so these prop firms, like what I'm trading and what I'm encouraging you guys to do once you're old enough, or maybe with your parents, you guys didn't hear that from me though, is you go on this Apex Trader Funding, you can buy a $50,000 account, okay? And you should do the end of day trail.
End of day trail mean?
Basically, it means like if intraday trail is basically if you go up $1,000 in your position but you don't sell, the drawdown also goes up. So if you hit the certain drawdown, you blow the account. But at end of day trail, it only goes up based on what your balance is at the end of the day. So intraday trail is kind of a scam. Because if you're going up but you're not selling, then it comes back to your break-even point, and you're back at 50,000. The drawdown on this account just went from 47,500 to now 40,500, but your account balance is the same. So now you only have $1,500 of drawdown to play with before you blow the account, and then you're gonna have to make 3K still.
So if we make the 3,000 on the eval account in the first month, we don't have to pay a subscription, or I don't know how it works.
You literally just buy one. It's $50, and if you make 3,000, I think this is a one-time. I don't know if one-time fee. It's not monthly. This one isn't at least. You just have to make $3,000 at any point, and then you get funded. And then if you make $2,600, they pay you to your actual bank, which might be your parents, because when you get to the funded account, they make you put in your Social Security for taxes.
Oh, okay.
But yeah, like this is what I would do. Like even 25K might be a little cheaper, but I like the 50K. Standard NA trail, and this is how you can really truly start getting like skin in the game and just start taking trades based off what I taught.
Oh, wait, one more question. Like for vendor, who do we choose? Like who would we choose for like?
A vendor? What do you mean?
Like on the third step, like who is the broker that we would go through?
Tradeify.
Tradeify.
Yeah, Tradeify. And then you can, on Tradeify, you can log into tradeify.com, and there's an option to like connect to TradingView, and then you can trade on TradingView. So here's Tradeify.
You spend $50 like sitting in your house.
Yeah. But $50 can add up if you're not disciplined.
Yeah, right.
So if you go to Tradeify, you go to add-ons, you just click add TradingView, and you can basically trade this on TradingView, and then on TradingView, you can go into the broker. Remember how I logged in the paper trading on TradingView?
Yeah.
It's just another thing that says Tradeify, and then you just use your same login. But that's how to like start, yeah.
What's the Tradeify?
Tradeify's like the actual broker. So when you buy an Apex account on Tradeify, you'll log into Tradeify, and then you can connect to the TradingView and the add-ons and the settings. Yeah. Wait. You first.
So if you don't make 3,000, you'll gain money.
If you hit, so on a $50,000 account, you cannot go below 47,500, which is how much drawdown? On a $50,000 account, you can't go below 47,500. How much drawdown is that? That's $2,500. So you cannot lose more than $2,500. If you're risking $200 every trade, how many trades in a row would it take you to blow the account?
11, 10, 50,000, 13.
What do you say?
The 50,000 is still real money, right?
The 50. It's not real money.
Yeah.
Yeah, it's not real.
But how much do they pay us back on Apex? Like.
So if you hit 53,000, you get funded, and then you basically start over, okay?
Yeah.
And the no activation fee is nice because it's just $50.
Yeah.
Okay. And then you have to make, I think, it's like $2,000 or $3,000 again, and then it'll let you pay yourself out like $1,000 or $500 to your bank account, and that's with $50.
So we make money from, like.
Wait, why are they paying us for fake money? Like.
Because most people fail at trading, so most people are blowing their accounts.
What do you do after you make that money?
What do you say?
So we make money with fake money?
Yeah, because they'll pay you real money to your bank account if you do well in their test, which their test is, can you get to this certain amount? Does that make sense? Yeah. So they're just testing you. It's like paper trading. If you can make $50,000 like you said you could in FxReplay, like this guy was telling me he's up like 3 million earlier, then they'll pay you real money if you follow their rules and guidelines. They'll have rules, but yeah. No, I'm not.
You have a sister?
I have a brother. He's younger. He's 21 and he's gonna be a commercial pilot. What? Yeah, I kind of want to buy a jet and have him charter, but we'll see. Yeah. So what do you say?
Taught him how to do it as well.
Have I taught him how to day trade? So, do you guys think it would be a good idea for me to go, hey, Jacob, my brother, here's how to make money out of thin air. I'm going to show you.
No.
Why not?
Because he's not motivated.
Because that's just me telling him. He doesn't naturally just want to do it. So what's funny is in the last year, he actually started following my stuff by himself. I didn't say anything to him, and he's actually trying to learn himself. So he's actually kind of gotten the right path. I didn't really tell him to, but he's kind of started to do it a little bit. Even though he's going to be a commercial pilot, he knows this could be an extra side income, right? You got to realize even if you are working a job, but you can understand what I'm telling you, you can still make extra income from this if you find like one setup a week, which might be in like the hourly time frame, right? Maybe one V-shape hourly IFG. Yeah.
She has a question.
Yeah.
Oh, I was just gonna ask. Okay, who's your favorite artist?
My favorite artist, Juice WRLD.
I said it. I know, right?
Do you like Drake?
Yeah, I love Drake. Juice WRLD has like the most elite unreleased songs. Like he has like thousands of unreleased music no one in the world has heard that are like just on the next level. Oh no. Bro, that's a wild take. Playboy Cardi? That sounds like gibberish, bro. No. All right, what other questions? Business, life related? Yeah.
So when you have like the account, and let's say I made 3,000, I cashed out 1,000.
Yeah.
Can I just make another 3,000 and cash out another?
Yeah. That's called building a buffer. Yeah. So if you make 3,000 on the account and you cash out 1,000, you now have 2,000. You still have $2,000 to play with. Now you just build it up again.
But I saw rules and stuff like that.
Yeah. You have to. So one of the rules is you have to have 5 days above $150 profit. That's going to be like a rule across a lot of firms, like other topstep. You're going to see all these other firms eventually, but one of the rules is you have to have 5 winning days. It could be any winning day above $150 of profit. A month? No, nothing to do with the month. Just in any time. Yeah.
So what do you do after what's the step after you make the 1K?
After you make the money, it just goes to your bank, and then you have a buffer. You just keep going.
You keep doing the same thing.
You use Go Dodgy?
Yeah, I did use
All right.
Dodgy.
Yeah. Yeah, if there's a coupon code in Apex, Dodgy will get you a big discount, which you want. If you don't use that, you're an idiot. But
So after this, and then you do the funded account,
$441 off.
Trade on the one that they take money out, or like go on like TradingView and like.
you can trade the Apex account on TradingView.
$41 off.
Yeah, just keep trading until you blow it. If you take a payout on an account and you blow it, just buy another one. Let me ask you this. If one account costs $50 and you take a $500 payout on it and blow it, how much R did you just make? You just made 10 R. So you could literally buy 10 more accounts and blow all of them, but you're still break even. Do you see why the risk reward of prop firms is so good now? But if you were on a real account and you were blowing real money, it's harder. Yeah.
For the, like, if you blow it, do you have to do the, like, eval account and then get to the funded account?
If you blow the funded account, you have to start over an eval and buy another one.
So the $50, right?
Yeah. Yep.
When it was COVID, did your like did your trades like change? Like, what was your win rate?
So when it was COVID, my trades ended up mostly being longs and the pump back up. And remember how annoying it was to short on FxReplay the other day when we just kept going up and up and up? What do you think I was doing when we started running back up from COVID? I was only longing. It was the easiest market ever. Every single bullish order block we put in, fair value gap, they would all just work to the upside. Now, the market goes a little more up and down, whereas COVID just literally just went straight up, okay? Because when COVID dropped in that like 2-week period, people realized COVID was fake or just a ploy. And that's where we get all the liquidity in the stock market. That's where the smart money starts to buy. And then we rip back up. And people are like, why are we ripping back up? We have COVID. This is so bad. Like, no, that is retail, okay? The smart money knew to buy knowing that COVID was just like the flu, right? And it was. The White House just released a tweet the other day. Did anyone see it on the truth of COVID? I think yesterday they posted it. You saw that? Yeah, there's a giant article. It's like all started in a lab. It's crazy. I was forced to get the vaccine to even go to college, which sucked. Dude, I tried. Yeah, I literally tried like exempting myself in like religious, so many different ways. They just wouldn't let me. So yeah, I know. So yeah, now going back to the salary thing. Okay, what do you think a good salary is? 100K a year is a solid salary. What do you think the average salary is for a person just getting out of college?
Like 50,
60K, okay? You go to Starbucks, you go to Erewhon, you go to In-N-Out, okay? Those people are making $20 in an hour, okay? I literally just showed you guys a live trade this morning, okay? Right here, this inversion fair value gap, where the second this candle closed, you could have literally bought one micro contract, just one. This is the smallest unit you could even buy. All right, this is a 3-minute time frame, okay? So 3 minutes, 6 minutes. In 6 minutes, I'm up $48. 9 minutes, 12 minutes. In 12 minutes or in 10 minutes, I'm up almost $100, okay? Ever since I started day trading, my like concept of money is now screwed up, and I will never be able to go back to a job like that, knowing I can literally buy one micro and make that much money in 10 minutes, okay? And you gotta realize, if you can repeat this 252 times a year, and like I said, let's say you're green 200 days and you're red the other 50, okay? Using 2 micros, making an average of $300 a day, which is not hard if you copy trade prop firms. If you buy 5 prop firm accounts, you can basically trade 5 at the same time, but have the same drawdown. That's what it's called. It is very, very simple to make 10K a month just doing that, okay? Which is how much a year? 120K for literally pressing a button, okay? So my concept of money will always never be the same because I know that, right? What other questions we have? Yeah. Okay, YouTube channels. All right. Once you have the understanding, all right, this is the #1 channel, but it is not easy to understand him. I simplify his concepts a lot, okay? So ICT, this is literally my mentor, okay? It says I'm the mentor of your mentor. He's right, okay? That is the #1 YouTube channel I recommend. T Trades is the other one, okay? T Trades. This guy right here. This guy basically simplifies the first channel I just showed you into really, really easy, like, just, if you don't know what an order block is, you watch this guy's video. If you don't know how to time a low day or high day, right, daily profile, watch this video. The only points of interest that actually matter for trading. What's a point of interest? Where does the market go to? Stop losses and what? Fair value gaps. So he might talk about those. The only trading strategy you ever need, right? He'll give you like an example of a strategy, and then at the end of the day, do you think you're going to copy his exact strategy, or do you think you're going to make your own based off your own experience? Yeah, you're going to end up probably shifting to yourself a little, make your own. All right, my channel, all right, basically what I just taught you guys is this boot camp right here. And I made this about 2 years ago, so I look a little younger, and I have no eyebrows because I dyed my eyebrows. Yeah, I dyed my eyebrows because I look ugly. So I like chopped them that, bro. So this is like basically what I taught you guys, this whole boot camp. It's 46 episodes. Now, this boot camp, funny or not, is about I think it's about 3 hours. All right, so I just taught you an extended version, a 36-hour version of this boot camp. But if you have like anything you want to brush up on, go back to this boot camp, right? Patience, how to lose, journaling, daily bias, premium and discount. And you can just like watch all that, okay? And just watch it until you understand it, okay? But you should want to back test too, right? If you go, let's listen to the start of my boot camp. What do I even say?
What is going on, ladies and gentlemen? We are finally beginning this boot camp, and I just want to say, mostly the amount of people who are ever going to watch this whole boot camp are literally watching right now, because slowly, as historical data shows, as time goes on, more people give up. So the longer this video gets and the longer this boot camp gets, the viewers are going to decrease because people are going to give up. They're going to get confused. They're not going to try to remain persistent in what they're trying to learn, and they're going to just give up, you know? So welcome. I'm probably talking the most amount of you right now as I will the whole boot camp, and I want to say welcome. My name's Dodgy. All
right, now I just said the boot camp views would go down every video. The first episode of my boot camp has almost 100,000 views, 88,000 views. All right, 2,600 likes. Let's go to the last episode, the end. Last episode has 7,000 views, 500 likes. So that went from 88,000 people to only about 7,800 people at the end. And that is the reality of life. That is a reality of how easily humans give up, or how easily they see something, they're like, not for me. But you got to give it time, you know? Some of you, I can see it because I'm smart, said you did a day trading class because you wanted to day trade, and then you got uninterested. And I bet you my speech like 20 minutes ago, maybe you got you reinterested again, okay? Because you're like, damn, like I don't want to work for anyone. I want to make something work. And again, if you have an on and off switch all the time, it's not going to be persistent. It's always got to be an on switch. I mean, there might be days where you just might be demotivated, but again, it's important to understand that, yeah.
So should we just, after you watch the boot camp, should we just watch all of the videos?
Once you watch my boot camp and T trades and ICT, you're slowly going to start seeing other traders online, and you're recommended on Instagram, TikTok. Like, you're going to start seeing stuff in your feed. And that's why I almost recommend making a new account from your personal account for like a day trading account. And even though you might want to not make videos yet, which I strongly recommend you do in the future, because I think that would be awesome. And you know, my student Reliable, remember the guy in stream? He's been making Instagram videos now. And like he says all the time, like I learned from Dodgy, he makes videos, and it all like filters back to me, but like I help them out, right? I'm able to be in their network. If they have questions, I'll help them out. But yeah, like I'll make a separate trading account, because if you're in a personal account, you probably don't want to expand with trading videos. Probably be annoying, especially if you're not that interested. But just to like get some exposure, and I'm not gonna lie, it's gonna suck seeing some of you go down the wrong path. But some of you are gonna see a video, you're gonna think it's legit, and it's not. And I know it's not because my experience. And unfortunately, you're not gonna learn something properly. What's an order block?
Sandwich.
It's like the sandwich candle. If I go type in order blocks on Google right now, let's see if this guy even knows what this is.
The fact is that most about this topic, this is not an external low.
Wait.
A low down here. But we on fair value gaps, I quickly through here.
So this guy does know what he's talking about, okay. But there will be guys who don't know what they're talking. Oh, this guy. This guy. See this? Look. He's literally saying this is an order block. Do we know that's an order block? No, there would have to be a green candle here. Like stuff like this, like it's 100,000 views, 118,000 people are our liquidity. They're literally our liquidity. This is a fair value gap, but he's saying this is an order block, which it's not. Like, do you get what I'm saying? Like, you're gonna see some videos that are just completely wrong, dude.
Okay, so you get
giving all the
Dude, notice how he says, okay, he's a salesman.
order block that had the best probability of working. To do this, I had to do a lot of research, a lot of backtesting, and I mean a lot of analysis.
Yeah, I'm gonna kill myself watching the video. Alright. Let's look at the comments and something like that.
What about Brad Go?
Where was that?
It was like, I found the secret.
I found the secret of the order block. All right.
Analysis. That's when I discovered.
Someone goes 4:15. The video started. See, some of these people don't have no idea what you're talking about. See, this guy knows nothing. You're a freaking genius. No, he's not. Okay. This guy says, no, it's called market structure and shift, not a break of structure. Right? People have their own opinions.
Why is there not one hate comment?
There's shit. He probably deletes them.
I have something that's wrong.
Wait, you could delete comments.
Yeah, you can delete comments. Someone said, oh wait. Someone said it's just ICT. Does this guy know what he's probably talking about? He does. ICT is that first channel I showed you. He taught everyone everything. This guy. He taught order blocks. He taught fair value gaps. He taught everything. So this guy is saying it's just ICT, knows this is bullshit, this video. All the flash photos are distracting, unnecessary. What a bunch of BS. Your videos have too much memes. Do you really think, like, if I'm a 30 or 40-year-old trying to learn how to make money against the best traders in the world, I want to see a video with flashy pictures and
displacement.
Yeah. Do you really think I want to see a bunch of memes in a video? No. Okay. This is guys a content creator. All right. But you're gonna see all these traders, and it's gonna be sad because some of you guys are gonna watch people that probably are not good. And again, it's gonna be whatever. But there's more Instagram people I would follow, but I kind of don't want to give you them. I kind of want you to stumble upon them with yourself. Because I think if I told you, like, okay, follow this guy, follow this guy, follow this guy, it's going to make you more confused than if you were to just stumble upon someone yourself that your brain actually might click with. Do you think your brain is going to click with the same person? No. Okay. I'm pretty, like, I think there's this, actually, never mind. I take that back. Yeah.
I have a question. For
Yeah.
the eval account, like, is it like the market right now? Like, is it up to date or is it like a simulation?
Yeah, no. Eval is like the live market.
Okay.
Yeah.
How do we know if like they're good traders to follow or not?
How do you know if they're good traders to follow or not? It's definitely like a vibe thing, but it's also if you see a trader talking about an inversion fair value gap and it's an order block and not an inversion fair value gap, you're gonna know that. So you're based off what I've taught. Just go based off what I taught you. Like if they're saying something I've probably not said, then they're probably not legit. Okay. Any other questions? Any questions about like struggles you may have or like problems? Yeah.
What's the biggest amount of money you lost?
I lost like 120K in 2 weeks. Yeah. I lost my parents' salary in 2 weeks. It kind of sucks, but it was both my parents' salaries almost combined. Yeah.
What'd you do after that?
What'd I do after that? After I lost that much money, I just I always FaceTime my day trading friends. It's really good to have like a good network of people to talk to, and this is why if you get in the trading with your friends, it's pretty good. FaceTime my friend Nick, my friend Desi, who got a $1 million payout in Apex. FaceTime both of them. I kind of said, hey, here's my issue, here's what happened, and they kind of offered me advice. I reset. It was before a weekend, so I kind of reset, and I asked myself, like, what can I do better on Monday? Okay. It's funny because the day it happened, I couldn't do anything about it. It was a Trump candle. Okay. And basically what I did Monday was I turned on the daily lockout feature just in case for the next time. It's funny because remember that Diego kid? Yeah. I've literally DM'd him so many times and he talks to me all the time because he learned from me. he learned from me, and he's still not successful after 3 years. Isn't that insane? But why is he not successful? What? Because he revenge trades. He never listens to the psychology. I told him, I go, you should have a daily lockout limit on if you're going to keep doing this. You want to know what he said? Absolute dumbass reply. He goes, but I've been training for 3 years. I don't need that. He thought because he's been doing this for so long, he doesn't need that. Even me, who's been trading for 8 years now, I will still have a daily lockout feature on. Some of these brokers you buy will not let you use that. Okay, and I don't want you to use that at first. I want you guys to go through the pain first, because that's the only way you're going to learn. Do you think it's smart to use something that won't let you have the daily lockout feature? No. It's funny because like Apex, I think Apex lets you now, but Apex used to not let you, okay? Because they knew if no one had it on, they'd make more money from people blowing accounts. But remember, if you have that daily lockout feature on, no matter how long you've been trading, it will not let you revenge trade no matter how hard you want to. And then turning on that button that says, don't let me touch the button to turn it on or off. There's 2 buttons you turn on. So it was definitely tough after losing the money. And it's funny because, raise your hand if you're in a relationship. Anyone? Okay. Do you think if it would be better or worse if your girl could tell if you were red or green in the day?
Horrible.
That'd be worse. Your goal, what?
I gotta lie to her when I lose money in poker.
Yeah, exactly. Like your goal is to, if you're working a normal job, right, and you're going to the job and it was a bad day at work, you come home and you're like, yeah, bad day at work, whatever, nothing I can do about it. Usually, and some of you guys can't relate to this because you don't actually have jobs, but if I go to my dishwashing job, wait, raise your hand if you have a job, just out of curiosity. Okay.
I need one.
Have you ever just gone to a job, something really extraordinary happens or something bad happens, you just kind of come home, talk to your parents, and you just like never tell them anything? Yeah. Or they ask you like how school was and you just don't tell them anything, but something really crazy happened? Yeah. It's kind of like trading. Like if you're really green or really red in the day, the best psychological traders are going to treat that like a job. When they're done, they're going to close their laptop. And I promise you, your parents, your girlfriend, your boyfriend will not be able to tell if you're green in the red of the day. Right? But if they can tell, that means you're probably too emotional about trading and you care about it too much and you don't treat it like a job. That's why you have to treat it like a job and really like try to not even hide those emotions, but just learn to be a robot when it comes to losing, winning, and understand that it's all part of what? The statistics, right? Statistical edge, right? You're literally just trading data. Every single time I go to take a trade, guys, I am thinking about this. Let's say I were to buy here, which I can't because the market's closed. Let's say I were to buy here. Remember when I alerted the trade earlier and we went all the way up? What is going on in my head the second I buy here? I am literally remembering my statistics I got from backtesting in FxReplay. So when I take this trade, I'm like, okay, I backtested this model before, liquidity sweep, market structure shift, fair value, IFG, double top. That on my FxReplay has about a 77% win rate. So I am trusting that, okay, 77% win rate, I'm not scared anymore because I know the statistical probability this is going to play out. So that's like what I'm thinking, and I'm thinking like an algorithm. I'm thinking like a robot. I'm not thinking, please win, please go up, right? Remember when we were chopping around and I literally told you guys like I can't say or do anything right now, right? And it sucks, but like you just kind of have to watch and just trust the data and let the data play out, right? Not every one of these setups that I took today will play out perfectly. The one today did, which was nice, but it doesn't always do that, okay? So. What else?
What age did you start actually trading?
I started placing trades on Cash App first. You could place trades on Cash App because I was trying to buy AMC during the squeeze. There's like, if you guys don't know, basically in 2019, there was a thing with GME, GameStop, and AMC where they were like going really high for no reason, even though they're horrible companies. And they were going high because people were trying to short them, and then it kept going up, and then the shorts would keep getting stopped, and then it just kept going up and up and up. And I remember I used to try to get in on Cash App at like 16. It would let me. I don't know why, but. And then really when I downloaded a broker account and everything, I was probably 18. But I had the experience for like 2 years. It was like reading candlesticks and everything.
So you're like what, 20? How old are you now?
I just turned 24.
So how many years? Did the first year you actually start trading was when you were 18? Were you green the first year, or were you like red?
Okay, most people are red. I was like kind of break even, maybe a little green, because I was doing the penny stocks, taking signals from other people. But that wasn't actually me trading. That was more me copying people. So I would say I was red by myself. I don't want to be able to count that.
It was like every year you were just getting, it was like more profitable every year?
No. Let me see if I have an Instagram reel on this. Watch this Instagram reel. Oh, this is the video I wanted to show you. Finally, there we go. Look. This is like a journey of a normal trader. Yeah, that's like the journey of a normal trader, right?
My friend's looking, so what time should I be like looking at it at the market?
6:30.
9:30 a.m.
There or Eastern time?
9:30 a.m. Eastern, which would be like 2. That's like 2:30 in London. Any other questions?
If you were trying to scale up, like you said, you can use like 5 accounts.
Yeah, you can use 5 different prop. Yeah.
With the same company.
Yeah, or with different. You can use 5 prop firm accounts in one firm, 5 in another, 5 in another. There's something called the Trade Copier program, which is called Tradecopia. It lets you copy trade like 30 accounts. If you take one micro on 30 different accounts and make $200, how much did you just make?
6,000.
You just made $6K with $200 across every account. Yeah, what's up?
Do you have to start a platform, or can you just like make an account?
You can make an account and live trade their money, but you need to be 18. With prop firms, you can buy an eval account and you don't have, I mean, they don't know if you're 18 unless you pass the funded and you put in your social security.
I'm on it right now.
On the eval?
Yeah, I'm on the eval one.
Nice.
Okay, I need your help though. I need your help. Come over.
Yeah.
No, I'm not.
All right, so that is going to be it for this. If you made it all the way here, that tells me a lot about you. Most kids in this, I mean, I would say about half the class was pretty locked the whole time. The other half realized day trading wasn't for them. At the end, all took pictures of me, was asking me on my Instagram. I think they became more locked in after the last psychology talk that I did. So hopefully you guys enjoyed that. But yeah, if you truly made it here, comment the word. Just comment "made it" and see if we made it. And yeah, I wish you guys the best of luck. You might get trading strategy down, but you might not get the psychology down ever, which is fine because you can apply this stuff to other stuff in life. But don't be discouraged. And yeah, that's pretty much it. If you ever do start using prop firms, my code Dodgy should be available for a lot of them for discounts. I'm not trying to leech that code or anything, but it does give you a discount at the end of the day if you enjoy this educational value. And yeah, I will see you guys in all my future YouTube videos. This is probably the longest video I've ever done. I will see you guys later. Peace.